a larger multilateral coalition that can have more influence with Chinese leaders than just the U.S. on its own. So I think to that extent, the fact that the Europeans are focused on sort of similar efforts, I think is useful for him.
Jeff, great to catch up. Appreciate your time, sir. Jeffrey Wright there of Eurasia Group. Alongside Lisa Abramowitz this morning. Good morning. I'm Jonathan Ferro. This is Bloomberg Surveillance.
What moves the human spirit, what transcends time, comes from true craft, the artistry of Japanese craftsmanship. Presage, Seiko.
The big concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
What moves the human spirit, what transcends time, comes from true craft, the artistry of Japanese craftsmanship. Presage, Seiko.
There's a lot of concern in Hong Kong, and you can see the way actions, reactions, and further anxieties arise. I hope we can settle down to a new normal.
From London and New York, this is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Lisa Abramowitz, I'm Jonathan Ferro. I keep this quick. Looking forward to catching up with John Reining of RDQ in just a moment, and Bloomberg's Michael McKee as well. Bit defensive this morning. Futures negative 1/3%. Nasdaq outperforming, a story you're familiar with, up about 1/10% there after huge outperformance through the month of November on a small caps, up about 20%. Small caps this morning down by about 0.5% on a Russell there. Switch up the board in the mod market. 2s, 10s, 30s, 10-year yields lower than where they started the month. 30-year yields lower than when they started the month. Just process that as you start to think about a better outlook for 2021. What's going on in the bond market? 10-year yield this morning up a basis point to 0.8537%. Is it the technicals, the idea that the Fed comes in, ups the asset purchase programme, extends the average maturity in the profile of its asset purchase programme, or the fundamentals? Is this it for the bond market? Even with 2021 and the reopening trade, is this it? The story before COVID, after COVID, low yields, low rates forever, through the curve, not just at the front end? You answer that at home. Switch at the board. I want to finish on this in the FX market. Euro, dollar, the single currency just about approaching 120 at 119.83, up 0.2% on the session. Last time we got to this line in the sand, the chief economist at the ECB, Lisa, came out and went whack. I wonder if it happens this time again. Given you have to factor in, we've got some Chinese currency strength in the mix as well. How much does that just keep the ECB a little bit more patient than they otherwise would be?
You've brought this up repeatedly, and frankly, I think it's a phenomenal point. This idea that as the dollar weakens, at what point does that tip policy over in China, and what point does that tip policy over in Europe? In the meantime, policy in the United States is getting a bit clearer because Joe Biden has announced some of his appointments, including to his economics team. Last week, we got Janet Yellen being nominated to be the next Treasury Secretary. Then we got Tandon, and we got a number of others, Cecilia Rouse, as well to the economics team. Michael,
who have well-known views on the economy, all of them sort of in the same area. The idea of doing more to bring down inequality, empower labor, and stimulate the economy. Who's going to be primary among equals? I'm not exactly sure at this point. We know Janet Yellen, of course, has a very good reputation, but she's also not a dynamic speaker. Is she going to drive Wall Street? Is she going to drive members of Congress to do something? Brian Deese, somewhat controversial. It isn't official that he's going to be nominated, but he seems to be the number one person for the National Economic Council. You go over to the CEA, and sometimes the CEA plays a strong role in creating policy, and sometimes it's just basically advice. And in the 2009 run-up to the American Recovery Act, Jared Bernstein was among those who helped formulate the policy. Cecilia Rouse is the incoming CEA chair, and she's an expert on labor economics, so it may be that the CEA plays a big role this time. But who is going to lead all of this is something that we'll have to see as the personalities shake out.
Mike, I want to touch on the economic data just quickly as well this week. Claims again Thursday morning, PMIs, ISMs, Payrolls Friday coming up as well. What are you looking for this week, Mike?
Well, I think you've got to see the big question for everybody in terms of the ADP and claims and the jobs report, although the jobs report is, as we've all talked about, old data, is do we see a deterioration in the economy that will put any pressure on members of Congress to come up with some sort of lame duck assistance to the economy? It seems unlikely given the fact that both the Senate and House have announced very short work periods between now and the end of the year, and they have to get a budget passed. They have to get the government funded by December 11th. So the odds aren't great, but if we get some really bad numbers or a clear sign that things are deteriorating, maybe that puts some pressure on them. So we'll be watching for that.
Payrolls Friday just around the corner. Mike, looking forward to catching up with you through the week. Pleased to say that joining us now is John Riding, Breen Capital Chief Economic Advisor. John, great to get you back on the programme, sir. As always, good friend of Bloomberg Surveillance over the years, John. The near-term risk, I want to start there. A lot of people factor in this brighter forward outlook and de-emphasising the near term, substantially so, over the last couple of weeks. John, how much damage can we do to the outlook over the next couple of months?
Well, we could do quite a bit of damage. The key thing here is that the income support for the 10 million people or so who have lost their jobs since February effectively evaporates mid to late December. It's either 6 months plus the 13 weeks from when they lost their job, or at the end of the year, the 13-week extension program under the CARES Act disappears. And that is about $30 billion a month of household income. And from the macroeconomy perspective, that's not a huge number because of the accumulated savings that has gone on through the pandemic period, the excess savings, which totals about 1.5 trillion. But those savings, not much of those savings are going to be in those distressed households. So those households are going to have to cut back on spending. They're going to be distressed. And that is something that could hit demand. Not to think to the point where we see a negative growth print, but could certainly slow growth considerably, which right now we think for the fourth quarter at least is looking about 6% real GDP growth. Let me also say, and what's very important is when we get a virus and we can get the 4 million people or so in the leisure, hospitality, travel industry who really can't return to work, and especially with the upswing in the virus infections that we saw through November, those people are going to have to need businesses to go back to. So that's another area. How much damage can we have to the actual employers, to the small businesses that employ many of those people between now and then? So there is real hope over the horizon, 6 months down the road with the vaccines. But the next few months are going to be, I think, quite difficult.
John, I'm so pleased you started with the disparity beneath the aggregate numbers, because the aggregate numbers get talked about way too much. A high savings rate. The savings are exactly where we don't want them to be. They're in the hands of the people with a lower marginal propensity to spend, and the people without the savings are the people where we'd like to see the money as things open up, because they're likely the ones to go out there and spend it immediately, John. Going forward from here, I think if there's any complacency, it's because people have been conditioned by the experience of the last few months, where we snapped back so quickly, and the recovery in America was much, much bigger and better than I expected, and many others too, John. And there's a belief that if we go into a small downturn, we'll come out of it the other side just as fast. Is there any reason to believe that wouldn't happen, John?
Well, as I said, it really matters about are the businesses going to be there to re-employ people. So we do have a very difficult period in markets where we need to work things out. For example, commercial rents. What's going to happen? There was a report out from the New York City Hospitality Alliance a few weeks ago that said 88% of renters, commercial renters in New York City couldn't make full or whole payment of the rent or partial payment of the rent in October. So what's going to happen to those businesses? Is the accumulated rent burden going to be a major obstacle for them reopening? Are they going to throw in the towel, sadly, when the end is very much in sight? We don't know. But that's important. It's not just about demand. It's about businesses to employ those 10 million people who will be ready and able to go back to work once the vaccine is available.
John, as you talk, I think about what Catherine Mann of Citigroup was saying last week, which is the economy that emerges from COVID will look very different, in part because the biggest companies have had the best chance of survival, while the smaller ones have gone out of business at a record pace. And I do wonder, what is the long-term structural economic damage of this entire swath of smaller companies that have gotten wiped out, given the fact that they account for so much of the hiring in the United States and elsewhere?
Well, that's an absolutely great point, Lisa, because if you look at the U.S. labor market, about half of people employed work for big businesses, and the other half work for small businesses. So we can't have enough expansion in big business activity to employ those people. Small businesses really are a great part of the entrepreneurial side of the U.S. economy. And I have no doubt that 2, 3, 4 years down the road, whatever the damage is done over the next few months, that entrepreneurial America will come back and will come back strongly. But that's a very long time frame for someone who has lost their job and doesn't have that prospect of getting back to immediate employment. So yes, we do have to use the rather overworked term of ideas from Charles Dickens, A Tale of Two Economies. We do have the large big tech, large cap economy that's adjusted well through this in terms of e-commerce, and some of the big names have gained business. And then on the other hand, you've got the small businesses, especially in restaurants, in the hospitality industry, and some of the larger businesses in that area like airlines, which are really, really struggling. And I think that that's got to be a major priority. If we don't get something done in this lame duck session, and it's a very short lame duck session with an awful lot to do in it, Heaven forbid we would have a government shutdown in the midst of all of this. If we don't get that done, that has to be the number one focus alongside vaccine distribution for the incoming administration.
Hey, John, great to get your view on the programme. Stay well. I'll send my best to the family, won't you? John Riding there of Bring Capital. Thank you, John. This is the situation, isn't it, Lisa? I think there is a belief in the economics community that we can do some real damage. The short term does matter to the medium term. And when you come on programmes like this and people start to disentangle the short term and draw a firm line, hard line between the short term and the medium term better, short term will look right through that. The short term can weigh on the medium-term outlook. And I know that sounds stupid and obvious and very intuitive, but that's not what the conversation has sounded like over the last 4 weeks.
Exactly. That's why I smile when you say intuitive and straightforward, because it has been anything but. I also think, though, that the averages mask the reality on the ground. And I'm so glad that John Riding really highlighted that, the disparities here. And you highlighted this well, the idea that the people who have the propensity to spend do not have the money in the bank. That will have an impact.
If I hear about a high savings rate again, when that's just the aggregate number, the disparity is where the story is, and a story that needs to be told continuously. Coming up, Dr. Howard Foreman of Yale University, alongside Lisa Abramowitz, I'm Jonathan Ferro. Futures are negative. They're down 11 on the S&P. We're negative a third of 1% after a monster rally through November. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. Two of Wall Street's biggest data providers are joining together. S&P Global has agreed to buy Market for about $39 billion in stock. It's the second biggest deal of the year. The proposed tie-up is part of a race for scale. The industry's largest players are trying to capitalize on a surging demand for data and analytics. Bloomberg LP, the parent of Bloomberg News, competes with IHS Markit and S&P Global in providing financial analytics and information. Bloomberg's learned that Joe Biden will name longtime Democratic policy staffer Neera Tanden to be his budget chief. Senate Republicans could block the nomination because they see her as too progressive. Meanwhile, the president has named a senior communications team that's made up entirely of women, including White House Press Secretary Jen Psaki. Iran is vowing not to, quote, fall into the trap of scrapping any future talks with the Biden administration. The Iranian government posted a statement 2 days after the assassination of a top nuclear scientist. Iran has blamed Israel. Joe Biden has made it clear the U.S. would rejoin the Obama-era nuclear accord if Tehran also returns to full compliance. The credit unit at Blackstone Group is going shopping for quant firepower. Bloomberg's learned that the alternative asset is set to buy technology-driven credit investing firm DCI. The firm oversees about $7.5 billion in assets. The DCI purchase will allow Blackstone to wade deeper into the world of investment-grade bonds. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
What moves the human spirit, what transcends time, comes from true craft, the artistry of Japanese craftsmanship. Presage, Seiko.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Within 24 to 48 hours after submitting their EUA, we, from a federal perspective, have promised and have set everything up so that we can quickly review those EUAs and hopefully start sending out vaccines, again, within 24 to 48 hours.
That was Jerome Adams there, the US Surgeon General, speaking to Fox News Sunday over the weekend. That comment coming before we got the news this morning from Moderna that they're planning to request clearance for its coronavirus vaccine in the US and Europe as soon as today. Alongside Lisa Brabbitts, I'm Jonathan Ferro. Good Monday morning to you all. Coming up a little bit later on the Open on Bloomberg TV, Subhadra Rajappa of SocGen, the head of US rate strategy, and Lisa, the focus on what has not happened in this bond market through the month of November.
Yeah, and the burning question, as you outlined earlier, this question of whether this is policy and this is a bet on the Fed continuing to buy, or this is a bet on fundamentals not being as strong as perhaps people are pricing in the equity market. John, you cannot miss that. We will be watching. Joining us now, though, we really want to take a look at this vaccine distribution, the Moderna news really accelerating that time frame, Operation Warp Speed, taking a little bit more shape. Dr. Howard Foreman joining, Yale University professor of public health and economics and radiology. What else, Dr. Foreman? Thank you so much for being with us. I want to start with this Operation Warp Speed and where we are based on the application that we're expecting from Moderna, based on what the FDA has signaled. When do you think we will start to get a trickle turn into a flood where we get a real critical mass of people in the United States being inoculated?
Look, I'm one of the more optimistic people who believe that we're going to see tens of millions of doses starting to be used in January, February. We'll obviously see some at the end of this month, probably at least, several million, but we're going to see tens of millions starting off in January. And it is not inconceivable that we'll have more doses than demand by the time we get to summer. And that would be a sort of good thing, but then we have to work on the whole issue of vaccine hesitancy.
All right, let's tease out some of this. Aside from the demand side, when you talk about the supply coming on, Joshua Sharfstein was on earlier this morning, and he was saying he's concerned about the number of individuals out there, the infrastructure to deliver the inoculations in a timely manner. Is that something that concerns you as well?
It's, we're all worried about that, but the first tranche of vaccinations are sort of easier for us to do because they're going to be healthcare workers who work within healthcare systems that generally already have an infrastructure and apparatus in place. And they're going to hopefully be nursing homes and for vulnerable individuals living in institutions for which we also have an apparatus in place. It's the next step after that that we should all be most concerned about, because we really want to get the vulnerable individuals in the community who have suffered so much, the people of color, poorer people, people that have to risk their life every day as an essential worker but not a healthcare worker. And how do we reach them? That's where it starts getting more challenging.
Is the issue that people don't have confidence necessarily in a vaccine that's rushed out, or is the issue that there isn't the medical infrastructure built into some of those areas, this idea of people having a primary care physician or somebody that they regularly contact?
Look, I think urban areas that have well-developed public health infrastructure are going to be in a much better position to do this. And I think the fact that the federal government has already contracted with, I believe, CVS and Walgreens as part of the distribution plan bodes well for urban areas. I think getting out to rural areas, and then, as you point out, this issue of vaccine hesitancy should concern everybody. We have witnessed over the last several months a schism in this country where some people are adherents of good public health practices, and some people think that it is a political statement to basically give up on all those public health practices. We need everybody to want to get this vaccination.
Well, how do you combat that? I mean, we've had anti-vaxxers for years. I mean, how do you combat that, especially at a time when there is the perception that this has been rushed through?
So I think consistent messaging from leadership all the way on down. It has to be bipartisan. It has to come from the president. It has to come from the vice president. It has to come from all public health officials. It has to come from all state officials. Right now, we know that if we even look among red states, there are some red states where the messaging is excellent. There are some red states where the messaging is not excellent right now. And so we've got to get over that. We've got to get past this sort of partisan divide in our country and get back to a point where everybody is basically messaging consistent evidence and facts and allowing the public to make a good decision, which in this case is about a vaccine that is highly, highly effective and has very, very low reactogenicity or side effects.
How politically fraught is it for big companies to get chunks of doses, basically to distribute to their workforce so that they can get back up in business? I'm sure from an economic perspective, it would help people get back into the office and increase productivity. But is that something that could be a politically difficult thing to swallow, especially in the initial phases of the vaccine distribution?
So in the initial phases, certainly. But again, I think that really helps the cause is if employers are able to facilitate this, if they too message this in a nonpartisan manner, if they're able to message to their employees that this is something that they're providing to them as a benefit and facilitating it, that can be very, very helpful.
All right, going forward, when do you think that we'll reach some sort of full herd immunity? Do you think that that is a time in the near future where we could stop wearing masks and actually get together and hug each other? So not me and you, I mean just generally.
Oh, look, yeah, right. Herd immunity is about me being vaccinated, but protecting people who are not vaccinated. And unfortunately, I think that's going to be a long way off, a lot further off than people realize. And let me just point this out. We don't know whether the Moderna vaccine nor the Pfizer vaccine provides true sterilizing immunity, which is what you need for herd immunity. So herd immunity means that I cannot infect you. What we know about these two vaccines so far is that they definitely protect against moderate and severe infection, and in both cases, I think, protect against death. That is huge for the individual. It doesn't mean that we'll achieve herd immunity because it may be the case that half the population that gets vaccinated still gets infected, but they just have no symptoms, and therefore they may still be part of the feedstock of continued infection. We need those answers, and those may not come for several months.
Dr. Howard Foreman, thank you so much of being with us of Yale University. Certainly people are putting their hope in the vaccines coming out and putting an end to some of the pandemic that we have seen so far that seems to be accelerating and worsening throughout the United States and around the world. There is a question of what the new normal looks like. It is a question I face every evening when I go home to my children. Taking a look at these markets after a record-breaking month, we are looking at a little bit of an easing, but definitely not that much. S&P futures off the lows earlier, down just now 0.2%. 10-year yield sticky at 85 basis points, not going anywhere. And meanwhile, we're seeing the euro just break up against that 119, 120 mark that John was talking about earlier, this question of whether the ECB will start to respond to weaken it. And then, of course, the VIX index creeping up, it's still very low. Coming up on Bloomberg Television this afternoon, Noubar Afsayan, Moderna chairman and co-founder. Don't miss it. This is Bloomberg.
हमारा सर्वाइवल सिर्फ और सिर्फ इस इलाके में ड्रिप इरिगेशन सिस्टम की वजह से है और इससे हमारा मुस्तकबिल भी और इससे हम फ़ायदा भी ले रहे हैं।
तकरीबन 20,000 स्क्वायर किलोमीटर लैंड जो है वो अबंडेंट पड़ी है, जिस पे कुछ भी एग्रीकल्चर टेक्निकल तरीके से नहीं हो रही।
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points. So continuing in this knee-jerk risk-off feel.
From New York and London for our audience worldwide, good morning, good morning. The countdown to the Open starts right now. We're 30 minutes away from the opening bell. We're down 8 on the S&P 500. We're negative 0.2%. And we begin with the big issue, closing out a record-breaking month.
A very strong month for risk assets.
Look at the month of November.
Global equity markets up 13.6%.
Quite remarkable market development over November.
You're going to see the rally continue. It's a very different type of rally.
An opening of the economy rally.
Back and forth momentum-driven trading.
Huge dispersion.
Markets are very euphoric. Euphoria around vaccine news.
The vaccine is a game changer.
Most people expect that it's all about the destination, regardless of the journey.
To see whether the market will continue to have legs,
they have the wind at their back right now.
We will have to have confirmation of those vaccine hopes.
Another Monday, another vaccine development fueling vaccine hopes. Moderna planning to request clearance for its vaccine as soon as today. The US Surgeon General promising pharma companies a rapid review.
Within 24 to 48 hours after submitting their EUA, we, from a federal perspective, have promised and have set everything up so that we can quickly review those EUAs and hopefully start sending out vaccines, again, within 24 to 48 hours.
The nation's top disease expert, Dr. Fauci, reinforcing the timeline, hoping for action ahead of the new year.
There is light at the end of the tunnel because we will really be seeing vaccines soon. We likely, almost certainly, are going to be vaccinating a portion of the individuals in the first priority before the end of December.
The light at the end of the tunnel, just how long is that tunnel? Bloomberg's Kaylee Lyons joins us now for more. Morning, Kaylee.
Good morning, John. Well, I'm just going to call November the month of the vaccine. 4 consecutive Mondays that we have gotten news on that front. This morning, of course, it comes from Moderna releasing the final analysis of its vaccine trial showing 94.1% efficacy. Now, that was basically in line with the preliminary results we got earlier this month. It was largely expected, but still it is a step forward. And Moderna says it's expecting to file clearance for both the vaccine in both the U.S. and the EU later today. Not all candidates, though, making such progress. This morning, Novavax saying the phase 3 trial of its vaccine candidate will be delayed for a few weeks. The interim results now not expected until the first quarter. You can see the divergence in the share price action this morning. And what's interesting, John, is in the broader market, the vaccine not having the effect that it did earlier this month. Usually positive vaccine data bringing some cyclical strength that is not taking shape this morning. You can see the NASDAQ looks set to outperform, opening higher in the green potentially by about 0.2, while small caps look set to underperform, and the S&P 500 looks set for a softer open. Of course, that a divergence from Mondays past in November. John, Mondays have been strong days led by cyclical strength. So far in the month of November, 1 days on average have seen a rally of about 1%, and then those gains kind of taper off into week's end. We're just going to have to see what December brings, John. Of course, this is the last trading day of November, and our December Mondays going to be this exciting, John.
Every single Monday, it seems. Kaylee, great to catch up. Kaylee Lyons, thank you. I was talking about the diminishing marginal returns of the additional vaccine press release from some of these companies. The big bang came several weeks ago. Subsequently, not getting as much bang for our buck every single Monday. But the news is positive, constructive. It helps to anchor the outlook for 2021, leading some analysts, strategists, to really build up some massive forecasts for the year ahead. JP Morgan's David Leibovitz expecting a modest equity growth in 2021. He writes the following. Next year is set to be characterised by mid-single-digit gains for US equities. While the mega-cap growth names may tread water, cyclical assets should continue catching up. We expect these assets to outperform over the next 12 months, but long-term, we maintain our preference for growth. David joins us now for more. David, that's exactly where I want to go. The catch-up trade into next year and then the trade beyond. Walk me through it.
So I think there are a couple of things that are important to recognize. The first is that more cyclical assets and value-oriented assets tend to outperform during periods of accelerating economic activity and rising inflation expectations. And when we think about the next 12 months, we very much believe that is going to characterize the coming year. But I think it's important to take a step back and think about the ability for economies to grow over longer periods of time and what the trend rate of growth really looks like. We recently released our long-term capital market assumptions, and frankly, they haven't really changed all that much. You know, we still look for trend growth in the U.S. of just below 2%, and we think that is an environment that we will return to longer term. Now, when we think about that macro backdrop, it is much more conducive to the outperformance of growth relative to value. So we see some room for international and cyclicality and small caps to catch up here over the next 12 months as the economy comes back online. But longer term, I think it's difficult to envision a world that is significantly different from the world that we were in for the better part of the past 10 years.
Does that apply to the bond market as well then, David?
So I think the bond market's a little bit more complicated given the intervention we've seen from policymakers. And, you know, when we listen to the messaging from the Fed, from the ECB, from all of the developed market central banks, they continue to tell a story of accommodation. And so I think you could see a limit to how much interest rates rise as the economy accelerates over the coming year. But I think, you know, subsequently, we need to keep an eye on inflation, because that's going to be what forces central bankers' hands. Until they see the whites of the eyes of inflation, I don't think they're going to do much. But, you know, even once inflation has been above 2% for some time, we do expect the Fed to gradually begin tightening policy.
So marry your bond market view with your cyclical rotation view, David. How comfortable are you sitting in the banks for 12 months with no prospect of rates going up through the whole of that time period?
So I think when it comes to the financials in particular, we need to be selective. And we definitely have a preference for the larger banks, the more significantly sized financial institutions, because they have more diversified revenue streams. You know, you look at the traditional regional banks, they make their money off of lending. They're the ones that are really married to the spread between 2s and 10s. When we think about the larger financial institutions, we do think that greater breadth in businesses that they run does mean that they can do a little bit better over the course of the coming 12 months. We also expect that over time, buyback programs will be reinstated, and that combination of healthy dividend yields and attractive buyback yields is part of what keeps us coming back to the sector. And we layer on top the fact that it's one of the few parts of the market that continues to look cheap. So I know a lot of people don't like it, but we continue to see opportunity there.
That's the hope in Europe as well, that the dividends come back and that trade can continue to perform. I know JP Morgan's a big place, David. This came from Mislav Matejka, so I'm not trying to put you on the spot to get you to disagree with your colleague. I just want to read the quote that came from some of your research this morning. We upgrade Eurozone to overweight and we reduce the United States to neutral. Relative earnings trends have favoured the US over the Eurozone for a while now, but a potential bounce in relative earnings of the Eurozone could be on the cards. David, that seems in line with the kind of thing you're thinking about over the next 12 months. Is that fair?
I think it is. And what's really interesting, and when we think about what's driven markets over the course of the past couple of months, it's really been all about policy. And we've talked a lot about on this show together about the need for more stimulus here in the U.S. I would argue that in Europe, policymakers have, to an extent, thrown caution to the wind when it comes to the fiscal side of the equation. And so it feels like that policy support will be delivered in a much more straightforward fashion. And I do think that could potentially favor Eurozone over U.S. Over the coming 12 months. But really, by my lights, it's all part of a bigger trade, right? International, value, small caps, they all tend to outperform in the same type of environment. And it does appear that environment is taking shape as we look ahead over the coming year.
Well, David, let's look at the month-to-date gains that we've had through November. Phenomenal month of November. On a Stock 600 through this month, up 15%. On the Nikkei in Japan, up 15%. In Japan, that's the best month since the mid-90s. In Europe, it could be the best month on record. The S&P 500 up 11. David, 99% of the people that come on this show at the moment say exactly what you're saying. It's the consensus view. Doesn't mean it's wrong. But what I'm trying to understand is how quickly we can price in the consensus view. If everyone is on the same page about what next year has in store, at what point does the risk stop being to the upside and starts being a little bit more to the downside?
So I think that I actually wrote something this morning to clients that touched on this question specifically. And, you know, when we look at what's happened in November, when we look at the level of implied volatility, we are beginning to get a little bit uncomfortable on a very short-term tactical basis. And I would not be surprised to see markets pause and catch their breath, maybe even pull back a little bit as we get towards the end of the year and, you know, kind of approach that early January date where the Georgia elections will be finalized. There's still lots of things for the market to get uncomfortable about. But I do think that the story we've been talking about here this morning, you know, is gradually getting priced in. And so what investors need to do is recognize that is the consensus narrative and begin to think about what could derail that narrative. Right, a messy couple of weeks in the U.S. in terms of the election, an inability to deliver the fiscal support that we need here in the United States, perhaps a shortcoming on the part of policymakers in Europe, despite what I just said. These are the things that investors need to be thinking about because, John, to your point, the story that we've been telling this morning very much seems to be widely held across the investment community.
David, always great to catch up, sir. David Leibovitz of JP Morgan. My best to you and the team. Another consensus position going into next year is a weaker dollar. Let's get euro dollar back on the screen. 119.93. The intraday high for the year, 120.11 in early September. When we got there, ECB chief economist Philip Lane came out and slapped it back. 119.93. Just had a little bit of a pump in the euro here. Some dollar weakness coming through this FX market as well. Just keep an eye on that through the next hour or so. That's the story of the market with your movers. Here's Abigail.
John, well, in this record-breaking month for stocks, traders seem to be taking a bit of a breather this morning. The major averages basically mixed on very small moves. So let's take a look at where the movement is. But one reason for the small moves for the major averages, or at least the S&P 500 and the NASDAQ, Amazon up just 0.3%. It is Cyber Monday, though, off of its pre-market highs. Nonetheless, higher on Cyber Monday and this Cyber Week. And GameStop right now heading to a third up day in a row, up 10% in the pre-market, possibly up more than 25% over the last 3 days. A piece of it, Cyber Week deals, plus strong signs of demand for other consoles. And it seems that we do have a little bit of a stay-at-home flavor today, despite the positive news around Moderna's vaccine. Zoom and DocuSign are also sharply higher. As for big moves, but in the opposite direction, Tesla heading to an 8th day up out of the last 9 days in the month of November. It's incredible, up 50%, of course, on its inclusion in S&P 500. Nikola, not so much. GM downsizing that deal, John, plunging in the pre-market, down 21%.
Abigail, thank you. That's the latest on the moves ahead of the opening bell. A developing story over the last several years, a breaking story this morning. To bring you the update, here's Bloomberg's Michael McKee. Good morning, Mike.
Good morning, John. Basically, what we're getting this morning from regulators are dates for the end of the London Interbank Offered Rate, LIBOR. The regulators are saying that the ICE Benchmark Administration is going to stop publishing LIBOR U.S. dollar rates for 1 month and 2 month U.S. 1 week and 2 month settings on December 31st, 2021. Other tenors, including the all-important 3-month tenor, will be published until June 30th of 2023 for existing contracts only. This will help let the $200 trillion in contracts roll off, expire before they get to that date, John.
Michael McKee, we'll touch on that a little bit later this morning. We'll catch up with Subhadra Rajappa of SocGen as well on this very topic. Coming up on this programme, the Trump administration reportedly planning to ramp up tensions with China yet again, just before President-elect Joe Biden takes office. That conversation up next with Peter Cheer of Academy Securities. From London and New York this morning, good morning. This is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I'm certain that we will be able to bring our debt levels down
and avoid what you could call a debt crisis, because we are focused, and we've been open enough by telling the nation that we have too much debt.
Instead of combating the Chinese and trying to dissuade them from their goals by sanctions and tariffs and trade policies and whatever, I think the Biden administration is going to aim more towards strengthening the U.S. economy and its industrial strategies. If Congress allows President-elect Biden to do it, there are programs to be done that can pull the U.S. forward ahead of China.
High Frequency's Carl Weinberg there, weighing in on future US-China relations as the Trump administration reportedly prepares to ramp up China tensions yet again before leaving office. The EU looking to improve its own relationship with the US by capitalising on those very trends. The Financial Times writing the following: the EU will call on the US to seize a once-in-a-generation opportunity to forge a new global alliance to bury the tensions of the Trump era and meet the strategic challenge posed by China. Bloomberg chief Washington correspondent Kevin Cirilli joins us now for more. Kevin, this is the topic that I want to touch on with you because I think it is so very important. We've talked so much about domestic policy with the incoming Biden administration and not enough on something they have a lot of control over: trade. What are you hearing, Kevin?
Well, precisely. And in fact, tomorrow, the Biden transition team is going to formally announce some of their economic members to the team. And to that point, precisely that clip that you just read from the Financial Times, that's music to likely Secretary of State Antony Blinken's ears as it relates to trying to form a much more multilateral, multinational cooperation in terms of alliance building, economic from a global trade perspective. And then take a look at some of the members expected to be announced tomorrow. Cecilia Rouse, as the Council of Economic Advisors chair. She's currently a dean at the International School of Relations at Princeton University, had previously served in the Obama Economic Advisors team, as well as Neera Tanden, who currently chairs the Brookings Institution, which is a progressive think tank, centrist progressive think tank, though they might take issue with that label, here in Washington, D.C., to be the budget director. She also is someone who has served in top Democratic circles for quite some time. All of that comes as Janet Yellen is going to have one of the most forward-thinking globally roles that she's had in her career, expanding her portfolio from the central bank and into the Treasury Department, and will be working in lockstep with someone like Tony Blinken, if he is confirmed as is expected to Secretary of State, on those tariff, sanction, and geopolitical economic issues. Jonathan?
Kevin, great to catch up. Another busy one ahead for you. Kevin Cirilli down in Washington. Thank you, sir. Academy's Peter Chip weighing in on US-China relations under Biden, saying it's a different administration, but the goals remain the same. He wrote the following: the relationship has a national security interest at virtually every level now and will impact how the Biden administration thinks about trade and supply chains. But the end goals remain the same, focusing on tech, 5G, medical equipment and pharma. Peter joins us now for more. So, Peter, let's talk about the end game. The objectives are the same. You've said that already. So tell me how the plan is different, how the process is different, how the strategy is different.
I think the process is definitely going to be very different at the start, where we are going to try and coalition build. We're going to try and work closely with Europe. We're going to try and work closely with some of our other allies to get what we want. I think we have to be cautious because sometimes Europe has trouble getting their act together. Europe has a slightly different agenda with China. I think Europe will have more difficulty separating with China, but that's going to be the start of the plan. And I do believe there's going to be a little bit more of an environmental or ESG thought process behind what the Biden administration is going to do versus the Trump. But the end game, I do believe, is the same: to bring back a lot of manufacturing, particularly in the pharma space and technology.
So bring up the euro. Let's get to euro dollar, 119.95, approaching 120. Peter, there is a belief that part of the dollar weakness story through next year is largely because we have a different approach from an incoming administration in the United States. Peter, to me, it doesn't sound like you buy that story.
No, I think a lot of what's going on the dollar is twofold. One, it's we have negative real yields that are lower in some cases even than Europe. So our nominal yields are still higher, but our real yields are actually lower because there is this expectation that we will achieve some inflation growth. So I think that's been impacting us versus the euro. And I do believe China, as part of their ongoing efforts to win with us is actually comfortable with a stronger currency. They are shifting more and more to a domestic-based approach, right? They have domestic consumption. I think the fact that they are the third largest user of energy and only probably the sixth or seventh largest producer means they can actually benefit a little bit from a stronger currency. So I think that's playing hand in hand. So to me, it's really a shift in China policy as well as this negative real yield phenomena that we're dealing with in the U.S.
Right. Everyone seems to be bullish right now. You know the story, Peter. Is that enough reason to be bearish?
I'm not sure if it's enough reason to be bearish. Having said that, people have become very excessively, optimistic about everything that's going on. I think a lot of that is priced in. I do believe that Tesla's inclusion in the S&P 500 is clouding a lot of trading patterns. We're seeing, I think, activity basically getting people ready to position for that inclusion, which will require a significant amount of buying of Tesla at the expense of selling of other shares. So I think it's hard to get a good read. I'm very neutral to bearish the market right now, and I do think tech is not that outperformance trade that we saw, this big rotation trade, I think that's over for now. So I think we're going to see stocks move much more in lockstep.
Peter, neutral to bearish where?
Across the board, but I would say mostly in the big winners. I think people took some of the wrong signals over the past few weeks of what has been going on, and I think people are underestimating how much of this is really related to that S&P inclusion. So I think December 21st is going to be a really important date when that inclusion actually occurs, and we'll see how markets respond after that.
Peter, what you're saying right now is so important and so powerful. I think so many people have found it so difficult this year to explain what's been going on in financial markets. If you do think they're drawing the wrong conclusion on the price action and gripping to the wrong narrative, what are the broader implications of that, Pete?
I think really coming into the start of next year, what we could see is an economy that responds very positively to policy and a market that might not respond as positively because so much is priced in. So almost the inverse of what we saw going on, throughout the summer. The markets led the way higher and the economy followed along. I think now we might see the economy actually really start to benefit from policy, from stimulus, from this changing of the guard. But the markets might not be able to do much because so much is already priced in. And we're still not talking about the possibility of higher taxes, which I think is something that we really have to start, being at least mildly concerned about.
Peter, that would be a big mistake if any administration allowed that to become part of the discussion. Don't you think, to tell people that that could be something that's coming down the road, don't you think that could actually derail the recovery?
I think they are going to be very cautious because, again, this concept of this K-shaped recovery where you've really had the big haves and the big winners and a lot of people who are still suffering, depending on who gets what in this administration, you could see some efforts, I think, to take from that top part of the K and redistribute it down to the bottom part of the K.
Peter Cheer of Academy Securities, thank you, sir. Thank you very much. Just getting a headline from the Treasury and the Fed to extend 4 lending facilities until March 31st. Secretary Mnuchin approving the extension of 4 emergency lending facilities. I've got to go very quickly, but on the other side, we'll catch up with Michael McKee to break down what these headlines mean for all of you out there as well. Coming up, we'll get you some morning calls. We'll get you the breakdown of these headlines, and the opening bound not too far away either. Futures slightly negative. This is Bloomberg.
The pandemic swells the gap between the rich and poor around the world. There may be no starker case of inequality than Venezuela, where the socialist leader Nicolás Maduro has kept his hold on power by fostering a Darwinian dollarization under quarantine. The nation's mighty oil industry has collapsed. Water, electricity, and gasoline are barely available, and hunger hunts vast portions of the population. 4 out of 5 Venezuelans can't afford a basic food basket last year, according to a research by the main universities. Meanwhile, Caracas neighborhoods have a dozen new delivery services bringing to their doors everything from truffle salmon poke bowls to electronic cigarettes and $50 gluten-free birthday cakes.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
About 5 minutes away from the opening bell, equities down about 8 on the S&P 500, the Nasdaq positive by about 20 points. I want to get back to those headlines just quickly with Michael McKee. Mike, some news coming from the Treasury. Just to make this very, very clear, the extension of these programs are separate from the disagreement that Mnuchin and Powell had over a different set of programs in just the last week, correct?
Essentially, John, this news is actually coming from the Fed, and what they're announcing is that they're going to extend the programs that Stephen Mnuchin said they could extend. The corporate paper program and the money market program, the 4 programs that the Treasury said would be allowed to extend are going to be extended until March 31st, so through the first quarter. The rest of them still going away.
That clears that up very quickly with Michael McKee. Thank you, sir. The opening bow just around the corner, 4 minutes away. What a month in November. Don't you all just want to wish goodbye to 2020 already? 1 month to go. This is Bloomberg.
Me indigna a forma que esses governantes dirigem esse país pensando só naqueles que já têm muito e já têm demais. E é mais uma vez por isso que a gente optou por ocupar esses espaços, para que a gente lá de dentro possa exercer a mesma pressão que a gente já exerce na rua de fora para dentro. A gente quer abalar essa estrutura.
Eu tenho muita esperança, tenho muita fé em Deus que aqui a gente ainda vamos conseguir a nossa moradia digna, a nossa casinha para, ao menos nos últimos dias de vida, se vender numa casa.
Never met, obviously, Walt Disney, but if you had a chance to talk to him, what would you want to ask?
Obviously, probably the number one question would be, how am I doing?
Chinese capital market, as you know, is nascent, is just developing, and so we think there's an opportunity to build out that. But that's not all. We're also focused on continuing to build our presence in the Greater Bay Area. It's been a good business for us.
we explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Should we just end the year right now? Just close out 2020, skip December. You'd love that, wouldn't you? Futures down 8 on the S&P 500, down 0.2%. What a month on the S&P. On a month, up by about 10, 11%. On a Russell futures down this morning, by the way, off by a third of 1%. But on the Russell, up 20.59% over the last month. Best month ever. That's the opening bell. Defensive posture. Nasdaq outperformed. Switch up the board. Euro dollar, the one to watch, 119.97, very close to 120. The highs of the year on euro dollar from early September, just north of 120 intraday, then slapped back down again. One Philip Lane blog away from 118 maybe. I don't know. That's your call. In the commodity market, crude down 0.4%, $45 and about 30 odd cents. OPEC Plus struggling to find agreement to extend the idea that maybe they don't hike output anytime soon. That's the story. Cross Asset this Monday morning. Let's get to the market desk and get your movers. Here's Abigail.
John, well, it is a Monday in November, this record-breaking month for stocks. That means we have positive vaccine news. Let's take a look at the shares of Moderna, which are popping, even soaring on the news that they are doing what was largely expected, filing, seeking clearance for their vaccine in both the EU and the U.S. So it's not a sell the news moment at all. However, Novavax offering disappointing news, once again delaying their phase 3 COVID vaccine trial. That stock down. So even though we do have Moderna popping higher, it is not adding the usual reopening flavor to stocks overall. We actually have a little bit of a bid toward the stay-at-home trade, with both Apple and Amazon trading higher on the morning. Not huge gains, but nonetheless, these are the biggest point boosts to the S&P 500. So that's shaping the S&P 500 and more so the Nasdaq 100. On the other hand, you have your banks and your energy stocks down. Take a look at JP Morgan and Exxon Mobil. And I was mentioning it's Monday. We have some M&A action. We, of course, have S&P Global buying IHS Markit for $39 billion in an all-stock deal. This continues consolidation that we are seeing among the finance industry's biggest data providers, and it is this year's second biggest deal, all on this last Monday of the record-breaking month of November that we have for stocks, Sean.
Alice and Refinitiv before them. Abigail, thank you. I think IHS and Markit was only 4 years ago. Consolidation there continuing to build, as I assume regulatory scrutiny will build as well. Euro dollar, by the way, 119.99. We could just sit on the chart. You know how media organisations are obsessed with round numbers. Euro dollar 119.99, just that far away from 120, just that far away. I assume you can watch that from home, so I'll let you do that. Rapid vaccine developments fueling confidence in a return to normalcy, whatever normal is these days, lifting the banks, energy and other sectors hardest hit by the pandemic. UBS's Laura Kane expecting the laggards to extend the gains into 2021.
There is still some risk to the downside. So we're going to see this ongoing narrative of vaccine versus virus play out, especially in the very near term. So there is certainly some risk to that story. We do think that the energy markets are going to continue to come into balance.
Energy, by the way, and energy equities, the outperformer on the month, the underperformer on the session. Kaylee Lyons has more. Hey, Kaylee.
Hey, John. Well, what a November it has been. A record-breaking month for global equities. Global equities rallying 13% over the course of the month. And it's not just the rally itself that's remarkable, but what has led it, and that is the cyclicals. Within the S&P 500, it is energy, financials, industrials, materials that have led the charge. Energy up a whopping 34% over the course of the month. 8 of the 10 best-performing stocks in the S&P 500 in November were energy stocks. On the other hand, the underperformers on the month were your defensives as well as technology. But here's the thing, John. When you look at it over the longer term, this barely makes a difference. If we can hop into the terminal at GTV Go and take a look at the performance of the energy sector relative to technology, this barely makes a blip on the chart. That's what we're looking at here in the white line. We're coming off record underperformance, and the tick higher we've seen this month, fairly unremarkable. And of course, we'll have to see if energy strength can last. A lot of that may depend on the prospect of more oil supply coming out of OPEC, whether the cartel is able to reach a deal to delay an output hike after this week's meeting. And then even beyond the energy specific story, that blue line on the chart we were just looking at is value versus versus growth. Again, this month, just a drop in the bucket. The point of the story, John, is value has a long game of catch up ahead if this rotation does indeed continue. Investors, though, seem to be betting that it will. If you take a look at ETF flows in November, we saw record inflows into value ETFs, $8.3 billion of money coming in. At the same time, growth ETFs only saw about $1.2 billion worth of inflows. So investors are placing bets on this being a sustained rotation and not a head fake, which we've seen before, John.
Kelly Lyons, thank you very much. Getting confirmation of something that you already knew, but it has been confirmed officially that the President-elect, Joe Biden, is naming Janet Yellen, the former Federal Reserve chairwoman, as the Treasury Secretary. That just crossing across the Bloomberg right now. Joe Biden, the President-elect, nominating Janet Yellen as the Treasury Secretary. That's the story right now. I want to turn to Eddie Perkin, who I understand is with us at the moment from Eaton Vance, the Chief Equity Investment Officer. Then I want to bring Michael McKee into the conversation as well. Eddie, great to catch up with you, sir. Just to turn on that news that we're hearing from the Biden administration, making official what we've already talked about for the past week anyway. What does that mean to you, Eddie?
It doesn't mean a lot. Janet Yellen is a known quantity. I think Wall Street certainly likes her. She's, I think, got the wrong reputation of being hawkish because she was there when the Fed last raised interest rates. But of course, I think long term she's a conventional Fed chair, and now moving into the Treasury Secretary role, I think she'll likely push for a big stimulus and spending program. And if Joe Biden reaches across the aisle and looks for compromise, I think he'll find it around issues like infrastructure and that sort of thing. So I think Wall Street will like Janet Yellen as the choice, and she should, I think, get approval from the Senate without too much trouble.
That's the conversation of the last week or so as well. I want to bring Michael McKee into the conversation in New York. Mike, confirming what we've been talking about for the past week, we need to get to work and start talking about a fiscal plan again. Congress is back. When on earth do we get that done?
That's an interesting question, John, because Congress doesn't have much time left. They've only got 11 working days until we see the end of the financing for the U.S. government. They've got to get some sort of budget in place or another continuing resolution by December 11th, or we face a government shutdown. And there's not a lot of working days between now and then. And after that, they're planning on going home. So it looks unlikely that we may get some sort of deal before Congress adjourns for the year, and we wait for the next Congress to come in. However, Janet Yellen, I'm sure, is meeting with the Biden campaign and working on ideas for what they might do, along with the rest of the economic staff that he is expected to announce this week.
Mike, we'll catch up with you in just a moment. There's a line that pops out in this press release, Build Back Better. I've heard Build Back Better here in the United Kingdom so many times over the last month or so, and I know many of you are hearing it in your respective countries as well. Here's the line that stands out. The crisis-tested team will help President-elect Joe Biden and Vice President-elect Kamala Harris lift America out of the current economic downturn and build back better. Eddie Perkins, bring you back into the conversation from an equity strategist's point of view. What does that kind of political rhetoric mean to you? Build back better.
Build Back Better, of course, was Joe Biden's campaign slogan. It's alliterative, and it goes with the B in Biden, so it's kind of a clever, catchy phrase. I think it speaks to infrastructure. It speaks to trying to bring the country together again. There's been obviously a lot of heated rhetoric on both sides over the last 4 years, and so just trying to find a softer tone with less rhetoric that, particularly on the foreign policy front and the trade front. I think that's where we can see some sort of calming of the waters with China and trade and those sorts of things that I think the market will like. So on fiscal spending, if the Republicans win at least one of the two seats in Georgia, then the Republicans will control the Senate. It'll be hard to do much on taxes or fiscal spending without bringing Republicans along for the ride, and that means a more centrist tone and more centrist policies, more centrist cabinet choices, as with Janet Yellen, and I think the markets will like all of that.
Eddie, this plays into the international story. Do you think the rhetoric and a change in rhetoric is sufficient, or do you need to see a policy change as well?
I think it's helpful to have a change in rhetoric, and with that potentially comes policy changes. And I think global trade, free trade is something that is absolutely critical to the economy. Now, I think there are good arguments that the current administration has raised about China, intellectual property. Is it a fair playing field? And I think some of that, frankly, Joe Biden will continue. I don't think we're going all the way back to the way we were. But the idea of waking up each morning to a new tariff being announced, I think that's behind us now, and I think markets can settle down around that equilibrium.
Well, let's look at a year ahead then, Eddie. The story so far has been off the back of the vaccine developments, the fading political risk, fading into the rearview mirror. As you've pointed out, to get this extra drive higher, you need the secondary catalyst to kick in. The higher rates, the steeper curve, the economic upturn to actually materialise. Eddie, do you anticipate the first two of those things actually happening? The economic recovery, I think we can get our hands around with a vaccine. What about higher rates and a steeper curve? Do they support that cyclical trade in the 12 to 18 months to come?
Well, the last 10 years is replete with people calling for higher interest rates and inflation and it not coming to pass. And so I think the premise of your question is sound, which is it's far from a foregone conclusion that we'll get that. But the ingredients seem to be there. If you have a reversal of some of the policies around trade, if you have an improving economy, and let's think about what it means. The vaccine, obviously, it's going to give people confidence to go back out and for the economy to recover on a cyclical basis. But I think there's going to be an overshoot. You think about all the people, all of us who are at home kind of waiting for the all clear signal. Maybe that's still several months away, but the amount of travel, going out to restaurants, going out to movie theaters and concerts, the level of catch-up economic activity is going to be significant. And the people are sitting on a lot of savings right now, given what's happened over the last 6 months. So it's not hard to imagine if you're looking out a year, and I think that's the right time frame to have in mind, that we have a really, very aggressive economic recovery. And I think the Fed will be slow to dampen that. So the ingredients are certainly there for inflation, higher interest rates. That's good for banks. That's good for cyclicals. It's good for commodities. It's good for value stocks. And I think that's the conversation we're all having right now.
And just how sustainable those trends will be. Eddie, great to catch up. Eddie Perkin there of Eaton Vance. Thank you, sir. As we get that headline across the Bloomberg terminal, President-elect Joe Biden nominating Janet Yellen as the Treasury Secretary. Just a bit of time now to get you some equity market moves. About 11, 12 minutes into the session. Here's Abigail.
John, very quickly, let's take a look at what is moving here on the open. Moderna is popping sharply higher, even soaring to a new record high. And the news that they are filing for their vaccine to be authorized by both the EU and the FDA here in the U.S. Interestingly, though, the stay-at-home trade is in play because we have Zoom trading higher. On the other hand, you have airlines and the cruise line operators lower. You also have the cyclical trade lower on the day. Typically, this trade, the banks and energy has done well when you have positive vaccine news. Not today, though. Wells Fargo and Chevron both lower. Tesla, though, on a record month, John, up more than 50%.
An unbelievable year as well, not just a record month. Abigail, thank you. Up next, economic data in America today and the week ahead. Pretty big. This is Bloomberg.
Saving for retirement is confusing. That's one reason why 42% of people age 18 to 29 have no savings, and partially because of things like student loans and other priorities like just being able to pay rent. But if you do have the means to save it all, here are some ways to get started. First, there's the one everyone thinks about, which is your 401k. This is a savings account that lowers your taxable income because you don't have to pay taxes on the money you contribute. The downside is that when you take that money out, you have to pay taxes based on the income bracket you're in at retirement age. But there's one major benefit to your 401k. Employers often offer contribution matching, which means essentially you're getting free money. Another option is the Roth IRA. With this, you pay taxes now on the money you put in. This gives you a savings account you can withdraw money from at retirement without having to pay taxes on the money you take out. You can only put $6,000 a year into a Roth. This is also a great option because with a traditional 401k, you may have to pay a penalty if you have to cash that money out early, but that's not the case with a Roth. Most financial experts suggest a combination of the two if you're able. To save more and worry less, you can set up automatic transfers into a savings account from your regular bank or credit union. Tools like Betterment can also help you set up automatic payments into a Roth IRA so that investing can be simple and mindless.
About 16 minutes into the session in the equity market in the United States of America on the S&P 500, we are down about 0.4%. Bit of relative outperformance on the Nasdaq, down about 0.1%. A lot of economic data coming up through the week. Just had the Chicago PMI. Let's cross back over to Bloomberg's Michael McKee. Hey, Mike.
We have had a lot of talk about the economy slowing down in the fourth quarter, and we get a little bit of that information from the Chicago PMI. Chicago area very heavily involved in the auto industry, and the PMI there, the Purchasing Managers Index, drops to 58.2 from 61.1 last month. The forecast was for 59, so it's a little bit worse than forecast. Now, this is still a high number, so it doesn't tell you things are really in trouble, but it does follow the pattern that we have been seeing, and the pattern we're going to look for the rest of the week. You take a look at the calendar, and we've got the usual first week of the month numbers coming out. The ADP payroll numbers, the jobless claims numbers on Thursday, and Friday's big deal, the payrolls report for the month of October, and we are expecting a slowdown, only 500,000 jobs created, which would have been a big deal at one point, but now much less than we've seen each month. Maybe of more interest to traders this week, though, are a couple of appearances by Jay Powell, the Fed chairman. He is going up to Capitol Hill tomorrow with the Treasury Secretary, Steven Mnuchin, and they're going to be talking about their disagreement over the lending programs that the Treasury Secretary is ending. I'm sure there'll be sweetness and light in the chairs there, but they are not on the same page as far as whether those should continue. Then on Wednesday, Powell speaks again to the House Finance Committee, and there's going to be a lot of anticipation among traders as to whether he says anything to ratify the idea that the Fed is going to change its average maturity, start buying on the longer end of the curve at its meeting in December. Doesn't seem to be a lot of reason to do that in terms of where we are with interest rates, but the market is at the moment thinking it's going to happen. So does he try to lead them away or confirm that's what's going to be the case?
Michael McKee, thank you, sir, as always. I'll do this really, really briefly. A bit of breaking news across the terminal. Bitcoin extending its rally to top an all-time high of 19,511. So we have a new all-time high. Intraday for Bitcoin topping that all-time high of 19,511. That's Bitcoin. Back to the bond market. SocGen Subhadra Rajappa expecting the reopening trade to continue pushing Treasury yields higher. Writing, quote, hope springs eternal for a vaccine-led reopening of global economies. We expect the 10-year Treasury to gradually rise to 150 by the end of 2021 as improving fundamentals argue for higher yields. Risks are skewed towards higher yields. Subhadra joins us now over the phone. Subhadra, I asked someone a little bit earlier a question that I will ask of you right now. The key to your forecast in 2021 for 10-year Treasuries, is it on the fundamentals or a policy call on what the Fed will or won't do at the long end of the curve?
I think it's neither. It's the vaccines. I think that we really need the vaccines to kick in. Of course, we have several vaccine makers out there putting out their vaccines. We really need that to boost the economy, improve mobility. So a lot of our expectation for higher yields is predicated on the vaccines becoming a game changer next year.
Why hasn't that changed the mood of this bond market this month? We closed out October at 87 basis points. Right now, we're at 0.847.
Well, because I think that over the near term and perhaps well into the first quarter, the data is going to be somewhat on the weak side. So the focus is very much on infection rates right now. It's very much on slowing data in the fourth quarter, low inflation, not just in the U.S., but also globally. So it's about sort of adjusting near-term concerns over longer-term exuberance. And the bond market tends to be somewhat more sanguine about developments on the vaccine front, given the fact that there's just so much going on the fundamental side, and we need to sort of get through the wall of worry into the end of this year and the first quarter before we start seeing a rise in yields.
So, Subhadra, it's about the vaccine. It's about fundamentals off the back of the vaccine. In your annual outlook, and admittedly, I started reading it this morning. I haven't completed it just yet. Give me time. But a line jumped out to me. In Europe, forget about the fundamentals. Subhadra, what did you mean by that?
Well, I think in Europe, it's a much more complicated supply-demand dynamic with, the ECB buying a lot more of the supply in the U.S. You don't have nearly as much demand coming from the Fed, so there is a potential for higher yields in the U.S. versus Europe. Also, the inflation picture in Europe is a lot more muted. In the U.S., I think that there's a potential for the reflation trade starting to boost realized inflation as well as inflation expectations. So we see a divergence between U.S. and Europe on the bond markets. I think that bonds in the U.S. will probably underperform bonds in Europe, given the differences in the fundamentals as well as the technicals.
Subhadra, I'm enjoying the read so far, and I appreciate your time this morning for joining us. Come back soon, before year-end especially. Subhadra Rajapi there of SocGen on the outlook for 2021, looking for 150 on a US 10-year. What will the Fed's tolerance be for that? What will your tolerance be to that if you're allocated to risk elsewhere? Does 150 start to disrupt some of those trades out there? Or is it about higher growth and higher inflation expectations leading to those high yields that bring you a source of comfort if you've got that cyclical trade on? Story of the year ahead, all speculation right now. Story of the moment, we're down 0.4% on the S&P 500 with your movers, the sector price action. Here's Abigail.
John, well, with that small decline for the S&P 500, not surprisingly, we have a modestly risk-off sector tone. If we go into the Bloomberg terminal and use the IMAP, we will see that all 11 S&P 500 sectors are lower. Actually, healthcare slipping ever so slightly higher, but most lower. Not a lot of rhyme to it either. We have energy lower, financials on bottom, but we also have discretionary communication services, so some of the cyclical sectors and some of the stay-at-home sectors. However, on the month, let's go to where the excitement is. You're talking about this record-breaking month for the S&P 500 in the month of April, the best month going back to April. But take a look at energy, up 32%, the best month ever going back to 1989. Catching my eye the most, though, John, the financials, up 18.3%, the best month since April 2009. That was the original green shoots month. So you have to wonder, is this November as green shooty as that time period was? A new term there for sure, but lots of green on the screen and certainly in this month of November, John.
I just remember hearing green shoots so many times coming out of the Eurozone debt crisis and the last crisis before that. Abigail, thank you. Coming up, the market-moving events you need to be watching. That'll be next in our trading diary. Big week ahead stateside. This is Bloomberg.
Every era presents its own unique set of challenges and opportunities. Trade CME Group futures with Interactive Brokers at low cost and seize the moment. Start investing today at interactivebrokers.com.hk.
our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
It is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
We're going to be well into 2021 before there's some sort of equilibrium that we achieve.
Bit defensive to close out the month of November. Huge month of gains. Going into the final month of 2020. Equities down 0.8% on the Russell. The small caps underperforming the Nasdaq. The Nasdaq almost flat. The S&P 500 negative 0.33%. At the top of the hour, your week ahead, we get some pending home sales in the United States. ISM manufacturing and US auto sales coming on Tuesday. Plus Fed Chair Jay Powell, Secretary Mnuchin testifying on Capitol Hill. We'll get the Fed's beige book on Wednesday. Another round of jobless claims coming up on Thursday morning. And finally on Friday, the main event, the payrolls report to close out the week. What a week ahead we've got for your stateside on both the policy front and the data front as well. For our audience worldwide, this was the countdown to the open. Continue the conversation with me on Twitter at FerroTV. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Monday, 3 p.m. in London, 10 a.m. in New York, 30 minutes into the trading day in the United States. Back to normal. From London, I'm Guy Johnson, my co-host in New York, Alex Steele. Welcome to Bloomberg Markets. Alex, we are hours away here in Europe from wrapping up November, and boy, what a November it has been.
It was really an amazing month. I mean, if you bought small cap energy stocks, you shorted bonds, and if you sold the dollar, sold gold, you're in the money right now. That was really the rotation that we saw. The question we're going to examine over the next couple of hours is, does that continue? And what do you do with a record month in global equities? Well, today it's a little bit of a pause here. It's yet another vaccine Monday. Was this 4 in a row, I think? But we're losing the upside in equities that we were used to seeing on the first Pfizer vaccine Monday. S&P a little light there, about 0.3% lower. The big story, though, is the continued strength of the euro. Is it a euro story or is it a weaker dollar story? How much more juice is left in that rotation? And then the question mark on everyone's head is, why do you have a gold sell-off and a dollar sell-off at the same time? What does that actually mean? I will break that down as well, Guy.
And you've got Bitcoin rocketing to a record high. That's another conundrum in the mix as well. Breaking home sales out of the United States. Pending home sales month on month, a little weaker than anticipated, minus 1.1, expected at 1%. The prior number, though, minus 2.2, revised a little higher. Remember that these have absolutely rocketed. Last month was the first fade we saw in 5 months. The year-on-year number now stands at plus 19.5, which is another incredible number to think about. But let's get back to the vaccine. It is Monday, and every Monday morning it seems we get some news. Moderna is planning to request clearance for its coronavirus vaccine in the United States and Europe today after new analysis showed it was 94.1% effective in preventing COVID-19 cases. Moderna CEO Stéphane Bancel, speaking earlier to Bloomberg's Robert Landgraf, said this: "We have millions of doses ready. We have more and more every couple of days." Joining us now is Robert. Robert, so you spoke to Bancel a little bit earlier on. I think they've got a review coming up on, what is it, the 17th? After potential clearance on that date, how quickly can we get things up and running?
Yeah, so they have said they've been told by the U.S. Food and Drug Administration to expect a kind of public review by outside independent advisors on December 17th. And there's a possibility of it getting cleared, if everything goes well, 24 to 72 hours after that. Now, the U.S. regulators haven't officially confirmed that date of December 17th yet for the review, but it's in line with what they've given Pfizer, which also has a vaccine, and the Pfizer's vaccine, which is about a week or so ahead of Moderna's vaccine, is officially being reviewed on December 10th. So, yeah, if Moderna's vaccine gets an official public review on December 17th, yes, it could be out and being distributed, potentially as soon as around December 20th.
Hey, Robert, quick follow on that. What kind of agreements or structure does Moderna have in place to distribute then over 24 to 72 hours?
Yeah, so it is going to be working with, I think, the government contractor McKesson, and McKesson's going to be helping with the distribution. And so, yeah, they are ready to ship it out, as soon as they get the authorization, and exactly, what doses go to which states is, not clear to me yet, but all that's being worked on, and McKesson is going to be involved. That's the government contractor for this. So hopefully it'll go well.
Hopefully, indeed, the company expecting to ship 20 million doses in the U.S. by the end of the year. Robert, thanks a lot. Bloomberg's Robert Landgraf joining us there. Now, all of that has contributed to the huge rally we've seen in equity markets in November. It's brought 4 consecutive Mondays of positive vaccine news, losing that sort of upside in equities today. But it has been a killer 4 weeks. Here with us is Bloomberg's Abigail Doolittle to take us through it. Hey, Abigail.
Hey, Alex. Well, it really has been a record-breaking month for stocks this November. Really incredible what we're seeing. The Russell 2000 up 20%, its best month ever. The S&P 500 up more than 10%, the best month going back to April, and much of it being enthusiasm and hopes, optimism around the vaccine, as you were just discussing. And it really does happen on Mondays. Now, today is a bit of an exception. Traders taking a little bit of a breather, understandable after such a record-breaking month. But in the month of November, on average, look at Monday relative to the other days, up more than 1%. 4 Mondays ago, the biggest one on the Pfizer news. And then you see going right through the week, investors, traders not participating quite as much. So real optimism again around the possibility of reopening and some sort of normalcy in the second half of 2020, driving stocks up in a big way on Monday. So much so that on an all-world basis, if we take a look at the S&P 500 all-world, or actually the all-world index, we are headed toward the best month ever, up nearly 13%. So lots of enthusiasm out of bulls, really catching my eye for the S&P 500, the financial sector, on pace for its best month since 2009. That was April 2009, the green shoots month. That's the degree of buying optimism that we do have right now. Interesting, though, Guy, there's always tension in the markets. If we take a look at the VIX on the year, it is down well off of the highs on the year, but the VIX right now is holding this year. So it suggests that while there is clearly some complacency on a historic basis, anything above 20 tells you investors do have some heightened sense of risk. And you can see that these highs, or excuse me, these lows are holding, suggesting some investors think that there could be some volatility ahead. The question is whether it will be sort of normal selling after a record-breaking month, or will it be something bigger, Guy?
Yeah, it's dropped pretty precipitously during the month, though, hasn't it? Abigail, thank you very much indeed. Abigail Doolittle, thank you very much. Joining us now to carry on the conversation, Manish Deshpande, Barclays Head of US Equity and Global Derivatives Strategy. Manish, let's talk a little bit about that VIX chart. Equities have rocketed higher over the last month. Number of factors. You've got earnings, you've got Biden, and, of course, you've got the vaccine all in the mix. But the VIX has come down to around that 20 level and doesn't seem to want to go any lower. What should that tell us about perception of risk after the month that we've just had?
So, guys, you're absolutely right. We've got three sort of perfect catalysts. We got the vaccine, we got good earnings, and then we got a split Congress, which is good because we're not going to get corporate tax hikes. So those are the positives, and those are sort of pushing the market higher. But one clear headwind that is facing investors is what is going to happen with these newest round of corona waves. You know, the third wave in the US and the second wave in Europe. I think that is the biggest uncertainty. And then are we going to have some lockdowns from that? I think that is what is really causing the VIX to stay elevated. So I would say that is sort of another 5 or 6 vol point premium before it starts to go below 15, which is what it usually does when you have a proper risk-on rally.
So on the flip side, though, actual true buying, say in the equity market, has just completely looked through the lockdown. If you take a look at, say, momentum sold off, money into value, into small caps, into energy, into industrials over in Europe, into banks, into the recovery trade. How do you understand the distinction then between the VIX still pricing in risk, but it really feels like the equity market is then not?
So I think that you're right. I think there is a bit of a disconnect. And obviously, the kind of investors who trade options are to some extent different than who trade cash, right? So there is certainly, it's not just one Mr. Market out there. So I think that's part of it. But I think option investors, probably being much more, pessimistic in general, are worried about that. So even although the overall market is certainly higher, the rotation has only just begun in my mind, right? So the rotation from what you would call what has led the current rally this year, largely the big cap tech, that rotation out of that into sort of more cyclical sectors or sort of to some extent value stocks is barely begun. So we have a long way to go there.
Manish, how far does that rotation go in reality? You talk about it having far to go, but I'm wondering whether or not at some point there is a kind of story within value that is a little bit more negative, i.e., if you look at the travel stocks, for instance, they're going to need to raise an awful lot of equity potentially, and that could be dilutive. On the flip side, technology, well, we've accelerated a bunch of trends during this crisis, and those trends now look firmly established in terms of things like work from home.
I think that's a great point. So the way we frame the problem is that, during this crisis, there have been groups of stocks who have had positive benefits, and there are others who were obviously negatively impacted. Now, it's not going to be a complete one-to-one reversal next year. So whatever happened this year is not just going to flip next year, because the scars, like you said, are going to take some time to heal. At the same time, some stocks or some group of companies which have benefited, those benefits are more permanent. However, there are groups of stocks who have benefited, whose benefit has been temporary, and that's going to reverse much more quickly. Similarly, there are stocks for which they got hurt, but they're going to, that hurt is going to reverse very, that is a temporary hurt, and that's going to come back as you get a vaccine. But yes, to your point, we have to distinguish between sort of what we call a medium-term positives and a medium-term negative stocks, and you really have to be careful about that. So to your point, I think the big cap tech stocks certainly are of the category where there's going to be some rotation, but it's not going to be a massive rotation out of them, because this is not a 2000 bubble kind of situation. Because these are stocks who are generating cash, they're good companies. It's just a question of there a bit of a leadership change that has to happen.
So, and to your point, I mean, if you don't have a huge rise in bond yields, right, we were almost at 1%, but backed off of that. Inflation expectations that were rising a few months ago aren't really anymore. So when we talk about a rotation then, like what assets are we actually talking about that's sustainable?
So that's an important point, because if you think, so I think, a lot of people frame this as a value versus growth rotation. But we would frame it as a COVID versus COVID healing kind of rotation. It is just a coincidence to some extent that the growth stocks, which were sort of the growth stocks for the last 5-6 years and which have rallied substantially, also benefited this year. Because this crisis could have been completely different. If it was not a lockdown crisis, it is not obvious that e-commerce stocks would have benefited as much as they have now. So what I'm saying is, as the COVID situation sort of normalizes and we get the lockdowns lifted, that factor will be there. So it's almost a coincidence, right? So the long-term real rates question, which has maybe driven to some extent the underperformance of value, that is not going away. So the way we sort of phrase it is it's a reversal to the trend, rather reversal completely sort of, coming back all the way back, giving up all the underperformance that value had for the last 3-4 years.
Manish, just one final point, which Alex is alluding to there as well. We haven't seen bond yields move significantly higher during this month. And I'm wondering whether or not for this value rotation trade to really catch fire, we need that. We need confirmation from the bond market for this to take place.
So it depends. It depends on what kind of value stocks you're talking about, right? So there are, for example, the classic value right now in terms of sectors is energy and financials. So for financials to really work, you need those rates to go up. But and our view is that those rates, although they're going to edge up to some extent, are not going to go up too much. And so financials, we are market cap weight, we are not that excited about them. On the other hand, energy is also probably likely to benefit more because oil is expected to go up if you have a proper recovery. But again, the headwinds from there, the lower capex is also a concern. So the classic value, we are not that excited about. What we're excited about is, let's call it the new growth. So industrials, hardwares and semis, their growth rates are now going to rival the growth rates of large cap tech, right? So they were always lower for the last 5 years. Now they're going to have the same amount of growth. So it's almost a growth to a new growth rotation, if I can say that, rather than a growth to value rotation.
That's such an important point. I'm taking notes as we talk. Manish, thanks very much. Good to chat with you, Manish Deshpande of Barclays. Well, coming up, we're going to continue this conversation with a deeper dive into small caps and that so-called value trade with Francis Gannon, Royce Investment Partners co-CIO. This is Bloomberg.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
What is at the moment what we see as scaled up worldwide globally, beyond CureVac even, there will be enough capacity to really vaccinate the world, well, let's say until the end of next year.
Well, the conditions for small cap outperformance may be coming together in 2021. That is according to research from Bloomberg Intelligence. With the V-shaped recovery for Russell 2000 revenues finally in view, outperforming the S&P, is that rotation now sustainable? Joining us now, Francis Gannon, Royce Investment Partners Co-Chief Investment Officer. Francis, we just showed a chart that showed how revenue could grow much faster for small caps than the S&P over the next few quarters. How much of that is currently priced into the sector?
Well, it was an incredibly strong month. As you know, we saw massive rotation into the small cap space. And in fact, we probably had the strongest monthly return for the Russell 2000 in the index history going back to the late 70s. So you could argue that a lot has been priced in. But at the same token, you know, I would say that this is an index that has been trailing on a relative basis to its large cap brethren for a period of time here.
I understand the trades. I understand why you would thought as an economy recovers that you would see the small caps outperform. That is certainly the historical precedent. What we have so seen during this crisis, Francis, is a lot of companies gear up, a lot of companies take on a lot of debt, and a lot of small companies kind of really struggle their way through this. Is it just going to be a blanket bounce back, or how nuanced do I need to get? How granular? Is this a bottom-up trade or a top-down trade?
I believe this is a bottoms-up trade, and I say that because I think you're going to be increasingly more selective in terms of how you approach the small cap asset class. You know, the small cap asset class today, if you look at the Russell 2000, is an index that is comprised of almost 48% of the companies have no earnings at all. And I think you're going to have to focus on companies that actually have earnings that are actually levered to this economic rebound, which should continue into the new year. So selectivity is going to be increasingly more important. And I think it's the way I'm looking at it now in terms of the opportunity set, it's more around cyclical areas versus defensive areas. And I think people have been more, and you could say this generally about the full market as well, have been more focused on the defensive areas, you know, in a narrow economic environment. But as the economy continues to broaden out, you should see some of these more cyclical areas do quite well. And I think they will do better than a lot of the defensive areas in the overall market.
So I guess the question then becomes where? We were just talking to Manish Deshpande of Barclays, and he was saying, look, for banks to move higher in the broader market, you got to have higher yields. That's not happening. Energy is kind of a hit or miss, right? But industrials could really be sort of the next big tech trade in terms of where all the money is going to flow into. Is it going to be a similar reflection in small caps?
I believe so. I think industrials is a wonderful place to be positioned within the small cap space, not only domestically in the United States, but outside of the U.S. in the small cap space. Industrials have kind of been left behind, these more cyclical, economically sensitive areas of the market. And I think what people miss in today's environment is, and I think, Alex, you and I have talked about this before, is this idea of innovation, how innovation can only be found in the tech sector. Well, there's enormous innovation taking place today in the industrial sector of the United States, in machinery businesses, et cetera, in logistics companies that I think will be benefiting small caps. And that's why I think you have to be very selective in terms of how you approach the small cap asset class right now.
How operationally geared are these companies to the recovery as a result of the crisis, Francis? Have they slimmed down? Are their cost bases more efficient? I'm just kind of wondering, as you work through these companies on a case-by-case basis, kind of how much of a coiled spring there is here.
Well, I think it's probably more coiled than you think. But, you know, small caps have this perception that they are a very fragile companies, right? That these companies are inherently fragile to begin with, and anything that has, a lot of debt or leverage is negative, which I would agree with, right? But if you approach the asset class with a process that tends to focus on better business models, companies that are generating a lot of free cash flow, I think that's the way to approach it in today's environment. So they have trimmed down. Many of these businesses have been through cycles like this before, even though the cause of this one has been dramatically different. But companies have been through these type of cycles before, and so they know what to do and how to address their business models so that they are ready for the rebound should we see it. And I think you're beginning to see that. You saw some of that in the third quarter earning period. And in fact, in some of the outlook statements the companies were making were actually quite positive. So to me, I think the coiled spring from a small cap perspective is more around these more economically sensitive or cyclical areas. I think that's the opportunity set. It's going to be based on obviously a broadening of the overall economy, the global economy. But I think you're going to see, a continuation of innovation in, not only in technology, but in industrials and building supply companies, et cetera. And all of that is taking place right now as we focus more and more on what 2021 will be, which I hope will be a year of recovery instead of closings and recession.
We all hope that. Francis, all right, I'm going to give you a chance in the last minute here to talk your book. What are some of the top names that you're looking at that sort of satisfy this quota that you're looking at for small caps?
So I think as you approach it, I think there are a couple of ways to approach it, right? Is these high companies that generate high return on invested capital historically, and they have done so for a long period of time. And you can find that in a lot of different industries, but I think these industrial businesses continue to be a great way to play it. So look at companies like Manhattan Associates. Believe it or not, look at some bigger brand name retailers that have come down into our space of late. Names like Ralph Lauren, which I think could be interesting here. Look at P&C insurance companies, property and casualty insurance companies that are going through a really interesting pricing cycle right now. So I think there's opportunity in a lot of different sectors, but focus more and more on these economically sensitive areas that will really benefit as the economy continues to broaden out.
Francis, interesting to get your insight. Thanks for taking the time to bring it to us. Francis Gannon of Royce Investment Partners. Thank you. This is Bloomberg.
How do you manage risk when the world seems upside down? With products and tools that support your strategy every step of the way, every major asset class, any market condition. When it's time to act, CME Group.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
A market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
It's time for the Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. I'm Ritika Gupta. The credit unit at Blackstone Group is going shopping for quant firepower. Bloomberg's learned that the alternative asset manager is set to buy technology-driven credit investing firm DCI. The firm oversees about $7.5 billion in assets. The DCI purchase will allow Blackstone to wade deeper into the world of investment-grade bonds. Two of Wall Street's biggest data providers are joining together. S&P Global has agreed to buy IHS Markit for about $39 billion in stock. It's the second biggest deal of the year. The proposed tie-up is part of a race for scale. The industry's largest players are trying to capitalize on surging demand for data and analytics. Bloomberg LP, the parent of Bloomberg News, competes with IHS Markit and S&P Global in providing financial analytics and information. And that is your latest business flash. Guy, Alex?
Ritika, thank you very much indeed. Alex, we should probably talk about this. Data and analytics are obviously the lifeblood of the financial sector now, and this is definitely a bet, the IHS Markit S&P deal. I know it's a takeover in theory, but it feels almost like a merger. It's a definite bet on bigger is better. I guess there's a bunch of things that could potentially go wrong here. Regulatory probably is one of them, I would have thought, and we've seen what's happened with the LSE Refinitiv deal. And the other one is you've got to make these things work. Culture is really important. This is a US company, a London-based company, putting them together. Is it going to work? Is it all going to fit together? Is the IT going to work? So there's lots of risks.
Yeah, and also, you know, you guys talk funny sometimes, so that's going to be really hard for the American side.
Actually.
Yeah, so that's going to be tricky. But in all reality, you're basically looking at enormous amount of M&A volume. By the way, in the fourth quarter, $760 billion so far in the fourth quarter. That is an enormous number, and we're not even done yet. So I just can't imagine what's going to happen in the next couple of weeks. Blackstone, too, huge credit deal for their unit as well. All right, well, we're just talking about it. Merger Monday, sure, but it's also Vaccine Monday. Coming up the next hour, we're going to talk to Stefan Bancel, Moderna CEO. This is Bloomberg.
How do you manage risk when the world seems upside down? With products and tools that support your strategy every step of the way. Billions of data points. Every major asset class. Across the full trading life cycle. We can't control what's next, but we can help you navigate it. In every market environment, through every twist and turn. When it's time to act, CME Group.
So the reason we're interested in Post Office Rock is just the extreme nature of the erosion that is ongoing here. In the last, since 1940, it's eroded about 100 metres and in quite a unique fashion. By having a map of the seafloor and hopefully being able to capture some movement in these transverse dunes, we'll be able to see after the erosion where the sand is going and why it is not replenishing the coast as sometimes and most often happens.
With continued sea level rise and future climate change, we're just going to see much more of this kind of event taking place. So it's a good proxy of what we expect to take place much more commonly by 2050, 2100 than is currently the case.
there's a lot of concern in Hong Kong.
How do you manage risk when the world seems upside down? With products and tools that support your strategy every step of the way, every major asset class, any market condition. When it's time to act, CME Group.
11 basis points, so continuing in this knee-jerk risk-off feel.
Live from New York, I'm Alex Steele with Guy Johnson in London. This is Bloomberg Markets. Well, President-elect Biden has officially nominated Janet Yellen as his Treasury Secretary today, shaping up his cabinet. Joining us now are Katerina Saraiva, Bloomberg's labor market reporter, and Michael McKee, Bloomberg National Economics and Policy correspondent. Katerina, let's start with you. The Yellen position was well choreographed. We're also learning about potential nominees to his economic staff.
Yes, that's right. Hi, thank you for having me. So the Biden team has announced that they will nominate Neera Tanden to head the Office of Management and Budget. She'll be the first woman of color and the first South Asian American to lead OMB. We'll also have Wale Adeyemo as Yellen's deputy at the Treasury. And then they've made some picks for the Council of Economic Advisors. They've nominated Cecilia Rouse to head up the CEA, and then Jared Bernstein and Heather Boucher to be members of the CEA. Cecilia Rouse will be the first Black person in that position as head of the CEA. And Jared Bernstein and Heather Boucher are both very progressive, kind of left-leaning economists in the DC think tank world. So those are pretty, kind of new, maybe out of the typical mold of people that you'd see in those positions.
Katerina, are there going to be any issues here getting all of these people confirmed?
So the only issue we've kind of heard a bit about is perhaps Neera Tanden might have some difficulty getting through a Republican Congress. But, I don't think that you would see problems with, for example, Janet Yellen. She's kind of, a very well-liked person, obviously, headed up the Federal Reserve for a number of years. So I think she's a pretty well-liked individual and shouldn't see much difficulty getting through Congress.
So, Mike, if we put everyone that we just talked about, including Janet Yellen, in a room, what is going to be an economic policy?
Well, I think the main economic policy, the thing that's going to drive policy, is an effort to bring more economic equality to the United States economy, to try to help people at the bottom of the ladder. Janet Yellen, known for trying to push the economy as far as it can go, run it hot to bring down the unemployment rate. Jared Bernstein and Heather Boucher, very much, as Katerina said, labor economists who want to do more to switch the balance between capital and labor in the United States. So you're going to see an effort to do that. The question is on what kind of things are they going to be able to get through, and therefore what kind of things are they going to propose in terms of stimulus, in terms of maybe keeping some of the automatic stabilizers put in place, and in terms of trade. There may be some differences on trade because Janet Yellen, very much a free trader, and some of the others very much not.
Mike, there's a lot of women here. It's fantastic. My question is, what does that do in terms of what we're likely to see in terms of policy? Women have lost out. People have talked about this recession hitting women very, very hard. There's a lot of evidence to support that. The fact that we have this lineup, what does it suggest about dealing with gender inequality in the administration, dealing with gender inequality in the economy? Are we going to see more policies on that front? Because a lot of women voted for Joe Biden as well.
I assume we will, Guy. It's not clear exactly what kind of things they're going to propose, but there's the possibilities of additional aid for child care. That would be a big one for a lot of women in this country. But as you point out, this is a very diverse economic team. There's only one white male in there, and that is Jared Bernstein, who's been around for quite a while. Brian Deese is the top pick, as we understand it, to head the National Economic Council. another white male. But for the most part, this is women and people of color. And so you can expect that they're going to be extra sensitive to the kinds of things that need to be done to help those economic groups.
Katerina, can labor policy walk and chew gum at the same time? Can we tackle women employment and then minority unemployment as well?
Yeah, I mean, I think the two kind of go hand in hand. You know, of course, we have half of all minorities are women, so I do think that that is possible, and I think you have, you know, a lot of folks kind of calling for policies to specifically focus on women of color, and that'll kind of help bring in other marginalized folks into the fold, and then kind of lift, you know, be the kind of tide that lifts all boats. So I think so, and I think with how the pandemic has disproportionately impacted women and people of color, I think that is, you know, important to people now more than ever.
Mike, there is one white man that still has his hands firmly on the economic levers, and that is the chair of the Federal Reserve. Do you see, is there anything within this that would hint at the fact that we could see changes at the Fed? Brainerd was often touted as Treasury Secretary, yet she is now remaining at the Fed. Can I extrapolate forward and assume that the next chair of the Federal Reserve will be a woman?
No, I wouldn't do that at this point. Jay Powell's got a very good record as chairman of the Fed, and he's liked by a lot of people. He's nominally a Republican, but has reached out and worked across the aisle very much. And so his term runs another year. He can easily be reappointed if Joe Biden decides that he likes him and the other members of his economic team like him. Janet Yellen and Powell get along very well. So it is certainly possible that Powell stays on. Now, of course, that begs the question of whether he wants to stay on, but it's still too early to make a determination about what is exactly going to happen.
Bloomberg's Katerina Saraiva, Bloomberg's Mike McKee. Both of you, thank you very much indeed for joining us. Coming up, 'tis the season for shopping. I think it's already started, to be honest. We're going to speak to Kristen Rutekin, president, on how Black Friday and Cyber Monday are shaping up for retailers during the pandemic. This is Bloomberg.
How do you manage risk when the world seems upside down? With products and tools that support your strategy every step of the way. Every major asset class, any market condition. When it's time to act, CME Group.
Never met, obviously, Walt Disney, but if you had a chance to talk to him, what would you want to ask?
Obviously, probably the number one question would be, how am I doing? You know?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
So the US holiday shopping season is firmly shaping up to be a bit different this year. The pandemic is pushing more shoppers to remain at home, of course, and shop online. Black Friday traffic fell 52.1% versus last year. Online sales still strong, rising nearly 22%. Joining us now, Christian Gall, Ratigan President. Christian, talk me through what we learned this Thanksgiving and how different it was.
I mean, it has been the most interesting holiday shopping season we've ever seen on our platform, for sure. There are a few things happening that are factors this year. The first is a lot of retailers are pushing shoppers to shop early. They push shoppers to shop really in November, and they started their deals significantly earlier. I think what they wanted was they wanted to move up the holiday shopping season. But what we actually saw on our platform is that shoppers shopped on Black Friday as they usually did. They just did it online. We are seeing unprecedented demand on Black Friday for a number of different categories. A lot of them are pandemic affected categories, things like electronics, gaming, toys, sneakers, and athleisure. All of these things that have been up significantly during the pandemic are getting kind of a double whammy hit on Black Friday. And Cyber Monday, as of today, and the numbers that I'm looking at right now, it is looking to be, I would say, the biggest online shopping day the world has ever seen. The pandemic has driven so many people to shop online. And, today is going to be the day that a lot of them really take advantage of all of these deals.
Question, typically if you go into a store for Black Friday, you go for the deal, but then as you're browsing, you find a lot of other stuff and you just kind of throw it into your cart. Not speaking from experience, obviously. How do you replicate that online?
I think there are a lot of strategies that retailers are using. The first is they're using discounting thresholds. So, you can get 20 to 30% off of your order, but you have to order $100 or $200 worth of merchandise. They're also on their sites incredibly savvy about cross-selling and upselling different merchandise. So you may have something in your cart. They're going to use personalization to recommend something else to throw in while you're buying. What we're seeing right now is that it's really average order values that are going up significantly. Our average order value on Black Friday versus last year was up about 15%. And the average order value on electronics was actually up by 50%. So from my perspective, retailers are actually being very successful in this strategy this year. They are causing consumers to really fill up their carts and buy more.
How useful, though, will the lessons learned this year actually be? How different do you think, Christian, will behavior be once people have a vaccine in their arms?
I think there is a bit of an anomaly this year in terms of what people are buying. This world of streaming services being up and being given as gifts, this world of, we're all wearing athleisure at home and slippers and really comfy pants. And people like Lululemon and Nike and Adidas are really capitalizing on the fact that we're buying sneakers and not high heels. Those changes are going to be sort of the changes that are temporary and that are because of the pandemic. I do see, however, behavior is changing in America right now. And this world where we buy online, we don't go to stores as often, I think there is something that will continue even after we get a vaccine. Things like grocery delivery and all of the things that we've, been doing differently. There's a bit of that will sort of hang over in our lives. And the shift to online that has been just accelerated, I think will just continue to be a thing that we do.
Kristen, there's been a lot of debate as to this, fiscal cliff that we're headed towards at the end of the year when benefits won't be renewed. And one school of thought is that, that's really going to hurt spending. That's going to be a huge problem. The other school of thought has to do, though, with the savings rate. And the savings rate is so high because people were able to put away some of the checks they got in the last 9 months that people might be okay. Do you have any indication of which way this could turn out?
From my perspective right now, people are spending, and it's been interesting. We've done a lot of forecasting of this holiday season and what could happen. There was a scenario where people pulled back significantly. We're not seeing that scenario play out right now. So we're seeing things like, double to triple digit demand in toys on our platform, because I think people are really trying to give their kids very joyful holidays. Even department stores, discretionary spending like apparel, that's up significantly too. So it doesn't appear that people are pulling back right now. there definitely could be a bit of a hangover, I think, post-holiday for a lot of these retailers in January and February, where they need to use increasingly deeper and deeper discounts to get people to move, because that is where people could start to get a little bit frightened about their sort of financial outlooks, and could definitely pull back.
All right, great point. Kristen Gall, thanks a lot. Redticken President, thank you very much. All right, well, still ahead, OPEC Plus members kicking off a virtual meeting on whether to maintain current supply cuts or to hike production in January. It looks like that's then pushed off to tomorrow. We're going to break down that potential decision with Christian Malik, head of oil and gas research. This is Bloomberg.
How do you manage risk when the world seems upside down? With products and tools that support your strategy every step of the way. Billions of data points. Every major asset class. Across the full trading life cycle. We can't control what's next, but we can help you navigate it. In every market environment, through every twist and turn. When it's time to act, CME Group.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
OPEC is considering 3 months of extension of current oil output cuts. That's according to some delegates. Iran says some OPEC members oppose the delay in an output hike. Well, joining us now to help us break it down, Christian Malik, JP Morgan, head of oil and gas research. Christian, what is your base case for what happens in the next 24 hours and the consensus in the market at the same time?
Well, I think what OPEC is trying to solve for is how to draw down global inventories while solve for a backwardated oil curve in order to deter incremental shale of oil volume growth, as well as renewed capital investment from the non-OPEC, non-US volumes. So they've got a bit of a dilemma in terms of the horizon that they stick to in terms of whether to extend these cuts versus seeing this resurgence from shale oil, which has happened relentlessly over the last few years.
So market participants, just in general, have been sort of looking through the short term and looking at the longer term victory with vaccines. How do then delegates look at it when they have the curve issue, but in the short term supply problem? Can they afford to sort of look through that?
Well, I think when you look at the fiscal break-even of OPEC, I mean, Iraq's fiscally in a very difficult situation. Saudi's fiscal break-even is somewhere between 70 to 80. So they've got to also think about the price that's conducive for their own constraints. They're very long investment, whether it's diversification on one plane or investing in oil capacity. So they've got to think about the oil price, but equally a healthier oil price is solving that through inventory drawdown. Now, on that, if that's on one side of the equation, the other side is knowing that whatever they do to the oil price will encourage more production. So I think what they'll find is to sort of create a happy medium where they deter production, delay it, but not necessarily by up to 3 months, but something in between 1 to 3 months in order to keep the competition on its toes, while also straddle uncertainty around demand. Because after all, as Biden comes in, we may see more lockdowns, more difficulty in terms of infections, and we just don't have that visibility, neither do they. So they've got to also think about that in context.
Riyadh and Abu Dhabi have been lockstep throughout this crisis. They now are no longer in that position. How problematic is that for Saudi?
I think UAE and Saudi have one common goal, which is to ensure that OPEC takes share of the medium term and also to ensure that their fiscal priorities are set. That's the common denominator. I think where there's been some disagreement has been how they solve that through the competition, shale oil, to ensure that they don't just see this repeat, what I call sort of whack-a-mole of oil production. Every time oil price goes up, you see production emerging somewhere else. I think the UAE has a very good point in that regard. And so they've got to find common ground where they can achieve a drawdown inventories, but also ensure that the competition, shale or non-OPEC, non-US, isn't going to take advantage of that. And I think that's a healthy discussion between them. It's not a disagreement per se. I think ultimately the governments get on very well. This is a healthy sort of conflict, if you like, within OPEC in order to ensure that they do what's best in OPEC's interest, but also from an oil market perspective, they're not just getting the oil price up for 5 minutes, they're actually fixing the oil market through inventory drawdown.
The narrative in the market, it feels somewhat consensus, is that the UAE is going to keep on board, like you just said, no problem, and that even if Iranian barrels come on due to a President Biden and sort of any revival of the Iranian agreement, it's going to be slow. Is there a risk of being too convinced of both of those narratives? Like, what's the downside here?
I think the downside is that Iran starts adding barrels in, cheating, and therefore they can't control the narrative. They end up trying to sort of be consolatory towards Iran, but Iran just does what it wants. Having said that, with sanctions still in place in Iran, I think the Biden administration is coming in will be looking at this in a very staggered, measured way. Saudi and UAE will have the heads up. They will have the visibility to manage. In our view, I think what we'll find is that Saudi and UAE and the rest of OPEC do take a sort of sensible, pragmatic approach in how they let Iran in. After all, with all the hard work to help draw down inventories and support price, to get that all away through confrontation or through a standoff would be very unlikely. So it's more likely that we see Saudi and UAE, and obviously with Russia's help as, if you like, the broker, ensuring that the UAE and Saudi can ultimately accommodate new barrels from Iran over time, and which is why I think in this discussion around delaying production, while they know that's there to help the oil market, they also have to think about renewed quotas post that in order to make sure that they do accommodate Iran in a sort of healthy fashion.
How much geopolitical risk do we need to price into the Gulf right now?
At the moment, I think the market's been generally quite aware and sort of with its eyes wide open in terms of all the issues that we've seen. Having said that, you have seen attacks on Saudi of late through the Houthis, and I think that's also an issue in terms of potential complacency. But we do see the Saudis looking after that and making sure that they have got all the sort of security apparatus to make sure they can mitigate. So while it's important to think about geopolitical risk, the reality is we are still oversupplied. We are close to historic highs in inventories, and therefore, even if we were to see some sort of attack, we still have high inventories. So geopolitical risk is important in a tighter oil market where capacity is not where it is. As capacity comes down, as we look at 2021, it will become more pertinent, because as capacity comes down and we see a deficit in a tighter market, that's when the oil market has to attach a higher risk premium to what we're currently seeing in terms of some of the tensions.
If we dig a little deeper into that, Friday we had the killing of basically what they call the father of Iran's nuclear program, and Iran did nothing. The conversation is that Israel and the U.S. could be much more volatile until Biden takes office January 20th. And I'm wondering what kind of Iran you're expecting over the next few months.
Well, Iran has been extremely resilient through this oil price crisis, through the restraint on production, and that speaks to the underlying strength of its economy. Not in that it has a high, not fiscally, but the fact that they do have strong manufacturing, strong industrial capabilities. Now, with that said, they will be approaching the situation delicately, because after all, there is an opportunity potentially to see a renegotiation through the next 3 to 6 months. Now, you've also seen the Saudis take a more consolatory approach through how they manage their international foreign policy. And I think the point, therefore, is that both of these countries are looking more inward, more domestically, because there's a massive priority to diversify, to lower their fiscal budget break-evens, and to rebuild the economy. And I think that will take precedent over an international sort of foreign policy agenda on both sides. And I think that's where you'll probably see the US help intervene and try to find a sort of a common ground, given there is a mutual interest for both sides to advance their economies, given particularly also, if you think longer term, the pressure on demand for oil. If we do ultimately see peak demand over the next 10 to 15 years, then the whole of GCC is going to have to transform itself and think more about domestic priorities.
Christian, we're going to talk to the Moderna CEO in a few minutes' time. The vaccine is going to be in people's arm pretty soon. Is the upside to demand, is the risk kind of around demand to the upside or the downside at this point in terms of where you think consensus is?
I think the risk is to the upside for sure. I mean, we've been generally quite conservative on demand this year as we assume a slower rebound and sort of lockdown 2, lockdown 3 is emerging through 2020. Having said that, we do see demand coming back with vengeance in the second half of next year. And as you rightly point out, that vaccine doesn't necessarily fix the near to medium term mobility. What it does is point the futures market to mean reversion. We look past lockdown 3 or 4 and think about the rate of change of demand growth. And that's why we don't think supply is equipped to meet that rate of change. Because if you think about sort of the before and after of sort of, if you like, the benefits of COVID, so to speak, the benefit from a market perspective is that you've seen a lot of supply come off much quicker.
Christian, thank you very much indeed. Christian Malek of JP Morgan. Coming up, as I say, Stefan Bancel, the CEO of Moderna, 11:30 a.m. New York time, 4:30 here in London. This is Bloomberg.
How do you manage risk when the world seems upside down? With products and tools that support your strategy every step of the way. Billions of data points. Every major asset class. Across the full trading life cycle. We can't control what's next, but we can help you navigate it. In every market environment, through every twist and turn. When it's time to act, CME Group.
हमारा सर्वाइवल सिर्फ और सिर्फ इस इलाके में ड्रिप इरिगेशन सिस्टम की वजह से है और इससे हमारा मुस्तकबिल भी और इससे हम फ़ायदा भी ले रहे हैं।
तकरीबन 20,000 स्क्वायर किलोमीटर लैंड जो है वो अबंडेंट पड़ी है, जिस पे कुछ भी एग्रीकल्चर टेक्निकल तरीके से नहीं हो रही।
How do you manage risk when the world seems upside down? With products and tools that support your strategy every step of the way. Every major asset class, any market condition. When it's time to act, CME Group.
I'm certain that we will be able to bring our debt levels down and avoid what you could call a debt crisis because we are focused and we've been open enough by telling the nation that we have too much debt.
We explore the trends, investments and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
So, live from London, I'm Guy Johnson. Alex Steele is over in New York. We count you down to the European close on Bloomberg markets. So what do you need to know from Europe this hour? Well, Moderna's stock stateside soaring as it applies for emergency use authorization on both sides of the Atlantic. We're going to be joined by CEO Stefan Bancel this hour, half past the hour to be precise. S&P agrees to buy IHS Markit for $44 billion. Lance Ugler, who founded Markit, remember, back in a UK barn. Well, he's only going to stay on for a year as a special advisor. That's interesting. And a record month for European equities comes to a close with November 2020 eclipsing the previous record set back in April 2009. Let's look at those markets and see what we're getting today. Now it is a Monday, which basically means we get vaccine news. But today we're not getting the positive reaction in stocks that we previously had. The Stock 600, as you can see, down by 0.2%. The euro also giving back some ground, but we are approaching the 120 mark. We'll talk about that in just a moment. 119.60. We're basically flat. Brent crude, which has soared during the month as well. Watching what is happening very carefully with that OPEC story. We're trading 47.68. Again, down a little bit there. And in terms of what we're watching in the German bond market today, we are seeing a little bit of movement, but not much. But that kind of captures the story of the last month, doesn't it, really? Not much movement in the bond market, lots of movement elsewhere in risk assets. I just want to show you this chart because this kind of sums it up. This is the 1 month for the Stock 600, up by 12%. But some markets, many markets here in Europe, they're smaller markets, but up by over 20%, Alex.
All right, well, back to the main news there with the vaccine, because it's Monday, so we obviously have vaccine news. Moderna is planning to request clearance for its coronavirus vaccine in the U.S. and Europe today. This is after a new analysis now showed it was 94.1% effective in preventing COVID-19. The Moderna CEO, Stefan Bancel, will be speaking to us later. He earlier spoke to Print and said that we have millions of doses ready. We will have more and more every couple days. Joining us now with more is Bloomberg's Michelle Cortez. The market's taking this very much in stride. The recovery stocks are actually lower on the day. Michelle, what's the outstanding question that you have right now concerning the Moderna vaccine?
The question is how quickly is it going to be able to be administered and how many people are going to be able to get it right away? We know that every state is going to get a certain allotment of these vaccines and they'll be able to administer it and distribute it how they see fit. But of course, it's a very controversial topic. Do you want to protect your healthcare workers, obviously, first, but do you need to actually get your teachers protected? Do you need fire and police? Who is going to get protected, and how can we do it in the most efficient way so that we can get the virus itself under control and not just protecting people unilaterally?
How quickly, if it is approved on the 17th, does it start to get rolled out?
They have said that they're going to start rolling this vaccine out within 24 hours. We know that the work that has been done ahead of time has been just as remarkable as the pace of the science when it comes to this vaccine. They have started producing this product months ago, so that's why we do have 20 million doses already available. So they know that they're going to have to roll it out. There are plans in place to actually deliver the vaccine to the administrators. They're going to have to truck it to across the country. All of those pieces are already in place, and they were in place before we knew whether or not this vaccine was even going to work.
Okay. Thank you very much indeed. Alex.
Okay, so stay with us also. As I mentioned later today, we're going to speak to the CEO of Moderna, Stefan Bancel. That's coming up in just about a half-hour time in New York, 4:30 p.m. In London. Guy?
Okay, joining us now, Mimi Rushton, Barclays co-head of Global FX Distribution, and Laura Cooper, Bloomberg MLive macro strategist. Laura, I want to start with you and kind of wrap up what a month we have just seen. So many asset classes moving so aggressively. Stocks really stand out here, don't they? We've seen huge gains, particularly here in Europe.
Oh, absolutely. And it has been quite an exceptional month, notably in Europe. The fact that we are seeing really double-digit gains for the month. And this is all on the back of that vaccine euphoria that we saw earlier in the month, mixed in with some political clarity on the back of the U.S. election. Now, I think for markets going forward, really the question remains of can we sustain this momentum through year end? Or is it a case of really the risk-reward payoffs have clearly shifted and it could be the case that equities have front-run a lot of those year-end gains that we potentially would normally see. So instead, we're likely to go back to this competing narratives of this vaccine progress against kind of the near-term challenges, as clearly the virus is not yet under control in a number of parts of the world.
Mimi, is it going to be the same conversation when it comes to the FX market? The result has been the weaker dollar.
Yeah, absolutely. And what a month November really has been. But predominantly, it's resulted in this dollar lower trade. So when you look across FX, we've seen that, and our clients have told us that this is very much the consensus trade that they are thinking of at the moment. And whether that dollar weakness progresses through December and certainly into 2021 will be exactly as Laura described. It's this balancing of the short-term effects around the virus and the impact that it's having on the economy, but also looking through to some of the more positive effects that the vaccine hopefully will bring.
Mimi, how big a problem is this going to be, though, in the short term for certain central banks? Philip Lane got very agitated earlier in the year when we got up to 120. We are now kind of at those similar sorts of numbers. Do you think as maybe this trade continues out of November into December that we see similar reactions?
It's interesting because most central bankers really want the market to operate freely within its own rights. And often central bankers will be more concerned about the speed of a move rather than necessarily the outright level. When you're looking at euro-dollar in particular, there's a number of factors at play, the dollar downtrend overall being the principal one. But also remember that when you look at euro overall, euro-sterling, for example, has shifted to adjust to some of that. So when you look at the euro trade weight, actually it's not at the same levels as where Philip Lane last made his comments. That doesn't mean that he won't necessarily make them again, but we're in a different environment now, and the adjustment and the timing that we've had to get to this level has been more protracted.
And it has come in tandem with a lot of money coming into European equities, like a record-breaking month, apparently, $1.7 trillion for November into European equities, a lot of it going into Greece, Spain, banks, industrials, energy even. Laura, you definitely sound a lot more skeptical. Do you think that the money comes out, or it just kind of doesn't flow in anymore?
Well, I don't think I'm necessarily skeptical in terms of kind of this outright, contraction ahead for equities. I still think that there is upside traction to be had in terms of, European equities that are clearly leveraged more towards that economic reopening trade. I just think it's the pace of gains that we've seen are likely unsustainable. But when we look at the composition, like you mentioned, it's been autos, it's been banks, it's been those insurance sectors that are clearly undervalued. So if we do have these brighter 2021 growth prospects, those are supportive for this sectoral rotation. So clearly, I think there is some traction there. We also have, the ECB likely easing policy further in December. We do have this supportive fiscal stimulus backdrop potentially. And, the ECB is alluding to the fact that they could remove this de facto cap on bank dividends. So that clearly is another tailwind. It's just a case of really, I don't think that the momentum that we've seen is something that can be sustained.
Laura, we have seen volatility come down during the month. It was elevated as we came into the month around the US election. It certainly faded and faded significantly. But it doesn't seem to want to go below 20 on either side of the Atlantic. What is the market worried about here? What are the big risks that the market potentially still sees here? We're going to be talking vaccines in a few minutes' time. How big a problem could that be if that doesn't get rolled out properly? What is it going to take to get the VIX and the V2X below 20?
Well, I think the fact that we are still seeing, equity volatility remain elevated does reflect this uncertainty around the virus outlook. We are still seeing the pace of virus cases continue to accelerate in the U.S. So that's clearly a challenge to the near-term growth outlook. We also have, the potential fiscal stimulus lapse, whether that begins to actually feed into the consumer. The consumer has remained relatively resilient so far. We have elevated savings rates, we have resilient balance sheets. But if we start to see that feed into the economic data, that starts to roll over, clearly that's going to be a risk, as it would focus markets back to those near-term challenges that the Fed has alluded to, these challenging months ahead, and kind of take away from the vaccine progress that has driven a lot of this euphoria. And again, there is the question of really the deployment of vaccine. It's one thing to price in brighter 2020 2021 growth prospects, but it's quite another in terms of the actual distribution and the efficacy around the timely deployment of that.
So, Mimi, how does that then play into your world? Like, is the euro still a risk-on currency and the dollar still risk-off? Like, is that simple if we're going to be taking that template?
Well, I think certainly, the price action that we're seeing
Laura,
today.
hang on one second. I'm going to throw that one to Mimi.
I'm not sure it's that straightforward in terms of looking at it for G10 and looking at it from a euro-dollar perspective. I think it's much more clear-cut in EM, and certainly our clients are saying that they are thinking very carefully about how that vaccine deployment is going to play out and how relative economies are going to perform in terms of then thinking about how they'll invest their assets, and therefore that will play into FX. But in G10, it's definitely not that straightforward, and you could potentially see some resumption of the dollar, because let's not forget that if there is growth more globally, the US stands to benefit significantly from that as well.
OK, so what would it take to get that counter-trend rally in place, Mimi? What do you think the catalyst could be?
It's a difficult one to say at the moment, and I think it's by far the biggest thing on our clients' minds is this consensus trend really going to take hold, and actually we'll see a dollar downtrend, which sets the dollar back into a new paradigm, frankly, that we haven't seen for a very long period of time? Or is this actually where we'll get that rebasing and asset allocation move more substantially to some of the topics that you were discussing with Laura earlier? You know, that I think is really what we'll see over the next 4 to 5 weeks. But you know, balancing these short-term effects around the real macroeconomic impact of what's happening as a consequence of the virus now is very difficult to weigh with that longer-term vaccine implementation, and that's what the market's grappling with.
All right, guys, thanks very much. Bloomberg's Laura Cooper, thank you for joining us. And Mimi Rushton, Barclays, you're going to be sticking with us. We're going to break down Brexit and what it means for the FX market. This is Bloomberg.
How do you manage risk when the world seems upside down? With products and tools that support your strategy every step of the way, every major asset class, any market condition. When it's time to act, CME Group.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Live from New York, I'm Alex Steele with Guy Johnson in London. This is the European Close. I'm Bloomberg Markets. All right, let's get to the latest on Brexit. I'm going to say this sentence again. There are apparent signs of optimism. UK Foreign Secretary Dominic Raab saying a trade deal could be reached in days if both sides continue working in good faith. Joining us now on the phone is Bloomberg's Edward Evans. I made a joke, but I feel like I literally have said that sentence 75 times. Why is this time different?
It may not be different, is the short answer. I think both the UK side and significant EU side say they can get to a deal here. The key point is the second part of that sentence, which is about how the other side behaves. And really what you're seeing now is the deadline is focusing minds. There comes a point, Britain leaves the EU single market on December 31st for a deal to be implemented and ratified in time for then. It needs to be signed off a few weeks before then. And we're getting to that point now. And what you're seeing really are decisions, the point where decisions are having to be taken on things like the level competitive playing field, how any treaty will be enforced, and any access to UK fishing waters. Now, these are three issues that have really dogged the talks since they began back in March, and only now are we beginning to see, I think, some signs of actual progress. Whether that's enough to get us to a deal and a deal in time is something altogether different, though.
This time next week, we may be having the same conversation, Ed, but this time next week, we will have an EU summit in front of us, and the clock will have ticked a little further. Is your assessment of the situation that EU summit is effectively the end of the road for this?
I think if there isn't a deal by that point, you'd expect member states to start looking at the contingency plans very carefully at that point. It's very interesting, Angela Merkel coming out today suggesting that some EU member states were impatient, wants to get started on those already, and you can see that the patience on the EU side is wearing thin. That said, it's in no side's interest to be seen to walk away from this negotiation early, or while there's any prospect of a deal being reached. So it's quite possible EU and UK negotiators will go on right down to the very end. That summit could, in a reasonable world, look like a deadline. It may not, of course, necessarily be that. That said, again, the one deadline in this is fixed, is December 31st. They've got to ratify it. It's possible the EU Parliament could even be sitting on December 28th to ratify it. That is just how close this is now coming to the wire.
Yep. Well, tomorrow's December, so I guess we're getting pretty close. Ed, thanks very much indeed. Bloomberg's Ed Evans updating us. We may have a little further to go. Still with us, Mimi Rushton, Barclays co-head of Global FX Distribution. Mimi, if I take a look at what is happening with the pound right now, I'm trying to balance out what is going on with short-end rates and whether or not the negative pricing that is still in short-end rates is what is ultimately still holding the pound back. If we were to see any kind of a deal and we were to see maybe those short-end rates pricing back to zero, what's the upside in the pound?
So it's interesting in that, clearly there is a clear correlation between short-end rates and FX spot and, for example, sterling dollar. However, that is not the thing that, in my view, that is holding the pound back, or in the view of our clients. It is definitely around the clarification and knowing the certainty of what's going to come from this Brexit discussion. Once that sort of gets completed, there is some asymmetry that currently exists around the pound. So to the extent that there is a deal, even if it's a very thin deal, our traders think that maybe that would be potentially 2 to 3% appreciation in the pound. There is already some positive sentiment baked in, you'd understand. But to the downside, if actually this is incredibly disappointing, you might see that actually, a sterling downturn to between 5 to 7%. And it's that asymmetry as well, which is really causing that conundrum as to whether there is something that's holding the pound back. And from our clients' perspective, clearly Brexit is one of the biggest topics around that.
Is it binary? Like, is there ever going to be a day where we know the answer to that question, where we're like, okay, 2% upside, okay, now this is what we have to price out?
It's a really great question, and ultimately I'll be guided by when our clients feel that this has been somehow concluded. We've been watching headlines, as you guys have alluded to, for such a long time now. But I think that the reality is very closely upon us now. As of January the 1st, our corporate client side, for example, are going to have to deal with the reality of what this new normal will look like. And so the market will have to adjust to the way in which we see the economy perform, and our clients actually really having to deal with the effects of the new rules, whatever those rules may look like.
What would be the effect on the euro of a no deal?
It's interesting because really this has always felt like more of a sterling trade than necessarily a euro trade. But your question alludes to something important, Guy, in that clearly there is an effect on the European economy as well. And it's interesting speaking to some of our clients on both sides of the channel, that our clients in Europe will feel this just as much as those in the UK. Having said that, I do think that at the moment it stands for sterling to be the net. It will lose momentum more so than the euro. I don't see that this suddenly creates a huge amount of euro weakness due to the diversification of trading partners that the eurozone has in order of magnitude versus the UK.
Based on that also, I wonder how we then wrap in things like stimulus out of either Europe or the UK. When we get money, when things wind up reopening, when does the macro come in as well and play?
I think the macro is very much already baked in and is part of the reason why you're not seeing more potential extended effects as a consequence of Brexit. There is no doubt in our clients' minds and the way in which we see currency trading that COVID has overtaken Brexit as the principal reason for concern. The reason that the waters are somewhat muddied now is because we've had so much positive vaccine news. And now Brexit becomes the pinnacle of the issue that we're still trying to resolve and where there feels more uncertainty. But there's no doubt that there is a huge amount that's already baked in around the potential performance for both Europe and the UK as they overcome the vaccine effects. And, we talked earlier about the fact that there is still a lot of pain potentially still to come. And I think that will weigh quite heavily going into 2021.
Do the most beaten up countries bounce back the most? The UK looks like it has suffered more than most. It has an economy that is highly driven by services and a lot of hospitality. It therefore has suffered significantly. If we get a vaccine, kind of how much momentum do we see coming back as a result of that? And does that get priced into FX? It's being priced in to stocks to a certain degree.
Yeah, there's a couple of things that I would say to that. Let's not forget that prior to the referendum in 2016, fair value for sterling was around 145 in sterling dollar terms, and we are a far way from that at the moment. So core consensus is that sterling assets are undervalued, and certainly that's why our clients are waiting for some sort of Brexit resolution to be able to see the UK as investable again. Also remember that the pound has for a very long period of time been a safe haven currency, and that requires certainty and it requires a stability of rule of law. Provided that you have those things come back to the fore, then it means that it becomes a much more attractive asset for our clients to potentially hold. And I think that those things are important. But you mentioned as well the vaccine. The potential vaccine distribution into the UK, it looks very promising. And as a consequence, that will be something that investors will take into consideration as well.
Mimi, thanks a lot. We really appreciate your time today. Mimi Rushton, Barclays, co-head of Global FX Distribution. This is Bloomberg.
How do you manage risk when the world seems upside down? With products and tools that support your strategy every step of the way. Billions of data points. Every major asset class. Across the full trading life cycle. We can't control what's next, but we can help you navigate it. In every market environment, through every twist and turn. When it's time to act, CME Group.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
It's time for the Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. I'm Ritika Gupta. DoorDash hopes to raise as much as $2.8 billion in an IPO. The largest U.S. food delivery service plans on being part of an end-of-the-year listings rush. DoorDash says it plans to sell 33 million shares for $75 to $85 each. Zoom's third quarter results may provide insight into post-coronavirus prospects. The video conferencing company reports after the closing bell. It's one of the stocks that has defined 2020 on Wall Street. Analysts expect Zoom to again report soaring growth, but they're likely to focus more on its less than certain prospects for next year. And the shares of clean energy trucking startup Nikola are plunging today. General Motors has scrapped a tentative deal to jointly build up electric pickup truck. Instead, there's now a non-binding agreement for GM to supply hydrogen fuel technology. Plus, GM won't be taking an equity stake in Nikola. And that is your latest Business Flash, Guy.
Ritika, thank you very much indeed. European markets are about to close. It has been an epic month. The month of November is likely to turn out to be a record. We are up and up significantly. Peripheral markets are up over 20%. That has fed through into the elevated level that we're seeing currently on the euro. Today, though, despite it being a Monday and despite us getting, Alex, some vaccine news, we're actually fairly flat.
Yep. Flat in the day, and the dollar actually off the lows of the session, kind of shooting higher there, Guy. But still, it's not the typical vaccine Monday jam.
Yeah, I think the dollar shooting higher may be to do with the fix. Anyway, Moderna about to come up. We're going to be talking to the CEO. This is the company seeks emergency use authorization for its COVID vaccine. Closes next, Van sells next. This is Bloomberg.
How do you manage risk when the world seems upside down? With products and tools that support your strategy every step of the way. Billions of data points. Every major asset class. Across the full trading life cycle. We can't control what's next, but we can help you navigate it. In every market environment, through every twist and turn. When it's time to act, CME Group.
So there we are. We're nearly done. November nearly over, and what a month it has been for European equities. Today, well, we're going out with a whimper in so many respects. Normally on a Monday, we get vaccine news, stocks shoot higher. That certainly has been the narrative over the last few weeks. I think we're maybe getting a little bit more used to this story. Today, we're drifting sideways, but there's some month-end effect in all of this. We've just had a fixing in the dollar as well, which seems to be providing some upside in the Bloomberg dollar index. But what a 30 days it has been. What a month. Up by 6.57% for the stock 600. The real gains, though, this is when the Pfizer news came out. A week later, we get the Moderna news. This has been the period in which we've seen this epic rotation coming through. Let me show you some of the individual markets around Europe, just to give you a real idea of what is going on. 30 days has been interesting. That's an intraday, but let me tell you that over the last few months, over the last month, we have seen some really major gains for these markets. Now, it's Madrid and the FTSE MIB and markets like that we have seen the real gains coming through. In terms of other assets, well, the euro has gained. We're trading just shy of 120. Brent has really put a rocket under the story surrounding the energy sector, and we've seen very little movement in the bunds as well, which is fascinating. So basically, the bond market has been quite quiet, which is causing some concern. And we've also seen volatility come down, but not that far. In terms of the GRR, let me just show you what has been happening in terms of the month story. Just give me an idea of what is going on. The outperformance, as you can see, in that energy sector, 31.59%. The banking sector doing 30%. Just about everything has done well. Down there at the bottom, it's basically the supermarkets, the grocery stores, and the staples, basically, that have been underperforming. As you can see, healthcare, interestingly enough, we're about to talk to Moderna, only up by 6.44%. In terms of some of the individual stocks, Unibail Rodamco, a huge gain, also putting off a rights issue, but basically this is a mall operator, up by 72%. IAG, that's an airline operator. It owns brands like British Airways and Iberia, up 61%. And some of the banks, BBVA, up by 59.42%, despite the fact that we haven't seen the M&A story coming through. But basically, this has been a narrative that has been driven by the vaccine. The vaccine has been providing most of the upside. We've seen this incredibly vicious rotation into these stocks. And it's fascinating as you look at the gainers, where they are coming from. And you wonder whether or not some of this is ultimately going to end up being sustainable. IAG, for instance, is up by 61.5. The airline sector has been hit really quite hard during this crisis, and we still have the winter to get through. Are there going to be additional equity raisings from that space? Is this going to undermine the tactical story around IAG? Is that going to become a more sustainable story, or are these companies going to have to come back to the market and undermine this story? I think that's what the market is grappling with now. We've seen this huge shift one way. Are we going to continue to see that being sustained, and do you need to become a little bit more nuanced? But it's all been driven, definitely, Alex, by that vaccine news that has really been driving so much.
We want to welcome now to Bloomberg Television and Radio, Stefan Bancel, Moderna CEO. Stefan, thank you very much for joining us again. We truly appreciate it. Your primary analysis found the vaccine was now 94.1% effective. You're requesting emergency authorization. You say you can get the vaccine out in like 24 hours. What do the 24 hours look like?
Yeah, so basically, thank you for having me. So today is an important day. 2 weeks ago, we had the interim analysis of the phase 3. Today, we are announcing the final analysis, 94% efficacy. But the piece that's almost most important for me is the severe cases. We had 30 severe cases. All were on placebo. 0 were with people who got our vaccine. And when you think about what has happened in terms of severe cases leading to hospitalization, leading to ICU, leading to death, this is really, I think, a big moment in the fight against this pandemic. So I think that our goal is to get the vaccine approved in the coming weeks. We're filing today to the FDA, but also in Europe, in the UK, Canada, and many other countries, hoping to get approval in the next few weeks. In the US, for example, the FDA has informed us that they are likely to have on December 17 the advisory committee to the FDA, and then I will expect within 24 to 72 hours after that committee an approval. We are working very closely in the US with Operation Warp Speed, General Perna, who is working to make sure that within 24 hours after approval, products will be out the door and that vaccination can start so we can help protect as many Americans as we can. We have said that we are still on track to deliver up to 20 million doses in the US before the end of the year.
Stefan, how do you imagine it actually working? What does it look like when this starts to get rolled out, when people start to come forward and say they want the vaccine or are being offered the vaccine?
So I think it's going to be like a typical kind of flu vaccination, just at a scale that has never happened in the world in terms of the number of people to be vaccinated at the same time. But basically, I mean, it's like a regular shot. You go, into a private room, you show your arm to a nurse or a doc. They put a little, piece of anti-infectant to clean your arm. They inject the product. They put a Band-Aid, and then next one, you need to get your boost 30 days after. Mm-hmm. So there's a lot of system being developed by the government to be able to track which vaccine you got in your prime injection so that you get the same vaccination by the same manufacturer for your boost. But that's how it's going to look like. And so if you go back to the data, if you get our vaccine, what do we know now? You have 94% chance of having no disease if you get infected. If you get our vaccine and you get infected, 94% chance to get no disease. And in the small percent chance that you have to get disease, it will be mild disease. Because as we said, we got 0 severe disease. And this is why I think vaccination is going to be so important to stop this pandemic so that we can save lives and go back to normal.
Can you help us break down the data older than 65? Any sort of effects? What have you noticed in your testing?
So we have not yet disclosed. We will do that when the FDA meeting meets. The data is just primary top line because we literally got it yesterday. The team is QCing everything. If you look at it, around a third of the study was the elderly, above 65-year-old, 30% of 30,000 people. And so what we've said is, like in the previous interim analysis, the elderly data is very similar to other age group. People with diabetes or other comorbidity factor are also very high efficacy. So by the time we meet with the FDA on December 17 for the advisory board, we will have all the details, and most probably those will be put online by the FDA in a briefing book a few days before the advisory board, as it's usually done by the FDA.
Stefan, is there anybody that shouldn't get the vaccine?
So today, the study has only been done for people above the age of 18. So we are going to start very soon this year a study in teenagers. So the teenagers should not get vaccinated because there is no safety data or efficacy data available yet. We have some people with comorbidity, like people that are HIV positive, have been enrolled in the study so far. A group we have not studied yet, for example, is people with cancer. So we are also discussing with the NCI, the National Cancer Institute in the US, to start a study to test the vaccine in people who have cancer.
You mentioned looking for approval in the UK as well as Europe. If the AstraZeneca vaccine falls short, how quickly can you get approval there and distribute?
So in the UK or Europe, given we are sending them the same data package that we are sending today to the FDA, and given the good discussions we've had with those regulatory agencies in the last couple of months, where we provided to them the animal data, the phase 1, the phase 2, we provided to them all the manufacturing files. So I could anticipate actually that the UK or the Europe could actually approve a vaccine before the US. It's not impossible.
One of the big challenges that a lot of people in the industry talk about is convincing people to take the vaccine. What do you say to those people that may be concerned? What do you think the industry message, what is the Moderna message to the anti-vaxxers?
Yeah, so I think there are 3 groups of people. I think people that are ready to take a vaccine once approved by the governments around the world. I think there are people that are anti-vaxxer and have never believed in vaccination way before the pandemic. And I think there are people on the fences because they are surprised that the vaccines have been developed so fast. So to those people that are on the fence, what I'm telling you is we have not cut any corners. We have done a full phase 1, a full phase 2, and a full phase 3 with 30,000 people, which is a very large-scale vaccination study. We do not have long-term safety data because we only started the studies this year, obviously. But if you look at vaccination across any vaccine that has been approved, 99% of side effects happen in the first 6 weeks after vaccination, which is why the FDA, to be cautious, as they should be, has asked at least 8 weeks of data after the boost is given before companies are allowed to apply for emergency use. And so we passed that mark on the second half of November, where more than half of the participants got more than 8 weeks of data. So I think what will happen basically is people that are ready are going to get vaccination when the vaccines are approved. And people that are on the fence, I think in the next few months, when they're going to see that people who got the vaccine have no safety issue, they will decide to get vaccination, because if you can, through this vaccination, prevent disease, this is how we're going to go back to a normal life.
You mentioned distribution. Now, the conversation we had just a couple weeks ago was about cold storage distribution. I want to change it a little bit now between actually getting a shot in my arm. You said how traditionally it would go, but literally how? I mean, is it like a long line around the block that goes for miles? Is it you make an appointment with your doctor and you go and you get it right then? Is it going to be rounding out sort of all the healthcare workers and vaccinating them first? What's the conversation you're currently having with the U.S. government?
So in the U.S., this will be taken care of by the CDC and the states. The company, either Moderna or other companies, have no say, and they should not have any say. I mean, we are not the public health provider. And so what I could anticipate is in some places, people will be able to take appointments. I could anticipate in some states, nurses and doctors will go to, for example, homes for the elderly to vaccinate them there. Of course, healthcare workers will be vaccinated in their hospital by their colleagues. And so I think it's really going to depend who you are, when do you get the vaccine, and in which state you are.
In terms of the follow-ups, you're going to need 2 jabs this time round. Am I ever going to need to get another one further down the road? We talked last time about the minks. We talked about potential changes that you could make relatively straightforwardly. How do you see the more medium-term process?
Yes, so I think, as you say, in the short term, people who are eligible and willing will get a prime, and 4 weeks after they get their boost. We will know in the new year. We are monitoring all that scientific data, but we do not know yet 2 things. First is, how long is the vaccine going to work? We don't know it for any of the vaccines that are being studied, because it takes time. You have to follow the cases in the studies to know for sure. It is possible that in the fall of 21, a year from now, potentially elderly people might need to get a boost. It's possible that you might not need it for somebody young who is in good health. It will really depend, and we will learn that and, of course, share that and publish that data, so that clinicians around the world and health authorities are aware. The other big question we're going to know, I think, in a couple of months in the new year is, do we prevent infection with those vaccines? Meaning, if you get vaccinated, what we know today is you have very small chances of getting disease, sick, and very small chances, actually no vaccine, 0, to get severe disease that will lead you to get hospitalized, which, as you can understand, has been a big issue for the healthcare system, but also for the psyche of people, which is why people have been worried about their own health. And so if you think about the economy going back into what we used to see with people traveling, hugging friends and families, I think once you have enough people vaccinated, you can go back to this world. What we don't know yet is our vaccine or any other vaccine, will they prevent me, if I got vaccinated, if I get infected by the virus, to give it to somebody else? This we don't know yet, but we will know in the new year.
Stéphane, we always appreciate your time. Thank you for sharing more of it with us today. The stock's certainly roaring back on this one again. Big day Friday, big day Monday. Stéphane Bancel, Moderna's CEO. Thank you for joining us on Bloomberg Television and Radio. Let's take a quick look where European stocks have settled. These are the final numbers for the month, what a month it has been. One of the things today that seems to have taken the shine out of the market has been ongoing concern about what is ultimately going to be the long-term story here, addressing that issue. Interesting to hear what Stefan had to say. The banking sector, one of the best performing sectors during the month. But today, ABN AMRO, one of the worst performing stocks on the Stoxx 600, sinking the most since June after the bank downgraded its financial goals and announced that it would cut another 15% of staff by 2024. Clifford Abrahams, ABN AMRO's CFO, discussing the bank's cost-cutting plan earlier, had this to say.
That 15% represents our plan on roles reduction through 2024. So it's 4 years, and it's a material amount contributing to the 700 million of cost savings. But it's roughly what we've executed over the past few years, and we'll do it steadily over time through natural attrition. We'll retrain our staff. So it won't be all at once. It will be steady, considered, and deliberate.
Joining us now for more insights, Bloomberg's European banks experts. Vijay Sri Salam. Thank you very much. Sri, let's talk a little bit about what is happening here. European banks have a cost issue and they clearly need to deal with it and deal with it soon. Many people are highlighting this as being a potential impediment to this sector getting its back on its feet. Just how much more of this are we going to see? How much more are we going to see these banks slimming down?
Hi, thanks for having me. The issue with the bloated cost base at European banks is one that's been winding its way through the system for several years. And in the past 5 years or so, European banks have been at the forefront of more than 500,000 job cuts across the industry. And it's not difficult to see why, Europe is overbanked. And the negative interest rate environment has hurt them disproportionately. There's been a steady pressure on costs, as revenue and profitability has been shrinking. And the coronavirus pandemic hasn't helped with loan loss provisions rising at many of these major European banks. So what we're seeing here is, to answer your question, probably the beginning of another wave of restructuring at some of Europe's biggest banks, and especially those who have been not as aggressive to take some of these lumps up front.
And does restructuring also then mean M&A in some capacity? And sort of where is the pressure coming from to get that done?
Yes, and that's M&A is definitely one of the ways that banks might be able to get these cost savings, the kind of costs that they would need to cut in order to to at least show a little bit of growth on the top end. And we've already seen, sort of on a smaller scale, in-market consolidation in markets such as Spain, where we've seen Unicaja, for instance, in a move to acquire a rival. And then you also saw moves by BBVA and Sabadell, although those have recently fallen apart. And in Italy, we've seen, again, Intesa that agreed to acquire UBI earlier this year. So you are seeing some signs in domestic consolidation within the banking industry. And we do think that that's going to actually pick up as we see more and more banks explore combinations that might work for them.
We've seen some leadership change in the banking sector here in Europe, Lloyds here in the UK, but UniCredit really interests me at the moment in terms of what is going on there. What is the future of Jean-Pierre Mustier in that role? And doubts about his future say what about the bank?
Mustier has been one of the most successful bank executives, if you look at it, in cutting some of UniCredit's pile of bad debt. He's had a very aggressive cost-cutting program at UniCredit. And and this is just one takeaway on kind of his future at UniCredit. His name did come up earlier this year to run HSBC. And at the time, Bloomberg had reported that, this was at the very onset of the pandemic. And so it's not terribly surprising that he is looking for other options at this point. And the takeover of a troubled state bank is what is causing the rift at this point, as our story today points to.
All right, Shri, thanks so much. Bloomberg's Shri Vidya Bhaktavatsalam. Thank you very much. All right, coming up, oil on the back foot here. Amrita Sen of Energy Aspects will be joining us in the OPEC Plus meeting. This is Bloomberg.
How do you manage risk when the world seems upside down? With products and tools that support your strategy every step of the way, every major asset class, any market condition. When it's time to act, CME Group.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
All right, oil on the back foot today. You got delegates telling Bloomberg the cartel's considering 3-month extension to cuts. Joining us now, Amrita Sen, Energy Aspects co-founder and chief oil analyst. Hey, Amrita, the UAE appears to be somewhat of a holdout. What is your level of confidence that they'll finally come to the table and get a deal done?
Right now, I think there are lots and lots of complications, and we shouldn't underestimate just how how uncomfortable the situation is within that OPEC meeting. The UAE, yes, they've agreed in principle to a 3-month extension of phase 2 cuts, but they are putting down a lot of conditions, which include that every country, including those in non-OPEC who haven't complied fully, need to make up for these catch-up cuts, and that's where the pushback is. So yeah, this deal by no means is done yet.
Okay, but let's say we do get a deal. What do you think it looks like, Amrita?
If we get a deal, it will be a 3-month extension of the phase 2 cuts. So rather than tapering by 1.9 million barrels per day, which is the phase 3 starting from 1st of January, they'd push it back and start tapering from 1st of April. You just had the Moderna CEO there. The expectation is that, vaccines will be more widely available, but the next 3 months will still be very tough because of the winter in the Northern Hemisphere. Case counts are still rising. But yeah, there are different agendas within OPEC, and there is a big pushback. I do think the market is underappreciating the possibilities that we actually don't get a deal. One thing I will stress, by not getting a deal, we're not talking about March and April. We're just saying we will go to phase 3, which is a 1.9 million barrels per day increase from 1st of January rather than 1st of April.
Fair point. Goldman says that downside is like $5. How do you price it?
I would say we'll probably go back to about $40 for Brent. We can see lots of different puts being or bought effectively at $41. I do think the market, a lot of the strength we've seen recently, Asian crude buying was in anticipation that we will get the 3-month extension, because a lot of OPEC ministers earlier this month when prices were below $40 were very clear, including from those from non-OPEC saying that, yes, we will be extending by 3 months. Some even talked about 6 months. So suddenly that has been priced into the market. All of that's going to come out. Asia, who's been buying a lot of crude there, will now have both a lot of spot barrels arriving and will get a lot of term barrels. So you could see, Brent and Dubai have gone into backwardation. It can come back into contango very quickly.
How cohesive is OPEC in the post-COVID world, do you think, Amrita?
I think it is cohesive, but I do also think that a lot of different members now have a lot of headaches with regards to finances, right? I mean, we all know that Iraq has been struggling, but so have a lot of African countries. UAE has its own challenges with the upcoming futures contract launch, which is the Murban. They are insisting that they need to push more liquidity, and that's really why, underlying all of this, that's really behind UAE's pushback. So yeah, there are all these competing factors, but I think they also know that they will not be able to get the upside from oil prices unless and until they manage to run down this inventory overhang. That's why more than ever they need to be cohesive right now.
Where's Iran in all this?
Well, this is the other thing, right? Like, just as you get the vaccine, you might also start to get Iranian barrels back. We are factoring in Iranian barrels starting to come back to the market in the second half of next year, slowly, but for sure, because we do know a Biden administration will be more amicable towards Iran. But yes, over time, say over the course of 2022, Iran can bring back 2 million barrels per day, yet another headache, but also why it's more important that they get rid of the inventory surplus right now, so that once demand picks up, then yes, you can absorb those Iranian barrels without pushing prices down back to $30.
Amrita, always good to catch up with you. Thank you very much. We appreciate your time. Amrita Sen of Energy Aspects there. You're taking a look at Brent around $47, so would have apparently $7 downside then, according to Amrita. That does it for me and Guy here in New York, as well as London. Coming up, Austin Goolsbee, former U.S. Council of Economic Advisors Director, will be joining Balance of Power with David Weston on Bloomberg Television and Radio. Front and center, it's President-elect Biden and his economic staff. This is Bloomberg.
How do you manage risk when the world seems upside down? With products and tools that support your strategy every step of the way. Billions of data points. Every major asset class. Across the full trading life cycle. We can't control what's next, but we can help you navigate it. In every market environment, through every twist and turn. When it's time to act, CME Group.
The big concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
What is, at the moment, what we...
How do you manage risk when the world seems upside down? With products and tools that support your strategy every step of the way, every major asset class, any market condition. When it's time to act, CME Group.
7 basis points, so continuing in this knee-jerk risk-off feel.
From Bloomberg World Headquarters in New York to our TV and radio audiences worldwide, I'm David Weston. Welcome to Balance of Power, where the world of politics meets the world of business. Let's get a check on the markets, as we do pretty much every day. Joining us now is Abigail Doolittle. So S&P headed for its best month since April, I think, but it's taking a little money off the table today, Abigail.
It certainly is on the last day of the best month since April. So the bull's taking a little bit of a breather here on this Monday, despite the positive vaccine news out of Moderna, diminishing returns around that. You almost have to question, David, whether or not this is a sell the news moment around the vaccine. And if yes, is it just today and for a couple of days, a small pause, or is it something bigger? We will only know with time. It's worth noting that some of the havens over the last year or so are sharply higher, telling us that some investors are hedging. But for the month of November, it's really remarkable. The S&P 500 up more than 10%. The Russell 2000 up nearly 20%. Its best month ever. Standing out the most to me, David, the financials up nearly 20% this month. The best month going all the way back to April of 2009. That, of course, was around the whole green shoots rhetoric. What makes it so interesting, David, going into this month of November, the financials had already been up 30% out of the March low. Plus, the yield curve has actually come in. So it's sort of puzzling why the banks are up so much. You have to think it has to do with a narrative around traders and investors buying stocks, so cyclical stocks for the second half of next year on the potential for a strong recovery.
So, Abigail, I'm going to cheat here a little bit. You and I talk even when we're not on television, and we had this conversation about the yen and what's going on with safe haven. What's going on with the yen?
Well, those are some of my favorite conversations off air, David, because we can really just move back and forth. And the yen does really bring some attention to itself. Over the last year, the yen is actually up about 4%. So when you have stocks at all-time highs, you have bonds at record highs, although folks will say, or near record highs, I should say, folks will say that that's the Fed. The yen is a pure play haven. So over the last year, it's up about 4%. This tells you that some traders, they like the fact, or they might like the fact that stocks are higher, but they're probably hedging for the possibility that there could be some choppiness ahead. That's true, too, for the VIX. While we have stocks near all-time highs, the VIX is still above 20. That's in its historically, let's say, elevated range. Traders are on alert for the possibility of some sort of volatility ahead. The question is, will it be a normal cooling off of after a up 10% month, or could it be something bigger, David?
Well, we'll find out. Thank you so much, Abigail. Great to have you with us. Abigail Doolittle reporting on the markets. Congress, in the meantime, is back in session with a full agenda, including funding the government and that stimulus bill that everyone seems to agree is needed, but nobody can quite get done. To take us through what to expect in this lame duck session, we welcome now back Greg Valliere. He is AGF Investments Chief U.S. Policy Strategist. So, Greg, great to have you with us. Let's start with that stimulus, because as I say, everyone seems to agree we need it, but we can never quite get there.
Well, you're right, David. I think there's a consensus that we really do need it. You saw over the Thanksgiving weekend photos of people standing in line for food. You see unemployment benefits ending on December 31st. There's a really crucial need to get something done.
At the same time, there's a question about, do we take half a loaf or we insist on all of it? This was what the back and forth was through the summer, really, between Nancy Pelosi, the Speaker of the House, and Mitch McConnell over on the Republican side. Do we know where President-elect Biden is on that question?
I think he would take half a loaf, yes. I think there's a great deal of dissension over Nancy Pelosi's unwillingness to compromise. I think now something paltry like just a mere $1 trillion would be sufficient. Her idea of getting $3 trillion is totally out of the question. But if you did $1 trillion or $800 billion, you could feed people during the winter. You could give them unemployment benefits until the vaccines arrive.
At the same time, are the Republicans going to insist on that protection against liability because of COVID?
That's a big issue for Mitch McConnell. He's going to want that, and the Democrats are going to want a big chunk of money for state and local governments. That's been a big dispute. I do think, though, that with people like Susan Collins of Maine being even more powerful after her victory, we could still put a deal together in the next couple of weeks.
So a couple of weeks. There's no deadline on a stimulus bill. Everyone agrees we need it, but there's no deadline. There is a deadline on funding the government. Could those two things come together conceivably? The deadline, as I understand, is December 11?
You're right. At midnight on December 11th, the temporary spending bill expires. Theoretically, we could wake up on December 12th with the government shut down. I don't think that's going to happen. Nobody wants it. But more and more people are saying, since we have to pass this, let's put some stimulus, some virus stimulus onto the budget bill. I think that has a chance.
In the meantime, to what extent is the White House playing in all of this? Because President Trump has not conceded, although every time he comes out and talks to camera, it sounds like he's sort of inching his way there. But he's also said they're going to keep working right up to January 20. There are a lot of things he can still do, can't he?
A lot of things he could do. He certainly is playing a lot of golf. I think that he would need to get more involved. It'll be interesting to see tomorrow when Mnuchin, the Treasury Secretary, testifies before Congress. I think he might get the green light from the White House to keep negotiating. That would be a very, very positive sign.
And what about in the area of foreign affairs? Because that's something the president can really do things in without any congressional support at all.
The biggest wild card of all, David, is geopolitics. We saw over the weekend the assassination in Iran. I think that Netanyahu knows that he has carte blanche, that Trump wouldn't try to stop him in the next 7 weeks. I worry about the Persian Gulf. I worry about China. I think geopolitics is a risk in these next 7 weeks.
Well, you mentioned Iran and that assassination of the nuclear scientist over apparently by the Israelis. I thought it was interesting that Iran came out right away and condemned it, said we're going to retaliate, but said this shouldn't get in the way of possible talks with the Biden administration. Is that sort of an end run around President Trump?
Could be. That's what everyone is speculating on right now. Do Netanyahu and Trump want to make things more difficult for Biden? Or could Biden actually play his cards adroitly and get something with the Iranians? That's going to be an ongoing story during the spring. Greg,
in the meantime, back here, we now have basically the leadership of the economic team for President-elect Biden. It was announced just today, led by Treasury Secretary-designate Janet Yellen. How difficult will it be to get confirmation through the Senate of these people?
She'll be a breeze. There's a woman who might have some trouble who's been nominated for OMB, but I think that Janet Yellen has widespread support in the markets, on Main Street, on Capitol Hill, and academia. I think she'll sail through.
What kind of timing do we have on this? Because we have seen administrations before that had a difficult time getting all their people in place to get up and running by anything close to January, even February.
Yeah, I'm sure some of this will go past Christmas, go into the new year. But on most of the big nominations, especially Yellen, I do think a moderate Republican like Susan Collins is going to be very got a new 6-year term. So I think on issue after issue, David, I would watch Susan Collins as an indicator as to what we might be able to get.
Fascinating. Thank you so much. It's always a treat to have you with us, Greg. That's Greg Valliere of AGF Investments. Coming up, Austin Goolsbee of the University of Chicago on the Biden economic team and what it takes to put together a stimulus plan that works. This is Balance of Power on Bloomberg Television and on radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We turn now to Mark Crumpton for Bloomberg First Word News.
David, thank you. German Chancellor Angela Merkel says there is still no deal to resolve a standoff with Poland and Hungary over their vow to veto the European Union's landmark $2.2 trillion spending package. But she says she vows to work for an agreement. Both nations' leaders are discussing next steps after delaying the EU's 7-year budget, including some $300 million in pandemic aid. Moderna is requesting clearance for its COVID-19 vaccine as new analysis finds the vaccine is 94% effective in preventing the virus with no serious side effects and showed 100% efficacy against serious cases of the disease in young and old alike. Moderna says the Food and Drug Administration is likely to review the data in mid-December. President Trump's coronavirus task force is promising a rapid rollout of vaccines to millions of Americans by the end of the year. Surgeon General Jerome Adams expects most Americans to have access to a vaccine by early in the second quarter. He says the government hopes to quickly okay requests from 2 drug makers for emergency approval of their vaccines. New Jersey Governor Phil Murphy is tightening the limit on outdoor gatherings to 25 people. That's down from 150, and it'll halt indoor high school sports for the rest of 2020. The move reportedly comes after more than 28,000 new COVID-19 cases were booked in the state in the past week. Meanwhile, the positivity rate in New York City has climbed above 4%. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thanks so much, Mark. 12 years ago, President Obama came to office with a struggling economy and fought to get a stimulus package despite the political hurdles. Austin Goolsbee was a key Obama economic advisor and saw from the inside what it took to get that done. He's now professor of economics at Chicago's Booth School, and we welcome now back to Bloomberg. So welcome. It's great to have you, Professor. Thanks for being here.
Yeah,
so
thanks for having me, David.
There are some parallels in what we're seeing right now with a struggling economy, the need for stimulus everybody seems to agree on, some political difficulty in getting it done. What advice would you give to the incoming administration about how to do that and how to do it effectively?
Well, I do think there are some parallels. If only Mitch McConnell was a thorn in the side of both of those. And I think the thought in 2009, if you remember, was let's do some, and if things remain bad, we'll just do more. But Mitch McConnell saw to it that there would not be more. So I think if you look at the incoming Biden administration, they're probably going to put some significant focus on try to get as much direct relief as you can, as early as you can, because the economy needs it. Now, one difference is in 2009, that was traditional stimulus. The U.S. government's going to spend money, try to get growth jump started. This is different. I mean, this is a temporary wave that's spread over us, and we basically need to figure out a way to hold our breath for 6 or 8 months until the vaccine can be widely available and we can go back to doing what we were doing before. So our goal is to try to prevent permanent damage, which is a little different from stimulus. But I hope that they can agree to do something. I mean, we need the money right now.
Well, and that goes to the question that's been pending, frankly, since July 31, when the supplementary unemployment benefits went away. The question is, do you hold out for the full loaf or take half a loaf? Thus far, the Speaker of the House, Nancy Pelosi, she's come down off of her $3.3 trillion, but still, she's insisted on a lot. Would you advise the incoming president to say, take what you can get during this lame duck session?
I guess I disagree a little bit with the premise of that question. We need as much as we can get as soon as we can get it. My perception of what's happening is not that the Democrats are holding out. It's that, once again, like in 2009, Mitch McConnell has decided that a deal is not favorable to him before these Georgia runoff elections. And so it's not primarily a dispute about the size of the rescue. It's about one side not wanting there to be a bill at all. So I think if Mnuchin and Pelosi were the only two deciders, they would have been able to reach an agreement. I mean, they were close on numbers and how long it would last. I just think the politics of this whole thing is quite complicated in the lame duck.
Well, that's sobering because, as you suggest, if it's a question of not giving the other side credit for something before those runoff elections, that suggests we're not going to have anything until into the new year.
Yeah, and I'm quite afraid of that because, as you say, look, the unemployment money ran out, the CARES Act money through the PPP program that was going to help give a lifeline to small business, that money's run out, and the Treasury you saw last week said they're going to withdraw the money for the Fed Main Street lending facility. So that money's not going to be there. So I think this issue that we are inches away from having permanent damage that we did not have to have. That I think everybody should find sobering.
So, Austin, talk about that permanent damage, as you put it, because there's a great deal of hope that a vaccine is coming. It's not here yet. It'll probably be at least into the middle of next year before it really is widely disseminated. And so we need a bridge to get there. What kind of damage can happen in the meantime? Because some people might say, well, let's just wait. We'll get the vaccine. We'll be okay in the long run.
Yeah, but we need the bridge, like you said. And the alternative is falling down in the water. And there are literally millions of businesses around the country that I would say they're going to go bankrupt. But as you know, something like 90% of business closures they can't afford to go through bankruptcy. They just shut the doors and they're never heard from again. And that's a space that we absolutely don't want to have to go down. But right now we're on path to. Two, in all the states and pretty much all the major cities of the country, they're having revenue shortages like they've never seen, with expenses that are up dramatically because of the pandemic. And they're going to have to start laying off policemen, firefighters, teachers, and a whole bunch of state services that we kind of need at a moment like this. So I think those are the two big speed bumps that I fear. And then the third is, underlying this whole thing, the virus is the boss. And if you cannot get control of the spread of this virus until the middle of next year when the vaccine comes, there will be thousands of people who die unnecessarily. There will be tens of thousands of people who are hospitalized or suffer permanent health damage permanently, unnecessarily. So I really hope that Congress does as big a package of relief as they can as rapidly as possible so we don't get people evicted from their homes. I mean, millions of people are going to get evicted.
So Austin, talk about the perhaps medium term. We now have at least the key players in President-elect Biden's economic team, led, of course, by Janet Yellen as Secretary of Treasury, but a fair number of other people, many of whom you've worked with, including in the White House. People are trying to read into it exactly how progressive his economic policies are going to be. What do you read into it?
I found the team really impressive. I mean, Janet Yellen is a rock star, of course, and well known. But down the line, if you look at the people they're appointing, they have experience. They're low drama people. I think the thematic focus, if you had to say, is there a thematic focus? Certainly at the Council of Economic Advisors, you got a heavy focus on workers with experience on wages, on training, on contingent workers, and it shows an emphasis on wages and workers. As to what does it mean for the agenda? Of course, all of that hinges on what happens in the election, and are Democrats going to control the Senate or not control the Senate, because that will have a heavy influence on what they can actually do in legislation.
Austin, you make a very important point, I think, that the names I've seen so far, there is an emphasis on labor economists, some very distinguished labor economists, no question about it. At the same time, do they have enough macroeconomists? Is that a possible weakness of this team? Because you could have problems come up, if you've seen, that are outside the world of labor, and you need a really crackerjack macroeconomist in there.
Yeah, I mean, you always have to cover more topics than you have people. I would imagine as they fill out the team, you'll have more focus on tax and budget. You'll have more focus on macro. several of the people that they're talking about, Jared Bernstein, Heather Boucher, do have some macro exposure as well as the labor economics exposure. I think the Janet Yellen at Treasury, in a way, serving as your Babe Ruth, it gives you some. There's nobody knows more about macro, nobody knows more about international, about banking than the former chair of the Fed, who's now the Secretary of the Treasury. So I do think they kind of got themselves some breathing room for whatever other focus they want to have.
Nobody's going to question Janet Yellen's competence as a first-rate economist. At the same time, there's another part to that job, which has to do with foreign diplomacy and sanctions and things like that. How's she going to cover that base? Because that's not something she spent a lot of time on.
Yes and no. The number two at Treasury is somebody who's got a heavy international focus. And she's known, unlike most, she's got to be the most internationally recognized Secretary of the Treasury in a very long time. I mean, from her connections to having been the Fed chair, I would think that the international issues are not going to be foreign to her. They're going to be somewhat familiar. Yeah. And to the extent that in the last 2 weeks you've seen a blow up in the relationship between the Fed and the Treasury at a moment when you kind of don't want blow-ups in the relationship between the Fed and the Treasury, that would give you some comfort. Hey, it's good to know that the Secretary of the Treasury knows very well the issues of the Fed and is going to get along very well with.
She knows Jay Powell pretty well, I think it's fair to say. Thank you so much, Austin. Always a treat to talk with you. That's Austin Goolsbee. He's professor of economics at the University of Chicago's Booth School of Business. Still ahead, shares of Nikola plunge after GM scales back on a partnership. This is Balance of Power on Bloomberg Television and Radio.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
It is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
We're going to be well into 2021 before there's some sort of equilibrium that we achieve.
There's a lot of concern in Hong Kong, and you can see the way actions, reactions, and further anxieties arise. I hope we can settle down to a new normal.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. It is time now for Stock of the Hour, and today it's Nikola, the fuel cell vehicle company that today entered into a scaled-back version of its deal with General Motors. And our colleague, Emma Chandra, is here with the entire story. Emma, great to talk to you.
Great to speak to you, David. And it's a scaled-back deal that really scraps the key components. What we've learned today is that GM will not be making an all-electric pickup truck with Nikola, and that GM will not be taking an equity stake in Nikola. That had been rumored to be worth about $2 billion. Instead, what we have is a non-binding agreement to supply hydrogen fuel tech. Now, investors taking a dim view of that. Look at that. Nikola down around 20% today. It was down 27 to 28% at the lows. Now, the original terms of the proposed deal with GM had been described as a game changer for the company, but now the likes of Dan Ives over at Wedbush saying this is a good supply deal, but nothing really to write home about, and that's a bit of a sad indictment for the future of the company. All this, David, catnip for short sellers. They've been piling into the stock as it's ridden a rocky road since it went public earlier this year. We do have a Bloomberg terminal chart which should show you how that short interest has surged as the stock has fallen. It is now the 39th most shorted stock on the NASDAQ. Finally, look at how it compares with its peers in the electric vehicle market. We've got Tesla, we've got Fuel Cell, all of them riding that rally, gaining 200, 300% in the last 6 months. Look at Nikola in the red, David.
In the meantime, not great news for General Motors either, I think it's fair to say. Thank you so much to Emma Chandra for that report on Nikola. Up next, we're going to talk about President Biden's economic team and the implications for black and lower income Americans with Rashad Robinson. He's Color of Change president. Of course, we know the president-elect really made an issue out of trying to restore economic health to the more challenged parts of our economy. The question is, what can he do with his new team? That's coming up next. This is Balance of Power on Bloomberg Television and on radio.
The pandemic swells the gap between the rich and poor around the world. There may be no starker case of inequality than Venezuela, where the socialist leader Nicolás Maduro has kept his hold on power by fostering a Darwinian dollarization under quarantine. The nation's mighty oil industry has collapsed. Water, electricity, and gasoline are barely available, and hunger hunts vast portions of the population. 4 out of 5 Venezuelans can't afford a basic food basket last year, according to a research by the main universities. Meanwhile, Caracas neighborhoods have a dozen new delivery services bringing to their doors everything from truffle salmon poke bowls to electronic cigarettes and $50 gluten-free birthday cakes.
A market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, UK government officials believe a Brexit deal could be done within days. They say the key is to work in good faith on what the UK sees as the last big obstacle, fishing rights. UK Foreign Secretary Dominic Raab called on the EU to recognize that regaining control over British waters is a question of sovereignty for the UK. The third largest oil company in China reportedly will be named to a U.S. blacklist. According to Reuters, CNOOC is among 4 companies to be added to a list of firms controlled or owned by the Chinese military. That could lead to major outflows if U.S. investors divest. Iran is vowing not to, quote, fall into the trap of scrapping any future talks with the Biden administration. The Iranian government posted a statement 2 days after the assassination of a top nuclear scientist. Iran has blamed Israel. Joe Biden has made it clear the United States would rejoin the Obama-era nuclear accord if Tehran also returns to full compliance. President-elect Biden has named longtime Democratic policy staffer Neera Tanden to be his budget chief. If seated to the post, she would be the first person of Indian descent to hold the job. However, Senate Republicans could block the nomination because they see her as too progressive. Meantime, Mr. Biden's also named a senior communications team made up entirely of women, including White House Press Secretary Jen Psaki. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thanks so much, Mark. President-elect Biden comes to office having promised to address the challenges of all Americans, and particularly those of black and lower-income citizens across the nation. The question now is, how do they do that? We welcome back Rashad Robinson. He is president of Color of Change, a leading online racial justice organization. So, Rashad, always good to have you on with us. One commentator, in looking at some of these appointments, said they really mean they're going to have racial justice throughout their administration. Do you see that in the economic appointments that are being made?
Well, I think there's some really great people that they've appointed, and diversity alone doesn't always mean that we get racial justice. And so part of this is making sure that, yes, we have people with the right level of experiences that are connected to community, that sort of come with a dearth of experience, a level of experience that will help them sort of see the opportunities. But also, we need to also make sure we're pairing that with a progressive worldview. And so it remains to be seen after all the positions get filled out where we actually are. But there is a lot to sort of look forward to. Now the next step will be, how will the Biden team work over the first 100 days to actually deal with COVID relief? And that will be one of our first indicators about how this team will actually work. You know, a lot of what we dealt with coming out of the CARES Act, for instance, was relief for businesses, small businesses, that actually did not get to black and brown small businesses. A recent poll we just did with the Main Street Alliance shows that up to 46% of black businesses either have closed or will be closing very soon as a result of the economic instability of this virus, because the sort of relief that went through the big banks actually never got to black small businesses, because many of those, the majority of those businesses, were not banking at big institutions. And so it will be sort of not just about the diversity of the faces at the table, but in terms of how will they sort of carry out the policies to ensure that we avoid the sort of challenges of inequality that have plagued the current administration.
Rashad, that's a really great issue. I'm glad you raised it. And my question then is, does that take congressional action to make sure that the money, the stimulus money, gets to the right places? Or are there administrative things being done by the executive branch without Congress to really change the rules, as it were, to make sure some of the money gets to the right places?
A lot of it does start at Congress and the negotiation power that the president has. But the president's team will help to shape what the administration will accept or not accept. And there are a lot of things that can be done, but there's also sort of rules and regulations at the executive level that can deal with all the ways in which it has been the wild, wild west for banks. So yes, we may need at the congressional level sort of a new Glass-Steagall that makes sure that commercial banks and public-private banks are not sort of allowed to collude the way that they've sort of been able to. That creates sort of real challenges that led in some ways to the 2008 sort of crash that really wiped away so much Black wealth, right? Black folks disproportionately have a lot of our wealth and savings in home ownership, which has been a pathway to working class and middle class life. And when that sort of fell out, it really decimated a lot of Black communities, Black neighborhoods, and Black people's sort of ability to sort of advance a new future. And so how will these sort of rules at the executive level play themselves out? And then what will the administration be able to push and advance in terms of its relationship with Congress? All of that matters, but who's around the table and how much they are willing to not just sort of see getting back to where we were, but really recognize that we don't want to go back. We only want to go forward. And in order to go forward, we're going to need to have economic policies that just don't talk about lifting all boats, but deal with sort of what is actually keeping some boats down more than others.
So let's talk about that one issue just here in closing, Rashad. That is the disparity in wealth, because we've covered that on this program. It is remarkable. Even before 2008, it was remarkable, the disparity that exists. Give me one specific that we could do, that this administration could do under President-elect Biden that could help remedy that. What could we do to solve that problem?
Well, one quick thing is that we can deal with home ownership and deal with access to home ownership, deal with access to loans. And that's going to actually have to start with both sort of investing in more public banks and making sure that they are sort of fully funded, looking at and dealing with risk in different ways. If we only look at risk through one prism, then what we end up in challenges that are actually more risky for our future, where we have some people that can get ahead and some people that can't get ahead. And then, you know, what we sort of think immediately, given sort of the COVID crisis, is that we will need a recovery package that does deal with more than just one single check, but deals with sort of getting cash in the hands of everyday Americans who need it the most and can unlock the sort of spending power and spending opportunity of communities that are sort of have been decimated by this crisis.
So, Rashad, I get it about home ownership. It makes good sense because a lot of net worth of humans, people across the country is tied up in homes. Can we really encourage that home ownership without getting us back into that subprime mortgage situation? Because a lot of people think that actually got us in trouble back in 2008.
Well, you get into that problem, right, when you actually send it all through private banks, when you allow corporate banks and private banks, and you don't actually build sort of the sort of public institutions that can actually provide sort of those loans, that can sort of move those resources. Just like with the COVID care relief, when the money was sent from the federal government through sort of big banks that were not incentivized, they took public money. They had already been bailed out once, and then they could use that public money to determine who they wanted to bank with, who they wanted to provide loans to. Who did they provide loans to? People they already had relationships with, which cut out our communities.
Okay, Rashad, as I say, it's always a treat to have you on. It's a really important viewpoint to hear from you. That is Rashad Robinson. He's Color of Change president. Coming up, the fate of the Senate ties up on the ballot on 2 runoff elections in Georgia. Political strategist and pollster Frank Luntz is here with his take on where things stand as of today. This is Balance of Power on Bloomberg Television and Radio.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change. Bloomberg Green has you covered.
Saving for retirement is confusing. That's one reason why 42% of people age 18 to 29 have no savings, and partially because of things like student loans and other priorities like just being able to pay rent. But if you do have the means to save it all, here are some ways to get started. First, there's the one everyone thinks about, which is your 401k. This is a savings account that lowers your taxable income because you don't have to pay taxes on the money you contribute. The downside is that when you take that money out, you have to pay taxes based on the income bracket you're in at retirement age. But there's one major benefit to your 401k. Employers often offer contribution matching, which means essentially you're getting free money. Another option is the Roth IRA. With this, you pay taxes now on the money you put in. This gives you a savings account you can withdraw money from at retirement without having to pay taxes on the money you take out. You can only put $6,000 a year into a Roth. This is also a great option because with a traditional 401k, you may have to pay a penalty if you have to cash that money out early, but that's not the case with a Roth. Most financial experts suggest a combination of the two if you're able. To save more and worry less, you can set up automatic transfers into a savings account from your regular bank or credit union. Tools like Betterment can also help you set up automatic payments into a Roth IRA so that investing can be simple and mindless.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For the next month, Georgia will be the center of U.S. political attention as two Senate runoff elections will determine which party controls the upper house. Political strategist and pollster and founder of Luntz Global has been laser focused on the state of Georgia since election night. And we welcome Frank Luntz now back here for an update. So, Frank, great to have you with us. What is going on in Georgia as you see it?
Well, and I apologize. I think that my video's gone out, but you can still hear me.
I can.
Three things are happening in Georgia. Number one is that there's more money going into this race than has ever been spent on a political race in American history. Number two is that, quite frankly, so much money is being spent that people are hearing these messages, and they're almost all negative, about 10 to 1 negative, that they're already fed up and they've got another 6-7 weeks to go. And number three, they realize that they are the center of the universe, of the democratic universe right now. And so Georgia voters get a chance to experience what Iowa and New Hampshire voters get to experience every 4 years. And they know more about the candidates, they know more about the issues, and frankly, they're a little bit fed up, and they've got so much longer to go.
Demographics are always key. You know better than I in an election, but particularly with this election in Georgia, we hear various things about young people, younger voters who haven't voted before. We hear about Asian Americans in Georgia, as well as African Americans. What will determine the voter turnout and the voting?
So number one is actually Donald Trump more than anything else. And apparently he is going to Georgia at the end of this week, and if he goes 2 or 3 times, he will have an impact on turnout. I'm going to see if Joe Biden's going to go because he can have an impact on turnout on that side. So I'm looking at the people who participate in the process, not just the voters themselves. Second is that the key block right now are married, white, women with kids who shifted from the Republican Party to some degree, and some of them voted for Joe Biden for the first time because, frankly, they agree with Donald Trump but did not like his message. And the Republicans down there have the advantage that they talk about the support for Trump's agenda, but they're not saddled with the negativity that Donald Trump was saddled with. However, Joe Biden and the Democrats have an opportunity unprecedented in Georgia politics because Stacey Abrams, the candidate for governor, has registered more people, more voters than any single individual has ever registered in the state. Those people are first-time voters, and frankly, they don't want to give up until after the runoff on January 5th.
One of the things that we've seen reports of, and I'm curious to see whether you've detected this, is that perhaps all the talk, let's be frank, from President Trump on down about it's a fraud, the election's really rigged, may actually be discouraging some Republican voters from voting. Do you see that in Georgia?
I had seen that in the very first days after the election, but in the work that we've done, and I don't know if you got those slides there, 70% of Democrats in Georgia give this election a 10, which means it is extremely important to them and they're definitely going to vote, compared to 80% of Republicans. We also asked a similar question, which election is more important to you, the presidential election, Senate election? And more Republicans chose the Senate election than Democrats, which means that they are absolutely keyed in on the importance of January 5th. And frankly, with taxes up for grabs, the Green New Deal up for grabs, immigration up for grabs, the filibuster, 2 new states, a change in the Senate, whether or not they're going to try to pack the court. All of these issues are going to be decided by what happens on the 5th of January. I'll let you in on a secret. I have to decide whether or not to sell my house. If I sell it by December 29th, I get the capital gains of the current rate. If I wait and the Democrats take control of the Senate, then they're going to repeal the tax cuts, and I will pay a lot more. So, David, you and I should stay in touch because I got a personal stake in that Georgia election.
I was going to say, you're a one-man poll, effectively. December 28, we'll call you up and we'll figure out how Georgia's going to come out. So what you described really sounds more pro-Republican, on both the races. Trump's not on the ballot. President Trump is not on the ballot, which helps some. People split their ballot anyway before. If the Democrats, and it would require 2 of them, if they pull it out, how will they do that?
They will do it by raising turnout. Now, there's the most important voter in Georgia. There's 12% who would prefer split tickets, who would prefer to elect one Democrat and one Republican. And that won't give the Democrats the 50-50 vote that they need to take control of the Senate. But that 12% is going to determine if both Republicans win. And right now, Republicans have a 4-point advantage. So, yes, I do think that the advantage goes to the Republicans. However, the Republicans are in disarray. There's internal differences between them. They're arguing with the Secretary of State. There are accusations about the governor and the governor's involvement in the presidential race. That is all leading to chaos and confusion, which you don't want in a race like this. The Democrats are unified. They've got one purpose, one message. They're all following Stacey Abrams, and they like their candidates very much. The Republicans are much more disorganized, but they've got a bigger field to play with. And I'd give the Republicans a 1% advantage if the election were held today.
Talk just at the end here about the money, because we know it's a huge amount of money. Is it evenly split between Democrats and Republicans? Because there are reports, actually, some Democrats on Wall Street are not going in with a lot of money because of your house and the concern about what happens to taxes.
Well, I'd like to think that the Democrats on Wall Street are concerned about my house. I think they'd rather burn it down than do anything with it. You reach a point when you get to saturation, when there's simply nothing that the money can buy. They have all the voter contacts they need. They've got all the advertising they need. They got all the social media they need. And so I'm telling now candidates from both parties or donors in both parties, within the next week, unless you're donating right now, your money, there's nothing it can be spent on. I mean, that's how important this election is. They're going to spend millions in this election because it's going to impact many, many billions of dollars.
Frank, it's always great to have you with us. That is pollster Frank Luntz, and I'm delighted to say we're going to have more with Frank in our second hour on Bloomberg Radio. Coming up here, the pandemic north of the border. Global affairs analyst Michael Bashirku is here with a report on what looks to be a growing crisis in Canada. This is Balance of Power on Bloomberg Television and Radio.
a forma que esses governantes dirigem esse país pensando só naqueles que já têm muito e já têm demais. E é mais uma vez por isso que a gente optou por ocupar esses espaços, para que a gente lá de dentro possa exercer a mesma pressão que a gente já exerce na rua, de fora para dentro. A gente quer abalar essa estrutura.
Eu tenho muita esperança, tenho muita fé em Deus que aqui a gente ainda vamos conseguir a nossa moradia digna, a nossa casinha para, ao menos nos últimos dias de vida, se vender numa casa.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. It's not the first time the United States is so focused on its own problems that it overlooks what's going on to the north of us. And so, as we report every day on the pandemic and lockdowns and vaccine development in the United States, we tend not to hear much about the situation in Canada. So we welcome today Global Affairs analyst Michael Borsircu for a report on COVID-19 in Canada. Michael, it's always great to have you on with us. Give us a sense of the state of the COVID-19 up in Canada right now.
Sure. Good to be back on with you, David. Well, look, a few months ago, Canada was doing nothing less than crushing the curve. And I mean it. We had cases down to triple digits. Now we're looking at about an average of 5,000 cases a week. Now, that's not much compared to 160,000 in the U.S., but Canada was doing really well. We went into long lockdowns. We listened to our government. We got a lot of support so we could stay at home. But that now all seems to be evaporating. And the big kind of breaking news, David, from last week was that Canadians were told for the very first time that the majority of us, that's 50% plus, may not be vaccinated until the end of 2021, December 2021. Now, that's months after people in other G7 countries like the U.S., Germany, United Kingdom. And, of course, a big reason for that is you and other G7 countries have your own domestic vaccine production. So vaccines will be distributed there first. But Canada, you know, David, used to have that capacity, but under successive governments, it wasn't put back in. So we're really on a weak footing right now. And by the way, I was just on the WHO press conference in Geneva, and I put it to them, you know, is there any excuse for countries not being ready for a coming pandemic in terms of vaccine production, PPE vaccinations? And they said, no, it's not like nature wasn't telling us not to get ready.
Well, Justin Trudeau, your prime minister, is not alone in this. A lot of political damage is being done to leaders around the world. But what's the reaction right now? Are they blaming the prime minister?
Yeah, you know, the prime minister, some people call him the Teflon prime minister. He survived many scandals. You may remember SNC-Lavalin, the We Charity scandal, you know, trips with Aga Khan. Those have all kind of floated into the background. But I think because right now Canadians, like in many countries, are at the end of their tether, the economy is really having a tough time surviving under COVID, that we thought the light at the end of the tunnel would come even as soon as the end of this year, beginning of next year. And I think, personally, this is going to be very damaging potentially to the Prime Minister when that split screen happens of Americans getting vaccinated, perhaps in the next few weeks, in the United Kingdom, Germany, possibly even Mexico, India, whereas Canadians are sitting at home under lockdowns, waiting for that vaccine to come. Now, I should say we are getting about 6 million doses, probably in January, but that will be consumed very quickly by the most vulnerable and frontline healthcare workers.
So, Michael, as you know, we've got a new president coming into office January 20. Joe Biden will be coming in. As Canada looks south to this transition here, what do you hope or want out of a President Biden?
Sure. Well, when the results were announced, I think you could hear the ground shaking in Canada from everyone hopping up and down. It was very well received because, look, President Trump was very insulting to our prime minister, and Canadians don't like that coming from a U.S. president. Trump called him very dishonest and weak, and Mr. Cuddle, I believe, said, Trudeau, there's a place in hell for anyone like Trudeau insulting Trump. But the other thing that was happening, White House under Trump oversaw surprise duty applications on multiple trade commodities, from steel to aluminum, squeezed Ottawa really hard on that free trade negotiation. And also, we had that partial untangling of our highly integrated supply chain between Canada and the U.S. So what we're looking for really is a couple of things: restore a sense of civility to the bilateral relationship. We're looking forward to having the U.S. back on the world stage, defending a rules-based international order, getting back into those accords like the Paris Accord, because climate change is something we both share a lot of. We got all of that smoke up here too from those forest fires in Washington, Oregon, and California. And then but we're not, sorry, David, there's one more thing. The Keystone XL pipeline, that is a worrying cloud that Biden opposes expansion of Keystone XL. And Albertans in our oil producing province see that as key to economic recovery. So that may not happen. But then the other thing is we're not naive. We know that the election wasn't a robust repudiation of Trumpian sensibilities. So we're not expecting a complete reset back to the Obama years.
Just a little civility. But as a practical matter, that pipeline could really be a sticking point.
Yeah, the Alberta economy was really hurting beforehand because of the drop in oil prices. And now because of COVID, cities like Calgary, which is kind of our Houston, is really, really suffering. And the federal government is spending a lot to prop up the provinces, but with Alberta in such bad shape and with, by the way, record high COVID numbers, very difficult to bail them out.
Michael, always a treat to get to talk to you. Thank you so much. That's Global Affairs Analyst Michael Bashircu. Coming up, Balance of Power continues on Bloomberg Radio. In our second hour, we're going to talk to bioethicist Art Kaplan of NYU Langone about how we're going to prioritize who gets the vaccine once it's available here in the United States. This is Balance of Power on Bloomberg Television and on radio.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
I'm Mark Crumpton with Bloomberg's First Word News. A group of OPEC Plus ministers couldn't reach an agreement on whether to delay January's oil output increase. Delegates say drawn-out discussions today among OPEC ministers about conditions attached to such a move means a final decision will not come before tomorrow. Today, Joe Biden and Kamala Harris received the same intelligence briefing that President Trump gets. Their first briefing follows a 4-week delay while the president has challenged election results. The intelligence community set up a secure room in Mr. Biden's hometown of Wilmington, Delaware, for him to be briefed. Congress is reconvening today under pressure from both President Trump and President-elect Biden to pass a COVID-19 stimulus bill after months of deadlock. The meeting is an opportunity to take another shot at passing a stimulus bill. Lawmakers are still at odds over the size and scope of any package. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
It's 1 p.m. in New York, 6 p.m. in London, 2 a.m. in Hong Kong. I'm Kaylee Lyons. Welcome to Bloomberg Markets. Here are the top stories on the Bloomberg and from around the world that we're following. Progress in the race for a vaccine. Moderna is requesting clearance for its coronavirus vaccine in the U.S. and Europe today after a new analysis showed it to be highly effective in preventing COVID-19. We'll have the latest. As Mark mentioned, OPEC talks for an output deal have ended today without one. The conversation will be picked up tomorrow, but we'll explore what it means for the cartel. And General Motors will not take an initial stake in the electric vehicle company Nikola, which announced today that it would scuttle one of its marquee vehicles, an electric and hydrogen-powered pickup that was to be called the Badger. And let's get a quick check on the markets. We are on the last trading day of the best month for global equities since November, but we look set to end the month of November on a softer note. The S&P 500 right now down about 0.6%. It was the fourth consecutive Monday of positive vaccine data, but that good news not having the effect it did just weeks ago. That cyclical strength not taking shape today. You can see the Russell 2000 down about 1.6%. And within the S&P 500, it is the cyclical stocks like energy which are underperforming. Now, part of that energy story does have to do with oil. We can see WTI down about 1.4% as that OPEC supply extension cut we'll see remains a question. And finally, just have to point out Bitcoin here. I promise it will be the only time I mention it during this show. Up 14% today, record high. My question is, how long does it last? But let's get back to that news from this morning on the vaccine front. Moderna planning to request clearance for its vaccine in the U.S. and Europe today after a new analysis showed it was highly effective in preventing COVID-19. No serious safety problems. Joining us now is Rupali Limay, Associate Director for Behavioral Research at Johns Hopkins Bloomberg School Public Health for Vaccine Safety. Rupali, it's great to have you. This Moderna today, first of all, how confident are you in it? And second, do you think people will have confidence in taking the vaccine?
Thank you so much for having me. It's a great question. I think the results that came out today are really quite stunning. This idea that of a trial of 30,000 individuals, the efficacy was around 94%. So really, really good results. I think with regards to your second question, will people be confident taking it? I think that it's going to be crucial from a public health perspective for us to be transparent and to communicate to individuals about this vaccine so that we can be sure that when it is available, individuals will be open and willing to taking it.
Moderna has said when it does approve, it wants to start rolling it out in 24 hours. Do they have adequate capacity to do that? And if so, how many people are actually going to be able to get vaccinated right away?
It's a great question. I think the way that this works with regards to distribution here in the United States is that it's going to happen through a state-by-state level. So states will really determine how it gets rolled out. With regards to who will be first in line to get it, it will be healthcare workers who have been tirelessly working on the front lines, taking care of patients that have COVID. And so I think that with regards to whether it's feasible, a lot of that will depend on state capability.
But looking out over the longer term, I guess, to rephrase the question, how long is it actually going to be before enough people have gotten the shot in their arm for us to return to at least a quasi-normal?
It's a great question. So I think with the coronavirus, we need to figure out what is our level of herd immunity that we need to achieve to ensure that there aren't any susceptible hosts for the virus to infect. I think this will really be dependent on how many people will get it, what sort of effectiveness we're seeing at the population level, because so far we have efficacy data that's through a controlled experiment through clinical trials. And now it will be curious to see how this will actually react at a population level. And so I think time will only tell. The great news, I would say, about the Moderna vaccine is that in addition to being 94% efficacious, it was also, my understanding was that it also helped very much reduce severity. So that's going to be also crucial, especially with regards to the number of individuals that are now being hospitalized.
Yeah, that 100% efficacy rate for the most severe cases.
Exactly.
Was there anything in the data we got from Moderna today missing in your view? Are there any questions you still have that are unanswered to this point?
No, and I think from a vaccine science perspective, what's great about these trials is that they have been very transparent. You know, individuals have been watching these not only from the vaccine science space, but in general, because we are all waiting for a vaccine. And so I think it's been fantastic that we've had such transparency and such communication about what has happened within these trials. And now, again, the argument would be that we need to continue that communication from those of us that work in public health to ensure the public that it did go through a rigorous process with regards to safety as well as efficacy, and that it is safe for individuals to take.
The vaccine obviously is a longer-term conversation, Rupali, and in the near term, the virus is still raging. We're fresh off the Thanksgiving holiday, millions of people having traveled for that holiday. What should we be bracing ourselves for in terms of virus cases come 2 weeks from now?
What we've seen in the past with regards to holidays, for example, Memorial Days, and Labor Day, there's about a 3-week lag is what we are seeing with regards to increasing cases as well as hospitalizations. So I think the key will be about 3 weeks from now looking at the numbers and making sure that we are still continuing to socially distance, we're still wearing masks, and we're still doing the things that we were doing before to really limit exposure.
How much of an interim solution pre-vaccine is rapid testing? I anecdotally know many people who did decide to travel for Thanksgiving. They got rapid tested before they left and then rapid tested, then they returned. Does that work?
I think it depends on the test that you're getting. You know, the problem with these tests, as you can imagine, is that there can be some false positives and some false negatives. So the issue could be is that you could test, you could be negative, and then the next day you could actually come up positive. But because of when you tested, because of the sensitivity of the test, it might show up as negative. So to me, it is not necessarily an interim solution. I think the recommendation that we would give individuals, particularly among the holiday time, is to really stay home. If you can just continue to do what you're doing, staying home, not really hanging out with people outside of your household, and just wait for a few months until the vaccine is being rolled out more to the general public, I think that is a better solution and option.
But what is your messaging to people who may have cases of pandemic fatigue, who are just over the staying at home? I feel like that is more and more people now 8 months into this pandemic.
It's a great question, and it's something that we all struggle with as well, right? We have all been working from home for so long. I think the key here to me is to say that you've been doing a great job for this long. We only have a little bit more to go. So continue to think about how do you protect your loved ones and how do you protect those that might be immunocompromised so that we can be sure that we can see those friends and family in the new year.
All right, good advice. Thank you so much, Rupali LeMay of Johns Hopkins Bloomberg School of Public Health Institute for Vaccine Safety. The Johns Hopkins Bloomberg School of Public Health is, of course, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. And make sure to tune into our interview with Moderna chairman and co-founder. That is coming up at 5 p.m. Eastern Time. And coming up here, OPEC ends talks without an output deal. It's an ominous sign for the long-term health of OPEC+. This is Bloomberg.
8 meses esperando, pero aquí estoy. Estoy muy contenta por estar aquí. De vuelta al rastro, a nuestro trabajo. Es que esto es nuestra vida.
Tenemos 3 drones sobrevolando la zona, básicamente por temas de aforo, porque el aforo ahora mismo y la seguridad es lo que más nos preocupa.
You never met, obviously, Walt Disney, but if you had a chance to talk to him, what would you want to ask?
Obviously, probably the number one question would be, how am I doing? You know?
I'm certain that we will be able to bring our debt levels down and avoid what you could call a debt crisis, because we're focused, and we've been open enough by telling the nation that we have too much debt.
This is Bloomberg Markets. I'm Kaylee Lines. Well, just 8 months after the disastrous March meeting that ended without a conclusion and precipitated a price war, today we have yet another OPEC gathering that finishes without resolution. The pieces could all be picked up again tomorrow, but it's an ominous sign for the long-term health for the cartel. Joining us now with more insight is Ellen Wald. She's a senior fellow at the Atlantic Council's Global Energy Center. Ellen, perfect person to talk to today. Where do you put the odds of us getting a deal, come tomorrow?
I do think that they are closer to a deal. And what we're talking about in terms of a deal is really to extend what they're doing right now. So right now, OPEC is actually scheduled to increase production by 2 million barrels per day. That's a collective OPEC plus production starting January 1st. And so any deal that they reach would basically cut out that 2 million barrel per day increase and basically continue with the current production levels for another 3 months. That seems to be what they're discussing. I do think that we're closer than not, but there are still some pretty significant hurdles to overcome. And it is somewhat concerning that OPEC basically left the meeting without any resolution, without any press conference, basically kind of pushed everything off until tomorrow.
What are the key countries you're watching, Ellen? Is this all about the UAE?
It's about the UAE. The UAE is interesting because they have kind of chafed under some of the production restrictions, and they do seem to be really asserting their independence from Saudi Arabia at this point. So you've got the UAE, you've got Iraq, which has basically not really complied with its production quotas at all and continues to basically have to pump under this system that the other countries set up designed to compensate for the fact that it never adhered to its production cuts. And then we've got Saudi Arabia, which, according to some sources, actually threatened to resign from its position on the monitoring committee, perhaps as a result of the fact that they haven't been able to get Iraq to fall in line.
Well, 2 follow-up questions on that exact point, Ellen. I guess on the compliance front, are we going to have to stay reliant on Saudi Arabia to cut more than everybody else just to keep the balance? And 2, what are the consequences if Saudi Arabia does indeed step down from that co-chair position?
I think there will be consequences because Saudi Arabia has really been a force for actually getting a lot of the countries that hadn't complied to come into compliance. Nigeria is one, UAE was another, and there have been other countries. Iraq has shown a strong verbal commitment to complying, but that hasn't exactly borne out in practice, though it's definitely gotten somewhat better than what it was. Saudi Arabia, though, is not going to provide compensatory cuts for everyone else anymore. They've stated that unequivocally. And we have to remember that there's always this overarching threat over everything, which is Saudi Arabia's ability to basically outpump everyone else and send oil prices barreling downwards, basically as punishment or as a threat.
So what does this mean for the future of the alliance, that it's this hard for them to reach a deal?
Well, it's interesting because no one's really talking about Russia this time around. Russia is basically on board with extending cuts. Some of the Russian oil companies are kind of grumbling a bit, but Russia also changed its tax structure for Russian oil companies recently, which means that if they increase production from certain fields, they'll end up paying more taxes. And so that kind of incentivizes the companies to want to keep production down a bit so they can avoid paying more taxes. So Russia doesn't really seem to be a big problem. It's more OPEC as a whole. And I think that this shows that really over the years, the power has shifted from the OPEC group to the larger OPEC plus group, and that Russia and Saudi Arabia really hold the reins here. And I think that's also difficult for big producers like Iraq to recognize that they really have very little power anymore.
All right, it's all down to two key players. How is the group as a whole thinking about the vaccine? I feel like that is the key question for this meeting in particular, in that we were just having a conversation with someone from Johns Hopkins who said basically this is still a long ways away from ending the pandemic. We have months to go. So what does that mean from a demand forecast perspective that OPEC has to factor in?
Yeah, exactly. They're very, very optimistic about the vaccine. But as the Algerian oil minister who's presiding, who's the president of OPEC for this year, mentioned in his opening remarks that despite the positive news for the vaccine, and that's really been showing up in oil prices as soon as we started hearing these positive things about vaccines, oil prices started to shoot up. And except we've still got these major demand problems. Demand is low in the United States and Europe, which are major consumers. And it doesn't look like that's going to pick up anytime soon because while we have a lot of positive sentiment, we don't necessarily have, we're not seeing that play out on the ground in the U.S. and in Europe. Now, in Asia, particularly in China, we are seeing much more positive demand signals. And so that could affect how some of these countries, these big exporters to Asia, are viewing the market. They're saying, hey, we realize that demand is slow in Europe and the United States because of the virus, and the vaccine, may not be bringing things back to normal, for another six months at least. But we're over in China. We want to export more oil there.
How much does a forward curve and backwardation complicate this equation?
Well, so exactly. So we've got that going on as well, and so you've got people looking at the market saying, "Hey, we're out of this previous phase where things were looking really bad and things are looking better. So why shouldn't we ease up on these cuts? Why don't we want to take advantage of these better prices, of these better situations, and put a little more oil onto the market now that things are kind of loosening up?" And then on the other hand, though, you've got people saying, "Look, if OPEC doesn't agree to curb oil production for longer, they could just rain on this oil rally and cause prices to tumble." So it's a kind of fine line that they're walking here.
Absolutely. Ellen, last question for you. 2 months from now, we're going to have, in all likelihood, a new U.S. president. How is OPEC thinking about the incoming Biden administration, both in terms of what it means for U.S. production, for shale, and then also potentially what it means with Iran?
So I think in the long-term picture of oil production, oil-producing nations are pretty happy about that because they realize that the Trump administration was really kind of a full speed ahead, drill, baby, drill oil production for the U.S., and that got the U.S. up to this 13 million barrels a day of production, and that's not really so great for them. So what we're now looking at, U.S. production's been in the 10.5 million barrel per day range. It could go a little lower, but it could also go a little higher. And I think that, if they see the Biden administration as that they're not going to cut off oil production altogether, but that things will be a bit more restrained in the U.S., which is good for them and good for oil prices overall.
All right, valuable insight. Many thanks to Ellen Wald of the Atlantic Council. Still ahead, we're going to have our stock of the hour, but just a quick check on the broader markets here. We are looking at a down day to close out the month of November. The S&P 500 down 0.7% with small caps. The relative laggards here down more than 1.5 percentage points. It is energy, financials leading the declines today. That cyclical rotation off the back of positive vaccine news not happening on this Monday. Stay with us. This is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is Bloomberg Markets. I'm Kaylee Lines. Let's have a check of your Bloomberg Business Flash headlines. Let's start with Bitcoin. I know I said I wouldn't talk about it again, but I'm going to talk about it again. Bitcoin climbing to an all-time high today as it surpassed the record set in December of 2017 that catapulted the cryptocurrency into mainstream consciousness. The world's largest digital asset rallied above $19,800 and also sent shares of crypto-related stocks soaring. Bloomberg has learned that Airbnb and DoorDash will disclose higher valuations for their IPOs this week. Both companies are starting their roadshows. Airbnb is targeting a range of $30 to $33 billion. Meanwhile, DoorDash plans a range of around $25 to $28 billion. Both companies are looking to go public by the end of the year. And shares of clean energy trucking company Nikola are plunging today. General Motors has scrapped a tentative deal to jointly build an electric pickup truck. Instead, there's a new non-binding agreement for GM to supply hydrogen fuel technology. Plus, GM won't be taking an equity stake in Nikola. We'll bring you more on that story later this hour. And that's your Bloomberg Business Flash. It's time now for our stock of the hour. We're keeping an eye on what's shaping up to be the largest deal in the U.S. this year. S&P Global buying IHS Markit in a $43 billion deal. It's large consolidation in an industry that Bloomberg News' parent, Bloomberg LP, competes against. Abigail Doolittle is here with the details.
Well, Kelly, it really is certainly a large deal in a hot space. We have both of those stocks trading higher. You don't always see the acquirer trading higher. But one reason that we know that the data and the information space is such a popular space, at least for investors and based on revenues, here over the last 5 years, we see both IHS Markit and S&P Global up about 275% over the last 5 years, relative to the S&P 500 up about 75%. So that is the valuation and the premium that investors are putting on these data companies. As for why, if we take a look at IHS Markit's revenues, they're certainly moving in the right direction. 2014, about $1 billion, estimated in 2021 to be around $4.6 billion. So huge growth, a little bit of a stall, though, so that could explain why IHS Markit is selling to S&P Global. It's worth noting that this is a very rich deal, about 10 times revenue, so this consolidation is coming at a huge premium. As for the deal size within the deals this year, Kaylee, it's unclear for Gilead and AstraZeneca whether it is going to happen, $96.2 billion. Otherwise, it does put IHS Markit and S&P Global in that top spot at $43.5 billion. And then ARM, Xilinx, and Willis, and Xilinx really standing out, of course, because AMD, that hot chip stock, buying Xilinx. So lots of big deals in this year.
Lots of big deals, but this big deal isn't necessarily done and dusted. Abigail still has to undergo potentially regulatory scrutiny. Could it actually get stopped?
Well, you know, it's interesting, Kaylee, because something that I always look at to see whether or not there could be some issues ahead is whether or not the stock is trading at the price that's been offered. So it is trading at about 10% discount to that $44 billion. And one pause, or one reason to think of pause, is the possibility for some sort of regulation or scrutiny, given the fact that they will be such a big company within these spaces, especially data and indices, $3.6 billion on a combined basis, and then ratings, that would be S&P on its own, $2.7 billion. So it will be interesting to see whether or not investors not bringing the share prices of IHS Markit right up to the deal price, whether that is an indication that there could be some more news, some happenings ahead around this deal.
All right, Abigail, thank you so much. We do have some breaking news on the political front we want to bring you. First and foremost, coming from Arizona, the state now certifying the victories for President-elect Joe Biden, as well as Mark Kelly, who, of course, was in the Senate race in that election, the husband of Gabby Giffords, the senator who was shot. Again, Arizona certifying the results of both the presidential and senatorial election in that state. And in the Biden administration, we continue to get picks out on his economic team. He has selected Brian Deese, who, of course, is an executive of BlackRock, to lead his National Economic Council. Deese is also a former economic advisor to President Barack Obama. So we will continue to update you on those headlines and Biden's incoming team as they cross. Coming up, Moderna hoping to get approval for its coronavirus vaccine in the next few weeks. We'll discuss it next with Gregory Poland, Mayo Clinic Vaccine Research Group Director, on a day, the last trading day of November, in which that positive vaccine news not having much effect. It is a down day for the equity markets, the S&P off about 0.6%. This is Bloomberg.
So the reason we're interested in Post Office Rock is just the extreme nature of the erosion that is ongoing here. In the last, since 1940, it's eroded about 100 metres and in quite a unique fashion. By having a map of the seafloor and hopefully being able to capture some movement in these transverse dunes, we'll be able to see after the erosion where the sand is going and why it is not replenishing the coast as sometimes and most often happens.
With continued sea level rise and future climate change, we're just going to see much more of this kind of event taking place. So it's a good proxy of what we expect to take place much more commonly by 2050, 2100 than is currently the case.
Chinese capital market, as you know, is nascent, is just developing, and so we think there's an opportunity to build out that. But that's not all. We're also focused on continuing to build our presence in the Greater Bay Area. It's been a good business for us.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
I'm Mark Crumpton with Bloomberg's First Word News. President Trump wants the U.S. Supreme Court to let him exclude undocumented immigrants from the census count, as the justices heard arguments in a case that could affect the allocation of congressional seats and of federal dollars. A win for the president would change more than 200 years of a U.S. practice that has always counted non-citizen residents, even those in the United States, illegally. Former Fed Chair Janet Yellen has been tapped by Joe Biden to be his Treasury Secretary, the first woman to run the agency. She will be tasked, along with others, with steering the economic recovery in the wake of the coronavirus pandemic. Meantime, the outgoing Treasury Secretary, Steven Mnuchin, is set to testify tomorrow about the CARES Act before the Senate Banking Committee. Secretary Mnuchin will also head to Capitol Hill again midweek to give testimony before the House Financial Services Committee on the Treasury Department's and Federal Reserve's pandemic response. American air travelers rose to the most in more than 8 months as flyers waved off advice from public health officials to avoid trips around the Thanksgiving holiday. Passengers at domestic airport checkpoints totaled nearly 1.2 million people on Sunday. That's according to the TSA. That's the most since March, when the virus pandemic gutted travel demand. The figure comes as new U.S. cases topped 200,000 for the first time on Friday. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Live from Toronto, I'm Amanda Lang. Welcome to Bloomberg Markets.
And from Bloomberg World Headquarters in New York, I'm Kaylee Lines. We're now joined by both our Bloomberg and BNN Bloomberg audiences. Here are the top stories we're following from around the world. Moderna seeks vaccine clearance. We'll discuss the biotech company's plan to apply for emergency use authorization in the U.S. with Dr. Gregory Poland of the Mayo Clinic. Then we'll take a look at Nikola as shares tumble after GM revises its pact with the electric truck startup. And with Cyber Monday underway, we'll get the latest read on retail with Matt Shea, CEO of the National Retail Federation. But first, a check on the markets. Amanda?
And Kaylee, we're definitely seeing a little bit of a softer market situation here, seeing our own Dan Curtis questioning whether the upside from the virus is priced into these markets. That'll be a question, of course, that we ask over the next few weeks as we do see corporate earnings continue to roll in and we see some economic data that really paints a picture of how the economy is faring in the absence of fiscal stimulus. What you've got here is energy leading the declines, and that was after obviously a pretty strong showing for the price of crude on the hopes of production output changes being delayed. That may not be happening, and so you're seeing a reaction there. I do want to note just at the bottom there, we're watching the loonie today. We do get a fiscal update on this side of the border. A ballooning deficit seen to be even bigger once we get the full details from our federal government here. We are spending fiscal stimulus alive and well in Canada, and of course the long view is what happens to our loonie down the road as that deficit persists, and we have to work to work it down. Meanwhile, though, it is enthusiasm about a vaccine and the potential for reopening that has been moving a lot of sentiment in the markets recently. Moderna, of course, seen as among the front runners here to get that emergency use approval. We had Stéphane Bancel, the CEO of Moderna, on the network earlier talking about the Moderna trials.
A group we have not studied yet, for example, is people with cancer. So we are also discussing with the NCI, the National Cancer Institute in the US, to start a study to test the vaccine in people who have cancer.
Dr. Gregory Poland is with us now. He is a group director of vaccine research at the Mayo Clinic. Dr. Poland, thank you for being with us. And I do want to start with an impossible question, which is the things we don't know. We know there is a lot that we don't know yet about the front-running vaccines. Of the things we don't know, what do you consider most important? In other words, what could be most upsetting or off-putting that has yet really to be the shoe that drops?
Well, the hardest part of answering that question is that Moderna has not yet published these data. So this is the second press release in 2 weeks showing an increasing amount of data, basically showing the same thing. The vaccine works, appears to be safe. But we don't have long-term durability data. We don't have long-term safety data. And we don't yet understand, as the clip you just played showed, how the vaccine might work in the eldest of the elderly and people who are highly immunocompromised. So that needs to be done yet.
But Greg, wouldn't the fact that it has a 100% efficacy rate, according to this analysis, in severe cases indicate that those most vulnerable people would be protected?
You know, it would tend to indicate that, but one thing that we know is that elderly people don't respond as well as younger or the general public. So until you actually look at those subgroups, you don't know what the performance of the vaccine is, either on the efficacy side or on the safety side.
And so, I mean, one of the things, of course, that will, I think, be upsetting in the sense that it won't be the panacea that many hope, is this whole question of transmission. How much asymptomatic transition can go on even with a vaccine. The fact that that's even a question we're asking, I think, suggests there's some science there. There's some reason that we're asking it. What's the likelihood of that? Because that would be, you know, that you could get the vaccine and then still need to wear a mask to protect other people, I think is not what most people are picturing here.
No, you're right. And we just don't know yet. They have not reported any data about the prevention of asymptomatic infections, nor of the possibility that transmission could still occur. This is only a question raised because in another trial of an adenovirus vectored vaccine in the monkey trials, they did not see a diminution in the viral load of the trachea of those animals, even though they were protected from severe disease.
So what does this mean, the fact that all this data is still missing for its approval, and then whether or not once it is approved and Moderna says it's going to roll it out within 24 hours, people should then feel safe taking it or no?
Yeah, I think we're going to have plenty of safety data, but let me just correct one thing. Moderna's data will come to the FDA Advisory Committee on the 17th of December. They may have the opinion that this is going to be, quote, rolled out in 24 hours, but it is very likely, and I say this having served on that committee, that the committee will take some time to adequately deliberate on the questions the FDA asks about the vaccine. The FDA takes that under advisement, usually for days to weeks, and then will decide whether to issue an EUA or an expanded access option.
So, and I think that's a good, especially for people who are getting very excited about the momentum that this may have. It's a good reminder that there's a process here that will be followed. We just showed, I mean, that as we know, that two of the leading candidates with that very astonishingly high efficacy rate is the new mRNA technology, very exciting, brand new 30-year-old technology. The third, the AstraZeneca vaccine, is a little bit more traditional. If you had to bet right now which would get out the door first, is it a safe bet to say that the one that many of us take a form of it every year is likely to hit the market first? In other words, AstraZeneca, even with its lower efficacy rate, is likely to be approved sooner because it's a more known quantity?
No, I don't think so, and nor do I think it's a more known quantity. It actually is a novel vaccine platform. It's been tried before, but I think what will likely be one of the first ones out the door is an mRNA vaccine because of the amount of data and follow-up that they have in an actual phase 3 clinical trial.
Speaking of phase 3 clinical trials, I want to point to some news that I feel like we're paying less attention to today, and that is Novavax, which has had to delay its phase 3 trial by several weeks. Is that a worrying sign, or is this just another case of us paying ultra attention to every single detail of these trials when we usually don't?
Yeah, very much the latter, I suspect. They're deep into phase 3 trials in the UK, and it's not surprising that there can be kind of some stuttering start to a phase 3 trial as you waiting for different academic centers or research centers to get final IRB and administrative approvals. I don't read it as anything more than that.
All right, great insight. Gregory Poland of the Mayo Clinic Vaccine Research Group, thank you so much for joining us today. And stay tuned. We'll have more vaccine coverage of that Novavax vaccine we were just talking about. We'll be speaking with the company's CEO, Stan Erck, at 2:30 p.m. Eastern Time. And coming up here, we're going to discuss GM's scrapped plan with electric truck startup Nikola. This is Bloomberg.
The big concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Markets. I'm Kaylee Lines in New York alongside Amanda Lang in Toronto. Well, shares of Nikola are seeing their biggest drop in more than 2 months after GM revised its pact with the electric vehicle startup. For more on the latest on this story, let's bring in Bloomberg's Ed Ludlow. Ed, what happened?
Yeah, I mean, GM and Nikola have really narrowed the relationship they posed back in September. GM essentially will now just be a supplier to Nikola. It will supply fuel cell technology for Class 7 and 8 semi-trucks. Previously, the original deal had GM not just providing fuel cell, but also battery technology, as well as manufacturing a pickup truck on Nikola's behalf. But sources tell us that it comes from both sides. GM looked at the controversies that were happening around the company. As you know, a short seller's report a couple of months ago really hit the reputation of the company. We know that there is an SEC and a DOJ investigation into Nikola. So from GM's standpoint, sources tell us they really wanted to streamline their approach. But Nikola, too, kind of changed what they were looking for. You know, they had this sort of charismatic founder in Trevor Milton who had all of these big ambitions, very broad ambitions, lots of different projects, lots of different products. He's now out of the picture because he resigned, and the current Nikola executives, according to sources, felt that they'd bitten off a little more than they could chew. So they also wanted to narrow their focus just to focus on those semi-trucks. And what we've ended up with is a deal where GM is a supplier. They don't take an equity stake, and they might talk about doing something around battery technology, but that is just talks at this stage. And really, beyond that, it's reputational damage to Nikola with GM altering its position.
In part, I guess, Ed, because it was seen as a real vote of confidence, right? You got the charismatic founder, and what you want is the kind of sober second thought of the established public company player coming in. How important is it, this shift, not just in the relationship and the depth of it, that feels important, but also in the actual technology? It is, as you say, it's a hydrogen fuel cell, it's not electric. How big a deal is that?
Yeah, what's so fascinating about this story is that on paper, even if GM had walked away completely, Nikola still has everything it needs. It's had a relationship with Robert Bosch, one of the biggest technology companies in the world, since 2017, and that included development of fuel cells and battery technology. At the moment, sources tell me that they're actually using Bosch fuel cells anyway in their prototypes, and they plan to continue doing that because GM's fuel cells are not yet ready to fit into a semi-truck. Even with this updated deal, it's going to be some time before Nikola can get to work integrating GM's tech within their own designs anyway. They have other reputable partners. They work with Iveco in Europe, one of the most established makers of heavy trucks in the world. They have a battery electric semi, which is already through the prototype phase and due to go into production in Germany next year. So on paper, they really could pull it off. The thing is that with all the controversy surrounding the company, they always were looking to a third-party automaker to build the Badger pickup. That's now gone out the window. They could have relied on General Motors for engineering expertise, supply chain expertise. That's something that Wall Street analysts pointed to. And now it seems like that relationship is much more shaky. And, you know, even though they have other parts in place, it does raise questions about what GM found out about Nikola's business and then how it operated.
Quickly, Ed, just 30 seconds. What does Nikola do next?
It just carries on with the existing plan. It has a factory under construction in Arizona. I'm told by sources that it's underway and on track. Same in Europe. They're testing these prototypes. They think they're on track to start production of the battery electric ones in Germany next year. And now it's all about testing the fuel cell tech that GM brings, which they hope to start production on in 2023. But we'll see if they're able to pull it off on the cash on hand that they have, which I'm told is around $900 million.
All right, Ed Ludlow, great to have you on this one. A really interesting story. Bloomberg's Ed Ludlow. It is, of course, Cyber Monday, and on the heels of Black Friday, the big question will be how much of retail holds up as it turns to e-commerce this year. Coming up next, we're talking to Matt Shea, who's the CEO of the National Retail Federation. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
If you pull back too quickly, that might undermine the recovery. If you don't pull back enough, you might be storing up problems for the future. When debt levels are very high, and then you're forced to pull back too suddenly, and that might be too sharp a fall for the economy to take.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This is Bloomberg Markets. I'm Amanda Lang in Toronto alongside Kaylee Lines in New York. And it is, of course, Cyber Monday, often lately one of the busier shopping days of the year. Expectations are high this year. The National Retail Federation thinks that sales will grow by 3.6 to 5.2% this year. We've got with us now Matt Shea, who is the Federation's CEO. Matt, great to have you with us. And I do want to start with the expectations for growth. And what do you think is driving it overall? I mean, that's a relatively healthy picture given, the high degree of uncertainty out there.
Yeah, well, first of all, we're optimistic, and we think that number, the 3.6 to 5.2% growth over 2019, we think is also a realistic number. We think it reflects the underlying strength in the macro economy and the strength that consumers have shown, the real resilience. We've seen the consumer economy over the last 6 months really rebounding from February, March, April, and coming back very, very strong in 6 consecutive months now of retail sales growth. Consumers are healthy overall, higher savings rates, lower debt rates, housing starts remain strong, interest rates low, gas prices low. So we're optimistic we'll see that carry through the holiday.
Do you feel that there's less consumer sensitivity now to worsening virus numbers? We know virtually no one was going out and shopping in the dark days of the pandemic in March and April, but the numbers really indicate it's worse now than it was even then. But traffic is still holding up to a large extent.
Yeah, I think actually it's a couple of factors at work. One, of course, and the primary among them is consumers have altered their behavior and know now and understand now how to behave safely. And retailers have really adopted incredibly sophisticated health and safety protocols. And we've seen that over the past 6 months. We've learned from experience. We've learned from each other. So I think those certainly giving consumers a greater sense of confidence. And then I guess the last issue really is that we know historically consumers have the ability to sort of hold two things in their minds at once. They can be generally aware of uncertainty in the market, in the environment, and yet they can continue to behave responsibly, and they go out and engage in commerce. So I think it's a combination of all those factors.
One thing that seems clear, if only from the Christmas decorations that are up early this year, is that shoppers are thinking about Christmas early and because of the whole stay-at-home effect, acting early. Do you think we'll see a really front-loaded Christmas, that you'll get a better sense of the story much earlier than you would in a typical year?
Well, we're certainly seeing the holidays present themselves on a lot of front doors earlier than ever, and retailers have similarly changed their approach to engaging with consumers. We saw holiday pulled forward in a big way in the month of October. A number of major retailers started their holiday seasons in October and had big shopping days in October. And we launched a campaign at NRF called Shop Early, Shop Safe, which also encouraged consumers to alter their behavior. The statistics that we've seen and the survey work we've done with consumers indicate that nearly half of all shoppers in the U.S. indicate that they have started earlier, that they started in October. So I think you'll see a substantial pulling forward. And I don't think that's going to impact the overall sales for the year in a significant way, but it will hopefully keep us all safer, and I think put a little bit less pressure on logistics and supply chains.
But on those logistic and supply chain issues, Matt, even if people are shopping early, they are expected majority of people to shop online. Are retailers adequately equipped, not just in terms of digital capacity, but also in distribution? And what kind of margin pressure could that create?
Well, I think this is another area where retailers and their partners in the logistics space have learned a lot from experience. It was a few holiday seasons ago that generally speaking, there were some folks that were not fully prepared for the kind of rush and the crush they got at the holiday season. I think that certainly caused a lot of people to rethink the relationships and the structure of those relationships from a logistics perspective. And I think this year in particular, we saw the early 2020 experiences in March, April, May, when really everything was happening online in many categories. I think the combination of previous holiday seasons and then the experience earlier this year, I think retailers and their shipping partners are prepared. They're in a much better place than they otherwise would have been. So I think while we all want people to behave responsibly, start early if you can. I think we'll be able to survive and have a great holiday in terms of making sure those items get under the tree and the fulfillment works well.
All right, and just really quickly here, how much of the trends do you think retailers will adjust to long term? Move to cyber, for instance. How much of this is with us to stay?
Well, that's the big question, I guess, isn't it? We're all trying to understand where consumers will land, how much is a permanent ratcheting up effect, and how much of this recedes and reverts back to normal. The non-store sales number got as high as almost 20%, 19%, 19.5%. It's now settled back around 17%. Wow. That's almost 2% higher than it was last year. So it may be a permanent fundamental shift in some ways.
Matt Shea, great to have you with us. Appreciate it.
Thank you.
Matt Shea is CEO of the National Retail Federation. And just want to note here, Tesla, which of course was widely believed to be soon to be added to the S&P 500. We've learned that the S&P will release the details of that addition at 5:15 p.m. New York time, 5:15 Eastern. Here's a look at Tesla on the 1 year, and you can see a lot was built into the price of this, including the addition to the index and the automatic buying that goes along with that inclusion. Details of the inclusion, of course, could be interesting to some. So wait for that official announcement at 5:15 5:15 p.m. In terms of Tesla being included in the S&P 500 index. Haley?
Yeah, Amanda, with that market cap, will it need to be added in two parts, or is it going to come all at once? The key question. Tesla down just about 1 full percentage point at the moment on a day where the broader equity markets are just a touch softer. Positive vaccine news from Moderna not having the effect that positive vaccine news once did in November. Still, though, best month for global equities on record. From New York and Toronto, this is Bloomberg.
हमारा सर्वाइवल सिर्फ और सिर्फ इस इलाके में ड्रिप इरिगेशन सिस्टम की वजह से है और इससे हमारा मुस्तकबिल भी और इससे हम फ़ायदा भी ले रहे हैं।
तकरीबन 20,000 स्क्वायर किलोमीटर लैंड जो है वो अबंडेंट पड़ी है, जिस पे कुछ भी एग्रीकल्चर टेक्निकल तरीके से नहीं हो रही।
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I'm Mark Crumpton with Bloomberg's First Word News. German Chancellor Angela Merkel says there's still no deal to resolve a standoff with Poland and Hungary over their vow to veto the European Union's landmark $2.2 trillion spending package. But she vows to work for an agreement. Both nations' leaders are discussing next steps after delaying the EU's 7-year budget, including some $900 million in pandemic aid. While the United States remains the epicenter of the coronavirus pandemic, with more than 13 million cases reported, the world's second worst infected country has seen a slight drop. India, which has registered more than 9 million infections, saw new cases dip below 40,000 for the first time in almost a week. It's also the third straight day reported recoveries beat out new cases. Worldwide, nearly 63 million cases have been reported. Hong Kong's taking tough new steps to contain the latest wave of coronavirus infections. Public gatherings will be limited to 2 people, including at restaurants and sporting events. Plus, Hong Kong civil servants are going back to work-from-home arrangements. The new measures are similar to those announced in July when the city faced its worst-ever outbreak. Two of Wall Street's biggest data providers are joining together. S&P Global has agreed to buy IHS Markit for about $39 billion in stock. It's the second biggest deal of the year. The proposed tie-up is part of a race for scale. The industry's largest players are trying to capitalize on surging demand for data and analytics. Bloomberg LP, the parent of Bloomberg News, competes with IHS Markit and S&P Global in providing financial analytics and information. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
It is 2 p.m. in New York. It is 7 p.m. in London. Live from Bloomberg's World Headquarters. This is Bloomberg Markets The Close. I'm Caroline Hyde.
I'm Romaine Bostick.
And I'm Taylor Riggs.
And it's a stock record hangover. Call it rebalancing, call it, well, profit taking. But it's an incredible month, of course, that we've just seen. The S&P 500 now falling the most in a week. Still, global equities, U.S. small caps headed for their best months ever. Gold slumping, Bitcoin rallying back to another all-time high. Meanwhile, vaccines close to clearance. Moderna planning to request approval for its COVID-19 vaccine in the U.S. and Europe today, while Novavax fully enrolls its 15,000-person phase 3 trial in the UK, but delays in the U.S. and Mexico. We speak about that with the CEO this hour. And the summer of SPAC staying cool this fall. Subversive Capital pushes into the cannabis space, acquiring 2 California companies and naming Jay-Z as its chief visionary officer. We speak with the chairman this hour. All that and so much more coming up. And he's back.
I'm back. I am not the chief visionary officer, but I am happy to be back here.
Of course,
yeah, absolutely. I always miss you guys when I'm away. I hope you had a happy Thanksgiving. Of course, here we are, final day of the month, heading into, of course, what is going to be the final stretch of a pretty remarkable 2020. You take a look at the S&P 500, of course, down on the day. You mentioned it, of course, Caroline, though. We are going to finish the month higher, setting us up for the best month that we've had in quite some time. And, of course, you really can't talk about the month of November without now talking about what we saw in small caps. You're talking about basically, we had that 42% drawdown. You go back to January to March, 42% drawdown, something like an 80% rebound off of those March lows. And right now, not only are you setting up for the best month on record for the Russell 2000, but the biggest outperformance of the Russell versus the S&P 500 on a monthly basis, going back to at least 2000. So a pretty remarkable turnaround here. A little bit of embrace of some of those values and cyclical stocks, Taylor. And of course, a lot of that is tied to what we saw in the rate space right now, 84 basis points on your 10-year.
Well, let's get right to the S&P 500 because we are getting some of those final year-end calls. And interestingly enough, Matt Maley over at Miller Tabak looking at a $3,800 for the year-end price target. As of Friday's close, you're just 5% away from that. So really, this November rally is taking us 2/3 of the way through what we thought we would see in December. So we still have maybe a little bit more room to run, but valuations on some respects getting full. Caroline, I wanted to flip on the board and also take a look at gold. This has been a fascinating story, not only as we take a look at what's been going on in November, but what has going on in the year. We broke through 1,800 in that 200-day moving average. Matt Maley thinking from then it would be a quick drop to the bottom. 1750, of course, going to be the big next support line. That could be an attractive entry point. So certainly looking at some of the technicals today.
Technicals on, of course, gold. Technicals on, well, digital gold too. Bitcoin on a tear. Let's get more perspective across all these asset classes. Matt Maley's with us, Chief Market Strategist at Miller Tabak, who Taylor was just referencing, joining us from Newton, Massachusetts. Always great to have you with us. And, I mean, Matt, first and foremost, before we get on to gold, take us on to what has been a month to remember when it comes to stocks.
Yeah, it's really been remarkable. I mean, you know, as you mentioned, this huge, it was about 11% move in the S&P, but it was, as you just mentioned, over 20% move rally in the Russell 2000, really helping these, these small cap names outperform in a major way. And, so it's really not a big surprise today, whether it's been some of this month end rotation or whatever that people talk about. But it really, it needed to work off a little bit of the froth that had built up on a very short-term basis. This is not, the market's not overbought on an intermediate or long-term basis, but it was getting overbought on a near-term basis. And therefore today, and maybe for a couple more days, it might settle in. But I do think it bodes well for this kind of breather here, bodes well for the rest of the month, or for the rest of the year, I should say.
Yeah, Matt, and then when we talk sort of, I guess, about the rotation that we've seen out of some of those names that had benefited from the pandemic and potentially into some of those names that could benefit from the economic recovery, do you still see some hope at all, maybe for some of those stay-at-home, work-from-home type stocks?
Well, I mean, the thing about these names, and there's nothing wrong with these companies. I mean, especially the mega cap tech names. I mean, they're great companies. The question is, are people, especially institutional investors, are they really going to be willing to pay that extra valuation, that extra premium for a stay-at-home situation that's not going to last much longer? I mean, once we get past this next wave, this current wave, I should say, in the coronavirus, are we even going to have a next wave with these vaccines and stuff? And so people aren't going to be willing to pay that much. The one thing I warn, though, is that people shouldn't necessarily get completely out of the tech group. I mean, the tech group, like I said, those great companies are not going out of business. But you look at the chip stocks and some of these other names like CK, Intuit, there's other names that are very good technology names. You don't want to throw the baby out with the bathwater. This is not 1999 or 2000 where the group is suddenly going to roll over and just get crushed. I mean, tech isn't dead. So be willing to rotate into some value names, but also to be willing to rotate within the tech sector as well.
Into value, we look at energy, financials, energy also having the best month ever. Does that look overbought, or does that present an opportunity as the cyclical recovery gets underway?
I think it does. I mean, again, much like a lot of stocks here after this big move, they're getting a little overbought as well. I mean, the XLE, which is the equity ETF, the XOP is another, I'm sorry, energy ETF. Those two are energy ETFs. The KBE, the bank ETF. These ones are getting overbought on a very near-term basis, but the pullback shouldn't last very long. They just need for a couple of days to kind of work off that overbought condition. And the thing is, when you go into value, some of these value names are like the industrial names, and some of those you say they're value, but they're much more expensive than the energy names and the bank names. So I think that, and the other thing we have to consider is the institutions are really underweighted this group, especially the energy names. Even if they don't even have to go back to equal weight, even if just to add a little bit to those groupings, which they have to do at the beginning of a year if they don't want to fall behind with their performance, is something that really could surprise people here over the next couple of months. So I think, again, maybe you'll buy a little bit on weakness short term, don't chase it, but I think they've got a lot more upside than a lot of people think.
Short term, don't chase it. In the short term, should you chase Bitcoin, Matt?
Well, I think no. I mean, if you're no, don't chase it right now. If you're new to the thing, or if you just want to add to your positions there, I think it can. Well, it's almost certainly going to maybe get above 20,000 before this interview is over. But I think the 20 to 22,000 area is getting quite overbought, and it's getting quite extended. And on a technical basis, nothing moves in a straight line. That's an old saying, but it's still a good one. And at some point, this is going to see a much deeper correction than we saw last week, or a much longer one, 20 to 30%. And I think, when it get above about 20, those who do own it, especially traders, take some profits. Those who want to own it long term, just kind of sit on your holdings and look to add to it back down near 15 and 16,000, because it's just too much euphoria here on a near term basis.
Yeah, interesting. The moves that we've seen here on Bitcoin and the rest of the crypto space here, Matt. We're also seeing on this day copper at a 7-year high. We're seeing gold moving in the opposite direction on this day, back below 1,800 an ounce. I'm curious as to what you make of this divergence between copper and gold.
Yeah, it's very strange. I mean, I think it really has to do more with the situation with Bitcoin, because usually, not all the time, but usually copper and gold tend to trade with each other. They've gone in completely different directions the last couple of months. And now I think they're actually poised, again, for technical reasons, more than anything else, they're poised to reverse. And I think copper will come down, not because I think I'm worried about the economy, it's just because it's got incredibly overbought. The most overbought it's been since 2011, if you look at the relative strength index, the weekly RSI reading. So for technical reasons, it should come in. Gold, I think, is getting very much poised for a rally. I think people should nibble at it here and buy it with both hands down at 1750, because I think this is going to rally and make new highs and actually continue. And that divergence that we've seen between the two is going to end. And you're going to see next year, you'll see copper rally along with gold. But right now, I want to avoid copper and copper stocks, and gold, start nibbling, but be ready this week to really get more aggressive. I think it's going to surprise people, because this whole thing that Bitcoin is going to completely replace gold as a safety haven, I think, is way overdone.
Yeah, interesting fight here. Matt, always great to get your insights. Be well. We'll catch up with you soon. Matt Nailey, Chief Market Strategist. over in Miller Tapeback. All right, a lot more coming up here on this show. Hitting the brakes, we're going to talk about that game-changing partnership between GM and Nikola, which fell apart, and what their relationship is now. Plus, a SPAC with star power. Hip-hop mogul Jay-Z joining a blank check company. Why not? Chief Visionary Officer for California's largest cannabis firm. And we're going to talk about Caroline's favorite subject, Bitcoin. Why advocates for the cryptocurrency say this time it really is different. All that and more coming up next. This is Bloomberg. All right, time now for our top calls to look at some of the movers on the back of analyst recommendations. First up, Apple getting an upgrade today to buy from hold over at Loop Capital. The analysts seeing iPhone units and revenue topping street estimates in the December quarter, the March quarter, and the June quarter. Shares of Apple up almost 3% on the day. Next up, Slack getting a downgrade today to equal weight from overweight. This over at Barclays. The analyst citing that 38% rally prior to today following the media reports that Salesforce held talks to buy the company. The analyst there sees limited upside for the shares. Nevertheless, the shares pushing higher to another record high, up about 6% here on the day. Finally, JP Morgan, a double downgrade today, unusual here, to underweight to overweight. This over at Morgan Stanley. Betsy Graysick over there citing a new preference for consumer finance firms like Synchrony, like Capital One. This ahead of what she expects to be a wave of reserve releases and capital return over the next 2 years. Shares of JP Morgan down 2% on the day. And those, Taylor, are some of your top calls.
Well, Romain, I'm going to stick to what's moving on the downside. We have to talk about shares of Nikola. This is another big mover that we're seeing today. 40% drop in just 3 days, 12% decline. 8% decline, 25% decline today. This really was a lot on, of course, some volatility that we knew from the expiration. So some insiders are starting to sell. That was expected. But on the fundamental side, some more concerns here about a scaled back partnership, of course, with General Motors. For more, let's bring in our Bloomberg tech reporter, Ed Ludlow. Ed, what are you hearing today about that GM partnership?
Yeah, we're hearing from sources that GM basically took a look at it, at what Nikola actually had in terms of technology. You remember the original deal was not just for GM to provide some fuel cell technology for Nikola's big rigs at semi-trucks, but also to manufacture a pickup on their behalf. But what we're hearing from sources is that they basically looked at what Nikola had. There wasn't that much there with the pickup. And so executives at GM decided to take a step back. Under the new deal, GM will not take an equity stake. They basically just become a supplier of technology to Nikola for which Nikola pays for, right? And we're also hearing that from the Nikola side, executives kind of felt the company had bitten off a bit more that they could chew. You know, under Trevor Milton, that we talked about a lot, he had all of these different projects and ideas that extended from semi-trucks to a pickup truck to power sports vehicles. But he has since resigned since that short seller report and reports of SEC and DOJ interest in the company. And the current leadership looked at what they had ahead of them and felt they really needed to streamline what Nikola was trying to do. And that is simply to focus on commercial semi-trucks that are powered by hydrogen fuel cell technology, which some of which will come from GM and some of which will come from Robert Bosch.
Of course, the company's now steered to a large extent by a former GM executive, Steve Gursky, as chairman. What of that relationship, and how does it evolve? Do we see them get back in board once it's a little bit more proven, for example?
Well, under the terms that we saw this morning from GM, it does leave room for them to expand the relationship to include battery technology. That was also something that was part of the original deal, but it seems like that is now off the table. We reported earlier in the year that Stephen Gursky was a big part of those talks. He made the initial introduction between Trevor Milton and Mary Barra, the GM CEO. But I mean, what's extraordinary about this deal is, like, say, for example, GM had walked away, say that it was completely off the table. Nikola still has all of the pieces that it needs to carry on with its business plan. It's building a factory of its own in Arizona. It has a joint venture in Europe with Iveco, one of the most established builders of semi-trucks in the world. It has this long-standing relationship with Robert Bosch, who are providing a number of core components and working with them on technology. So they still have all the things they need. I think really this is a reputational hit to the company.
I am curious about their reputational hit here, Ed, because, I mean, even if they have all the pieces, the idea that a company like GM was willing to walk away from this, a lot of people are reading into that GM must have seen something, or rather maybe they didn't see something that they were looking for.
Yeah, on the pickup truck side, the Badger side, you know, sources, as I said, tell us that they looked at what Nikola actually had, and there wasn't much there. And GM felt it already made heavy investments in its own electric pickup trucks, you know, the EV Hummer that's coming at the end of next year. GM has been working on fuel cell technology for almost 2 decades. That's what GM wants. It wanted to find a mechanism that it could find its fuel cell technology in a commercial product. And so the end result is what we get. GM sells that technology to Nikola. Sources did tell me earlier in the year, though, the issue is that GM fuel cells have been designed for use in a consumer vehicle, a consumer car, not a semi-truck. So what I'm hearing is that it's actually going to take a little bit of time for GM to adjust the design to fit in with the design of Nikola's truck.
One complex story that you continue to be all over. Ed Ludlow, we thank you, all things Nikola and EV. Meanwhile, coming up, Buy Black. We discuss the state of Black-owned business and the holiday shopping season that is now in full swing. Online, that's for sure. This is Bloomberg.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Second quarter of next year, we'll be cash positive again and growing our business. My own view, and it's always an optimistic view, that by the end of next year, calendar, and the first quarter of 2022, we'll have all our 380s flying.
Time now for Bloomberg Equality. It's where we examine the bottom line impact of diversity. And our focus this week, black-owned businesses. With online shoppers in the US expected to drop a record-busting $12.7 billion today, of course, Cyber Monday, how much of that will make it to black-owned retailers? Bloomberg's Jordan Holman joins us now. And Jordan, I'm hearing a lot of data being provided. We had IBM, for example, coming on late last week to say, what about 3/4 of those who are being asked are saying, yes, I'm putting my money behind causes that I want to back. I'm putting my name and money towards black-owned businesses. Is the data coming through that they actually did over the course of Black Friday?
Yeah, so this past weekend, we saw Black Friday in addition to Small Business Saturday, which had the most participation ever since that day got started. It was a 30% increase. And when you think about small businesses, they're run by moms and pops, but also a lot of Black-owned businesses fit within that. So they were seeing the benefits of shoppers going out and shopping local with them.
And so when we talk about shoppers going out, Jordan, I mean, you're talking about physically going to the stores here, because when we talk about this holiday season, it seems to be about the retailers, primarily the larger retailers, that have much more of an omni-channel presence, that can sort of do fulfillment online with very little contact with the consumers. How do small businesses stand up in that space?
It's really tricky for them. They don't have as sophisticated online offerings as a place like Target and Walmart. But that's where the shopping local comes in, because if you shop local, you're going to be able to walk to the store. You're not spending as much time. So safety-wise, that's also an option. But for the small businesses this past weekend, you saw a lot of them selling out of their merchandise and full well knowing that they were going to see an increased demand this weekend. But at least that means people will get their gifts in time for that Christmas holiday.
Jordan, I'm curious about how sticky the movement or the customer base is. We've been talking a lot about supporting small businesses, and yet there's a big divergence between the haves and the have-nots when it comes to some of the big box retailers. After the movement fades, are the customers still going to be there?
That's one concern that a lot of Black-owned businesses have right now. It's that they have seen that they'll see an influx of shoppers, but not necessarily return shoppers. And the return shoppers follow a certain demographic. It's mostly African Americans who are coming back time and time again to shop with them. And those are the most valuable customers for any retailer, people who come back again. And so people are shifting their marketing and trying to find ways to really have people return to them, to their small businesses.
Yeah, this is definitely shaping up to be one of the more complex holiday shopping seasons. Jordan Holman, always all over it, our retail reporter down there in Atlanta. All right, let's get back to Taylor now for the Business Flash headlines.
Thanks, Romaine. Let's start with this story I found interesting. The credit unit Blackstone Group is going shopping for quant firepower. Bloomberg has learned that the alternative asset manager is set to buy technology-driven credit investing firm DCI. The firm oversees about $7.5 billion in assets. The DCI purchase will allow Blackstone to wade deeper into the world of my favorite, investment-grade bonds. Lloyd's was named the head of HSBC's Wealth and Personal Banking Unit to be its new CEO. Charlie Nunn will replace Antonio Corte Osario, who's expected to leave the British bank next June. Nunn has been one of the HSBC executives working on a strategic overhaul. And contract signings to buy previously owned homes in the U.S. unexpectedly fell for the second month in a row. October's pending home sales decreased 1.1% from the prior month. Higher prices and a limited number of listings proved to be a speed bump in the housing market. And HSBC is contemplating a complete exit from the retail banking in the U.S. It would be part of a restructuring aimed at boosting profits in the U.S. and Europe. Bloomberg has learned that the recommendations are expected to be presented to HSBC's board as soon as this week. The bank makes almost all of its profit in Asia. And another story we cannot escape last week and more today, it is Bitcoin. And you guys, last week I was talking to some analysts and they thought, well, if you think about a 10% annualized compound return, that easily gets you to Bitcoin 50,000 next year, which feels crazy. And yet more record highs today and no talks of a bubble this time around, Caroline.
Well, I mean, I'm sorry, some quarters are still talking of a bubble. And there are obviously the true believers who are coming out now who are really saying this is different this time. Of course, it's always different. But it's interesting that there has been apparently real money being put to work, the Paul Tudor Jones of this world. And interesting, there's an awful lot of like Bitcoin-related stocks that are absolutely powering through November. We talk about the rally that we've seen this month, but they've really outdone it.
Yeah, I mean, I was taking a look at a MicroStrategy today, up about 20%. Remember, they used to be, I don't know, whether they were a software company or something years ago. And then, of course, earlier this year, they basically put half their treasury holdings into Bitcoin, a big bet there by Michael Saylor. I'm actually glad that this happened. You want to know why? As a longtime gold bug, gold bugs were always considered the cranks of the world, and now Bitcoin bulls are the cranks of the world. And so
do we call
I'm happy
them
to join.
Believers? What do you call them?
I don't know.
What do you call bugs?
Bitcoin bugs.
I think that might be
bugs,
trademarked.
Right?
We'll check in with Justin.
Let's have a look at how the rest of the market's performing. We're actually outperforming on tech. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
You never met, obviously, Walt Disney, but if you had a chance to talk to him, what would you want to ask?
Obviously, probably the number one question would be, how am I doing?
It is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
We're going to be well into 2021 before there's some sort of equilibrium that we achieve.
I'm Mark Crumpton with Bloomberg's First Word News. Moderna is requesting clearance for its COVID-19 vaccine, as new analysis finds it is 94% effective in preventing the infection with no serious side effects. And it showed 100% efficacy against serious cases of the disease in young and old alike. Moderna says the Food and Drug Administration is likely to review the data in mid-December. President Trump's coronavirus task force is promising a rapid rollout of vaccines to millions of Americans by the end of the year. Surgeon General Jerome Adams expects most Americans to have access to a vaccine by early in the second quarter. He says the government hopes to quickly okay requests from 2 drug makers for emergency approval of their vaccines. Arizona today certified Joe Biden's victory in the state, dealing the latest blow to President Trump's campaign to overturn the results of the presidential election. The certification triggers the appointment of electors who will cast Arizona's 11 Electoral College votes for Biden when they meet on December 14th. That now leaves Wisconsin as the last contested battleground left to formalize its results. President-elect Biden has named longtime Democratic policy staffer Neera Tanden to be his budget chief. If appointed, she would be the first person of Indian descent to hold the job. However, Senate Republicans could block the nomination because they see her as too progressive. Meanwhile, Mr. Biden's also named a senior communications team made up entirely of women, including White House Press Secretary Jen Psaki. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
This is Bloomberg Markets to Close. I'm Romaine Boston.
I'm Caroline Hyde.
And I'm Taylor Riggs.
A little after 2:30 here in New York, getting settlement right now of NYMEX crude futures. Last week, of course, we did trade above $46. Today, of course, we're settling right down in that $45 range. A lot of people waiting on the outcome of that OPEC Plus meeting. Of course, the first day of those meetings did end without an agreement on extending those production cuts. We could see, of course, an agreement come tomorrow on the second day of that meeting. And there are pretty interesting drama now playing out in the metal space. You're seeing copper right now rallying to a 7-year high, a big bet here right now on that economic recovery. Copper up about 10 to 12% here month to date. On the flip side, though, you have gold down about 5% month to date, down on the day, of course, as people sort of move away from those havens now and start to make more bets on that economic recovery, Taylor.
And Romaine, we go outside the world of commodities back into the world of vaccines, because remember, on all these Mondays, we continue to get some updates. Pfizer, Moderna, AstraZeneca, in just the last few weeks had released their vaccine trial results. Novavax is another one today. Now, they are erasing what was a pre-market drop. The study in the UK had reached full enrollment, and they're going to have results in the first quarter. And Romaine, that's sort of offsetting the more negative news that we got this morning about the U.S. study being delayed for a second time. The markets, when it comes to Novavax, really liking that UK enrollment announcement.
Yeah, the difference between what's going on in the UK and what's going on in the U.S., investors want to get some answers to that. And who better to provide those answers than the CEO of Novavax? Joining us right now, Stan Erck. Stan, great to have you here today. Can you start off by just kind of explaining in layman's terms why we're seeing the discrepancy between the progress that you're making with regards to the U.S. study and what we're seeing in the UK?
Sure. So we announced a couple pieces of news today, and I think a real important announcement was the final enrollment of 15,000 plus people in the UK and 2,400 people in South Africa. I think those are really great executions of clinical trials, and now we wait and collect data to see what the efficacy levels from those two trials are. So it's a really important milestone that we achieved, and the teams down there did a great job. In the U.S., the U.S. announcement was merely that we've lost, of maybe a couple of weeks or a few weeks, because what we're doing in the U.S. is we're scaling up the process so that when we get approvals, that we'll have a robust commercial scale production process, and it just takes time to get from low scale 50, 100 liter production up to 2,000 and 4,000 liter production. So we're doing that. We have to have all the assays in place. We have to have discussions with the FDA. It's going along fine. There are no roadblocks. It just takes takes longer.
Takes longer. Is it for manufacturing? Is it therefore, Stan? Is it that? And why did you perhaps think that it would be sooner than what it's turning out to be?
Well, we're always aggressive on our timelines and optimistic on that snafus won't occur, and so we run into things as that's never been done before. So you learn some things along the way, and that's what we're doing.
What is the level of efficacy that you would be happy with, given the 95% results from the other vaccine makers?
I think our expectation is that we'll be in that ballpark. So what you can do is you can look at and all you can do is look at it when you try to compare across vaccines, is look at how we did in preclinical studies in non-human primates and what levels of efficacy and immunogenicity did we get. Same thing in the phase 1 trials. And our vaccine came out equal to or ahead of these vaccines. And so we stand side by side with them, and I expect that our data will be quite good.
All right, so the data, the expectations, of course, in the market right now, Stan, is that data will be good. I am curious a little bit if you can provide a little bit more insight into the manufacturing process and whether Novavax is going to have the capability to scale this product out there to market, assuming you do get FDA approval for it.
Yeah, there's a couple issues, and one of which is scale, and another is stability, and so. What we've been able to show right now is scale. We've put together a global network of manufacturing partnerships that go all the way up to scale of 6,000 liters, 4,000 liters, 2,000 liters, and multiple bioreactors in each of these plants. And we're doing this in 7 different countries. And I think it's huge because this is a global problem, and we can't just make product in the United States and then expect it to be shipped globally. So we have the capability of doing that, and so we expect to supply with our partnerships, particularly with the Serum Institute. We expect to supply a vast segment in not just the high-income countries, but in the low and middle-income countries. We also need a product that's stable, and our product has shown maybe the best stability of any of the products out there, where we think we can have storage in 2 to 8 degrees centigrade, and perhaps room temperature storage for some period of time. So that's a big breakthrough as well.
It's interesting, back to Taylor's question about the 95% efficacy that others are showing. Do you feel you're under pressure to have to match that? We saw with AstraZeneca, people get concerned by the data they showed because, well, there's some question whether it was a mistake or not, but there's elements they seem to skew to try and show that it could be as efficient as others. Do you feel under duress to try and hit that sort of 95% level?
Well, I mean, there's a range. 95. Nobody knows what the final exact point efficacy is going to be for either Pfizer or Moderna. They both started out very well at 95. As you look over time, that number will bounce around a little bit. And so we can't predict exactly what our number will be. But if we're in that range, we'll be happy.
I am curious how you think about partnerships with countries. Some countries have already looked at partnerships with Pfizer, Moderna, et cetera. Do you then think to partner with countries that don't have previously existing partnerships in place? How does that work?
Well, it's a work in progress, actually. And so many countries are making commitments to multiple vaccine manufacturers because we don't know what the data are as far as, things like not just efficacy, but safety and the logistics of getting products shipped around. And some of them are more difficult than others, and so they want to have their options. So all those same countries, including the European Union and this COVAX facility out of Gavi, are all talking to us, and we're making demand projections, and so we're doing the same thing.
Well, we wish you well, Stan, for your company and for the good of everyone, that these manufacturing expansion plans here in the US do get on track, and we can catch up with the UK and some of the good responses you're getting in South Africa as well. Stan Erck, we thank you, Novavax CEO there. Coming up, we hear from chemical giant Chemours CEO and how the Biden administration's plans to address climate change will impact the company. This is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
All right, welcome back. Turning now to our deals report. Chemical giant Chemours posted solid third quarter data earlier this month, and the CEO over there is positive on the company's direction headed into 2021. Now, our very own Bloomberg senior deals reporter Ed Hammond caught up with him earlier to find out if that positive sentiment includes deals on the horizon. Take a listen.
We look at, our cash, from that standpoint, our dividend is very, very important to us. We've been able to maintain that. We've told our shareholders the majority of our cash will go back to them. We just did a debt offering, which actually will retire about $150 million of debt. So we've taken our debt down as well. And, what they're looking at is extensions to our membrane business, which is really driving the hydrogen economy. We are the membrane of choice for hydrogen generation as well as energy storage. We are looking at our 5G offerings for polymers as well. So these are areas we could invest in ourselves, as well as look at potentially, bolt-ons that would sort of advance our offering to our customers.
And how important is the tailwind of government spending and infrastructure spending, particularly going to be to Chemours and indeed to the industry more generally going into the next sort of cycle?
Well, if you think about what the Biden administration has already said, they're going to lean quickly into climate change. That is a benefit for the Chemours company from the standpoint of our Opteon offering. Lowest global warming potential refrigerant in the world is going to benefit from that. They've also said that they want to drive in industry in the U.S., especially electronics industries that have been outside of the U.S. Again, our 5G offering is good for that. And then our membrane offerings in terms of the hydrogen economy, which we talked about for alternative energy, is positive. So I am hopeful the administration sort of leans into some of the infrastructure they're talking about, whether it's the electronics industry or clean energy, because I think we could play in all of those areas. It's a huge strength in terms of our product line.
A lot of people doing things remotely. You and I obviously doing this call from our homes respectively. That has acted to sort of temper some of the international ambitions of a lot of companies, a lot of large global companies. When that begins to come back, what are the opportunities going to be for a company like Chemours?
Well, number one, Europe driving into a green economy itself has been something that we've been leaning into anyway, again, with our refrigerant offerings and now with our hydrogen-based offerings. And I think Europe is going to continue to be the lead out there around those types of technologies, so we want to be right there. We continue to see Asia pick up. From an economy point of view, we have a big presence in Asia as well across all of our product lines. That's going to be important for us, as China has sort of led that, but the rest of Asia Pacific is sort of coming right behind that. So if you look at the economies of the world, I'd say Asia is very strong right now. The US has been solid all through this. Europe has bottomed, but I think is starting to see some life coming back. And Latin America maybe is still a little bit of a wild card as COVID is still there fairly deep. So from our standpoint, we're a global company. We've got to be touching all our customers all around the world. And as the economies improve, we're going to be right there. As I talked to you earlier this year, I told you about our North Star, right, of how we were trying to run the company. Number one was keep our employees safe through COVID, make sure they can take care of their families. And three is support our customers with whatever they need. And that means operating our facilities to be able to get them the product when they need it. And that continues to be our North Star going forward.
Chemours CEO there speaking earlier to Bloomberg. Now coming up, SPAC star power. Jay-Z betting big on California's cannabis industry, tapped to lead the largest cannabis SPAC in history. Well, certainly play a visionary part of it. We discuss with one man behind the deal. He is, of course, the Subversive Capital Acquisition Corporation chairman. This is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
We've talked a lot on this program about some of the recently issued IPOs, the major outperformance, and of course, it is the year of the SPAC attack. What I found interesting is recently issued companies that have gone public and IPO'd up 100% year to date. The SPAC ETF, which tracks SPACs, it's up about 23%, but they're both outperforming the S&P 500, Caroline, which is only up about 12%. So you still are getting some big outperformance, whether you IPO or you go public via SPAC.
We love that chart. Meanwhile, I love this lyric. I'm not a businessman, I'm a business man. So goes the legendary lyric by rapper Jay-Z. Stop laughing, guys, it's important to me. Who is proving his point again with his latest venture, joining the largest cannabis SPAC ever as its chief visionary officer, and to lead its social impact venture as well. Now, to discuss the brand power he hopes Jay-Z and his entertainment company Roc Nation will bring to their California cannabis business is Michael Auerbach. He is founder and chairman of Subversive Capital, now the biggest cannabis SPAC ever. A dominant brand is what you want to be, Michael, and with brand strategy and cultural marketing coming from Jay-Z and Roc Nation, what exactly are you hoping they can bring in terms of, well, star power?
Yeah, well, thank you very much for having me. We're super excited about the partnership with Roc Nation. They represent the most relevant artists in the world today. And bringing Jay-Z on board as our chief visionary officer really sets us apart from, all of our competitors in terms of brand power. Jay launched his initial brand. It's called Monogram. It launched last month. And just a teaser got over 2 billion media impressions just in a single announcement. And so just the power of Jay-Z and the artists that are behind him with Rock Nation is going to set us apart from the competition in our space.
Yeah, no doubt. Obviously, his name carries a lot of weight for a lot of folks out there, Michael. Talk to me about the finances, though, here. What is the financial proposition here for investors beyond just Jay-Z?
Sure. So we essentially have acquired two of the leading companies in California for just under $500 million in stock and very limited cash. We raised a small friends and family PIPE to cover all closing costs associated with the transaction. So we're guaranteed to close sort of the first half of January 2021. With the largest balance sheet in cannabis, we raised $575 million last summer in our initial SPAC IPO. We expect limited redemptions on this transaction. Given that we're coming to market at a significant discount to our comps, we anticipate our stock to re-rate significantly after closing.
On that note, we've been hearing a lot from some short sellers. I think Carson Block at Muddy Waters, who say SPACs in general look like they're in a bubble because you have that inherent 24-month deadline. And if you don't get that deal done, it doesn't get done. So that creates that sort of conflict of interest where you're forced to do deals that maybe you otherwise wouldn't, or at valuations that you otherwise wouldn't. How do you respond to that?
Yeah, we really took our time. So last summer when we raised $575 million, cannabis multiples were through the roof. And then as we went into the winter and into 2020, those multiples collapsed. So we really took our time and focused on getting a good deal and not overpaying for the assets. Had we done a transaction right after we had IPO'd, we certainly would have overpaid. So having the ability to wait it out, if you will, allowed us to acquire these two assets at a really attractive valuation. So we're super excited about what we've been able to put together because it is at a significant discount to the comp multiples, which is exactly what you want in a SPAC transaction. So we've done everything that the SPAC vehicle was created to do, which has allowed us to go out and acquire high quality assets at an attractive valuation to provide the SPAC investor an appropriate return on their capital while bringing retail investors and other institutional investors at a discount to where the stock will re-rate.
It's interesting, when we speak to other leaders in the cannabis space, like Boris Johnson, to try and take on the illicit market in price, quality and convenience. How do you see yourselves doing that? What sort of data will you glean to be able to bring the price point right, for example?
Yeah, so our largest competitor is the illicit market, particularly in California, where it's quite large. With this balance sheet and the omni-channel platform that these two assets, Caliva and Left Coast Ventures, bring, we're going to be able to compete on price and convenience using the proprietary data that we're getting from our D2C platform and our retail, using operational efficiencies and better consumer access models. We're going to be able to compete on price with the illicit market in California. And the reason we've chosen California is because California really is, a country in itself. It's the largest cannabis economy on the planet. And we believe that the end of prohibition is 12 to 24 months away. And California therefore becomes really the only relevant market in the post-cannabis economy. And so we're really excited about creating that foothold in California so that when prohibition does end, we can expand into other states. Unlike our MSO rivals, which invested really into infrastructure and duplicative assets, California will be the tip of the spear for when prohibition ends, and we have an interstate economy for cannabis.
All right, a lot of ambitions here. Michael, really appreciate you coming on with us. Michael Auerbach, he is of Subversive Capital, of course, the parent company of this SPAC that we're talking about, and of course, a big tie-up here with Caroline's favorite rapper, Jay-Z.
I'll bring you some more lyrics.
She's going to spit some bars during the commercial break.
Why were you laughing? Do you not think that I presented it as well as Jay-Z does?
Yeah, it was. You had a certain flair to it.
I got some work to do, right?
A certain British flair to it. We'll check out our SoundCloud page after the show. But let's get a quick check on where we stand here in the markets here this last day of November. First day of the week, though. We are down on the day, but still setting up for what's going to be one of the best months for U.S. equities. In months, at least for the S&P 500, for the Russell 2000 on record. For the dollar, interesting, up on the day, slumping on the month. And your 10-year Treasury yield, quite a ride, 84 basis points right now. That's pretty much where it started the month, but you wouldn't know it. This is Bloomberg.
Saving for retirement is confusing. That's one reason why 42% of people age 18 to 29 have no savings, and partially because of things like student loans and other priorities like just being able to pay rent. But if you do have the means to save it all, here are some ways to get started. First, there's the one everyone thinks about, which is your 401k. This is a savings account that lowers your taxable income because you don't have to pay taxes on the money you contribute. The downside is that when you take that money out, you have to pay taxes based on the income bracket you're in at retirement age. But there's one major benefit to your 401k. Employers often offer contribution matching, which means essentially you're getting free money. Another option is the Roth IRA. With this, you pay taxes now on the money you put in. This gives you a savings account you can withdraw money from at retirement without having to pay taxes on the money you take out. You can only put $6,000 a year into a Roth. This is also a great option because with a traditional 401k, you may have to pay a penalty if you have to cash that money out early, but that's not the case with a Roth. Most financial experts suggest a combination of the two if you're able. To save more and worry less, you can set up automatic transfers into a savings account from your regular bank or credit union. Tools like Betterment can also help you set up automatic payments into a Roth IRA so that investing can be simple and mindless.
Do not expect a quick, immediate impact. It will take some time, but at least there is a light, and that's what is very important. I think this is well understood by the market.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
I'm Mark Crumpton with Bloomberg's First Word News. NATO Secretary General Jens Stoltenberg says the military alliance is determining its future in Afghanistan as the United States starts pulling troops out while attacks by the Taliban and extremist groups increase. Stoltenberg was asked by reporters how the alliance will work with the new administration in Washington.
And I know Joe Biden as a very committed supporter of the cooperation, the bond between North America and Europe and of NATO. I'm looking forward to working with him and also with Kamala Harris, the Vice President-elect, and they have all both expressed strong support to
troops from dozens of nations there, helping to train and advise the national security forces. A group of OPEC Plus ministers couldn't reach an agreement on whether to delay January's oil output increase. Delegates say drawn-out discussions earlier today among OPEC ministers about conditions attached to such a move means a final decision will not come before tomorrow. The third largest oil company in China reportedly will be named to a U.S. blacklist. According to Reuters, CNOOC is among 4 companies to be added to a list of firms controlled or owned by the Chinese military that could lead to major outflows of U.S. investors divest. Global news 24 hours a day, on air and on Bloomberg Quick Tape, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
We are counting you down to the close. Just 1 hour left in trading to go. I'm Caroline Hyde.
All right, stocks off of those record highs, but still setting up for the best month since April. I'm Romaine Bostic.
And I'm Taylor Riggs, and we get right to it, ending the month on an pretty negative note after what has otherwise been a pretty good month, and we can see that in the IMAP function. Every sector mostly is in the red. Energy at one point was having the best month ever, but we've erased some of that. So now only having the best month going back since April. That doesn't sound as exciting, Romaine. Everything else, though, not really looking good.
Yeah, not really looking good, at least on a daily basis. Take a look at some of the other movers here on the day today. Of course, we talked a little bit earlier about Novavax. This is basically the stock of the year, up 3,000% here. Best performer in the NASDAQ composite. Remember, those shares dropped today, down about 6% on word of that U.S. and Mexico vaccine trial is getting delayed a little bit, that phase 3 trial, but some positive data out of a UK trial caused the shares to rise, now up about 11% on the day here. Still the best performer here in the NASDAQ composite. JP Morgan, some of the other big banks moving lower, a downgrade over by Betsy Graseck over at Morgan Stanley, basically saying there's going to be a little bit of a shift away from these types of banks to some of the more consumer finance companies like Synchrony. Nikola down 26%. Of course, that GM deal falling apart, not quite what people have expected, and probably one of the most talked about stocks of the year. Zoom up about 600% here on the year, getting a slight bid today. We're going to get earnings after the bell today, Caroline. Remember, this is a company that had 300% revenue growth in the most recent quarter. Investors expecting them to at least match that. Whether they live up to those expectations, we'll have to see.
It is the work from home pin-up stock. But you go granular. I want to go big picture once again, because what a month. And I love this quote coming from JJ Kinahan, TD Ameritrade. Really just said, look, put it in perspective. If anybody has said to you in March, hey, we're going to have a year where really most businesses are working at not full capacity. Most restaurants may not even be open. People aren't even going into the office. And oh yeah, by the way, we'll hit all-time highs. People would have thought you're completely nuts. It has been amazing. November has been amazing. 20% increase on the Russell 2000, record for global stocks. It's really been quite phenomenal, Romaine.
Yeah, it has been a phenomenal November, something we're going to be talking about for years, I'm sure. Let's bring in Omar Aguilar. He's Chief Investment Officer for Equities and Multi-Asset Strategies over at Charles Schwab, joining us today from San Francisco. Omar, always great to get your insights, particularly on a day and a time like today where the market really does seem to be pushing higher despite the downturn that we're seeing on this day. I am curious, when you consider how far this market has run, given all the adversity in the economy and with COVID, are you convinced right now that this rally has more to go?
Well, thanks for having me. And what an interesting day, what an interesting month. And I would probably say have used the word unprecedented to describe, this year more than any other times. I would probably say it was unprecedented, the number of times that I have said unprecedented, because it's right. It's just very hard to even conceive everything that we have gone through on our lifetimes, but also just the market and how the market has responded to every single one of the challenges that have been presented. I would probably say that the most interesting part of November, to answer your question, is the fact that we have seen a significant change in the leadership. And, for the first time, at least since the end of last week, value has outperformed growth by over 5%. And that's obviously a significant change in the way that we see all the way through the year. In fact, the last, the year and a half, where we can start to see the shift in that rotation that everybody's anticipating as we see the results of the source of the economic crisis, which is the virus. We have always stated that the economic recovery will really start to build as soon as we have a solution to the virus. So the news on the vaccine everything that we have heard starting from 4 weeks ago until even the news this morning, it yields to the fact that we see the light at the end of the tunnel that suggests that rotation that everybody's starting to anticipate going from momentum into value and into cyclicals is starting to just shape up. And if you think about, what the spread has been, say, from energy to technology throughout the year, which is around 60%, right? 60%. That basically reversed even despite the weakness this morning.
You're based over there in San Francisco, a home to a lot of the big tech companies which have significantly outperformed in terms of the work from home trade. Is there any juice left in those sorts of companies, in the Zooms of this world, which we're going to get earnings from today? Or will we see we'll have to see a fall in their share prices? Did they come too far too fast?
Well, it's a big part of the earnings projections going into 2021 build up on the fact that a lot of the companies that have done very well in 2020 are actually companies that are generating significant amount of cash flow. And the free cash flow levels that they have generated continue to be incredibly attractive, especially when you compare the yield related to that free cash flow to what you can actually get in fixed income. While the overall level of valuation of those companies clearly is above average and has actually been overextended, when you compare relative to other potential sources of you can actually get investment, it still looks attractive in comparison to other asset classes and in comparison to even other equity options that are out there without the yield.
21, but then the MSCI All Country World Index has its best month ever. Does that feel crowded to you?
Well, that's a very interesting, component because what is called the momentum trade that had basically a lot of people on it, through end of October, basically had a significant amount of collapse at the beginning of the month. And, the momentum trade, mostly U.S.-based, ended up with those big momentum trades being completely unwound as a result of the news that came out of the vaccine. When you actually think of what that means and the prospects of, continued support from global central banks of low interest rates, when you actually think the potential for a fiscal stimulus in the U.S., that provides plenty of liquidity to the market. And when you have a combination of economic recovery, plenty of liquidity, that reminds you of what we saw in 2009 on the previous recessions that usually builds up for emerging markets. So when you actually think just tactically, that trade is it started to build up. And, the performance of emerging markets has actually been very well so far this month. A lot of that is because that excess liquidity that usually gets into that part of the market. Now, you put that in the context of China, and the fact that China is the only major economy in the world that is going to post a positive GDP growth in 2020, that builds up incredible good momentum going into 2021 for emerging markets.
Real quickly here, Omar, only a little bit of time left. A lot of folks, of course, look at this rally, including a lot of folks who've been sitting on the sidelines for quite some time, who say, maybe it's a little too risky now to get in when you still have stocks at record highs. Of course, you could have been saying this for the last few months. What do you say to those people?
Well, it's rebalance. It is a big part of everybody's strategy and looking at the long term. Our advice to Schwab clients continues to be to focus on your profile, your risk appetite for the long run, and try not to look at the levels of the market. Try to always find the opportunities to diversify. Try to always find the opportunities to stay invested, because time in the market, it is more important than timing the market. And that component is very critical. In other words, staying invested, it is clearly more important than trying to find when to get in and when to get out.
Omar Aguilar, we love having you on. Thank you very much. Chief Investment Officer of Equities and Multi-Asset Strategies at Charles Schwab, of course, saying that rebalance, and that's exactly what seems to be happening on the market today. Meanwhile, we've got some breaking news for you, because UniCredit coming up, we're going to be talking about the C-suite shuffles that are currently occurring in the financial sector. The UniCredit CEO will not seek a new term after April 2021. And coming up after that, tightening restrictions, how Hong Kong is introducing the city's toughest public gathering restrictions in months as it tries to contain yet another wave of COVID. And a $2.8 billion food delivery company, DoorDash, is joining the IPO rush before the end of the year. All that and so much more coming up. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need is surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Welcome back to Bloomberg Markets. The close, counting you down to the close 47 minutes ago. A wild day, of course, a wild month, one of the more volatile months. That's actually good for your traders out there, especially you over at JP Morgan, getting a 20% bump here. Take a look at the S&P 500, down on the day, but of course up on the month, snapping a 2-month losing streak. Best month since April. Small caps outperforming, though, the larger caps for this month. Third straight month they've done that, and the biggest outperformance for the Russell 2000 versus the S&P 500, going back all the way to 2000. The Bloomberg Dollar Spot Index up on the day, down for the month, and your 10-year yield, 84 basis points. That's pretty much where we started the month. You wouldn't know it. We got all the way down to about 72 basis points earlier in the month and got all the way up to about 98 basis points, almost 1% here on the month. But, of course, this is where we're settling in. You flip up the board, you see what the NASDAQ is doing on the day. Not a whole lot going on there. The VIX, which, of course, did dip below 20 last week, now back above it slightly. The MSCI Emerging Market Index having its best month going back to March of 2016. And Bitcoin, Caroline, having a moment in the sun here right now, up 14% on the day, trading at those record highs.
Quite amazing. We keep our all eyes on digital gold. Meanwhile, we go back to President-elect Joe Biden rolling out his first set of nominations for his economic team today. Bloomberg Technology's Emily Chang spoke earlier with Gary Cohn, former National Economic Council Director, in a pretty wide-ranging conversation about the addition of Janet Yellen to Biden's administration and his observations about the state of the U.S. economy amid the pandemic.
One thing is we have to remember how resilient the United States economy is. If we all think of what we've been through since March of this year and where we are now in December, I think it's nothing short of extraordinary to how resilient we've been, how well the consumer has held up, and how well the economy has held up. I'm not in any way, shape, or form saying we're out of the woods, because we're not out of the woods. And I desperately believe that we need more stimulus, and we need more stimulus today. I would beg Congress to go back to work and pass a stimulus bill this week. There's no time like the present. Dollars put back in consumers' pockets would be very, very important. And we've got a lot of stimulus dollars or support dollars that are going to end over the course of the month here of December. Unemployment benefits are going to run out, and other benefits that people desperately need are going to run out. So look, I think we're doing as well as we can given the situation, but there's enormous opportunity to do better. And I think Congress should get back to work and should pass a large stimulus package.
But do you think that stimulus will actually happen in a lame duck session or under the next administration in a divided government?
Well, I'm praying and hoping that it would happen in a lame duck session. There's no reason it shouldn't. If it's going to happen, eventually it might as well happen now. And we all know that the present value of those dollars is extraordinarily high today.
That was Bloomberg Technology host Emily Chang speaking with Gary Cohn, former National Economic Council Director. And you can catch that full Studio 1.0 interview in Bloomberg Technology later today, 5 p.m. New York time. And we want to bring you some breaking news. We do this with Arcadia, which, as we know, the owner of Topshop, Burton, Dorothy Perkins. Thank you to Caroline for bringing this all together for us, naming Deloitte here as the administrator in the insolvency process. So, of course, now looking at Deloitte to help it go through the insolvency headlines that they are going through. In the meantime, we want to get time for our options insight. We do that with Abigail Doolittle, and you're taking a look at the VIX right there around a 20 handle.
Yeah, Taylor, it's pretty impressive to see stocks near all-time highs, down a little bit today, but the VIX, that fear index, really stubbornly high. To talk more about what this could mean for the month of December and even early 2021, Matt Rao of Headwaters Volatility. Happy Monday to you, Matt, and thanks so much as always for joining. And what do you think about the VIX staying above 20, which on a historic basis is pretty high, even though it's very small relative to where it was earlier this year?
Yeah, thanks. Happy Monday. I think it's the tug of war between the potential for equities to move and interest rates and yield. So on one side of the equation, you have options market makers and traders trying to price the implied distribution of their potential for stocks to move, whether it be single name or index. And then on the other side of the equation, most of the option sellers are either trading against some equity risk that they have, or just writing option premium for yield. So as Gary Cohn just mentioned, or it was mentioned before lead into the segment, with interest rates this low, everybody's searching for yield. So that's sort of the bid-ask spread is, who's bidding up for the potential movement of whether it be indices or single names, and then who are the natural sellers for yield. And that's what's bringing us back and forth, and it seems to be pretty well centered right at 20.
That's pretty interesting, Matt. And before we take a look at the implied correlation in the terminal, talking about yields and just talking very simply around the 10-year yield, because it's pretty interesting. It's staying right in the middle or toward in this year's range. And it seems as though there's some level that once it gets above, say, 1% or 1.25% or 1.5%, it's going to create a real issue. So that could be something traders are hedging around as well on a broader level. What level do you think could be worrisome for stocks?
Well, I think, what drives rates up is really the big question. If it does happen, we've seen some pretty tremendous rallies in commodities, particularly in soft commodities and consumables. And there's this constant conversation around which way rates will break. I will say that interest rate volatility has been pretty cheap when you look across the relative offerings. Equity vol, rate vol, credit vol. Interest rate volatility has been pretty inexpensive. So I think we're likely to continue to vibrate around a little while. We're going to see how this administration engages. And I would love to see Gary Cohn's wish come true to get stimulus in a lame duck session, but I'm not personally very optimistic about that.
Yeah, and that range is really pretty strong. So now bringing in implied correlation, because this is interesting, too, the idea that we could start to see dispersion, that we're no longer going to have all stocks rallying higher, that you're actually going to have to become a stock picker. But what does this mean relative to hedging? And we have about 30 seconds or so, Matt.
Sure. So in simple terms, implied correlation tells you the relative price or expensiveness of single name stocks versus indices. And when it's low, which in my frame of reference is sub 45, sub 50, that means index volatility is relatively inexpensive. So what it means is that it tells you that if you're going to be hedging portfolio risk, you probably look at index. We are seeing a lot of people in the hedge fund space having renewed interest in long-short strategies, relative value, and really a reality of a world where companies will fail and some will succeed.
Yes, indeed. Matt Rao of Headwaters Volatility, you always impress us and here on this rainy Monday in New York City. Thanks for joining us for Options Insight from New York. This is Bloomberg.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Measures we are taking are the right ones. We are very hopeful that by the fourth quarter of 2020, we'll exit recession. If not, at least by the first quarter of 2021. So it means the steps we've taken are working.
It's just about 320, which means it's our emerging action segment. And it was the overnight PMIs out of China that really caught my attention. Looking better than expected, a 3-year high on that factory index, a 52.1 print in November. That's an improvement from a 51.4 the previous month. And business sentiment improving as well, along with those PMIs. For the latest on this emerging action, let's bring in our Daybreak Asia anchor, Sherry on. Sherry, assuming we believe the numbers, we in the all clear?
Yeah, so the numbers look really good, and we're going to get confirmation on what happens on that front with the Caixin PMI manufacturing numbers tonight. But what we perhaps may see is a reflection of what's happening with the virus infections around Asia as well. We are seeing this incredible spike and new waves across Asian countries. And in cities like Hong Kong, this GTV chart on the Bloomberg just showing the highest new cases since August. So is this going to affect economic performance, of course, is the key question. In the meantime, though, people are just trying to understand what in Hong Kong seems to be sort of haphazard restrictions. We're talking about this past week, a surge in cases linked to social dancing venues. People can go ballroom dancing, but all of a sudden, bars and karaoke rooms are closed. So people are really getting fed up with this. It's a little bit of a different story with what's happening in South Korea. Okay, you have more than 400 daily cases over the past week in South Korea, third wave as well. But there you have a five-tier system where if you go above a certain threshold, you get new restrictions. Right now, restaurants are operating with limited hours, for example. But the virus case is really perhaps threatening this economic recovery across Asia.
Yeah, so a lot more data coming. Of course, you know, Sherry, I am your biggest fan of Bloomberg Daybreak Asia and Daybreak Australia. Beyond the data that we're going to get later tonight in the U.S. hours, I am curious about Ant and that big IPO that doesn't look like it's going to get done. What's the status of that?
Yeah, so that Ant IPO was supposed to send Ant Group's valuation over $315 billion. We're talking about the potentially largest IPO in the world. But now regulatory sources telling Bloomberg that that might get postponed to 2022. That is really unlikely that will happen next year. They're reviewing some of the changes that Ant needs to make in order to appease regulators. There's so much work, they say, that needs to be done, not to mention that some rules are not even written yet. So right now they're working with the joint task force that's overseeing Ant, departments from the PBOC, the Financial Stability Committee, and they're trying to figure out what changes Ant needs to implement. According to those draft rules released earlier this month, Ant is forced to replenish capital. Bloomberg Intelligence estimates that at around $12 billion. Not to mention that they also need to apply for 2 new licenses related to their lending platforms. But sources saying that perhaps getting 2 licenses approved is a little bit far-fetched.
So we've got to keep a close eye on where the IPO goes next. We've got to keep a close eye on all the data as well that we're expecting overnight, right?
Data dump, PMI numbers, this GTV chart on the Bloomberg showing already economists are slashing their forecast for economic growth across Asia, perhaps because of those virus cases I mentioned. But do watch out. We have South Korea third quarter GDP numbers. We have jobless rate out of Japan, not to mention an RBA rate decision. Not much expected there. They've already cut the rates and they've announced a QE program, but lots of numbers coming out tonight.
Sherry Ann is going to be all over those numbers for us, host of Bloomberg Daybreak Australia and Daybreak Asia. Meanwhile, let's look at what's happening in the US markets right here, right now. Remember where we've come in the month of November. Record increases in global stocks. I'm looking at the all-country world index. The Nasdaq's your outperformer on the day, though. As we pause, we rebalance, we take profit. This is Bloomberg.
the pandemic swells the gap between the rich and poor around the world, there may be no starker case of inequality than Venezuela, where the socialist leader Nicolás Maduro has kept his hold on power by fostering a Darwinian dollarization under quarantine. The nation's mighty oil industry has collapsed. Water, electricity, and gasoline are barely available, and hunger hunts vast portions of the population. 4 out of 5 Venezuelans can't afford a basic food basket last year, according to a research by the main universities. Meanwhile, Caracas neighborhoods have a dozen new delivery services bringing to their doors everything from truffle salmon poke bowls to electronic cigarettes and $50 gluten-free birthday cakes.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I'm Mark Crumpton with Bloomberg's First Word News. Iran is vowing not to, quote, fall into the trap of scrapping any future talks with the Biden administration. The Iranian government posted a statement 2 days after the assassination of a top nuclear scientist. Iran has blamed Israel. Joe Biden has made it clear the United States will rejoin the Obama-era nuclear accord if Tehran also returns to full compliance. Georgia's top elections official today announced investigations into potential violations of election law, even as he continued to defend the integrity of the state's election against what he said are baseless attacks.
Once this recount is complete, everyone in Georgia will be able to have even more confidence in the results of our elections, despite the massive amounts of misinformation that is being spread by dishonest actors. There are those who are exploiting the emotions of many Trump supporters with fantastic claims, half-truths, misinformation, and frankly, they are misleading the president as well, apparently.
Mr. Raffensperger says his office continues to investigate any credible claims of illegal voting and violations of state election law. His office currently has more than 250 open cases from this year. Congress reconvened today under pressure from both President Trump and President-elect Biden to pass a COVID-19 stimulus bill after months of deadlock. The meeting is an opportunity to take another shot at passing a stimulus measure. Lawmakers are still at odds over the size and scope of any package. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
A little less Less than half an hour to go in the trading day. This is Countdown to the Close. I'm Caroline Hyde.
I'm Romaine Bostick.
And I'm Taylor Riggs, and we get right to that price action. And it was looking to be the best month on record for the energy sector, but today's declines are taking us back down to just the best month since April. So that doesn't sound nearly as fun on a Monday Superlatives Day. Everything else, the rotation is sort of coming out of the you think the big value sectors, and it really is a defensiveness day where tech, the defensive sector of 2020, Romaine, is the only sector in the green.
Yeah, and you're seeing healthcare and tech at the top of the board. You look at some of the individual movers, that's also what's at the top of the board. Of course, Moderna planning to submit today emergency use authorization requests to the U.S. FDA. Those shares up 18% on the day. Slack, those shares continue to push higher. Despite a downgrade today, the speculation about whether Salesforce might actually be in the bidding for this has Slack shares right now at an all-time high. And GameStop, the biggest sort of deals right now on the Black Friday, Cyber Monday, has been everyone clamoring for those new video games, the Xbox, the new PlayStation. That's given a big boost here to GameStop. And finally, MicroStrategy, not the software company or whatever it is they make, Caroline, but this is a Bitcoin play. You'd be into it. Bitcoin, of course, at all-time highs. And right now you're seeing a lot of stocks that are tethered to Bitcoin in some way or another, no pun intended, also getting a bid up 27%.
Oh, love it, Romaine. And it is amazing, not only like MicroStrategy, some of the ones that have outperformed, that are really quite phenomenal in terms of MicroStrategy. Riot Blockchain as well was another key winner. I'm also looking, though, at those Monday superlatives that Taylor was talking about. I like them. I like them in terms of what's going global. Check out this stock market. Look, in all country world index, global stocks, best month on record, up more than 12 percentage points as we see. So clearly, this has been a November game in town where you pile into stocks, but you pile into the rotation trade. This hasn't just been a theme in the United States where we've seen small caps outperform US, S&P 500 up more than 10%, but this has been a global phenomenon. Taylor.
Global indeed. And Caroline, I want to talk about another story that we're following. DoorDash, the biggest U.S. food delivery company, seeking to raise as much as $2.8 billion in an IPO. Joining us now, Bloomberg startup reporter Ellen Hewitt. And Ellen, it really is that heightened valuation that catches our attention. Is it, of course, because valuations are up across the board, or is there something more fundamental going on?
Well, it's hard to say, but that was definitely the most important takeaway from the amended IPO prospectus filing this morning, is that if you count all the shares, outstanding RSUs, it sounds like the valuation for DoorDash could be as high as $32 billion. That's much higher than the previous private valuation, which had been around $16 billion. Whatever it is, it shows a big jump in how people are thinking about valuing this company. Part of that could be because of how well it has done during COVID. It has really seen its revenues skyrocket. They are 3 times as high as they were a year ago, and that's largely because people are staying at home and ordering delivery a lot, and it has been the sort of growth that many companies dream about, and DoorDash seems to have done a fairly good job of handling it. They even had a profitable quarter in Q2 of this year, which was previously, they had never made a profit any time before that.
But Ellen, we've just been talking about how investors are looking past COVID. Do they really think that this sort of success is sticky?
It depends on who you ask. I've talked to a lot of different people, restaurant and delivery observers, about whether they think these companies that are seeing huge bumps because of COVID are going to be able to continue that. It's not just DoorDash, it's other companies such as Instacart, other services that people are turning to. In the case of DoorDash, I spoke to someone who used to run a food delivery company, and he was telling me, looking at DoorDash's numbers, he was actually quite impressed because they had already started before the pandemic to increase what they call their contribution margin, which is not the same thing as a profit, but it's showing kind of the unit economics on each delivery. Those were steadily increasing even ahead of, this was early in 2020. So this person sort of felt that DoorDash had already been showing promise, and then COVID came and sort of just ramped up their demand aggressively, but that he feels like they can continue on a strong trajectory after the pandemic has subsided a little.
And we'll be All busy in the run-up to the festive period of IPO season. Ellen Hewitt, we thank you very much indeed. Let's have a quick look at some breaking news. Romain, you were telling us this. OPEC Plus meeting is being rescheduled as more talks are indeed needed. This was always going to be a messy discussion, hey, but oil has actually been selling down a little bit as we wonder or not whether we'll get those production cuts.
Yeah, we saw NYMEX crude at one point dip below that $45 a barrel. Right now, trading right at that level here. A lot of people, of course, want to see those production cuts extended into next year. The hope is that with those production cuts extended and then you get that economic recovery potentially in the second half of 2021, then that would underpin where oil is now and where it could potentially go down the road. All right. And that's we'll be back in a moment. Of course, counting you down to the close. Stick with us. This is Bloomberg.
So the reason we're interested in Post Office Rock is just the extreme nature of the erosion that is ongoing here. In the last, well, since 1940, it's eroded about 100 metres and in quite a unique fashion. By having a map of the seafloor and hopefully being able to capture some movement in these transverse dunes, we'll be able to see after the erosion where the sand is going and why it is not replenishing the coast as sometimes and most often happens.
With continued sea level rise and future climate change, we're just going to see much more of this kind of event taking place. So it's a good proxy of what we expect to take place much more commonly by 2050, 2100 than is currently the case.
All right, and just want to bring you an update here on the COVID cases out of California, of course, the most populous state here in the U.S. and, of course, the largest state economy here in the U.S. California's 14-day positivity rate reaching 6.2%. This, according to the Governor Gavin Newsom there. He is saying that he sees hospitalizations increasing 2 to 3 times in 1 month. He's basically giving a briefing right now on the situation out there in California, Taylor.
Well, hopefully he enjoyed his lunch at French Laundry, despite all of this. Wow. In the meantime, S&P Global has agreed to buy IHS Markit for about $39 billion in stock. It's accelerating the wave of consolidation among the finance industry's biggest data providers. And of course, a disclaimer, Bloomberg LP, the parent company of Bloomberg News, competes with IHS Markit and S&P Global in providing financial analytics and information. For more, let's bring in Bloomberg Sonali Basak. You spoke earlier with both S&P Global and IHS Markit CEOs. What was your takeaway?
So the number one thing here, Taylor, is when people saw this deal, it looked like a very expensive deal. It was 10 times IHS Markit's revenue in the last full financial year, and that is much more of a higher multiple than we saw the London Stock Exchange pay for Refinitiv, for example. So the CEOs really defended the deal with the mention of the synergies that they would create, of course. And the biggest growth areas for S&P CEO was actually ESG, which is a very small part of the business right now, but something he sees becoming a much bigger part of the business moving forward. Remember, when you look at revenue synergies of a business, revenue synergies are much rarer in deals. We usually see a lot of talk about cost synergies, job cuts. They mentioned real estate footprint being much lower in light of COVID, and also the transformation of data moving over to the cloud instead, which is where they're going to find those cost synergies.
Interesting. So they're sort of vindicating the price point, the premium, why it becomes more efficient. What about the executives? Who stays on, who goes, who leaves?
So S&P CEO Doug Peterson is the person who will really be leading this, and Lance Ugla, who had led IHS and really built it up, made it public, and expanded it through a series of acquisitions, he will stay on for a transition period as well. So we are seeing S&P really leadership become a much bigger force here. And by the way, the competitive landscape here that he will have to contend with will be significant.
Well, talk to me a little bit more about the competitive landscape. I mean, you're talking about putting together a data powerhouse. It still has to get through regulators. You had previous deals, particularly with that LME Refinitiv deal, which of course got sort of caught up with the regulatory scrutiny. How does this pass regulatory muster? I feel like the size of these companies combined eliminates the competitive threat to a point where a lot of regulators are going to look at this and say, no way.
Right, and we know over in London, the London Stock Exchange has really still been having to work through with regulators the Refinitiv deal. But this deal is something that a lot of people believe will pass any antitrust tests because they don't actually have a lot of overlapping businesses. Yes, they will become a bigger force in market data, but they have other businesses as well, ratings, commodities data, other forms of data, which is something that can really help them on the antitrust issue. But the other note on competition is, what will this do to their competitors, including Moody's, including MSCI? Will it start to cause, and this is something all of our sources are now talking about, them to start to think differently about their strategic businesses and also do deals as well? This deal will help generate enough cash flow for the new S&P to consider more M&A in the future also.
Oh, the fun never stops. Shonali Bassett's going to be all over it in the further M&A to come. We thank you very much for breaking it down on that IHS S&P deal. Meanwhile, let's go back to the public markets, how we're trading. Currently, well, a little bit lower across the board, but technology is actually your outperformer on the day. Complete reversal of what we've seen on the month, of course, where energy has lagged, and what your outperformer has been the likes of energy and financials. All country world index, though, down a percentage point, but remember, it's up about 12%, more than for the entire month. Gold sells off, digital gold does not. But let's flip it on a gear, guys, because Taylor S&P 500, a little bit of maybe rotation today, a little bit of rebalancing. And
it is so interesting when we take a look at those small caps. Not only is the Russell 2000 best month on record, but the equal weight versus the S&P 500, the market cap, also showing some improvement on the equal weight. So you finally are, Romain, getting the rebound in some of those smaller companies.
Yeah, a rebound in some of those smaller companies. Some of that, of course, helped by names like Novavax and, of course, MicroStrategy, which is tied to the Bitcoin play. But keep an eye on copper futures. This is a big read here on the rebounding economy, the global economy. Copper not only doing well today, but the outperformance to gold, something a lot of people have their eyes on right now, Caroline.
Yeah, that China PMI data as well, one to watch. Manufacturing still on fire. The pound as well. There's Brexit optimism, lest you forget. This is Bloomberg.
our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
The big concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
If you pull back too quickly, that might undermine the recovery. If you don't pull back enough, you might be storing up problems for the future. When debt levels are very high, and then you're forced to pull back too suddenly, and that might be too sharp a fall for the economy to take.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This is Countdown to the Close. I'm Caroline Hyde.
I'm Taylor Riggs.
I'm Romaine Bostic.
And down from record highs we go. The majors today on the downside across the board, off by a percentage point on the Dow Jones Industrial Average. That is your line in purple. The underperformer is also the small caps. But remember where we have come from. 20% increase over the course of the month, a record for the Russell 2000. The outperformer today, well, a complete flip reverse from the entire month. It's the yellow benchmark, which is the Nasdaq, only basically trading flat. The volumes there up 74% usually compared to usual, Romaine.
Yeah, interesting day here. It's still going to shape up to be a pretty good month. You flip up the boards and you take a look at some of the daily moves that we're seeing in the energy space. Down pretty hard here on the day, down 5%. And of course, a lot of concern here about that OPEC Plus meeting. The second day of meetings was set to kick off in a few hours. That second day of meetings is going to be delayed. Apparently, the members there are having trouble trying to agree on an extension of those production cuts. We should also take a look at the home building sector, the ITB, second line there, down also on the day. Of course, new data out on previously owned homes not quite living up to expectations, seeing some weakness there that we haven't seen in several months here. So causing a little bit of concern that what has been one of the hottest sectors out there might not be so hot anymore. The work from home sector also taking a leg down. And remember, we're going to get a couple of names reporting from that cadre, including Zoom later tonight. Of course, up 600% on the year. And finally, down at the bottom, your retailers there selling off just slightly here. Some of the preliminary data out of Black Friday, both in terms of physical store sales as well as online sales, not quite living up to expectations, Taylor.
Well, let's get right to the market action, and we do that with Quincy Crosby, Chief Market Strategist at Prudential Financial, joining us from Hartford. Quincy, how do you think about this market after the month that we've had, the big gains? Does the market feel like it's getting ahead of itself?
Well, yeah, I think so. I mean, no matter how you look at it, the market was moving or in overbought circumstances. And always when you get that investor enthusiasm, you had $100 billion coming into equities in just a few weeks. The market typically wants to take a pause. The end of the month is a time for rebalancing, not as much as the end of the quarter, mind you, but you still have rebalancing going on. And I do want to say that one of the things that concerned me going into the end of this week was, despite the records in all of the indexes, the volatility index, the VIX, was stubbornly higher above 20, whether it was 21, 22. Granted, on Friday, it came down below 20 to 19, but climbed above in the close. If the market was that comfortable and that enthusiastic and risk-free and sanguine, why would the VIX not be able to come back down? That concerned me. And today we have a little bit of an answer. The market was due for a pause. We started it today.
Quincy, does the party continue after this rebalancing that we see on the end of the month?
The rebalancing will begin, I think, in earnest even more in the month of December. It doesn't happen on the last day. Most of the portfolio managers and many of the pension funds can actually start moving during the month. But December, the end of December, will give us our final look. You also have what we call window dressing in the industry. Managers who missed the upward move in the market, who didn't believe, for example, that Tesla would be put in the S&P 500 and on and on. They've got to make sure they can compete with the indexes and their competitors.
What about the economic backdrop? I mean, Quincy, if you are to try to make a bull case here of why this rally can continue, a lot of people, they would sort of point to Pfizer submitting that application for its vaccine approval, Moderna, which is expected to do so today, and some relatively positive developments for Novavax over in its UK trial. What does that tell you here about the economic recovery and the sustainability of the market rally?
Well, it does tell you that the market is expecting a more normal economy as the economy begins to unfold and normalize. It's not going to happen overnight, but the expectation is that by the time we get to Q3, at least, you are going to start to see a sense of individuals and certainly businesses who, by the way, have actually been already saying they were going to do more in terms of capital expenditures and hiring. But the fact is, the individual, the civilians, if you will, in the economy globally have to feel secure about engaging, and that's going to take some time. But we do think we will go to pre-pandemic levels sometime probably in the middle to fourth quarter of 2021, pre-pandemic numbers. You know, the economy is actually still pretty resilient. If we take the majority of data releases up until today, including the one you just mentioned about home sales, they are actually more strong than they are weak.
Interesting. All right, Quincy, sit tight for 1 second. Quincy Crosby here, Chief Market Strategist at Prudential Financial, helping us count down to the close. Less than 5 minutes to go here, Taylor. That end of the month rebalancing definitely giving a bump here to volumes.
And we talk about some of the most unloved bull markets, but Romain, I have to say market participants are not sitting this one out. You take a look at volume on the three major indices, the best November in at least 10 years in terms of the volume that we're seeing. And you see that in call options as well. Record volume for call options. So the 20-day moving average in white is clearly what has been on the uptrend really all year. So as much as we talk about this being an unloved bull market, you have people very much in this market. You know what else we're in? Zoom. Take a look at this stock. It is up 600% year to date. We're going to get earnings from this company after the bell, so it is my stock of the hour. Look for $693 million in revenue. That's up 300% from a year ago. But we need very clear guidance on what this company looks like in a post-pandemic era. Can we continue to see these types of revenue and stock increases once there's a vaccine? That is the question on the call that I will be listening for. Finally, let's flip up the board. And Quincy, I'd love to bring you back into this conversation. You've heard it. It is Superlative Monday. Russell 2000, those small caps having the best month ever. You're up almost 20% for the month. And yet, Quincy, everyone says that. Everyone has said buy small caps. Now is the time for the cyclical trade. Does that feel like a crowded trade to you if everyone is doing it?
Well, it does, but sometimes it actually is not a contrarian signal. It was very interesting about the small caps because, we saw them beginning to inch higher, quietly inching higher before the election. And I think the reason was that managers thought that Biden and the Democrats were going to have a clean sweep in that huge stimulus package, which would be very helpful to underpin the small and mid cap. And then, of course, they didn't win the Senate. However, we saw a little bit of a pullback then, but then as soon as Pfizer came out with their numbers, suddenly the Russell has another reason to move higher and climb higher. The real stimulus for the economy, which will be a vaccinated United States and a vaccinated world. So it started to move up. It has a long way to go, but nonetheless, a country that is normalizing is very positive for the small and mid-cap names. And by the way, you also have still very low interest rates, and you still have an economy that is slowly but surely re-engaging. And the small and mid-cap are telling us that. They are always first. And you know that over the past number of years, whenever we see them starting to move ahead, it's always that confirmation that not traders, but institutional money managers are seeing the trajectory, a positive trajectory.
But institutional money managers perhaps forgetting some of the political risks that still remain in the market. You talk of the fact that we didn't get the blue sweep that many anticipated, but you still could get much more blue policy making if Georgia goes, for example, the Democratic direction.
Well, yes, you can. And actually, the market had absorbed that overall, thinking, well, we'll still get that big stimulus package, but forgot about the other part that would come with a blue sweep, and that would be the tax package, too, which the market does not want to see. But for small and mid cap, it's a win-win. And most of all, I think it is the notion that we are going to be moving to a more normal world by mid-2021.
All right, we're speaking here with Quincy Crosby, Chief Market Strategist over at Prudential Financial. She's sticking with us as we count you down to the close, just a few seconds away from the closing bells here in New York, of course. Looking like it's going to be a down day here for the major indices, but this is shaping up to be one of the best months that we've seen in a while. Right now, the S&P 500 setting up for its best monthly gain since April. The NASDAQ Composite, NASDAQ 100, setting up for its best monthly gain since August. And the Russell 2000, the small caps, setting up right now for an 18% gain in the month of November. Its best monthly gain on record, and the outperformance between the small caps and the big caps. Right now, the biggest outperformance since January of 2000.
Yeah, Romain, and I want to go cross-asset with us because, I mean, this is a story of almost the opposite of what's happened in terms of the month happening on the day. Instead, we got that slight risk aversion. We got, instead of the outperformance of the cyclicals, of the energy, of the financials, you had the outperformance of big tech. I'm looking not only at what happened in the equity sell-off, only up by 0.4%, but also the fact that we had, in fact, the dollar index up about 0.25%. This was a story of about 2.5 percentage point weakening over the course of the month in the US dollar. Today, a bit of a change, a bit of a rebalance, a bit of an uptick on the 0.25 point. So the euro goes lower, the Aussie dollar, some of those particularly commodity-related FX stories coming on the lower side and going across to where we've seen commodities go. Dr. Copper's been painting a pretty good story, even on the day, but on the today we do see steel, zinc on the downside, and Brent crude off by a percentage point. Still all eyes on that OPEC Plus meeting over the next couple of days, Taylor, and really how we manage to progress through that and whether we get the production cuts many in the market have been anticipating.
And we go on over into the bond world and we fold in equity analysis within bonds. And Romain sort of made this joke all day where you wouldn't have known it 30 days ago that we're right back to where we started. But we dipped down to below 75 basis points, up to 98 basis points. And now we're back at 85. And same with the 30-year. We dipped below 150, well above a 175, and now hovering right there about a 157. So the monthly numbers do not tell the whole story of what has really been going on these daily basis. I want to bring back in Quincy Crosby, Chief Market Strategist at Prudential Financial, who's been joining us here. And Quincy, talk to us about yields and how you fold that in to equity analysis. Are higher yields in this case good for equities?
They're good for equities if they are truly representative of an economy that is reemerging. It's positive. What it does is it underpins the reopening story. However, you mentioned copper. Copper's been doing very well, and I notice everyone talks about copper versus gold. But keep your eye on gold. I wouldn't say gold is finished. Probably gold is then going to start looking at inflation. If the economy is doing so well, how about the 10-year Treasury yield inching higher, and then gold starting to pull back up perhaps on the prospect of inflation. So all of these are at play. It is interesting, many people want to see the 10-year Treasury yield moving higher as confirmation that the Treasury market does see the economy starting to move and get out of this recessionary, disinflationary quagmire. I think you will see the 10-year Treasury yield, in fact, move higher unless there are geopolitical problems. No one has mentioned Iran and the possibility of a flare-up in the Middle East. And also, the other issue is whether or not we will see a smooth distribution of the vaccines. The market is completely focused on that, the emergency authorization, and whether or not they can get that. Pfizer could probably be the first. Get it out there. Planes are already flying.
Yeah.
But we know, the market wants to see inoculations. They want to see it go smoothly. And that, I think, is going to be a major catalyst for the market. Again, the risks are January 5th. The risks are geopolitical. But the market is basically seeing through it. I don't think that's the reason for today's downturn. I think it really is the froth, just so obvious to everyone, some profit taking, rebalancing, and getting ready for December.
You summarize it all there. Quincy Crosby, Chief Market Strategist at Prudential Financial from Hartford. We thank you very much indeed for the time today, taking us through this close, this end of this month, this record-breaking month. More markets coverage is coming straight up on Bloomberg Markets The Close. I'm in fact going to be just stepping off to go and speak with Intel CEO Bob Swan at Bloomberg Sustainable Business Summit. And you can tune in to all things financials with Taylor and Romaine. Catch us in a moment. This is Bloomberg.
I'm Mark Crumpton with Bloomberg's First Word News. Arizona has certified Joe Biden's victory in the state, dealing the latest blow to President Trump's campaign to overturn the results of the presidential election. The certification triggers the appointment of electors who will cast Arizona's 11 electoral college votes for Mr. Biden when they meet on December 14th. That now leaves Wisconsin as the last contested battleground to formalize its result. The president wants the U.S. Supreme Court to let him exclude undocumented immigrants from the census count, as the justices heard arguments in a case that could affect the allocation of congressional seats and federal dollars. A win for President Trump would change more than 200 years of a U.S. practice that has always counted non-citizen residents, even those in the United States, illegally. New Jersey Governor Phil Murphy is tightening the limit on outdoor gatherings to 25 people, down from 150, and will halt indoor high school sports for the rest of 2020. The move reportedly comes after more than 28,000 new COVID-19 cases were booked in the state in the past week. Meantime, the positivity rate in New York City has now climbed above 4%. Domestic air travel rose to its highest level in more than 8 months as flyers waved off advice from public health officials to avoid trips around the Thanksgiving holiday. Passengers at U.S. airport checkpoints totaled nearly 1.2 million on Sunday, according to the TSA. That's the most since March, when the virus gutted travel demand. The figure comes as new U.S. cases topped 200,000 for the first time on Friday. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
All right, welcome back to Bloomberg Markets. The close stocks did close lower pretty much across the board on the day. Broad-based selling. Nevertheless, you are ending the month of November higher. The best monthly performance for the S&P 500 going back to April. For the Russell 2000, it's its best monthly performance on record. You had a lot of names on this particular day that helped to keep the market afloat, primarily in that biotech space. Moderna, Novavax, two of your big winners. Bitcoin, also one of the big winners of the day, Taylor, hitting a record high. And looking at after-hours trading, one of the big decliners appears to be Zoom.
And let's take a look at that, because for a stock that was up 600% year to date, you're perhaps seeing some profit taking now. They're reporting third quarter revenue of $777 million. That is up 367% year to date. Fourth quarter revenue looks better than expectations, and full year 2021 also looks better than expectations. This is where analysts were really focused, is trying to see, Romaine, what does this company look like in 2021 in a post-pandemic world? But they're looking at 2021 revenue of about $2.6 billion, net income of around $865 million for the full year. Analysts need to know how sustainable the recent gains are relative to if it was just pull forward demand.
Yeah, I mean, you're talking about 300% revenue jumps here that are expected to drop back down into the double-digit percentage range for its fiscal 22 year. One interesting thing here, though, was the cost of revenue that they laid out there. 3Q cost of revenue are going to be much higher, 258.7 versus an estimate of 195.9. And you have to start wondering how that affects margins and whether investors care about that as much as they care about the revenue growth rate.
And we're going to have more on Zoom coming up in just a few moments, so stay with us. In the meantime, Romaine, I really wanted to look at the financials because you and I were both sort of jolted this morning on a huge call coming out of Morgan Stanley from Betsy Graseck, downgrading a few of the financials. As you can see in this terminal here, the price to book of financials, it's been up recently to about 1.3, but those are lower valuations than we have seen in previous years. This, of course, is the 10-year yield remains relatively low. Morgan Stanley's, we know, has downgraded both JP Morgan and B of A to an underweight. For more, I want to bring in Bloomberg finance reporter Lana Nguyen. Lana, it was interesting because it seemed like they liked a healthier consumer, and yet JP Morgan and B of A seem to be downgraded in part because of so much of their financial prudence, right?
Yes, Taylor, that's correct. So obviously, J.P. Morgan and Bank of America are the two biggest lenders in the U.S., and so in some ways they're being punished for, the fact that they're maybe more conservative and slower-moving ships than maybe some of the other banks, which are going to see more upside here. So the names that were upgraded were Wells Fargo, State Street, and the U.S. Capital One, sorry. And, some of the upside from that comes from the fact that, if the economy is going to start turning around because of vaccine hopes, then some of the other banks that maybe, are able to take a little bit more of that upside will benefit greater than the slower moving ships.
So what was one thing that I thought was interesting about the stocks that she seemed to favor? She had Wells Fargo's on that list. What was the thinking behind that?
Again, I think Wells Fargo obviously has been pretty depressed in terms of its peer comparisons because of its regulatory issues. So if she thinks that, the bank is going to maybe get some of those behind it, resolve some of those issues, or get some of the, regulatory problems, sort of under control, then it has bigger tailwinds in terms of the U.S. economy really improving. So, that's a really, really important tailwind looking forward into next year, is whether, these banks are going to have loan growth and, see the benefits of falling unemployment as we go into the next year.
Banks have had a brutal year, as we know, Lenon. I am curious how much they're dependent on a recovery and sentiment within the financial sector versus some of the macro bullishness that you described.
Well, this is a really important point, Taylor. Obviously, it has been a brutal year, so a 20% decline in the KBW Bank Index. So there may be a little bit of sort of bottom picking here in terms of looking at this bullish outlook. It's been so bad that maybe, there isn't too much more negativity that can be sort of wrapped into the price. And I think the key point here is that the biggest risk to this call is that, vaccine distribution will take some time. And so, if that means that the recession will last longer and elongate the amount of economic uncertainty, then this could actually, hold back that bullishness that they're seeing in the banks. So I think that's the key point is, whether the recession can, will persist and linger longer because the vaccine is slower to be distributed. And so that's a really, really key point here. There is some bullish potential, but, watch the space.
And what about the rate environment? If you can just sort of touch on that again here, Lenan, because, the general assumption here is that if we do get that economic recovery in the way, shape, and form that most people expect, you're going to have to see rates come up materially.
Yeah, and I think, so again, the rate environment still is pretty depressed, and a lot of the bank CEOs have been on the record talking about how they're used to low rate environments, and so they're not going to get too hopeful about, raising rates. And right now, the indications are pretty, pretty sluggish. But at the same time, in terms of regulation and what the policymakers are doing, there is potential for the bank stocks to do better because, the regulators might really take away some of that burden of buybacks for next year and enable the banks to do more stock buybacks, which obviously is something investors will enjoy. So I think it's about, a potential lifting of some of the regulatory strictness that we're seeing right now, and that obviously is going to be bullish for investors going forward.
Yeah, interesting call out there today. It'd be something to keep an eye on. Lenan, great stuff. We'll talk to you soon. Lenan Nguyen, Bloomberg finance reporter. Now, we want to turn back to those earnings that we got just a few moments ago out of Zoom. Zoom Video, of course, one of the hottest stocks of this year with everyone staying at home, working from home. Their earnings are out. Overall, it does appear to be a beat pretty much on all of the main metrics here. 4Q revenue, this is the forecast, expected to come in at $806 million to $811 million. That's the forecast that the company is giving its range. That is above consensus estimates, but right now you're seeing the shares selling off here a little bit in after hours trading, down about 5%. Let's bring in Nico Grant, who covers the company for us out west. Nico, what do you think is sort of the cause for the negative reaction by folks to these earnings right now?
For any other company, these would be extraordinary results. For Zoom, the standard is very, very high. The company has now, for the third quarter in a row, had revenue growth that was in the triple digits. And in the coming quarter, the period that ends in January, Zoom projected that its revenue growth would be about 331% versus the year before period. That marks a deceleration from where we are in the third fiscal quarter, which was a 367% growth. And even though that seems small, it basically is a symbol of the broader investor concerns that 2021 will be a much tougher year for Zoom's growth prospects than 2020 was. You have multiple vaccines that have shown effectiveness in trials. And there's a sense that as more workers go back into the office, as more students go back to school in person, the company won't be able to post this type of growth. And there have been questions about the extent to which Zoom is overvalued right now in the first place.
Nico, it's interesting. They don't need people like me who for free can jump on and Zoom my mom for 40 minutes. They need big enterprise customers. They note here they have about 1,290 customers that pay at least $100,000 or more. That number is up 136%. How quickly do they need to move to get those big paying enterprise large-scale customers on board?
Well, I think that the company has been trying to do just that throughout the pandemic. They've been rolling out new features to be appealing to large companies, including most recently to the ability to host conferences that are now virtual because of the coronavirus pandemic. And so the company has to contend with strong competition from Microsoft and also from Cisco. And, you know, that's one reason why you see the very large customers who spend more than $100,000 a year is a smaller metric of growth than overall, because what has really been the outsized performer for Zoom are, you know, businesses that are, you know, 1 to 10 people or so. So these are everything from folks who teach yoga classes on Zoom to, you know, small businesses that have been using the service. That has been a huge pocket of growth. And there has been an open question about the churn. How many of those people will drop off when the world returns perhaps to something more akin to normal next year?
So when we talk about then, I guess, not only the growth story here, Nico, but just, I guess, the brand stability and the general reputation of Zoom. I remember when they started to get popular, there was a lot of issues raised about security on the site and just how secure it may or may not be. I am curious as to, are people going to look, and when Taylor talks about these enterprise customers, are they going to look at Zoom as sort of that more stable, more reliable, more secure option, or are they going to look to a Microsoft or another large company that maybe has a little bit better or longer of a track record?
There was a great deal of concern earlier this year that some of the concerns around consumer privacy, in particular, the fact that individuals were being Zoom bombed or had unwelcome visitors into their Zoom rooms, could mean that large businesses would pull out of contracts with the company or not sign them in the first place. That really hasn't been the case. The company has been able to assure large businesses that it takes security very seriously, and it has fast-tracked a project to bring end-to-end encryption, which is the highest level of data encryption available, to its service. And so I think that the company has less to be worried about when it comes to security, but Microsoft is a huge business with a large footprint that's in use by a lot of other companies. I think that Zoom has been basically above the fray in a way that other rivals haven't been. It is truly seen as what is called here in Silicon Valley a best-of-breed solution, meaning that you know, despite how much you may rely on Cisco or Microsoft for other services, there's a sense that Zoom is better in its core market than others. And what Zoom has been doing is tapping into something called unified communications. So saying, well, we'll not just give you video conferencing, we'll also give you telephone services, and we'll give you messaging. As companies replace traditional, you know, desk phones with internet-based calling services, Zoom has been trying to tap into that market, which is expected to grow as these businesses transform from being what is called, you know, on-premise or legacy old systems to being cloud-based systems, along with a company like RingCentral.
Nico Grant of Bloomberg, thank you as always for jumping on and joining us on those Zoom numbers. Now, the Bloomberg Sustainable Business Summit, it's upon us. Top business leaders are joining the conversation on how, amid current health, economic, and social crises, sustainability and climate change can remain a key corporate focus. Bob Swan, as we know, the CEO of Intel, is in a conversation with our own Caroline Hyde right now, discussing how despite the heavy energy use deployed in data centers and chip production, Intel is prioritizing minimizing its environmental impact.
Prowess as Intel from 1968, you know, the birth of manufacturing here for chips and leading the way. Do you think with the new administration it will help you with that progress, in particular be more sustainable in and of the other focuses that you have?
Well, I think over the last 52 years of our existence, we've been engaging with governments around the world for things that we believe matter most, not just in terms of what makes sense for our industry and our company, but also what makes sense for social good. So each and every administration, we embrace them, try to find common grounds for things that matter the most. It just so happens now, things that matter quite a bit are sustainability, are the access to technology across the spectrum. When you're working or studying from home, if you're in rural areas, the ability to have access to technology today is more important than it's ever been. So we try to work with administrations, governments around the world, customers, partners, on things of common interest. And we believe that the deployment of technology, continuing to evolve the workforce to deal with the embracement of technology and/or digital divides that get created by technology, we reach out and try to engage along the way so that we can be working closely with administrations to have as big a positive impact as we possibly can.
For positive impact, of course, you need to become more efficient. And I mean, Moore's Law, of course, was coined, the very term was coined by co-founder of Intel. And the Moore's Law is the idea that, of course, you know, as time goes on, we become ever more efficient when it comes to compute and technology. But are you hitting sort of a roadblock now? Are we seeing that we're not getting the sort of constant efficiencies that we always used to write in and think about? Is particularly, are you worried about Intel specifically hitting a wall in terms of reducing returns when it comes to efficiency?
Well, I would start with Moore's Law is alive and well. At the same time, the demands for compute are as expansive as they've ever been. So just moving forward with Moore's Law, which we have every intention of doing, is no longer sufficient. So we like to think about delivering leadership products requires advancements in Moore's Law. It requires more packaging technologies so you can mix and match chips. It requires software to extract more and more performance out of the hardware that you develop. So I think Moore's Law is alive and well, and we continue to invest significantly in it. But at the same time, the demands for compute are as expansive as they've ever been, and it requires more than simply transistor density to deliver superior performance for our customers around the world.
What does it need then, if more than that?
But there's we like to think about it as really 6 different pillars of technology. Advancement of transistor density or Moore's Law, coupled with packaging technologies, how you mix and match different hardware onto the same chip. So packaging and transistor density. Second, it has to deal with different architectures. It's not simply just the CPU today, but it's what we call the XPU. How do you develop GPUs, accelerating technologies to deal with increasingly changes in workloads over time. Third, it requires security, building security into everything you do. It requires software, and it requires the movement of data faster and faster because you want ready access to that data. So from what used to be CPU and Moore's Law, today we think about Moore's XPU, variety of architectures, and 6 pillars of technology required to deal with today's emerging demands and workloads in both corporate and personal environments.
Yeah, how has that changed with COVID and the stresses that the work from home has put upon the system? In many ways, COVID is, of course, this dark, dark cloud that we will have to weather, but there have been some silver linings for the climate, for one. We're all flying less, and perhaps there has been some benefits to
climate change and stalling out. But has it had unintended consequences for you as you see the need for more technology and the provision of that with everyone working from home?
Yeah, I mean, absolutely. I think in so many ways for the last several years, every industry, every company, every individual in some way, shape, or form have been dealing with their own pace of digital transformation. I think with COVID, it's almost put the digital transformation, no matter what industry or company you're in, has put it on steroids.
That was, of course, the CEO of Intel, Bob Swan, with our own Caroline Hyde. And Romaine, here's the good news.
What's the good news?
Every time on this day, I get to leave, but our viewers get the privilege of watching you. What'd you miss?
Watching me stick around
It's coming up
and work
next.
an extra half an hour.
This is Bloomberg.
Me indigna a forma que esses governantes dirigem esse país pensando só naqueles que já têm muito e já têm demais. E é mais uma vez por isso que a gente optou por ocupar esses espaços, para que a gente lá de dentro possa exercer a mesma pressão que a gente já exerce na rua, de fora para dentro. A gente quer abalar essa estrutura.
Eu tenho muita esperança, tenho muita fé em Deus que aqui a gente ainda vamos conseguir a nossa moradia digna, a nossa casinha para, ao menos nos últimos dias de vida, se vender numa casa.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
In the second quarter of next year, we'll be cash positive again and growing our business. My own view, and it's always an optimistic view, yes, that by the end of next year, calendar, and the first quarter of 2022, we'll have all our 380s flying.
From Bloomberg World Headquarters in New York, I'm Joe Weisenthal.
I'm Romaine Boss to Caroline Hyde. She'll be joining us a little bit later in the program. But first, let's take a look at where we stand with U.S. financial markets. A down day here for the major indices, but still closing at one of its best months in a long time.
The question is, what'd you miss?
All right, with the U.S. election chaos seemingly resolved, attention now turns to what the Biden administration plans to do over the next 4 years and what it can reasonably expect to actually be achieved. Now, goal number one, largely to be a steward of the nascent economic recovery, a recovery with uneven and at times conflicting measures of progress, all of which he's going to have to reconcile with an agenda that, at least formally, Biden can't actually begin to implement until January 20. And that means over the next 7 weeks, there's still time for President Trump and a Republican-controlled Senate to steer the economic agenda towards the issues they favor. And meanwhile, 9 months into the pandemic, more than 6 million people still claim extended unemployment assistance. COVID cases, they're trending higher, and there are signs that economic growth is showing some strain, Joe. And, you know, when we talk about, I guess, what could potentially happen from here, you have Mitch McConnell basically saying he's on board with some type of fiscal stimulus, Schumer saying something similar. You also have, of course, Jay Powell out there also making comments here about what could potentially be done. I guess, and you see the chart, this is probably why Caroline sort of stormed off the set. I have this debt to GDP ratio chart, which I know is a favorite of yours.
Thank you, yeah, it's one of my favorite indicators.
Absolutely. But of course, a lot of people are in Washington are going to say, oh, we can't do more fiscal stimulus. Look where the debt to GDP ratio, look where the budget deficit is. And I know you're a closet MMTer, Joe. So explain this to me, how you get a major fiscal stimulus package done with 136% debt to GDP ratio.
You just vote for it. You just vote for it. That's all you got to do. But the problem is really, and this is what we're going to discuss, political constraints, because there's a lot of agreement. Oh, we need more stimulus. Various programs that were enacted at the start of the pandemic coming to an end. We have a spending bill we have to do. There's a stimulus package. Some of the Republicans may also try to get the Judy Shelton confirmation vote. But it comes all down to, are there votes?
Yeah.
And that's the question more than any dollar amount. Do the votes exist?
Yeah, there's going to be a lot going on Capitol Hill. In fact, tomorrow we're going to see Jay Powell and Treasury Secretary Steve Mnuchin on the Hill. Powell's testimony, his pre-written testimony, is out. According to a transcript of that, he says he sees significant challenges and uncertainties with regards to the vaccines, and says he still thinks that the vaccine news will be positive in the medium term. But he says right now it is hard to sort of assess the economic implications of that vaccine news. So kind of the same note that he's been sounding for a while right now, that the economy in a good place right now, but a lot of uncertainties there with regards to COVID and getting that under control, Joe.
All right, so for more on this, I want to bring in Bloomberg congressional reporter Eric Wasson joining us now. Eric, I want to start actually even before we get to the Biden administration. We still have time in the current Congress, current presidency. Mitch McConnell coming out this afternoon saying he wants a stimulus deal to get aid to the American public. Is there any path for that? Do we even know what's on the table from the Republican side that Trump would sign, that McConnell would push through the Senate? Is there a real offer for Nancy Pelosi to say yes to?
Mitch McConnell was out there today talking about a need to immediately pass a stimulus. But if you look through the tea leaves, if you look at the comments closely, he's not really showing much wiggle room. He's talking again about, a minor package, something that would, re-up the PPP small business program, vaccine distribution money, et cetera. So I think I'm not really seeing any movement between the two major sides. We are seeing, some noise. We're seeing a bipartisan gang of senators, moderates, trying to get together and talk about a possible solution. That hasn't really yielded fruit in the past. And there is a spending bill that needs to be passed by December 11th, and we see a shutdown. Now, that does provide a vehicle leaving the train station, and we could see something attached to that. But whether you really call it stimulus or not remains an open question. I think it could be more like health care money to make sure those vaccines get to the people and get to the states quickly. But as far as the direct stimulus payments, as far as large UI, et cetera, I think that's probably unlikely.
There's also sort of other sort of policy bills that are on the table right now, and that seemingly the Republicans want to try to get done before this current term is ended here. Eric, what are the chances of that, particularly with that defense policy bill?
Yeah, so for 60 years in a row, the defense policy bill has gotten a bipartisan agreement, gotten enacted and signed. This is one thing Congress loves to do. It's to spend money on the troops and spend money on hardware. And we're seeing, defense contractors have a lot of interest, and companies have a lot of interest in this bill getting passed. However, there is a holdup. Both the House and Senate versions would fast track a process to rename Confederate bases. These are, bases in the southern states. They're named after Confederate war heroes, what many would call traitors of the United States. And there's a real insistence by Democrats that this get into the bill. President Trump has said he would veto such a thing. And Jim Inhofe, the Oklahoma senator who's in charge of the Senate Armed Services Committee, says he's also going to get it out of the bill. So that could lead to a stalemate. And as of right now, there was a hope that the House could vote on this week, and we're not seeing it on the schedule yet.
Well, let's look ahead because, of course, we got news today, all these various Biden econ officials will be nominated or will be on his CEA. But, of course, the question is, can anything get passed? And we don't know the outcome of the Georgia runoff, but say Republicans hold the Senate. Is there any upside scenario? Can you think of any reason why Biden and McConnell might be in a position to do a deal?
Well, there's our old favorite, the debt ceiling, which is going to come back into effect in the summer. There is a need to deal with that. There is a need to resolve appropriations, to deal with another budget cap deal. So there could be I could see a packaging of all of those necessary items, perhaps tailored with some long-term fiscal restraints, maybe even an entitlement or two dealt with or acknowledged. We have the Medicare Hospital Trust Fund possibly running out of funds in 2022, so that's something that Biden would have to deal with. Those deadlines tend to force congressional action, so you could see a stimulus or a big infrastructure package all combined together in that. There is an opportunity, I think, to make that, but as Republican aides tell me, Biden will have to pay a toll.
All right, Bloomberg's Eric Wasson giving us that update there on what's going on down there in Washington, particularly with the current Congress and how they're going to finish out their current term. Coming up, we're going to talk about the next big presidential administration coming in January. Joe Biden rolling out news on what his economic team is going to look like and what type of priorities they're going to have. We're going to discuss his picks, with former Federal Reserve economist and a Bloomberg opinion contributor, Claudia Sahm. She's going to be joining us next. This is Bloomberg.
Saving for retirement is confusing. That's one reason why 42% of people age 18 to 29 have no savings, and partially because of things like student loans and other priorities like just being able to pay rent. But if you do have the means to save it all, here are some ways to get started. First, there's the one everyone thinks about, which is your 401k. This is a savings account that lowers your taxable income because you don't have to pay taxes on the money you contribute. The downside is that when you take that money out, you have to pay taxes based on the income bracket you're in at retirement age. But there's one major benefit to your 401k. Employers often offer contribution matching, which means essentially you're getting free money. Another option is the Roth IRA. With this, you pay taxes now on the money you put in. This gives you a savings account you can withdraw money from at retirement without having to pay taxes on the money you take out. You can only put $6,000 a year into a Roth. This is also a great option because with a traditional 401k, you may have to pay a penalty if you have to cash that money out early, but that's not the case with a Roth. Most financial experts suggest a combination of the two if you're able. To save more and worry less, you can set up automatic transfers into a savings account from your regular bank or credit union. Tools like Betterment can also help you set up automatic payments into a Roth IRA so that investing can be simple and mindless.
I'm Caroline Hyde, and what did I miss? See
what
I did there? Meanwhile, President-elect Joe Biden is moving swiftly to build out a diverse administration, nominating Cecilia Rouse to lead the Council of Economic Advisors, becoming the first Black American in the position. His picks showing, well, a priority to lift Black low-income workers in particular. It really feels, Joe, like a story is being told here.
Yeah, absolutely correct. And of course, historically, there's always been a gap between the unemployment rate of different races, but we've seen it exacerbated, accelerated in this crisis. The unemployment rate has come down across, obviously, for everyone, but you look at the white unemployment rate, that's the white line there, 6%. Black Americans, nearly 11%. So after a lot of compression in those lines, pre-crisis, lots of work to do now. So joining us now, Claudia Sahm, Bloomberg opinion contributor, former Federal Reserve economist. Claudia, thank you very much for joining us. Sort of describe big picture, the names that we've got today. How much does thinking not just about growth, but the role of policy in flattening or compressing some of these divergences, how much is that prominent in the work of Biden's econ team?
Right. Well, I completely affirm that there is a story, there is a real emphasis being put on a more diverse policy team. And that diversity comes in many dimensions. It's very important to have a stellar researcher and public policy expert in Cecilia Rouse at the chair of CEA. That means a lot, and she is going to do an amazing job. It also means a lot to see Biden drawing on people from different backgrounds, different trainings. Jared Bernstein will be one of the first, if maybe the first, member of CEA not to hold a PhD in economics. I think it is absolutely healthy to get some social scientists, and Jared is absolutely an economist in the way he's worked on economic policy.
Yeah,
that's important to bring diverse viewpoints. I worry that story is not going to be front and center when the Biden administration takes office next year, because the pandemic is still with us. It is worse than when the campaign put together its platform, thought about its team. And the economic situation is not, we are not going to be in a build back better. We are going to be in a, whoa, let's get this under control.
Claudia, I mean, as far as some of the picks that are being made here, I mean, there seems to be a general consensus, at least in the market, that what needs to be done with regards to the economic recovery and making sure we don't repeat the mistakes of the past couple of recessions is that we do need to think of things in a lot different way. The fact that he's picking people who maybe aren't traditional economists, is the idea here that as we look at this more from a social science perspective, we can address some of the inequalities here that maybe traditional economics hasn't been able to solve or at least address?
There's a chance, and so I'll try to be optimistic. I think, frankly, and you talked about this before, the problem right now is the politics. The economists, the policy wonks, we have lots of ideas. The public health officials have a lot of ideas how to get us to a better place. That is not where things are breaking down. I truly believe bringing in new opinions, new backgrounds is helpful, but it's also risky, right? We saw with the CARES Act, there were some parts of it that were very innovative, like the payroll loan protection program, and they really went off the rails in terms of their administration. So the best of ideas, the most well-intended ideas don't always work, and frankly, they're going to be really, really hard to get through Congress.
Claudia, what's interesting is Joe Biden, while on the campaign trail, sort of talked about giving another role and responsibility to the Federal Reserve itself, about inequality being at the heart of what it has to face as well. Is that something that in any way Jay Powell can confront, apart from in the way that just keep running us hot until every single person benefits?
The Federal Reserve is taking this step on its own. I think this administration is going to respect the independence of the Federal Reserve. You could see with the monetary policy framework, the Federal Reserve, in the way that they talk, which is very quiet and polite, they made a real commitment to full employment. The Council of Economic Advisors has 3 experts that push on full employment, our labor market experts. What I am very concerned about is we are at least a year, if not more, from that full employment conversation. Do you run it hot? Do you raise rates? Do you cut back on spending? We will get there, but in the meantime, I want to see the Federal Reserve do more. The administration is going to have to be really creative, and Congress, please do something, right? So we'll get there, and it will be very important, and the flag has been planted, but right now they are words, and that's it.
Let's suppose that the politics go nowhere, that there's really no prospect of passing anything meaningful in theory if it's a Republican-held Senate, sort of worst-case scenario politically. Is there anything in your view that can be done now from the Fed or via the administration, or from the administration via, say, an executive order like President Trump liked to use, that would move the needle, or is it going to be very small-bore stuff?
There will be every effort, right? And as one example, I am thrilled to have Janet Yellen as the appointee for Treasury Secretary. And in a very narrow sense, thinking about the Federal Reserve policy and this idea of doing something more, Janet Yellen knows what the Fed can do and it can't do. I am sure she has read 13.3, the emergency powers part of the Federal Reserve Act, more than any person on this planet, right? And that depth of knowledge is really important. And she has a good working relationship with Jay Powell. So I think that's the best scenario for doing something. Their hands are going to be tied in a lot of ways. And some of the decisions that Mnuchin has made about the emergency lending facilities and pulling back the money, that's going to complicate things. But I fully believe in the creativity of monetary policy. And if they have cover from the administration, that the Fed doesn't have to wade into politics, that is a recipe for some movement.
All right, well, we'll see what happens. Claudia Sahm, Bloomberg opinion contributor and former Federal Reserve economist. Thank you so much for joining us with your perspective. Now, coming up, with the Biden administration taking shape, we discuss economic expectations for the next 4 years with the co-founder of an organization that's worked to help get him elected, Opal Tometi, co-founder of Black Lives Matter. Next. This is Bloomberg.
So the reason we're interested in Post Office Rock is just the extreme nature of the erosion that is ongoing here. In the last, well, since 1940, it's eroded about 100 metres and in quite a unique fashion. By having a map of the seafloor and hopefully being able to capture some movement in these transverse dunes, we'll be able to see after the erosion where the sand is going and why it is not replenishing the coast as sometimes and most often happens.
With continued sea level rise and future climate change, we're just going to see much more of this kind of event taking place. So it's a good proxy of what we expect to take place much more commonly by 2050, 2100 than is currently the case.
All right, welcome back. Today we are talking about the economic agenda for the next 4 years here in the U.S. and the competing demands that are going to be put on the Biden administration. Now, one of the most visible and, yes, to some, divisive groups out there applying pressure is the organization behind Black Lives Matter. The group came together back in 2013 as a loose collection of activists and has since gone on to push for a national reckoning with systemic racism and the economic inequalities entrenched in the U.S. Joining us right now is one of the co-founders of the Black Lives Matter movement, Opal Tometi. Opal, really wonderful to have you here. I want to start off talking about the election of Joe Biden. You were instrumental, your group was instrumental in trying to rally the vote. I am wondering, based on what you've seen so far out of some of his potential cabinet picks here, whether you're satisfied with the direction that you think Joe Biden is going to go.
Well, first of all, thanks so much for having me. I'm so proud of our social justice movements from across the country that vary across different kinds of sectors of racial justice and immigrant rights, women's rights, and so on, who really played a vital role in electing Joe Biden to be our president and vice president-elect, Kamala Harris. I think it's really important what we've done in terms of rejecting another round of Trump as a president and really the blatant racism that we were seeing coming from, the White House. And what we're seeing now with the various picks that are being announced is that some of what we're saying has been heeded. right? Some of what we've been raising over the various months, but even for years now, is finally coming to bear, and our voices are being listened to. We've taken our protests from the streets and we've channeled that energy and harnessed it at the polls, and we're being listened to in different ways. However, I think it's going to be important for us to ensure that those picks that are going to be part of this new administration are not just going to pay us lip service for our social movements, but that they're going to really have substance behind the rhetoric. And I think we're going to have to pay very close attention to ensure that it's not just symbolic representation, but we have substantive representation in the White House and beyond.
Are you in contact with the transition team, and what substantive policy would you like to see prioritized right here, right now?
So there are a number of us who are in contact to various degrees with members who've been more recently announced to be part of the staff as well as the formal cabinet, and some of us who are not inside that process, right? And so when I'm here, I'm really just representing a wide range of constituents and various groups, but I do want to say that we've been in direct conversation and really want more of a formidable seat at the table for all of our groups and the various members of the coalitions that we do participate in. And so that to me is incredibly important. The grassroots needs to be able to have a seat at the table. And so, we join in the calls for that seat to be, opened up and for us to be part of shaping our democracy, because we are the ones who are directly impacted by the lawmakers, by the decisions that are being made. And we're the ones who've been mobilizing people in the streets. We're mobilizing people to the polls. And so consequently, we should have our voices heard very explicitly, and we shouldn't have to be shouting from a bullhorn, but we should be invited into the halls of power to ensure that our concerns are made clear and that they are enshrined into law. And so as we're seeing things come and take shape, I believe we're looking to see that the economic packages, right? The economic concerns that so many have, particularly Black communities who are acutely impacted by the downturn as a result of the pandemic, but even preceding the pandemic, have been hit hard by the way that our system is designed. We're looking for substantive changes. We're looking for the same thing for immigrant communities. We're looking for the same thing for students who are reeling with debt and who are really saddled with so much student loan debt and beyond. And so I think we are at a time where we're saying enough is enough. Let's have real adult conversations about the challenges of our day, and let's have comprehensive plans that take into account the various ways in which our society and which our people, quite honestly, are being impacted by the laws and by, just the status quo, business as usual.
So we just have a few moments left here, but obviously, presumably, some sort of economic recovery package is going to be the top priority for the administration. When you talk about a seat at the table in that conversation for what a dream recovery package looks like, what are the specific priorities? What needs to be in that from your perspective?
In our recovery package, we have to look at the priorities of our nation. Are we going to prioritize law enforcement that has been brutalizing our communities, or are we going to prioritize education, jobs programs, a safety net that helps support the families who are so acutely impacted by this downturn, who have lost their jobs and don't really have, adequate housing or the ability to provide, food and so on for their families. Those are the types of basic protections and supports that we're looking at from an economic recovery package that needs to happen right now. We've been waiting for far too long. No stimulus has come into being. People got that first $1,200 check, which didn't do much for the average person. And now, months later, people are demanding that they have some modicum of support given the way that this pandemic continues to have an undue impact in our society.
Opal Tometi, great to have some time with you. We thank you. Black Lives Matter co-founder, of course. And be sure to tune in every single day for more of our deep dive into the unequal recovery of this pandemic. It's an important conversation that we will continue to have. Now, that's all for What You Miss.
Bloomberg Technology is up next.
Have a great evening. This is Bloomberg.
हमारा सर्वाइवल सिर्फ और सिर्फ इस इलाके में ड्रिप इरिगेशन सिस्टम की वजह से है और इससे हमारा मुस्तकबिल भी और इससे हम फ़ायदा भी ले रहे हैं।
तकरीबन 20,000 स्क्वायर किलोमीटर लैंड जो है वो अबंडेंट पड़ी है, जिस पे कुछ भी एग्रीकल्चर टेक्निकल तरीके से नहीं हो रही।
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Moderna clears another huge hurdle and is now applying to the FDA for approval of its vaccine. The first doses could be available by December 21st. Co-founder and chair Noubar Afeyan will be my guest. Plus, as COVID cases continue to spike, Facebook is stepping in with a new initiative to ease the toll the virus is taking on families going into the holidays. One of the longest-running employees at Facebook, product head Naomi Gleit, will tell us all about it and how the company plans to fight continued COVID and political misinformation. And former National Economic Council Director Gary Cohn is urging Congress to pass more stimulus now. A sneak peek of my wide-ranging interview for Studio 1.0 with Cohn on everything from Bitcoin to SPACs coming up. But But first, U.S. stocks fell from records as investors assess the prospects for risk assets after a blistering month-long rally. Let's get a better look at the markets with our Abigail Doolittle. And Abigail, I know you've been following Zoom Video, which just reported after the bell.
Indeed, Emily. We do have shares modestly lower in the after-hour market trading. And I say modestly because for any other stock, it would actually be a pretty decent decline of about 4 or 5%. But for Zoom Video, it is a modest decline. And they put up a very solid quarter. They beat estimates right across the board. Their sales basically quadrupled to about $777 million in their fiscal third quarter. They beat adjusted earnings, which were up an unspeakable amount, up 6,500%, basically because they put up a penny a year ago. In this quarter, they put up 66 cents. They also boosted the view. But you do have the stock down. That is probably, Emily, because this is one of those high flyers on the year into this report, up more than 600% on the year. So investors wanted perfection. They essentially got perfection at least ahead of the call, but it appears that they wanted just a little bit more. And again, relative to a stock, Emily, that is up more than 600% on the year, a 5% decline. The initial reaction to an earnings report isn't all that big. So we'll have to see what happens tomorrow, but really a relatively small reaction.
So what a year for Zoom. But speaking of a big month for stocks overall, some of this I know tied to the election, but also vaccine news, including good news from Moderna today.
Indeed, Emily. And, you know, it's pretty funny because this month went by so quickly. This monster rally just seemed to sort of sneak in here. And here we are looking at this huge month for the S&P 500, the best since April. The Russell 2000 up nearly 20% in the month of October. Its best month ever. That was true, too, at one point for the banks. At one point, the bank index had been up headed for its best month since 1992. This has to do with the cyclical trade. So the election, some certainty around the next administration finally at one point this month. And then, of course, vaccine news after vaccine news, providing the optimism that next year the economy at some point will be able to reopen. So the cyclical trade, the small caps, your banks, your energies, those sectors just on fire. On the other hand, the stay-at-home trade, this year's defense, underperforming. However, underperforming for the FANG index was up 8%, and for Amazon, up 4.3%. So it was just right. All parts of the market, really rising. You were mentioning Moderna, that stock on the month up more than 100%, Emily. Today up more than 21% on the news that they are filing with the FDA and the EU. And it's been a tremendous month for pharma overall. Pfizer, AstraZeneca, Gilead, hopes, investors realizing that it's not just hope, but there is a reality ahead. They want in on that reality, on that science, even though it's unclear how it will roll out exactly, Emily.
All right, Bloomberg's Abigail Doolittle, thank you so much for that update. Sticking with Moderna now, shares soaring, as Abigail said, after announcing it is now seeking clearance in the United States and Europe for its COVID-19 vaccine. The shot found to be 94.1% effective against COVID-19, 100% effective in preventing severe cases of COVID. For more now, we're joined by Moderna co-founder and chair Noubar Afeyan. He's also the CEO of flagship Pioneering. Noubar, it's good to have you back so soon with some good news. Talk to us about the status of your application with the FDA. Where does it stand right now?
Emily, good timing. A few minutes ago, Moderna posted that the EUA has the emergency use authorization has gone into the
hours after that meeting. How optimistic are you about that timeline?
Yeah, Emily, we get asked a lot about being optimistic, and then we use the word hopeful as well. And given that this is the business that we're in, meaning that we have to do a set of things, we're always encouraged by positive data, but we kind of don't want to get into an optimistic mode because at this point, we don't really control any of the variables. So we're hopeful that the FDA's review will be positive. Certainly the data indicate that the robustness of the efficacy and the safety we were looking for has been shown. We look forward to their professionals looking through everything, because at the end of the day, this vaccine is only going to be taken up if people have trust in the system, the reviewers, the doctors, the leadership. And so we want that to take the time it takes, but we're ready to execute going forward as soon as we're given the green light, and our partners at Operation Warp Speed are in a position to facilitate the distribution. And we can't wait to have the impact we've been working for the last 10 months to have.
Okay, so let's not be just optimistic. Let's be realistic. When do you actually expect that shots will be going into people's arms? Is December 21st the date you are looking at?
We don't have a specific date in mind. I think that Stéphane Bancel, the CEO of Moderna, has mentioned our hope and expectations that we would have the ability to do that as soon as we get a green light. So indeed, it should be very soon, hopefully after the VRBPAC meeting that has been scheduled and that has been announced on December 17th. So we're ready to go. On our end, at this point, it's a question of getting the proper reviews. Whether that's the 21st or a day or two before or after, I think we're going to do everything we can, because we'd like to get up to 20 million doses out to people, yet that's why we've worked so hard to get to. And I should say, Emily, we've talked a couple of times here, but I said we've worked hard over the last 10 months. The fact is that Moderna is a company that's 10 years old, and all it's ever done is to invent and pioneer this whole messenger RNA technology. And so this is kind of 10 months following 10 years of hard work for the team at Moderna, and it's really a great feeling to be able to see a technology come to fruition and have the kind of impact it may well have.
Absolutely. And Pfizer's vaccine uses this mRNA technology as well. Given the success so far, do you think mRNA will replace traditional vaccines going forward? And if so, for what diseases?
Messenger RNA technology, it has applications actually even beyond vaccines. I should say that about half of Moderna's work over the last 5 years that it's been in human clinical trials has been on therapeutics, and the other half, about 10 programs, in vaccines. So I think that the technology platform, and we call it that because unlike most of what biotechnology works on, there really is a product platform here, which means a common investment in the underlying technology, the informatics, the automation, and the know-how we have applies to many, many different products. That simply was not historically the case. We don't have platforms very often in biotech, but this is a true platform. So we believe that what this shows in 30,000 people who've now received the vaccine is that the way in which the vaccine is formulated, delivered, and expresses the antigen to protect through the immune system against a viral infection reads across well to many other infectious diseases. We have an advanced program in CMV, which is a very debilitating, particularly pregnancy-related condition in the babies, and that is something that we think we can very significantly reduce, and that's an advanced program. But we're working on multiple infectious diseases and also on cancer vaccines. We had some very good developments recently in the application of the same immune modulation, but this time to get your immune system to go after a cancer, not an infection like a virus.
Now, how should people choose? Let's say both Moderna and Pfizer's vaccines are approved. Given they use the same technology, what will be the deciding factor?
What I should say, I'm very happy that we're not involved in that choice, simply because we, from day one, set out to enable the maximum volume of a safe and effective vaccine that we could produce, and we will do that this year and next year. And we're working with governments to secure supply to then distribute to people. So this is not a vaccine that people are going to be able to buy so that they're actually going to make a consumer choice per se. Certainly, I think the supplies will be initially limited. And so I think that the goal here is to get effective vaccines out and get them into people, because at the end of the day, as has been said many times, particularly by Dr. Fauci, the only way this population level immunity will work is if enough people take it, that our immune systems begin to be trained on how to defend ourselves. And this is not something that is going to be enough for one person to take and protect themselves. So long answer is I'm not able to answer your question because at the end of the day, availability will drive uptake more so than a choice. Now, eventually, potentially 6-12 months from now, there may be multiple vaccines. There may be such an abundance that in the future, people will have to make a choice, and they'll have to look at the data. They'll have to look at the duration of the effect and many other such factors. But right now, the goal is to get as many people protected as quickly as we can.
All right, Nubar, we appreciate your optimism and your realism and hope you keep bringing us good news. Moderna co-founder and chair Nubar Afeyan there. Thanks so much for joining us. All right, coming up, Bitcoin's wild ride continues, this time climbing to a new record high. Why advocates of the digital coin say this rally is for real. This is Bloomberg.
Meses esperando, pero aquí estoy. Estoy muy contenta por estar aquí, de vuelta al rastro, a nuestro trabajo. Es que esto es nuestra vida.
Tenemos 3 drones sobrevolando la zona, básicamente por temas de aforo, porque el aforo ahora mismo y la seguridad es lo que más nos preocupa.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Not expect a quick, immediate impact. It will take some time, but at least there is a light, and that's what is very important. I think this is well understood by the market.
Bitcoin making another run at a record high after its biggest rout since March, showing a resilience in a crypto rally that's outperformed most major asset classes in 2020. For more, I want to bring in Bloomberg's cross-asset reporter, Katie Greifeld. So, Katie, what's driving this particular rally, and how much longer can it go?
Well, when you think about what's different between now and these new highs versus what was happening 3 years ago, the big difference is that you're seeing a lot of mainstream Wall Street embrace Bitcoin in a way that they weren't before. You know, it's still new. There's a lot of questions, but it's a very different feeling from 2017. So now you're seeing companies like PayPal saying it's going to allow customers to buy and sell Bitcoin. You're seeing big investors like Paul Tudor Jones actually buying in. BlackRock, Ray Dalio, they're talking about it. And just on Friday, you saw Guggenheim Partners file to reserve the right to invest in Bitcoin. They're not doing it yet, but they're thinking about it clearly. So the hope is for the crypto diehards is that as these big institutional players and all the money that comes with them warm up to Bitcoin, that will hopefully open the floodgates to a broader audience than just, again, those crypto believers who have been there all along.
There's been some controversial developments out of Coinbase, which is one of the biggest companies in this space, tied to social justice issues. Can you remind us why this controversy is happening and where things stand right now?
So this is a very hot topic in the crypto world. Like you said, Coinbase, it's one of the biggest crypto exchanges out there, one of the most valuable crypto startups, arguably. And the New York Times ran an article this weekend which quoted former and current Coinbase employees on and off the record who basically alleged that the startup engages in discriminatory behavior against people of color, including, talking down to people in meetings or getting passed over for promotions. And Silicon Valley and tech companies in general have a fraught history when it comes to hiring and retaining Black talent. But Coinbase's numbers stand out in particular. The New York Times had a great stat in their article that just 3% of the Coinbase workforce is Black, which is less than half the average in most of the tech industry. So, of course, Coinbase has denied all these allegations. It said it doesn't tolerate discrimination of any kind. But those numbers, again, they paint a pretty bleak photo.
Coinbase also took an interesting tact by trying to front-run the story and put its position out there before the story was published. Is it working?
That's a good question. Some would argue that, maybe it drew more people to the story than would have otherwise read it. But if you read the letter to employees in alerting them that this article was coming, it said, please, if you get any more media requests from other outlets, direct them to our comm teams. So it's very clear that they're trying to control the message here, especially because Chief Executive Brian Armstrong has come under fire in the past few months, along with Coinbase, especially when it comes to employee activism in the workplace.
Right. Brian Armstrong saying a few months ago that Coinbase would take on activism only as it pertains directly to crypto, but not other social issues, which caused quite a stir. Okay, something we will continue to follow. Bloomberg's Katie Greifeld there. Thank you very much. And more on Bitcoin making headlines this year and SPACs, more companies taking alternative routes to going public. I talk about it all, Bitcoin to SPACs and more, with former National Economic Council Director and economic advisor to President Trump, Gary Cohn. You can catch more of my interview with Cohn later this hour, but here's a sneak peek.
It's not going to look in the future like it looks today. The SPAC world will get more mature. It will define itself. It will redefine itself. But I think the SPAC product is here to stay as a mechanism for existing companies to merge into pre-existing publicly listed blank check companies.
More of my interview with Gary Cohn coming up later in the show and in a longer edition of Bloomberg Studio 1.0 to come. Also up next, with sparse crowds at stores on Black Friday this year is just the beginning of an unprecedented holiday. We're going to talk about it all with Shopify president Harley Finkelstein, who saw record sales on his platform over Thanksgiving weekend. That is next. This is Bloomberg.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Stay-at-home shoppers in the United States have driven a record $12.8 billion in online revenue on Black Friday, according to Salesforce. Meantime, data from Sensormatic Solutions show in-store traffic dropped by half compared to last year. Is the shift to online shopping here to stay? Joining us to discuss, Shopify president Harley Finkelstein, who saw a record $2.4 billion in global sales over Black Friday, and the sales are still happening. It is Cyber Monday. Harley, what kind of activity are you seeing right now?
Yeah, so I'm just looking at if any of your viewers can check this out. It's datastories.shopify.com. We're seeing about $1 million every minute and about 10,000 orders every single minute across the platform as well. And what's interesting is usually when I come on your show, Emily, we talk about the merchant perspective, that for entrepreneurs, Shopify is where you go to start and scale a business. But today, because it's Cyber Monday, let's focus on the consumer side. And what we're seeing across the entire platform is that the center of gravity has shifted definitively from in-store to online. And it's not limited to one particular type of merchant. You're seeing modern DTC brands like Bombas and Beyond Yoga and Gymshark and Allbirds and Parachute. They're doing well. You're seeing large established brands like Stetson and Heinz and Staples and Schwinn Bicycles also do really well on Shopify. But you're seeing these brand new companies like Noble and Daily Paper. And I just went to a store before I jumped on your show, Brunt Workwear. That's a 6-week-old business on Shopify that sold 50 products yesterday alone. So I think what we're seeing is that this is a blueprint for the future of retail.
So what are you expecting over the next days and weeks? Normally there's sort of a big pop over Thanksgiving weekend. The deals calm back down. Are you expecting more of a continuous stream of traffic as we get closer to Christmas?
Yeah, so two major things have changed, and I think we all sort of feel it, and let me put some terms towards it. First of all, this is the year of the conscious consumer. Consumers are now voting with their wallets to support and to buy from independent brands. And they're also looking to buy from brands whose values reflect their own. That's the first thing. The second thing that I think we've seen is that the Black Friday, Cyber Monday weekend, because it's been a weekend for as long as I can remember, is now an entire season. It started a lot longer and it'll continue a lot longer. So despite the fact that we're in this global pandemic, that we've seen this massive acceleration in e-commerce from physical retail, I think what we're seeing is steady state, that the future of retail, that center of gravity, will be online, and Shopify is powering a lot of that.
Have you had any distribution issues? Amazon and some other e-commerce platforms have been experiencing delays. As you said, there are a lot of new small businesses trying to get their products out to the world here. How are the actual pipes working to deliver everything that people are ordering?
Yeah. So a couple of things. I think the consumer, first of all, has been very mindful to ensure they get their Christmas holiday shopping done in advance in anticipation of potential delays. But so far across the 1 million and more stores on Shopify, which effectively is a proxy for all of retail. If you were to pretend that Shopify was a retailer, we're not a retailer, but if you were to pretend we would be the second largest online retailer in America. So it's a pretty good assessment, and we have not seen any delays, not on the supply side and also not on the last mile delivery. But I do think one thing that is changing now is that the merchants on Shopify are being really transparent and allowing these consumers to understand where their packages are, how to anticipate potential delays. But so far, things are moving.
Now, the success of this is kind of a double-edged sword, because a lot of these are small businesses on your platform that, have for years operated with physical storefronts. Does this mean they might be closing their physical doors for good if they can have the same amount of business and success online? Then do they then lose that physical business?
Look, we think the future of retail is retail everywhere. Obviously, that center of gravity will be the online store. But the reason you're hearing Shopify doing deals with companies like TikTok or Walmart.com, where we enable merchants to push products and push advertising on those other platforms, because we think retail is all about where consumers are. And frankly, consumers are everywhere. So I do think it's really important that that is said. Now, what we saw at the beginning of the pandemic was that a lot of the merchants on Shopify that had physical stores, they turn those physical stores into distribution centers. We put out a product within 5 or 6 days of COVID hitting that was all about in-store pickup and local delivery. So I do think there will be a place for physical retail on the other side of this, but that center of gravity is now going to be online indefinitely.
All right, I still got some shopping to do in a few more hours on Cyber Monday here in San Francisco. Shopify President Harley Finkelstein, thanks so much for sharing those updates with us. All right, coming up, looking to give back, we are talking to longtime Facebook employee Naomi Gleit about a new holiday initiative aimed at making life a little bit easier.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
It is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
We're going to be well into 2021 before there's some sort of equilibrium that we achieve.
Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. As cases of COVID continue to spike and some businesses that had just reopened are being forced to close once again, the emotional and economic toll is weighing on families around the world. That will get even tougher as we head into the holidays, but there is hope. Tomorrow marks Giving Tuesday, a movement that's sparking generosity worldwide and will mean something extra special tomorrow as people and corporations come together to help ease the impacts of the pandemic. Joining me now is one of Facebook's earliest employees who has worked on almost every major initiative at the company. I'd like to welcome Facebook's Vice President of Product, Naomi Gleit, who also leads Facebook for Good. Naomi, for Giving Tuesday, Facebook is matching donations and launching a new community help feature that will make it easier to collect food, clothes, other necessities that people need. How exactly is this going to work?
That's right. Thanks for having me, Emily. As you mentioned, this has been such a difficult year for so many people, and that's why it's so inspiring to see how the community is coming together to help each other. Tomorrow is Giving Tuesday. Facebook will be matching up to $7 million starting at 8 a.m. tomorrow, and we've seen the community raise over $120 million last Giving Tuesday, and this Giving Tuesday we're hoping to exceed that.
Aside from the match and the donations, how else can Facebook users give back? There are a number of different features that I know get less of the publicity.
That's right. Donating is only one way to give, donating money. You can also donate your time, your talents, your treasures. That's why we built a feature called Community Help. It lets you ask for and offer help to people in your community. You can donate blood at a nearby blood bank. You can buy gift cards to support local businesses that are really struggling. We also launched a new feature called Drives that lets you easily collect items that are essential, like food, like clothing, and give that to your community. We're seeing a lot of amazing examples of people using community help to run and pick up groceries for their elderly neighbors, or even sew masks and other PPE for local doctors and nurses.
Now, you lead Facebook for Good at a time when Facebook is being attacked from many sides and many people who think Facebook is actually doing the opposite, is a force for things that are not good. How frustrating is it to you that sometimes the good things that I'm sure you feel you're doing are getting overshadowed by a brand that is struggling?
I started the social good team 5 years ago, and I'm still so inspired every single day by what I see people doing on our platform. We're actually seeing donations go up during this really difficult time. People have raised over $100 million for COVID-related fundraisers, and the majority of those donations are coming from people who are donating $25 or less. So it's that kind of thing that I get to see every day that still keeps me inspired and motivated.
Do you think the concerns that Facebook might not always be a force for good are warranted?
Absolutely. There are real legitimate issues here. There are issues around privacy and data use and election and misinformation, but we're doing so much to help people, especially through this global pandemic. We're focused on 3 areas to respond to the COVID crisis. The first is assisting the public health response. The second is helping the economy recover, especially supporting small businesses. And the third is helping people stay connected while we're all socially distanced. On the first, actually, Mark will be going live with Dr. Fauci at 3 p.m. today. They're going to be talking about the newest developments around the vaccine and how we can stay safe this holiday season. On the second thing around helping small businesses, your previous guest talked about how a lot of small businesses are struggling to get foot traffic to their retail stores. We recently launched a new feature called Shops that lets businesses easily set up an online store on Facebook and Instagram. And in terms of the third thing, helping people stay together, I don't know about you, but I use my Facebook portal to have a Thanksgiving dinner with my family that couldn't be there with me in person.
As you mentioned, Mark will be speaking to Dr. Fauci just a few minutes from now. I believe you can tune into that on Facebook Live on Mark's Facebook page. You also helped launch the Coronavirus Information Center on Facebook. And I wonder, as we see cases spike, are you concerned about misinformation about COVID spiking? And what is Facebook planning to do about that?
Yeah, the most important thing that we can do is connect people to authoritative information from these health experts like Dr. Fauci. And that's why we built, to your point, the COVID Information Center. It's the one place you can go to get reliable and up-to-date information about the pandemic. We've actually directed 2 billion people to the COVID Information Center. And the other thing we need to do is stop the spread of misinformation. We are removing any misinformation that has the potential to cause imminent harm, and we're working with health experts to identify those claims that need to be removed.
Now, aside from COVID, Facebook just finished what may be its biggest test yet, and that is getting through a very contentious presidential election, fighting misinformation, inauthentic behavior, meddling from foreign governments. In your view, did Facebook pass the test? How would you assess Facebook's performance over the last few weeks?
One of the things that I am the most proud of is that we ran the largest voter information campaign in American history. The Voter Information Center was inspired by our COVID Information Center. It was the one place people could go to learn how to register, how to vote by mail, vote in person. And this election, we saw record turnout. The percent of eligible voters that actually voted in this election was the highest in over a century. And I'm really proud of that. The other thing that we did is, due to COVID, there was a gap in poll workers, and we worked with state election officials to help over 100,000 poll workers sign up to register and staff this election.
Meantime, the test may not be over, and you have the President of the United States who's continuing to use Facebook to share more misinformation, false claims about fraud and corruption, claims that he won. On one side, Republicans say you're censoring them. On the other side, Democrats say you're not doing enough. On both sides, you're facing antitrust scrutiny. What is Facebook planning for what could be a very messy transition of power? Maybe this election test is still happening right now.
And all of our election levers are still in progress. We have an election operations center that is working 24/7. That continues to do so. A lot of the measures that we put in place for this election will continue until there is more clarity. The Voter Information Center will continue to be updated every single day.
There's no question that Facebook is making tough choices every day. I know you were on the growth team. You were responsible for helping to clean up some inappropriate posts. Sometimes, well-meaning, legitimate businesses. My colleague Sarah Fryer wrote a piece over the weekend. Can get caught up in some of that. I believe some ads from legitimate businesses were taken down. You're now trying to balance the use of AI with human intervention and human moderation at Facebook. As you continue to build the company and fight all of this stuff, how do you intend to manage those trade-offs?
So, I think the answer is both people and technology. We have over 35,000 people working on safety and security. We're also investing billions of dollars in building up-to-date and latest technology to proactively identify a lot of this content. So I think the answer is really going to require both people and technology.
So what's going to be next for, you're in such an interesting place at the company, the head of product and also the head of Facebook for Good, and trying to bridge these two organizations. Where do you want to take the product and continue to be a force for good?
Yeah, and as I mentioned, I did form the social good team, and I'm so excited about what's coming next. In just the past 5 years, the community has raised over $3 billion for nonprofits and personal causes. Over $1 billion of those dollars have come from people donating their birthday to charity. And so what I'm really looking forward to, and on the eve of Giving Tuesday, is helping develop a culture of more generosity. That really is what Giving Tuesday is all about. After Black Friday, after Cyber Monday, as your previous guest was talking about, really using this time to reflect on how we can give back to others and spread generosity around the world.
All right. Naomi Gleit, VP of Product at Facebook and one of Facebook's longest running employees. Naomi, thank you so much for joining us. Good to have you. All right, coming up, I sat down with Gary Cohn, former National Economic Council Director and Economic Advisor to President Trump earlier today. We talked about all things SPACs, his predictions for Bitcoin and regulation. That is next from an upcoming Studio 1.0. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
Measures we are taking are the right ones. We are very hopeful that by the fourth quarter of 2020, we'll exit recession. If not, at least by the first quarter of 2021. So it means the steps we've taken are working.
SPACs have taken center stage this year as more and more companies looking to take a different route to going public hit the market. I sat down with former National Economic Council Director Gary Cohn to talk about his own SPAC efforts, what kind of companies he's looking for, and more.
We're looking for good, sound companies that are going to be around for the next 100 years. You know, I want to buy a company that I'm happy to own for the next 20 or 30 years.
Do you think the SPAC process will change the traditional IPO process fundamentally? Like, is this the beginning of a sea change in how companies get to the public markets?
I do think we are at a watershed moment in the SPAC world, and that SPACs are now here to stay. The general acceptance of SPACs, both on the sell side and the buy side for companies being willing to sell themselves to SPACs, and SPACs being better buyers of assets. That has changed dramatically. The management teams in the SPACs have gotten better and better. It's not going to look in the future like it looks today. The SPAC world will get more mature. It will define itself. It will redefine itself. But I think the SPAC product is here to stay as a mechanism for existing companies to merge into pre-existing publicly listed blank check companies.
Bitcoin has been on a tear. How bullish are you on Bitcoin and cryptocurrency, and how much do you believe they will fundamentally transform our economy?
When we talk about blockchain, we can come back and talk about the infrastructure. That's the highways and the pipes that are necessary for Bitcoin, but they're necessary for many other applications, and I think they're very useful, and I'm very bullish on them. When you talk about Bitcoin in itself, I don't have a strong opinion on Bitcoin. In essence, I'm not a strong believer in Bitcoin. It is a developing asset, potentially. And for all the reasons it's a strong developing asset class, it may fail. Remember, part of the integrity of an asset class, or part of the integrity of a system, is knowing who owns it and knowing who has it and knowing why it's being transferred. And is it being used for legitimate causes? Is it being used for good? Or is it being used for illegitimate causes? Is it being used in corrupt practices and corrupt ways? The Bitcoin system today has no transparency to it. So there are a lot of people that question, why would you need a system that does not have an audit trail, does not have integrity? You don't know who owns it. You don't know exactly how much exists today, how much has been mined, how much has been lost, how much has been thrown away on hard drives because they don't exist anymore. So it lacks some of the basic integrities of a real market. And then you have to get into the idea or the concept that it's a theoretical value. It's a theoretical value. And there's a lot of other things that have this. It's a theoretical value because someone is willing to buy it or someone is willing to sell it at that price today. But there's nothing tangible behind it. At least when you buy an ounce of gold, you can deliver an ounce of gold to someone.
Obviously, there are risks, which you laid out. How should the Fed in a new administration be approaching alternative assets?
Well, I think the government will look at them. We went through a fad in the last 4 years where there was this whole new idea where we were going to create new coins, where we were going to coin everything, where we were going to create these coins that trade, and we were going to do these ICOs, these initial coin offerings, and we were going to be able to put anything in a Coinbase. I think the regulators appropriately stepped in and said, look, if it looks like, tastes like, feels like, and smells like a security, you're going to have to go through the legal apparatus to create a security, and you're going to have to file the paperwork and the regulatory filings that you need to create a security. So I think as Bitcoin continues to evolve, it will get more and more regulatory scrutiny, because at the end of the day, the regulatory community always is looking out to make sure that no one gets hurt. And they want to make sure that there's no unsuspecting investor that ends up owning something that they didn't know what they owned, and they lost a lot of money because they didn't understand it.
So how does the payments landscape look different then in, let's say, a decade? Does cash disappear in this unprecedented economy and new economic activity that we're seeing?
Well, I think cash can easily disappear. I mean, the idea of paper currency in the legitimate world is becoming more and more obsolete. And I believe it could become totally obsolete. But the fintech payment systems are also not going to replace the banks. There's a big difference between a fintech payment system and a fintech ability to move cash and the banking systems. And remember, the banking systems are big, they're highly regulated, and they're regulated, again, to protect investors. They're regulated to protect depositories. So when someone puts money into a bank that is highly regulated, they are 100% confident that they can get their money out at a moment's notice. And there's an enormous amount of very expensive and very costly regulation that goes around that concept that if I put $1 in, or I put 50 cents in, or I put $100 in, whenever I want to withdraw it, it will be there for me. And therefore, to take deposits and pay interest on them, when you agree to be in that business, you agree to have enormous amount of regulatory burden. If you're just in the money movement business, you have a lot less regulatory burden on you. But the question is, how does the money get into the money movement system?
You've worked a long time in banking. You spent some time in the administration. You've spent some time exploring since then. Would you be open to public service again?
Look, I thought my time in the government was literally the most amazing couple of years of my life. And the ability for me to give back to the country was extraordinary. I was very happy doing it. If a great opportunity comes along again, of course I'll consider it.
So have you had any talks with the Biden team about joining?
Like I said, if a great opportunity comes along, of course I'll consider it.
We'll be watching my interview earlier with former National Economic Council Director Gary Cohn. That's just part of a longer conversation that'll air across all regions starting next week as part of Bloomberg Studio 1.0, December 9th, 9:30 p.m. Eastern. Zappos longtime CEO Tony Hsieh died Friday night from injuries suffered in a house fire while visiting Connecticut. His death was just ruled accidental and caused by complications from smoke inhalation. The fire reportedly happened a week earlier and remains under investigation. Hsieh was one of the biggest stars of the first .com boom. He joined Zappos in 1999 when it was called ShoeSite.com. Amazon then purchased the company for $1.2 billion in 2009. Hsieh continued to run it as CEO until stepping down last August. He will be remembered for not only revolutionizing the online shoe industry, but for his unique and controversial approach to corporate culture, known as holacracy, moving away from the traditional office hierarchy and encouraging employees to self-organize. Amazon CEO Jeff Bezos shared his condolences on Instagram, saying, "The world lost you way too soon. Your curiosity, vision, and relentless focus on customers leaves an indelible mark." Hsieh was just 46 years old. This is Bloomberg.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Shares of clean energy trucking startup Nikola plunging today. General Motors has scrapped a tentative deal to jointly build up an electric pickup truck. Instead, there's now a non-binding agreement for GM to supply hydrogen fuel technology. Plus, GM won't be taking an equity stake in Nikola. Joining us to discuss Bloomberg's Ed Ludlow. Ed, surprising that it's taken so long to get this news out there. What happened to the deal?
Yeah, surprising it's taken this long, but the outcome not so surprising. Sources have told us that GM basically looked at what Nikola had, and when it came to the Badger pickup, they found little technology and they made no progress. And as you know, GM's really invested really heavily in electrifying its vehicle offering. So it thought it would be a stretch too far, basically do everything for Nikola on a pickup truck. From this point of view, that they felt that under the founder, Trevor Milton, who, as you know, is quite a character, he had just bitten off more than the company could chew. And so the current leadership, with Trevor Milton having resigned, looked at what their goals were and wanted to streamline that just to focus on hydrogen fuel cell semi-trucks. What you have under this deal is GM simply becoming a supplier, no equity stake, no broader strategic partnership, just GM selling hydrogen fuel cell tech to Nikola.
So what happens to Nikola now? I mean, what is its future?
Yeah. They have all the pieces in place. They have a joint venture in Europe with Iveco to build battery electric trucks. That's an incredibly reputable company. They now have two fuel cell suppliers, GM, but also Robert Bosch, who they've been working with in 2017. And they have a factory under construction in Arizona. They have a timeline to get all of this done by 2023, and they're well capitalized. So there's every chance that they could do it. They still need to secure a partner to build hydrogen stations. But really, the biggest takeaway from all of this is that it's their reputation that's been hit. When you have a big name like GM kind of walking back the scale of the deal.
Walking back the scale of the deal in a huge way. Meantime, Tesla had another good day. We got news about its inclusion in the S&P. What is the latest?
Yes, so it's going to be all in one go rather than two tranches. This is the biggest company to be ever added to the S&P 500. 538 billion market cap. The S&P thought about doing it in two lots because basically what you have is a lot of index tracking fund managers who are mandated to hold a proportion of S&P 500 companies. That means because Tesla is so big, they're going to have to sell some of their other holdings in S&P 500 companies to make room for what they're going to have to buy. And because that means a big day of buying when they're added ahead of December the 21st, which could be gains in the stock. But it is unprecedented move by S&P to be saying, let's at one time, in one go, let's do it. Which is kind of the last process.
All right, our Ed Ludlow breaking up a little bit there. Thanks so much, Ed, for your reporting. Of course, we'll be following Tesla, as always. That does it for this edition of Bloomberg Technology. Bloomberg Daybreak Asia coming up next. I'm Emily Chang in San Francisco. This is Bloomberg.
The big concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
If you pull back too quickly, that might undermine the recovery. If you don't pull back enough, you might be storing up problems for the future. When debt levels are very high, and then you're forced to pull back too suddenly, and that might be too sharp a fall for the economy to take.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome to Daybreak Asia. I'm Sharian in New York.
And I'm Heidi Stroud-Watts in Sydney. We are counting down to Asia's major market opens. Our top stories this hour. Wall Street pulls back from records as investors assess risk after the November rally. The Dow Jones seeing its best month since 1987. The Russell 2000, the best in its 41-year history. Oil falls, though, as talks between OPEC and its allies wound up with no agreement on output. A final decision has now been delayed until Thursday amid signs of a division on supply strategy. Diplomatic and trade tensions between Australia and China form the backdrop as the RBA prepares its latest policy statement. Economists see no change in the cash rate.
And we start with breaking news out of South Korea. We are getting the final third quarter GDP numbers. When it comes to the year-on-year numbers, is a contraction of 1.1%, but this is coming in a little bit better than expected. The quarter-on-quarter numbers are also rising more than expected, 2.1%, and beating estimates of growth of only 1.9%. Of course, we have seen some pretty positive readings, especially when it comes to those South Korean export numbers. They have seen a lot of external demand, especially in China and the U.S., not to mention Europe, despite the fact that we continue to see virus infections accelerate in those economies. So again, third quarter GDP numbers for the final numbers now beating expectations and coming in at growth of 2.1% quarter on quarter, Heidi.
All right, let's take a look at where we're sitting when it comes to this Tuesday session. First trading day of the month for the ASX. We're looking like a muted start across broader Asia after we had US stocks falling from record highs. Investors really taking a breather to assess prospects following the recent torrid rally. Of course, global equity seeing their best month on record. So the S&P ASX 200 is just opening flat at the moment. We'll be watching Treasury winds again to see whether it's going to be a fourth day, I should say, of losses given the deterioration in China-Australia relations continues. The Aussie dollar falling back from that 74 handle, 73.46, but we are looking like we'll see further dollar weakness ahead. And we're also seeing a little bit of weakness when it comes to the Kiwi dollar, Sherry.
And we're also seeing weakness when it comes to oil prices. Brent coming online right now, and we're seeing really pressure to the downside. We had seen consolidation after really questions over what happens to the OPEC Plus plans when it comes to delaying that output increase later for January. But when it comes to futures, a lot of positivity, especially after U.S. stocks fell from records. We're seeing futures gaining 0.2%. And the Japanese Nikkei also higher, despite the fact that we have seen some strength in the Japanese yen recently, Heidi.
All right, Sherry, let's get more on those market moves. Where does this market head from here? Our next guest says an effective vaccine rollout remains less priced into EM value stocks despite this month's rally. Joining us now is Brandis Investment Partners Portfolio Manager Louis Lau. Louis, great to have you with us. I want to throw up this chart taking a look at just the lag when it comes to valuations, when it comes to emerging market stocks in Asia compared to their global peers. So clearly there's still more scope for gains and opportunity in this part of the world. MSCI Emerging Markets Index there in the purple at the lowest part of that chart. Where do you see the opportunities in Asia, particularly as it looks like we're going to see sustained dollar weakness driving that dynamic?
Yeah, I think there's a couple of areas that look interesting and still have not reflected the vaccine rollout. I think one area is emerging market value stocks. So if you look at the value sectors in financials, energy, and real estate in Asia, they've appreciated some, but we don't think that they've reached their full potential. And then within an Asian country context, we do like the countries that have been less effective in controlling the virus. So namely Indonesia, Philippines, Thailand, and Thailand particularly could benefit from a recovery in tourism. So plenty of scope for some of these countries to catch up with some of the countries in North Asia.
So when you take a look at the virus scenario, are you concerned about any of these countries that we see? Because North Asia, clearly we've seen the better handling of the pandemic, right? And that's part of what's been driving the rallies in that part of the world. Are you concerned that the pandemic will continue to be an issue as long as we don't yet have the rollout of a vaccine in this part of the world?
Yeah, I think when you look at North Asia, according to our valuations and calculations, I think a lot of the earnings growth has been priced into Korea, Taiwan, and China going out to even as far as 2022. But if you look at Indonesia, Philippines, and Thailand, I think one big risk would be a delay in the vaccine rollout because these countries have less developed healthcare delivery and distribution systems. So I think one risk that you have to bear in mind in 2021 is that some of these countries may be slower to receive the vaccines. But I think the valuations have already discounted for quite a big part of that risk. So we think that the surprise could be on the upside for those markets.
And what about for markets like China, where, of course, we have seen economic and market outperformance, but we are starting to see signs from policymakers that they may not be as generous with stimulus support anymore?
Yes, I think the sectors to be cautious about with regards to credit stimulus being withdrawn would be banks and infrastructure and construction. I'd also be cautious about the real estate sector in China. But then if you look at where policy is going, the State Council will soon unveil a raft of measures to stimulate domestic consumption. So I'd be looking to areas like home appliances, insurance, as areas where there could be some stimulus as well as autos. So I think definitely on the consumer side. And then if you look at the 5-year plan, next 5-year plan, China plans to take up the e-commerce penetration from 25% of sales to about 40%. So still a very good 5-year runway for a lot of the e-commerce and technology companies.
When would it be a good time to start getting into those entertainment companies like casino gaming companies?
Yeah, I think you've seen them come up from their lows, but you still haven't seen a broad opening up of travel between China and Macau, for instance. The border between Hong Kong and Macau still remains restricted, and authorities are very careful about letting large numbers of visitors come in from China. So I think you can start to position in some of these companies, and you do have to differentiate between companies that are more exposed to mass and premium gaming, and that part of the visitor spectrum will come back faster than VIP, for instance. So I think there are some very well-capitalized companies you can position. And then also, if you look further down to Southeast Asia, there are some opportunities in Malaysia and Singapore that you can also take a look at. I know the travel bubble between Singapore and Hong Kong has been delayed, but I think that gives you some time or some room to position before some of the catalysts like that start to unfold.
Brandis Investment Partners Portfolio Manager Louis Lau, they're joining us. Let's get to Karina Mitchell for the First Word headlines now. Karina.
Heidi, thank you. Joe Biden has rolled out his top economic picks, formally announcing Janet Yellen as his choice for Treasury, as well as heads of other departments. Neera Tanden is tipped for the Office of Management and Budget, while Cecilia Roos would head the Council of Economic Advisors. Sources say BlackRock executive Brian Deese is wanted at the National Economic Council. He was a senior climate advisor to President Obama. And Fed Chair Jay Powell is warning lawmakers that the U.S. economy remains in a damaged and uncertain state despite progress in developing COVID-19 vaccines. He told the Senate Banking Committee that recent news is positive for the medium term, but significant challenges still remain, including production, timing, and distribution. The Fed's lending funds expire at the end of the year, and officials say they should continue. Thailand says it's ready to take further action on its currency, which is on track for a second straight monthly gain as vaccine progress boosts optimism about the return of tourism. Ministers say they're unlikely to impose capital controls, although previous measures have had only a limited impact on the baht. The Bank of Thailand meets next week to explain its strategy.
That's only the first step that the central bank step in to look at our capital, to relax the capital outflow rules and regulations. So I think they will follow by the further strict measure on that. Okay.
And Bitcoin's on the move again, jumping more than 6% to almost $20,000. Its rise has echoes of the surge 3 years ago that was followed by an equally dramatic plunge, although enthusiasts insist things are different this time round. The coin has had gained more than 170% this year, according to Bloomberg data. Shares of companies with exposure to cryptocurrencies also jumped. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Sherry.
Right, still ahead, OPEC Plus talks are delayed as members need more time to reach a deal. That exclusive insight next. Plus, JP Morgan plans to boost some bonuses by 20%, but overall payouts are set to decline across the board. This is Bloomberg.
Never met, obviously, Walt Disney, but if you had a chance to talk to him, what would you want to ask?
Obviously, probably the number one question would be, how am I doing?
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Deep divisions at OPEC Plus are becoming more apparent as the output talks wound up without a deal. Further discussions have been delayed, and ministers will now meet again on Thursday to decide whether to keep the current output cuts or increase production in January as originally planned. Bloomberg's energy and commodities editor Lynn Doan joins us now with the latest. Lynn, so it's looking pretty dramatic. How unusual is it to see these meetings so tense?
Well, thank you for having me. This is definitely not unusual for OPEC. Definitely not the first time that we've seen a postponement like this. It feels like forever ago now, but just back in April, OPEC had to delay a gathering because the Russians and Saudis were still trying to negotiate production cuts, and it actually ended up taking several days and an intervention by President Donald Trump himself to broker that deal. We pointed out today that some of OPEC's meetings back in the 1980s went even longer, with one meeting in Geneva that lasted 17 days. So OPEC is no stranger to these kinds of prolonged talks, for sure.
Right. So what's at the heart of this latest disagreement?
You know, it's clear that the debate centers around what to do now that oil prices have rebounded. We've come a long way since oil prices fell below zero back in April. We're well above $40 a barrel now. And while some OPEC members are really keen to start ramping up production and make the most of that price rebound, others clearly still see the market as too fragile to accept more oil into the global market, and some are of course thinking that the most prudent course of action would be to just maintain the production cuts that are existing for another few months. It's clear that that is where there is still a deep division inside the cartel as to what to do.
So what's the price outlook then?
You know, I mean, clearly, if today's move down was any indication on the postponement of the OPEC meeting, the price outlook remains incredibly uncertain. All of it will, well, at least a large part of it, will hinge upon what the outcome of this OPEC meeting will be. Any failure to reach a deal will absolutely undermine this recovery, regardless of any vaccines being developed and oil demand rising in some parts of the world like Asia. But even more than oil markets, what I think we need to watch for as well is OPEC's own longer-term credibility and what's at stake there. Because clearly there are deep divisions that are being exposed during this meeting and as a result of these postponements. And that is something to watch on top of what the oil market outlook will be.
And Doan, Bloomberg Energy and Commodities editor there, as we continue to watch for that delayed OPEC meeting. We'll stay with Bloomberg TV. We have comprehensive analysis of OPEC plus tensions and implications for the oil markets. We'll be getting more from ANZ's Daniel Hines. Later on, Neil Beveridge of Sanford C. Bernstein will be joining us. Well, Moderna is requesting clearance for its coronavirus vaccine in the US after a new analysis showed the shot is highly effective at preventing COVID-19 with no serious safety problems. We asked CEO Stefan Bancel about the results and how the company plans to distribute the vaccine.
2 weeks ago, we had the interim analysis of a phase 3. Today, we are announcing the final analysis, 94% efficacy. But the piece that's almost most important for me is the severe cases. We had 30 severe cases, all were on placebo, 0 were with people who got our vaccine. And when you think about what has happened in terms of severe cases leading to hospitalization, leading to ICU, leading to death, this is really, I think, a big moment in the fight against this pandemic. So I think that our goal is to get the vaccine approved in the coming weeks. We're filing today to the FDA, but also in Europe, in the UK, Canada, and many other countries, hoping to get approval in the next few weeks. In the US, for example, the FDA has informed us that they are likely to have on December 17 the advisory committee to the FDA, and then I will expect within 24 to 72 hours after that committee an approval. We are working very closely in the US with Operation Warp Speed, General Perna, who is working to make sure that within 24 hours after approval, products will be out the door and that vaccination can start so we can help protect as many Americans as we can. We have said that we are still on track to deliver up to 20 million doses in the US before the end of the year.
Stefan, how do you imagine it actually working? what does it look like when this starts to get rolled out, when people start to come forward and say they want the vaccine or are being offered the vaccine?
So I think it's going to be like a typical kind of flu vaccination, just at a scale that has never happened in the world in terms of a number of people to be vaccinated at the same time. But basically, I mean, it's like a regular shot. You go, into a private room, you show your arm to a nurse or a doc. They put a little, piece of anti-infectant to clean your arm. They inject the product. They put a Band-Aid, and then next one, you need to get your boost 30 days after. Mm-hmm. So there's a lot of system being developed by the government to be able to track which vaccine you got in your prime injection so that you get the same vaccination by the same manufacturer for your boost. But that's how it's going to look like. And so if you go back to the data, if you get our vaccine, what do we know now? You have 94% chance of having no disease if you get infected. If you get our vaccine and you get infected, 94% chance to get no disease. And in the small percent chance that you have to get disease, it will be mild disease. Because as we said, we got 0 severe disease. And this is why I think vaccination is going to be so important to stop this pandemic so that we can save lives and go back to normal.
Can you help us break down the data older than 65? Any sort of effects? What have you noticed in your testing?
So we have not yet disclosed. We will do that when the FDA meeting meets. The data is just primary top line because we literally got it yesterday. The team is QCing everything. If you look at it, around a third of the study was the elderly, above 65-year-old, 30% of 30,000 people. And so what we've said is, like in the previous interim analysis, the elderly data is very similar to other age group. People with diabetes or other comorbidity factor are also very high efficacy. So by the time we meet with the FDA on December 17 for the advisory board, we will have all the details, and most probably those will be put online by the FDA in a briefing book a few days before the advisory board, as it's usually done by the FDA.
Stefan, is there anybody that shouldn't get the vaccine?
So today, the study has only been done for people above the age of 18. So we are going to start very soon this year a study in teenagers. So the teenagers should not get vaccinated because there is no safety data or efficacy data available yet.
That was Moderna CEO Stéphane Bancel speaking to Bloomberg's Alex Steele and Guy Johnson. Up next, China's economic offensive against Australia, why it could end up backfiring and pushing middle powers closer to the U.S. camp. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
In the second quarter of next year, we'll be cash positive again and growing our business. My own view, and it's always an optimistic view, yes, that by the end of next year, calendar, and the first quarter of 2022, we'll have all our 380s flying.
worsening ties between Australia and China are jeopardising billions of dollars of exports at a crucial time for the recovery. In the latest escalation, Canberra's demanding an apology for a controversial tweet by senior Chinese officials featuring a faked image of an Australian soldier threatening an Afghan child. Bloomberg Markets co-anchor Tom McKenzie joins us from Beijing. So, Tom, how has Beijing reacted to this outrage, the demand for an apology?
Well, they have failed to issue an apology. In fact, they said that Scott Morrison, and they questioned whether the Australian Prime Minister has, quote, a sense or has lost a sense of right and wrong. No sense here at all in Beijing that they will apologise for this tweet that was put out by a foreign ministry official. It was a very disturbing image, as you say, a mock-up of an Australian soldier holding a knife to an Afghan child. The officials here in Beijing, when they were questioned about this yesterday, said that, look, it's Australia that is 100% to blame for the state of relations between these two countries. They said that Australia took wrong measures on issues touching on China's core interests. So they have refused to issue anything close to an apology for a very disturbing tweet. We've had as well a number of very strongly worded editorials in the state-backed Global Times. You've got the Global Times front page today talking about the relationship between Australia and China plunging into the abyss. Morrison is to blame. The blame game is taking bilateral relations into the abyss. An editorial in the same newspaper as well calling Australia evil, and another editorial by the editor Hu Xijin saying that Morrison, the Australian Prime Minister, should kneel down on the ground, slap himself in the face, saying the Morrison administration is making Australia provocative and, quote, wanting a spanking. So those are the lines from the Global Times editorials. No sense here that this relationship is anywhere close to being even repaired on the margins.
How long will this strategy last for Beijing, especially when you have a Biden administration coming in that prioritizes alliances?
Well, that is a key question, and the sense that we're getting from experts that we've been speaking to is that this strategy could very much backfire. Now, from the Chinese perspective, this is about essentially keeping those middle powers in check, the likes of Australia, the likes of New Zealand, Canada, the UK, also the European Union and Japan. It's about sending them a message not to cross China's core interests, not to be too vocal. You will feel the economic pain if you go down that route. But, of course, as you say, Biden is coming in with a pledge to rewrite these relationships with the US, with his allies, and to build out a coalition to push back on China on some of these key issues. And you've already seen in the last few years, for example, a revival of the Quad. That is the grouping of the US, Japan, Australia and India. The Five Eyes have been much more proactive as well. That's the US, Australia, New Zealand, Canada and the UK. And we've also seen new initiatives being discussed in the US and amongst some of its allies, for example, about providing an alternative to Chinese 5G networks provided by Huawei. You also had the Financial Times reporting yesterday that the European Union has written up a document that they want to get into the hands of the incoming Biden administration, calling for a once-in-a-generation opportunity to forge a new global alliance to counter China. So this strategy by China, this very hard-line strategy on Australia and Canada and others, could certainly backfire.
Our markets co-anchor Tom McKenzie there in Beijing. And here's a quick check of the latest business flash headlines. Tesla jumped in late trade on news that it will join the S&P 500 in one shot. Given the company's massive market cap, the index had sought consultation with investors over adding the stock in one part or two, which would have been unprecedented. Tesla will be the seventh biggest name in the S&P 500, sitting between Berkshire Hathaway and Visa. The stock has soared about 580% this year. General Motors has scrapped plans to take an equity stake in clean energy trucking startup Nikola, and it's also dropping the idea of jointly building the new Badger pickup truck. That sent shares in Nikola tumbling by more than 27%. GM will, though, allow Nikola to use its hydrogen fuel technology in semis, but it won't be taking the 11% equity stake it had proposed earlier. Top UK retailer Arcadia has filed for insolvency amid the fallout from the coronavirus, putting 13,000 jobs at risk. Philip Green's company has appointed Deloitte as administrator to allow the Topshop and Dorothy Perkins brands to seek protection from creditors. It will be the UK's most notable retail collapse since the pandemic struck, and a further blow to a sector that has already lost 125,000 jobs this year. Up next, traders at JP Morgan look set to benefit from a record year, but it's not such bumper bonus news for many of their colleagues. This is Bloomberg. All right, let's take a look at some of the latest labour market data out of Japan at the moment. The jobless rate coming in, bang on expectations, 3.1% for October, ticking up just slightly from 3% in the previous month. The jobs to applicant ratio coming in at 1.04, just slightly higher than expected, but also pretty much on expectations. And we do know that we are expecting going forward that labour market scenario to continue to slacken into the end of the year. We're seeing, of course, elevated new virus cases in Japan. That's going to limit new job offers, particularly in the sensitive services, hospitality and tourism sector. Social distancing, of course, other virus-related efforts continue to hurt demand for workers and demand in general in the economy. And that is really the most labour-intensive part of the economy. Bloomberg Economics expecting that we'll see unemployment reach a peak in the first quarter of 2020 and then come down gradually over the course of next year, assuming, of course, a vaccine as well as the handling of the pandemic there. But the jobless rate, I should say, for Japan at 3.1%. Let's take a look at the reaction on the markets. We'll get it over to Sophie in Hong Kong. So,
Hi, we see little reaction in the yen, which is back above 104 after breaching below that level overnight. We do have the yen having capped a 3-month gain against the greenback, and Kit Yook's over SocGen anticipating more dollar weakness, especially via the euro. And going into December, broadly speaking, looking like a mixed start to the session here in Asia after the regional index managed to clock the best month since May 2009. We're looking for some downside, though, in Tokyo. Nikkei futures in Singapore coming online in the red, and we do have Kiwi stocks under pressure, but S&P E-minis gaining ground at the start of the session here in Asia. Now, switching up the board to check in on the mood in Sydney, you had the ASX 200 falling for 3 straight days through Monday. We're seeing that weakness continue here. Energy stocks remaining under pressure as we are seeing oil prices also in focus. New York crude stalling above $45 a barrel. This is OPEC plus talks have been delayed when it comes to negotiating over the extension of output curbs. And flipping the board, checking in on the Aussie dollar ahead of the RBA policy decision, you do have the Aussie just back above, below 74 this morning, and Aussie yields are just climbing ever so slightly. Also want to highlight some stock movers of note. Treasury wine under pressure, extending declines then this after UBS cut the stock to neutral. The stock has been under pressure given the tariffs from China, so the company planning to shift some of its products out of the mainland. Also want to highlight Sandfire. Check out that jump of the stock, nearly 12% higher this morning. This after it approved the development of a copper mine in Botswana, Sherry.
Right, let's turn to JP Morgan. Traders are set for a bumper bonus season. The bank is planning to boost annual compensation by up to 20% for sales and trading staff. But employees across the rest of the company may see payouts fall. Our finance reporter Michelle Davis joins us on the line now. Michelle, so they had a record revenue year. So what's going on with compensation here?
Yeah, so, as you mentioned, JP Morgan is going to be boosting the pool for traders by about 15 to 20%. That was after the trading business generated a record $23.5 billion in the first 9 months of the year. But, it's been kind of a tale of two cities year for the banks. Even though traders have done phenomenally, the other sides of the bank, consumer or wholesale lending, those businesses are preparing for massive losses in their lending books. And so this divergence in pay kind of reflects, the lopsided way that the pandemic has impacted banks. Overall revenue at JP Morgan isn't at a record this year, but the trading revenue is. So, traders are going to benefit from that, but they also aren't going to get as much as maybe some of them anticipated because the bank, Jamie Dimon, CEO of JP Morgan, he lost.
As well as salary freezes.
Exactly, yeah. So we understand that executives are preparing smaller payouts for, across the board at the firm, with average bonuses expected to be down from last year, and raises are expected to be frozen for most people that are at the vice president level and above. And that actually mirrors something that we saw out of Wells Fargo. A couple weeks ago, we reported that they were also going to be freezing raises for some higher top earners at the bank as they also prepare for, an uncertain 2021.
What does this signify as a trend for the rest of the industry?
So, other banks are going to want to stay competitive, but they are also dealing with some of the same issues that JP Morgan is dealing with. Many are dealing with possible consumer losses, possible wholesale lending losses, depending on, how the economy shakes out next year and at what point we get a vaccine. And so the fact that JP Morgan is freezing some raises, that could provide cover for other banks to do something similar. So far, we know that Bank of America is discussing keeping the bonus pool for traders close to last year's level, so basically flat. And that surprised people across the industry because compensation consultants have been saying that Wall Street was going to get generous raises this year. But, the fact that we have Bank of America saying it'll probably be flat, JP Morgan, which is, the top trading firm out there generating record amount of revenue, boosting pay 20% for traders is great, but it's also, it pales in comparison to the 48% jump in revenue that JP Morgan's traders saw. So if this is the cream of the crop and they're, expecting a 20% increase, then the expectations for others could be lower.
Our Bloomberg finance reporter Michelle Davis there with the latest. Well, speaking of big banks, Citigroup CEO Michael Corbat spoke exclusively to Carlyle Group's David Rubenstein about Joe Biden's decision to nominate Janet Yellen as Treasury Secretary and why the US needs more targeted stimulus.
I would say that not just Citi, but I think the banking industry had a good relationship with her. And, if she is elected into, or if she is voted into the seat, I think she'll do a great job. And I would expect that relationship to continue. And I'd also, shout out another glass ceiling broken in terms of her then becoming the first female Secretary of Treasury, which would be another great one for the books.
Let's talk about the economy for a moment. There are many people in Washington and around the country who think the economy could use another stimulus bill. We couldn't get one so far before the election, but maybe in the lame duck there might be one, and maybe in the early new Congress. Do you have a view that the economy needs a stimulus bill to be able to go forward until we get all the vaccines distributed and widely used?
Yeah, I think, as you point out, David, it's unclear whether we're going to get that new stimulus package between now or late January. But I think if we don't get something done right now, I think we will get something done in probably fairly early 2021. And I think the question is not going to be the if, but I think it's going to be more about the size and what can get passed. And I think that will, be largely determined by the outcome of the Senate races in Georgia. I think right now, with COVID-19 cases on the rise, additional stimulus through unemployment checks, PPP loans, rebates are all helpful tools to bolster the economy, and while also helping individuals to recover from the economic hardship of the pandemic experience. And what we know, right, is that, while we're all in the same storm, we're not all in the same boat. And I think if we can get these monies targeted at those most affected, I think it would be a very good thing in terms of helping restore the economy otherwise quicker than it would.
Let's talk about the meaning of let's say we have a stimulus bill. Some people have said, well, we could use a stimulus bill. On the other hand, we can't ignore the fact that the debt is rising quite rapidly. We have about $27 trillion of federal debt, and we're having a budget deficit now about $3.2 or $3.3 trillion a year. We're borrowing about half the money that we spend each year. How much longer can we keep borrowing this money without people on Wall Street or people in the general economy saying this is too much borrowing? Are you worried about that?
I am. I think we all should be worried about it. I think we've been talking about deficits for a number of years and what is sustainable. I think the consequence and the prospect of lower for longer in terms of interest rates obviously significantly reduces or holds down that borrowing cost, but we can't believe that rates are going to stay necessarily where they are forever. So we've got to be mindful. And that's why I believe that it's actually very important that we're targeted in terms of getting the monies to those that are really in need, because we know that the longer this goes on and the more small business, the more individuals, certain geographies, neighborhoods get affected, it just makes the comeback from that much more difficult. And I think we've seen that, and that's been proven, from a historic perspective.
That was Citigroup CEO Michael Corbat speaking exclusively to Carlyle Group co-chairman David Rubenstein. You can catch that full interview on Friday at 11 p.m. in Hong Kong, 10 a.m. in New York on Bloomberg Invest. Hear how Citibank is managing the COVID-19 crisis and the potential impact on bonuses. This is Bloomberg.
it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
This is Daybreak Asia. I'm Karina Mitchell with the First Word headlines. Iran has buried its top nuclear scientist, blaming Israel for his death in a remote-controlled attack on his car. The scientist is seen as a founder of the Islamic Republic's nuclear program in the early 2000s. The UAE and Bahrain have condemned his killing as a further threat to Middle East peace. The two countries have strained ties with Tehran amid tensions between the Sunni and Shia faiths. Oil fell again as talks between OPEC and its allies wound up with no agreement on output. Ministers pushed a final decision into a second day and delayed those talks until Thursday, amid signs of division over keeping supply cuts at current levels or to increase output as planned next year. The Saudi energy minister is threatening to resign as co-chair of the OPEC Plus committee overseeing production. And U.S. air travel numbers climbed to the highest in at least 8 months as flyers ignore health advice to avoid trips around Thanksgiving. Passengers at domestic airports totaled more than 1.1 million on Sunday. That's the most since March, when the coronavirus began to devastate demand. U.S. officials had urged people to stay home over the holiday to prevent a surge in COVID-19 cases. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg Sherry.
Right, let's turn to some geopolitics. China's escalation of trade tensions with Australia is seen as a warning to the world, particularly to the U.S., not to oppose Beijing's interests. Now, how might this strategy play out as Joe Biden prepares to take office? Joining us now is Melissa Hathaway, president of Hathaway Global Strategies and leader of cybersecurity initiatives in the Obama and George W. Bush administrations. Melissa, it's great to have you with us. So the incoming Biden administration seems to be made of multilateralists. If we do, in fact, see an emphasis on alliances, could we see some sort of more cost sharing among so-called like-minded democracies in their push against Beijing?
Yeah, good morning. I think that the Biden administration is assembling a team that believes in rebuilding the alliances. And you've seen the overtures from Europe and India and certainly Australia that are looking to have more of a coalition of the willing to really block the retaliatory diplomacy or retaliatory actions that you're seeing if you don't comply with China's interests.
What does this mean in terms of what the United States does next? Can Joe Biden actually come in and unwind some of those tariffs, tech decoupling moves that we have seen, this pressure on TikTok, pressure not only also on companies that are listed here in the U.S.? Can we see some unwinding of those actions? How much leeway does he have?
He has leeway. I think that there'll have to be a really deep study of what's happened under the Trump administration. And the Trump administration is getting ready to put a number of companies, I think more than 80 Chinese companies and more than 20 Russian companies on the entity list for export controls because they're considered quote unquote military end use or could be used to support the military buildup or offensive capabilities of those countries. And you're also going to see a unique kind of one from the Department of Defense add companies that could support the Chinese military using what is called Section 1237, which refers to a National Defense Authorization Act. I think the challenge is that the tech decoupling, I think, will continue under the Biden administration for many reasons, but principally over market access and some of what the Americans would consider, and I think many would consider unfair trade practices by China. But I think you'll see the mood or the tenor and the diplomacy will be much more measured. It won't, and it'll be more predictable. But I do see the decoupling continuing in the Biden administration. And I do believe that they may unwind some of the tariffs, but I wouldn't expect a significant retreat from the current position of the United States.
How successful can the US under a Biden administration, along with its allies, be in containing some of these tech ambitions? Because we know that, for example, companies like SMIC, the chip factor, AI, all of these are cornerstone long-term ambitions that Beijing is pretty determined to throw resources into and succeed at.
Yeah, I think that that's right. I mean, the 14th five-year plan that was just announced by China a few weeks ago highlights that it wants to become technology is a key pillar of the strategy, and it specifically called out semiconductors because semiconductors are needed in so many of its industries. And it also said that it wanted to really become a quality innovator versus quantity, which has been one of the things that's been holding China back. It's not known for the quality of its products. It's been known for really kind of the cheap production. So if this, in fact, is the strategy, it will take them some time to build out because right now they're still really dependent upon U.S. Designs and manufacturing, et cetera, for the semiconductor market. And so the new entity list restrictions on SMIC in particular will delay how Beijing could move forward. But I do think that this is going to accelerate other industries in China, from artificial intelligence to even just 6G or the next generation of telecom. And you'll see some of its companies be I think given a lot of leeway to drive that innovation agenda. So I think that 5 to 10 years from now, you'll see China really leading in some of these areas if they can focus the industries and build the industries out that they don't really have right now.
Melissa, is there a way out for these middle allied countries like Australia that depend so heavily on China, but find themselves in the situation that Canberra finds itself in at the moment?
When you look at the Asia-Pacific Rim, their number one trading partner, all of them, is China. And so they're all in a very, very difficult position. But Australia was the first really to challenge the technology, the 5G the Huawei technology. They were the first to experience disinformation and propaganda from China through WeChat and other technologies. They've been the victim of industrial espionage and then parliamentary disruption. So, they have a lot at risk for the retaliatory diplomacy. Right now, China's put wine, beef, and barley on the highest tariffs, and then they're trying to get their companies to block importing the coal and timber and other things. So there's a lot economically at stake, but Australia feels very violated by the actions that China's taken and is very sensitive. They have a very high Sino-Australian, population. So this is something that, they have the responsibility to protect the core interests of their state, of Australia. And I know this is part of the dispute, that China believes that Australia should keep quiet about China's core interests, that nobody should comment on human rights. Nobody should comment on Taiwan, and nobody should comment on Hong Kong and the national security law. Well, many of us have different views on those areas.
Melissa, great to have you with us. Melissa Hathaway, President of Hathaway Global Strategies. We have more to come on Daybreak Asia. This is Bloomberg.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
do not expect a quick, immediate impact. It will take some time, but at least there is a light, and that's what is very important. I think this is well understood by the market.
The WTO says South Korea broke international trade rules when it renewed a series of tariffs on Japanese stainless steel bars in 2017. The ruling could further inflame a simmering trade spat between Japan and South Korea. Bloomberg's East Asia government editor John Herskovitz joins us with the latest. John, so how significant is this decision when actually the goods in question, the value of them, relatively small?
Well, it's only a few $1 million involved in this decision, but the immediate impact is that South Korea is planning an appeal which kind of effectively vetoes the Monday decision because the WTO appellate body has been dysfunctional since about December 2019 when the U.S. blocked appointment of new members for the panel. But on the greater scale, South Korea and Japan have been fighting a battle over their shared history concerning Japan's 1910-1945 colonial rule over the Korean Peninsula that spilled over to trade. And some of these disputes have wound up at the WTO. So it's just going to inflame the simmering tensions between the two countries. And the amount is small, but it just feeds back into this feud about whether South Korea sees Japan as fairly compensating South Koreans for colonial rule, whereas Japan sees these matters as settled under a 1965 treaty that established diplomatic relations.
So what are some of the other fights that Japan and South Korea are having when it comes to trade in particular?
So one of the things is that about 2 years ago, South Korea's courts said that Japanese companies were responsible for South Koreans conscripted into working during colonial rule at Japanese factories and mines. Japan was very displeased with the decision and tangentially put South Korea on a list of export controls, some sensitive materials for their tech industry. South Korea saw this as politically motivated and took this to the WTO. So this has been a simmering dispute between the two over the past few years. It's really intensified the animosity between the two countries. And it's spilled over into some other things, like the South Korea's trade minister was trying to lead the WTO. And in October, we had reports out of Japan that the government was effectively blocking her nomination to take over. It wasn't official, but because of the WTO process, a powerful country like Japan effectively giving a veto of the candidate dashed the hopes for the South Korean candidate to take over the global body.
How does this trade spat complicate the picture for the United States that actually wants its closest allies in Asia to work together?
Exactly. I mean, when it comes, Japan and South Korea are the two biggest U.S. allies in Asia, and they're key for the U.S. in managing threats posed by North Korea and China. Coordinated response is it's indispensable for actions like a North Korean missile launch. When a missile is test launched, the U.S. relies on Japan, South Korea to all be on the same page to watch, prepare defenses, and make sure what's going on. So it's having these two allies together with the U.S. is one of the most important things for maintaining security in the Asia-Pacific region.
Bloomberg's East Asia government editor John Herskovitz there in Tokyo. Let's get you a quick check of the latest business flash headlines this hour. ExxonMobil has taken the largest impairment in its history, writing down the value of natural gas assets by as much as $20 billion. Exxon is also slashing long-term capex plans, which it says won't exceed more than $25 billion a year through 2025. That's a $10 billion reduction on pre-COVID levels. Zoom fell after hours despite reporting another blockbuster quarter. Revenue at the video conferencer was up more than 350% for a second straight quarter. Adjusted earnings rose 11-fold. Zoom pulled in almost $780 million and boosted full-year forecast to more than $2.5 billion. GameStop rose for a third straight day amid strong demand for Xbox and PlayStation consoles. The stock was up by more than 20% on Monday, paired gains going into the close. Lots more to come. This is Bloomberg.
pandemic swells the gap between the rich and poor around the world, there may be no starker case of inequality than Venezuela, where the socialist leader Nicolás Maduro has kept his hold on power by fostering a Darwinian dollarization under quarantine. The nation's mighty oil industry has collapsed. Water, electricity, and gasoline are barely available, and hunger hunts vast portions of the population. 4 out of 5 Venezuelans can't afford a basic food basket last year, according to a research by the main universities. Meanwhile, Caracas neighborhoods have a dozen new delivery services bringing to their doors everything from truffle salmon poke bowls to electronic cigarettes and $50 gluten-free birthday cakes.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome to Daybreak Asia from Bloomberg's world headquarters in New York. I'm Sherry-Ann.
And I'm Heidi Stroud-Watts in Sydney. Asia's major markets have just opened for trade. Our top stories this hour. Asia markets look set to drift lower after Wall Street slipped from all-time highs. Investors are weighing risk assets after what was a November to remember. Oil falls as talks between OPEC and its allies wound up with no agreement on output. A final decision has been delayed now until Thursday amid signs of division on supply strategy. And the Fed chair welcomes positive news on vaccines while warning the virus economic fallout remains uncertain. Moderna says its shot is effective and has no serious safety problems.
And we have breaking news out of South Korea. We are getting trade numbers with exports now rising 4% year on year for the month of November. But this is a smaller gain than was expected. The expectation was for a gain of 7.5%. And remember, we had a holiday-induced contraction in exports for the previous month. So this is a little bit disappointing. Imports year on year falling less than expected, 2.1%, slightly less than the expectation. But that's leading to a trade surplus that is smaller than expected and coming in at $5.9 billion for November. Of course, we have seen external demand in the United States, in Europe, in China, strong, but still the virus cases really dampening sentiment around the world. And we're now seeing exports rising less than expected, only 4% year on year. Although, as you can see on that chart, it's still a gain, and those contractions since the coronavirus pandemic now easing, as you can see. Let's turn for a check of the markets and bring in Sophie Kamarudin in Hong Kong. Right. Soph.
Sherry, alongside the trade data that we got just now from South Korea, we also got GDP numbers, which showed a faster pace of growth than initially expected. We're also watching for any market reaction to the WTO ruling on Korea's imports on Japanese steel. We are seeing green shoots, though, for Kospi this morning, up over 1% this morning. This after we saw month-end losses, but the index still managed to cap the best monthly gain since 2001. The Korean won, though, slightly under pressure, but Goldman still seeing more potential upside for the currency next year, along with the ringgit and the rupiah. Now let's turn to the open in Japan. We got jobless numbers for October, 3.1% on that number, while capex for the third quarter in Japan shrank less than expected. The yen, a little change this morning in the wake of that data. We are seeing the Nikkei 225 adding 0.9% this morning. This after the benchmark capped the best month since 1994, and the Topix clinching the best monthly gain since 2013. We're also keeping an eye on SoftBank this morning. The stock gaining ground for a 7th straight day, rising to a March 2000 high. This after SMBC Nikko lifted SoftBank Group's price target to 7,700 yen. Now let's flip the board to check in on some other assets of note. You have U.S. futures, a little change, just some slight nudge higher, about 0.4% on the S&P E-minis right there. And you have the Aussie dollar back below 74 ahead of the RBA policy decision. Ahead of that, you have Aussie stocks fluctuating this morning, but energy stocks are under pressure in Sydney as we're seeing downside pressure for New York crude, extending losses this morning as OPEC Plus negotiations drag on. But pulling up the board, Goldman thinks the winter headwinds for crude, including this resurgence of virus cases, those are merely speed bumps on the path to the rebalancing in the oil market. So Goldman penciling in Brent at $65 a barrel through 2021, Sherry.
Sophie, in fact, let's discuss all of that and bring in Stephen Innes, Chief Global Market Strategist at Axie. Stephen, great to have you on. So give me your take of what you think is happening in the oil markets, because, of course, we have all of that uncertainty over OPEC Plus, but at the same time, we have an economic rebound happening in China and perhaps a vaccine coming up soon.
Yeah, I think the biggest surprise really was the announcement from Saudi Arabia suggesting they may give up their co-chairs on the JMCC and OPEC. That sort of caught me by surprise coming out of the meetings. And I think what it stresses here is the level of disharmony that's going on in this meeting. I think it's a lot higher than what people actually thought. I think this is probably part and parcel to a UAE wanting to pump more oil. And obviously the issue with the the Iranian scientist getting assassinated over the weekend has really changed the narrative right now. Ultimately, I think cooler heads will prevail. They'll extend the quotas for a shorter duration as the markets are expecting, which is 3 months, and oil should be able to lift. Now, we need this bridge to gap until the vaccines come. Otherwise, we could have about a 10% collapse in oil prices in December.
Steve, we've still had a really good month when it comes to commodity prices, right? The Bloomberg Commodity Index at around those levels that we haven't seen since February earlier this year. What happens if you actually do get, as you mentioned, a collapse in oil prices or a collapse in the broader commodity space? Where in the markets will you see the biggest impact?
Yeah, it's very interesting. Fortunately for the commodity markets, they've got that China consumption to lean on. So I'm not expecting a huge drop-off in the broader commodity markets. Oil's a little bit more delicate because it really gets pushed on road fuel demand. And that's the biggest concern we've got right now is the second wave. COVID scares are, forcing people inside, notwithstanding the fact that governments have been reimposing lockdowns. The problem I'm seeing right now for oil is just Christmas light. I don't think people are going to be going out much, and that's really going to crimp a lot of the natural oil demand that comes into the holiday season via driving and especially travel. I mean, nobody's getting on planes this year, that's for sure, even internally inside their own countries, let alone traveling externally.
We've seen record highs for gold this year. We've seen gains when it comes to copper and silver as well. What is the kind of dependent factor in terms of these rallies going beyond 2020? Do we really need to see the start of some inflation?
I really do believe that's what has to happen here. But, if we look at the end of through the COVID tunnel here, green lights are flashing. But the problem is we don't really know what that landscape is going to look like on the other side, especially as far as inflation is concerned. And that's a big problem, in my view, for gold. We've seen, money not really driving inflation. The Federal Reserve easy policy, seen it from the Bank of Japan, unable to raise inflation. I get pretty concerned that the market's really piling into this U.S. dollar debasement story and hyperinflation narrative. Look, it's going to take hyperinflation to drive gold higher. I just don't see hyperinflation coming back to the markets anytime soon.
I want to get your views when it comes to FX. Of course, so much of this hinges on whether we continue to see the dollar weakness. It doesn't matter if you're looking at euro, at the Aussie, at the won. We're all pretty close to these 2018 lows compared to rather I should say, flip that when it comes to the dollar, right? So do you have expectations that this is something that will be sustained depending on whether we continue to see the growth divergence story with the US?
You know what's hilarious, Heidi? I've never flipped my currency views so often and so frequently than I have over the last few months. I mean, we had a pretty big setup going into month end here, absolute downpour of U.S. dollars selling. However, the euro failed to breach the 120, even into the WMR fix in London yesterday. That was really surprised. We saw massive volumes. And here we are again down at 119, 119.30 pivot level. I think ultimately the market wants to sell dollars. But I think they may delay until they get a clear signal, one from what the Feds are going to do. I personally don't think they're going to add accommodation, especially with stock markets up towards 3,600 now. So I'm not really looking to sell the dollar super aggressively. I was looking for more short-term tactical supply and demand plays. I think it'll be an interesting climate because ultimately I view the dollar's fortune really getting driven by less so by interest rate policy and more so by the growth narrative. So if the global growth narrative starts to pick up, countries start to recover significantly, then I think the dollar will tend to sell up, but not as dramatically as up to 125 in the euro. I see perhaps 120, 121 on the euro as the top.
Stephen, always appreciate you with us. Stephen Enes there from AXI with some of his FX and commodities calls. Let's get you to Karina Mitchell in New York for the First Word headlines. Karina.
Heidi, thank you. Thailand says it's ready to take further action on the baht, which is on track for a second straight monthly gain as vaccine progress boosts optimism about the return of tourism. Ministers say they're unlikely to impose capital controls, although previous measures have had only a limited impact on the currency. The Bank of Thailand meets next week to explain its strategy.
That's only the first step that the central bank step in there to look at our capital, to relax the capital outflow rules and regulations. So I think they will follow by the further strict measure on that. Okay.
And U.S. air travel numbers climbed to the highest in 8 months as flyers ignore health advice to avoid trips around Thanksgiving. Passengers at domestic airports totaled more than 1.1 million on Sunday, the most since March when the coronavirus began to devastate demand. U.S. officials had urged people to stay home over the holiday to prevent a surge in COVID-19 cases. And American Airlines plans to reintroduce its 737 MAX planes to commercial service by offering staff a series of flights to help build confidence. American is planning 5 charter trips this month before the MAX returns to schedules around New Year. It says customer confidence will be boosted if crew members are happy with the plane. The MAX has been grounded for 20 months after 2 fatal crashes. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Sherry.
Right, still ahead, ANZ senior commodity strategist Daniel Hines joins us to discuss the oil market as OPEC Plus remains deadlocked on supply. But up next, Moderna shares jump as it becomes the second vaccine candidate to apply for emergency approval in the U.S. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Measures we are taking are the right ones. We are very hopeful that by the fourth quarter of 2020, we'll exit recession. If not, at least by the first quarter of 2021. So it means the steps we've taken are working.
Well, Moderna shares jumped yet again as the company announced it's hoping to get FDA approval for its COVID vaccine before Christmas. A new analysis confirmed preliminary findings that the vaccine is 94% effective. Let's get more from our Bloomberg healthcare reporter, Michelle Cortez. Michelle, how much confidence do we have in this latest tranche of data? We know that, of course, the likes of AstraZeneca are conducting more trials, but it looks like Moderna could be pushing ahead for this pre-Christmas approval.
The Moderna data is actually looking better every time we get a new cut of the data. We saw in this latest reporting that none of the severe cases of coronavirus occurred in people who got the vaccine. And in fact, the number of people who got the vaccine who got any type of infection was very low, fewer than a dozen people. So the idea that the virus is incredibly effective at preventing serious infection and even transient, milder infections is really important, and it should help encourage people to get the vaccine once it becomes available. And we're looking like that might start beginning to happen at the end of this year.
And very important, given that we're seeing record hospitalizations here in the U.S. and infections rising new highs around the world as well.
Absolutely. We're at this incredible pivotal point in the coronavirus outbreak. We are just getting to the point where we're going to start seeing the light at the end of the tunnel at a time when everyone is just exhausted by staying inside, isolating, wearing masks. Really, people are just done with it. But the bottom line is that if we can just hold on for a couple of more weeks or a couple of more months until we can get this vaccine to start helping us get the virus under control, we'll all be so much better off. Because at this point, honestly, there's not anything that we can do to stop the virus that's currently circulating until that vaccine becomes available. So it's just tragic where we see numbers continuing to increase. Hospitalization rates across the country are hitting devastating numbers, overwhelming hospitals. And the number of deaths that we're going to be seeing is just, it's so tragic as we're starting to get to this vaccination period.
Michelle, with the latest on everything to do with the coronavirus pandemic, our healthcare reporter, Michelle Cortez, and actually Novavax today rising in late trade after saying it's making progress with its COVID-19 vaccine. CEO and President Stan Urk says he's expecting to see initial results from a UK trial in the first quarter.
I think a real important announcement was the final enrollment of 15,000 plus people in the UK and 2,400 people in South Africa. I think those are really great executions of clinical trials. And now we wait and collect data to see what the efficacy levels from those two trials are. So it's a really important milestone that we achieved. And the teams down there did a great job. In the U.S., the U.S. announcement was merely that we've lost, of maybe a couple of weeks or a few weeks, because what we're doing in the U.S. is we're scaling up the process so that when we get approvals, that we'll have a robust commercial scale production process, and it just takes time to get from low scale 50, 100 liter production up to 2,000 and 4,000 liter production. So we're doing that. We have to have all the assays in place. We have to have discussions with the FDA. It's going along fine. There are no roadblocks. It just takes longer.
takes longer for manufacturing. Is it therefore, Stan? Is it that and why did you perhaps think that it would be sooner than what it's turning out to be?
Well, we're always aggressive on our timelines and optimistic on that snafus won't occur, and so we run into things that's never been done before. So you learn some things along the way, and that's what we're doing.
What is the level of efficacy that you would be happy with, given the 95% results from the other vaccine makers?
I think our expectation is that we'll be in that ballpark. So what you can do is you can look at. And all you can do is look at it when you try to compare across vaccines, is look at how we did in preclinical studies in non-human primates and what levels of efficacy and immunogenicity did we get. Same thing in the phase 1 trials. And our vaccine came out equal to or ahead of these vaccines. And so we stand side by side with them, and I expect that our data will be quite good.
All right, so the data, the expectations, of course, in the market right now, Stan, is that data will be good. I am curious a little bit if you can provide a little bit more insight into the manufacturing process and whether Novavax is going to have the capability to scale this product out there to market, assuming you do get FDA approval for it.
Yeah, there's a couple issues, and one of which is scale, another is stability, and so. What we've been able to show right now is scale. We've put together a global network of manufacturing partnerships that go all the way up to scale of 6,000 liters, 4,000 liters, 2,000 liters, and multiple bioreactors in each of these plants. And we're doing this in 7 different countries. And I think it's huge. Because this is a global problem, and we can't just make product in the United States and then expect it to be shipped globally. So we have the capability of doing that, and so we expect to supply with our partnerships, particularly with the Serum Institute. We expect to supply a vast segment in not just the high-income countries, but in the low and middle-income countries. We also need a product that's stable, and our product has shown maybe the best stability of any of the products out there, where we think we can have storage in 2 to 8 degrees centigrade, and perhaps room temperature storage for some period of time. So that's a big breakthrough as well.
And that was the Novavax CEO, Stan Erck, there speaking with our colleagues Romain Bostic, Caroline Hyde and Taylor Riggs. Well, coming up next, Bitcoin is back. It's nearing 20,000 again, and its supporters say this time it really is different. We take a look at why or why not next. This is Bloomberg.
It is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
We're going to be well into 2021 before there's some sort of equilibrium that we achieve.
Bitcoin's climbed to another record level, rallying as much as 8.7% on Monday. It surpassed the high seen in 2017. Let's get to our cross-asset team editor, Joanna Ossinger, in Singapore. Joanna, but of course, one has to be skeptical because the last time we reached these levels, Bitcoin lost, about 70% the following year. What are we expecting this time around?
Well, there is a lot more to it this time. One person I talked to said people aren't curious about Bitcoin anymore. They know what it is. More institutions are coming into it. But there is still this concern, particularly about the volatility. Just a few days ago, when it got to around 19,000, it then lost about $1,000 of that within a little more than 24 hours. So it is still quite volatile, and it remains to be seen exactly what it's going to do from these all-time highs.
So the evangelists say things like, this is the Bitcoin moment, it's arrived, right? What are some of the potential obstacles to that and an extension of the rally?
Well, one thing could just be that people who've been holding it for a long time, if they bought, say, in December 2017, might say, okay, now is a good time to cash out. Another is that there were a lot of momentum traders in there, and some of that froth was taken out of the market. But for instance, JP Morgan was saying that unless Bitcoin can keep its momentum higher, it might be vulnerable to pullbacks because some of those momentum traders might have further to go in terms of selling.
What happens to other cryptocurrencies? Will they benefit as well?
They might, and one that's really interesting to keep an eye on is Ether, and that's a backbone of a lot of decentralized finance applications. People are talking about it a lot. It's undergoing an upgrade, or the Ethereum system's undergoing an upgrade soon, and it is back to its highest level since June 2018. So it isn't just Bitcoin that's doing well. Some of these other coins are looking pretty good also as we go through pandemic times and people look for things other than the fiat currencies to put their money into.
Joanna, how much of a concern is a concentration of ownership? Because something like 2% of the accounts that can be tracked, they actually own 95% of Bitcoin holdings?
That is an issue because you figure most people are just very small holders, and it could be that these whales are able to do things with the price. At the same time, it's been able to keep going higher, and it has had these drops back. So it doesn't necessarily seem like they can just keep pushing it higher and higher. The big holders can keep pushing it higher and higher. But it's definitely something to watch and something to be aware of if you're going to be investing in something like Bitcoin.
Cross-asset editor Joanna Ossinger there in Singapore. You can read more about the Bitcoin rally, other stories you need to know to get your day going in today's edition of Daybreak. Bloomberg subscribers just go to DayBigo on your terminals. It's also right there on the mobile in the Bloomberg Anywhere app. Let's get you a quick check of the latest business flash headlines. JP Morgan is set to reward sales and trading teams with a bonus jump of up to 20%, even as other employees face declines. The biggest US bank saw traders lift revenue to a record $23 billion in the first 9 months of the year as they cashed in on volatility in a market buoyed by government funds. Bloomberg understands that the payouts will vary widely among desks and the plans could still change. US bank stocks fell after a Morgan Stanley analyst shuffled her ratings, including double downgrades for both JP Morgan and Bank of America to underweight. Betsy Graseck shifted preference to consumer finance firms and lifted price targets across the board to attractive from in line. Graseck sees coming COVID-19 vaccines as ending the recession while spurring more lending. Under pressure, UniCredit boss Jean-Pierre Moustier says he's told the board that he won't be seeking a new term as CEO as the end of his current deal come April. The bank had put his future under review amid a growing rift over the potential takeover of Montepaschi. The board held an unscheduled meeting at the weekend to discuss UniCredit's strategy and governance, with some directors said to be unhappy with the CEO. Well, coming up next, our exclusive chat with the Thailand finance minister. He says the government will likely act again to rein in the surge of the baht. We have more with that conversation next. This is Bloomberg.
na forma que esses governantes dirigem esse país pensando só naqueles que já têm muito e já têm demais. E é mais uma vez por isso que a gente optou por ocupar esses espaços, para que a gente lá de dentro possa exercer a mesma pressão que a gente já exerce na rua de fora para dentro. A gente quer abalar essa estrutura.
Eu tenho muita esperança, tenho muita fé em Deus que aqui a gente ainda vamos conseguir a nossa moradia digna, a nossa casinha para, ao menos nos últimos dias de vida, se vender numa casa.
If you pull back too quickly, that might undermine the recovery. If you don't pull back enough, you might be storing up problems for the future. When debt levels are very high, and then you're forced to pull back too suddenly, and that might be too sharp a fall for the economy to take.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Headlines. Joe Biden has rolled out his economic choices, formally announcing Janet Yellen as his Treasury pick and the heads of other departments. Neera Tanden is tipped for the Office of Management and Budget, while Cecilia Roos would head the Council of Economic Advisors. Sources say BlackRock executive Brian Deese is wanted at the National Economic Council. He was a senior climate advisor to President Obama. And Fed Chief Jay Powell is warning lawmakers that the U.S. economy remains in a damaged and uncertain state despite progress in developing COVID-19 vaccines. He told the Senate Banking Committee that recent news is positive for the medium term, but significant challenges remain, including production, timing, and distribution. The Fed's lending funds expire at the end of the year, and officials say they should continue. And U.S. air travel numbers climbed to the highest in 8 months as flyers ignore health advice to avoid trips around Thanksgiving. Passengers at domestic airports totaled more than 1.1 million on Sunday, the most since March when the coronavirus began to devastate demand. U.S. officials had urged people to stay home over the holiday to prevent a surge in COVID-19 cases. And American Airlines plans to reintroduce its 737 MAX planes to commercial service by offering staff a series of flights to help build confidence. American is planning 5 charter trips this month before the MAX returns to schedules around the new year. It says customer confidence will be boosted if crew members are happy with the plane. The MAX has been grounded for 20 months after 2 fatal crashes. And Iran has buried its top nuclear scientist, blaming Israel for his death in a remote-controlled attack on his car. The scientist is seen as the founder of the Islamic Republic's nuclear program in the early 2000s. The UAE and Bahrain have condemned his killing as a further threat to Middle East peace. The two have strained ties with Tehran amid tensions between Sunni and Shia faiths. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Heidi.
All right, Karina, we've had a slew of private PMI readings around Asia in the last few minutes or so. So let's go through them. Business sentiment edging higher in South Korea, in Taiwan and in Indonesia, but seeing weakness when it comes to Vietnam and Malaysia. Jibun Bank also posting the final results of its manufacturing PMI survey, sentiment improving there slightly when it comes to the month of November. Our senior Asia economics reporter Michelle Jamarusco joins us now. So, Michelle, taking a look at the tranche of numbers that we just got, what's the general trend that you were seeing? What in particular stood out to you?
Yeah, well, it's hard to cast the whole region with one brush, but we are still seeing sort of that gradual but uneven theme across the region. We see a lot of economies that are kind of flopping on either side of 50, which of course we know is the dividing line between contraction and expansion. Taiwan, I see, is still exceptionally strong at 56.9. That really blew all the other ones out of the water. South Korea, as you mentioned, 52.9, also pretty strong. And Indonesia, I would just note, is above 50 for only the third time this year. So those stood out to me, but we still have a number of them, including Japan, that are below 50. Japan inching up at 49 versus 48.3 last month. And then Malaysia and Vietnam and Philippines all below 50, but Vietnam and Philippines barely below 50. So we knew headed into this that global trade has really picked up over the past couple months. And our Bloomberg trade tracker is at its healthiest in its more than 2-year history. So we see signs that exports are recovering, that there is demand, that factories are pumping out production. And that's particularly reflecting some strength strength in Asia. So we would expect to see these PMIs to continue to improve, at least to have some stable demand at factories as they still weather some of the virus storms.
Is this a story still of divergence, China plus North Asia economies versus, say, Southeast Asia?
Yeah, there's some of that theme still, though I would note, I mean, it looks like Indonesia, even though that they've had this sort of resurgence in the virus and they've been dealing with elevated cases for some time, that was some pretty good news for them to be above 50. But yes, we have been looking at North Asia leading the charge, especially with the electronics industry posting such a robust rebound this year. And we've seen that recently, even in this morning's South Korea trade data, semiconductors climbing 16%. So we do see that electronics demand across the board, and that's certainly helping economies like South Korea and Taiwan. China, of course, also certainly strong. We'll wait to see the Caixin data later this morning, but we did have the data yesterday show manufacturing at a 3-year high. The Caixin index, Caixin index climbed last month to more than 8-year high, and then we had the China PMIs yesterday at a 3-year high. So certainly a lot of acceleration in that recovery, and that's spreading to the rest of the region.
Our senior Asia economics reporter Michelle John Briscoe there in Singapore. Now, the finance minister of Thailand says officials are likely to do more to stem the baht's strength, but it's ruling out capital controls. Arcom term Pitaya Pasir told Bloomberg exclusively that the easing of rules on capital outflows will be followed by further strict steps.
That's only the first step, that the central bank step in there to look at our capital, to relax the capital outflow rules and regulations. So I think they will follow by the further strict measure on that. Okay, but our policy is just to keep our exchange rates more stable so that our exporter they can manage their revenue as well.
Do you see a possibility of imposing capital controls?
No, we wouldn't see that. We wouldn't see that.
Would you do that under any circumstances at all?
We haven't discussed that yet.
What is the fair value for the Thai baht, in your opinion? Because when you talk to industry players, they say that they're looking at 32 versus the dollar, but currently it's about 30 to the dollar. What's your sense of what would help Thai exports? Is there a fair value you're looking at?
We could not tell anyway. But the central bank, they have some reference rate in mind. I think we will manage. We will manage.
Are there other targeted measures that the Bank of Thailand can adopt to weaken the currency?
The measures?
That's right. Measures that can be adopted by the Bank of Thailand.
We could not say right now, but I'm sure that the central bank will do more measure on that. Okay.
And Minister, to what extent do you think the Bank of Thailand can intervene to weaken the currency without being deemed as a currency manipulator by the U.S. because Thailand is on its watch list?
As I said, we wouldn't talk about what kind of measure that the central bank is doing. Okay.
Are you concerned about escalating debt? Household debt is surging. Public debt to GDP ratio is also rising. Are you concerned about that? And how can the issue be addressed?
Many households that, particularly in the rural area, they are doing the farming, they are doing business in agriculture. Lots of them, they are doing good. I would say that for the agriculture, they are not affected much, and they can survive. So I think it's going to be the very short term for the household debt if we can handle. And if you talk about the public debt to GDP, the public debt, I think right now our public debt is 49.4% of GDP. What we have to do is, we have to expand our GDP base as well. So if you don't, your economy is not growing, that your public debt will be increasing all the time. But we believe that even though we have the we have the loans, the 1.9 trillion, but your disbursement will not be at the same time. So distribution of the debt will be covering the 4 or 5 years. And within the 4 or 5 years, that our estimation that we are not exceeding the 60% of GDP at all.
Right. Minister, you seem pretty optimistic about the prospects of an economic recovery for the Thai economy. Could that recovery be derailed if the protests get prolonged?
The protests limit themselves in the certain area and in very short period of time. The rally is normally they're doing in the evening and within a few hours. So that would not affect much to the total economy, because we have to look at the production side. You know, the factories outside Bangkok, business area is also affect only the evening time. So I think that would not affect the economy. But the thing that you mentioned is are we too optimistic? I think we also we have to look for a better future. If you look at you are pessimistic, then you have no power to work anyway. So please believe in Thailand.
And that was the Thai Finance Minister Akom Pitpasit speaking exclusively to Bloomberg Markets co-anchor Haslinda Amin. Well, coming up next, OPEC talks were delayed after a long and tense meeting broke down without agreement. We'll be discussing the prospects for a deal later this week with the ANZ senior commodities strategist Daniel Hines is with us. This is Bloomberg. All right, let's take a look at how this first trading session of December is headed after what was truly what has been coined a November to remember, with global equities at those record best months that we've seen. The Nikkei 225 looking like we're seeing some pretty convincing gains there. That is despite labour market data coming out a little bit weaker. We're looking at the Kospi just reporting another 400 or so new COVID cases, but still gains there when it comes to South Korean stocks, up by 1 3/10%. Here in Australia, we're now extending gains to about 0.9%, just a couple of hours out from that RBA decision. We're not expecting a change in policy, but certainly looking for language, given we're seeing increasing pressure on Australian exports going into China due to these bilateral tensions. Kiwi stocks, the laggard in this region, 0.3% to the downside. We're also watching oil because some volatility as we get these deep divisions at OPEC Plus. They're becoming more apparent as output talks round up on Monday without a deal. Further discussions have now been delayed for 2 days to give ministers more time to reach agreement after a long and tense meeting. Let's discuss those implications with ANZ senior commodity strategist Daniel Hines, who joins us. Dan, great to have you. So as we've kind of been looking back in history, this is not unusual, this kind of, horse trading that we see going into an OPEC meeting, some of the sideline discussions that take place and delays. Are you expecting that an agreement will be reached? All right, that was ANZ Senior Commodity Strategist Daniel Hines. We seem to be having some issues with the audio. Let me try again before we give up on you, Dan. Just wondering if you think OPEC will eventually get to a deal, because as we know, this isn't exactly unusual, the kind of to and fro, the gamesmanship, if you will, with these negotiations. So it doesn't seem that Dan can hear us. We'll try and get Daniel Hines from ANZ back for his views on the OPEC meeting, which has been delayed. Let's get you to a break now. We'll be back with much more on Daybreak Asia. This is Bloomberg.
Never met, obviously, Walt Disney, but if you had a chance to talk to him, what would you want to ask?
Obviously, probably the number one question would be, how am I doing?
In the second quarter of next year, we'll be cash positive again and growing our business. My own view, and it's always an optimistic view,
Yes.
that by the end of next year, calendar, and the first quarter of 2022, we'll have all our 380s flying.
And here's a quick check of the latest business flash headlines. Tesla jumped in late trade on news that it will join the S&P 500 in one shot. Given the company's massive market cap, the index had sought consultation with investors over adding the stock in one part or two, which would have been unprecedented. Tesla will be the seventh biggest name in the S&P 500, sitting between Berkshire Hathaway and Visa. The stock has soared about 580% this year. General Motors has scrapped plans to take an equity stake in clean energy trucking startup Nikola, and it's also dropping the idea of jointly building the new Badger pickup truck. That sent shares in Nikola tumbling by more than 27%. GM will allow Nikola to use its hydrogen fuel technology in semis, but it won't be taking the 11% equity stake it had proposed earlier. We'll be watching Meituan at the open in Hong Kong after it reported a 29% rise in quarterly revenue. The world's largest meal delivery service posted sales of $5.5 billion in the third quarter as China's economic recovery boosted restaurants and fueled demand for takeouts. Meituan is China's third largest tech company and is considering a secondary listing in the mainland next year. GameStop has been on a tear, rising for a third straight day amid strong demand for Xbox and PlayStation consoles. The stock was up by more than 20% on Monday before paring gains at the close. Microsoft says its latest Xbox Series X is out of stock at GameStop and at Best Buy, Target, and Walmart. GameStop has more than 5,000 stores globally, and shares are up almost 200% this year.
All right, Sherry, let's go back to oil, which are holding losses as we get these deep divisions at OPEC Plus becoming more apparent. These output talks on Monday wound up without a deal. We had further discussions. They've now been delayed for 2 days to try and give them more time to get to some kind of agreement. Let's bring back in Daniel Hines from ANZ, who can hopefully hear us now. Dan, thanks for sticking around for us. So this kind of, gamesmanship, I guess, isn't entirely unusual when it comes to OPEC. We were pretty close, it felt like, over the weekend to getting to that 3-month extension. Did it surprise you that it didn't get done? Has Saudi Arabia surprised you? Do you expect that we will get a deal this week?
Look, I was pretty confident a couple of weeks ago that the group would come to some sort of agreement, but clearly with the rally in prices and obviously the continuing good news around the vaccine front have certainly shifted thinking, I think, by some of those producers, and that started to put a little bit of doubt amongst some of those that have obviously been suffering under these current conditions. And clearly, up to this point, it's been heavy lifting by certain producers who have done most of the cuts, with others really trailing behind. Even though overall the adherence to the quotas has been good, I think it's starting to weigh on some of them, and that's where we're starting to see those cracks emerge, and certainly patience being tested. So, it's a real. I think now it's still more than likely that we'll see some sort of agreement, but there's going to be a lot of toing and throwing around how those production cuts are hit. Certainly in that first quarter with I think some producers really pushing for stronger adherence from some of those members who haven't lived up to their quotas over the 2020 period.
What about the demand side? Because of course the demand side recovery is still pretty nascent. Does this completely derail the price trajectory if we don't get a consensus from OPEC?
Yeah, well, I mean, it's certainly on a knife's edge. I mean, obviously, the promise of a vaccine in 2021 has certainly raised hopes that demand will recover, but certainly all the high-frequency data we look at continues to show some fairly strong headwinds. I mean, you showed just before about US travel remaining relatively strong, recovering around the Thanksgiving holiday, but globally, we're still seeing a lot of weakness, particularly in obviously air travel, international air travel. And I think for us, if we didn't see OPEC extend those cuts in at least the first quarter, we could see a surplus of about 1.5 million, maybe even 2 million barrels a day during that quarter. So, it's quite, I think, important for the market and for prices if this extension is agreed to. But certainly, I think in the back half of 2021, looking much more promising. And that should give a bit of comfort to producers that this extension is going to be relatively short-lived. They come back in March, reevaluate where the market is, and hopefully they can then start to boost output as demand recovers.
Daniel, is U.S. shale a player at all right now in the broader oil markets, given how badly they've been hit during the pandemic and the oil glut?
Look, you can't rule them out. I certainly think they're going to be a significant player over the medium to longer term still. But certainly in the shorter term, they're severely hamstrung. Firstly, by the capital constraints, I think a lot of companies have put in place with prices so low, but also the catch up that they have to do, even if prices did recover quite significantly. I mean, drilling activity has been cut back quite significantly, and there's certainly a bit of a black hole appearing now, which will take some time to fill before we could see a really rebound in US shale. So, look, in the shorter term, they're not really a major factor, to be honest, but I still think over the medium to longer term, they'll be an important part of the market.
And Dan, I want to turn to the metals. Sorry, Sherry, go.
Yeah, actually, I was going to turn to metal, so that's great. I want to talk about the shiny metal, gold, because of course, we have seen it being one of the favorite trades out there, but now we're seeing a little bit of pressure given the vaccine optimism. Is there still some upside here or not?
Yeah, look, I think so. I mean, you're going to have to be pretty patient, and certainly, it's going to be a roller coaster ride. In the shorter term, that risk appetite is certainly quite buoyant, and we're seeing investors liquidate positions after a pretty strong position over, or strong rally over the past 6 months or so. But when you look at other things like, real interest rates, a weaker US dollar, it still points to a fairly positive backdrop. And I think, when you look back on these periods, funnily enough, that stronger global growth pulse hasn't actually resulted in a sell-off in the gold market. In fact, when you look back at some of the rallies in equity markets, like the 2002 to 2008 rally, we saw gold actually, push higher, quite strongly after that period as well. So, look, this is just a period of readjustment, and I think, once investor positioning has been washed out, then that rally will continue. Although I do think the likelihood of another 20% rise in gold is certainly a lot lower now, but we still expect to see it above $2,000 an ounce in 2021.
How much of that outlook for metals continuing the rally depends on the inflation outlook, right? Because you take a look at the idea that these strong growth pulses will drive inflation. That doesn't seem to be happening in China, at least. Is this a position we'll find ourselves in next year, still asking where's the inflation?
Yeah, well, we've been asking ourselves for a while, haven't we? And that hasn't really come through. I mean, gold tends to be driven by those expectations of inflation rather than inflation itself. And certainly, I think the view still is that this huge boost to liquidity across the market, with the promise of that to continue well beyond, when really required, I think does still bode relatively well for those expectations of inflation to stay relatively high. But yeah, it's certainly an issue which could certainly take the wind out of the sails a little bit. But I still think it's, when you consider that rates, for example, nominal rates are going to stay virtually zero for some time to come. Even a small amount of inflation will tend to put real rates in the sort of negative territory.
ANZ Senior Commodity Strategist Daniel Hines, always great having you on. Thank you. Coming up in the next hour, as we count down to the China Open, don't miss our exclusive interview with Qiming Venture Partners founder Gary Ranschel on venture capital investments in China after the pandemic. That's it from Daybreak Asia. Our markets coverage continues. Bloomberg, the China Open is next. This is Bloomberg.
It is 9 a.m. in Beijing, Shanghai and Hong Kong. Welcome to Bloomberg Markets China Open. I'm Tom McKenzie. Our top stories this morning. Asian markets shrug off a slide on Wall Street, returning to risk assets. After an unprecedented month of gains, U.S. futures trade higher, the dollar dips. Oil falls as OPEC Plus talks produce no agreement on output curbs. A final decision is delayed until Thursday amid signs of deep divisions on supply strategy. The Fed chair welcomes positive vaccine news but warns the virus economic fallout remains uncertain. Moderna says its shot is effective and has no serious safety problems. And China's booming fintech giants face even tighter scrutiny as the banking regulator indicates measures to eliminate monopolies and beef up controls. So that is one of the top stories out of the mainland today. We had the top banking regulator saying that innovations around financial technology were a double-edged sword. And as we said in the headlines, suggesting that further scrutiny, further tightening of those regulations is on the cards. On the macro front, we're waiting for that Caixin economic PMI manufacturing data at around 9:45 local time. It's expected to build on the picture that we saw from the official PMI out yesterday, which again points to a sustained economic recovery here. At least the momentum continues, and that demand for China's exports as well. It will be a focus on the small companies and those private sector companies when that data is released at 9:45 local time. Let's check in on the market action. There's been something of a turnaround in the US futures, which had, of course, the US markets closed lower after an extremely strong month. The month of November, futures now pointing higher after a sell-off in the US yesterday. China futures also up 0.2%. The US futures are up 0.6%. As you can see, the Nikkei is trading higher, up by more than 1%. Here's what we're looking like at some of the other markets. The Kospi, we're looking for that Korean trade data. That is in focus for investors. Their gains of more than 1%, close to 1.3%. Singapore is slightly lower. In Malaysia, you're looking at gains, as you are in Taiwan as well. We can move it on to the next board in terms of FX and currencies. We'll also discuss the commodities picture as well. Euro showing a bit of strength there, up 0.1%. And in terms of the Aussie, you're looking at 0.73 on the Aussie, gains there of 0.2%. And in terms of the offshore currency here, you're seeing a bit of strength, in fact. 6.57 is the China offshore, and we'll get that fixed at 9:15 local time. Bitcoin, again, back on a tear. It hit those the record high above 19,000, as you can see. Now 19,635, gains of 1% in the session today. Gold was lower yesterday. You're seeing gains of about 0.1% there. Brent crude, we talk about the OPEC Plus standoff. They still have yet to get an agreement on that. We're expecting some kind of agreement possibly on Thursday of this week. Brent is lower by just over 0.1%. Right, let's get the first word news now with Karina Mitchell in New York. Karina.
Tom, good morning to you. South Korea grew at a faster pace than initially estimated last quarter as greater investment boosted the rebound from the virus-induced slump. GDP increased a revised 2.1% through September from the previous period, compared to 1.9% in earlier forecasts. The Bank of Korea is raising its full-year reading, seeing a contraction less severe than it projected back in August. Meanwhile, oil fell again as talks between OPEC and its allies wound up with no agreement on output. Ministers pushed a final decision into a second day and delayed those talks until Thursday, amid signs of division over keeping supply cuts at current levels or to increase output as planned next year. Meanwhile, the Saudi energy minister is threatening, to resign as co-chair of the OPEC Plus committee overseeing production. Joe Biden has rolled out his economy choices, formally announcing Janet Yellen as his Treasury pick and the heads of other departments. Neera Tanden is tipped for the Office of Management and Budget, while Cecilia Roos will head the Council of Economic Advisors. Sources say BlackRock executive Brian Deese is wanted at the National Economic Council. He was a senior climate advisor to President Obama. U.S. air travel numbers climbed to the highest in 8 months as flyers ignore health advice to avoid trips around Thanksgiving. Passengers at domestic airports totaled 1.1 million on Sunday. That's the most since March, when the coronavirus began to devastate demand. U.S. officials had urged people to stay home over the holiday to prevent a surge in COVID-19 cases. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Tom, back to you.
Karina, right, let's get more on the markets with MLive strategist Mark Cranfield. Mark, we've seen this record number then for Bitcoin after quite a significant sell-off towards the end of last week. What do you think is going to happen with the cryptocurrency going forward?
Yeah, it's really how people perceive the changes over the past few years. There's obviously some people concerned that the last time Bitcoin got to a record high, it very quickly retreated after that and it lost a lot of value. But then if you consider what the differences are between then and 3 years ago, a lot has changed in favor of Bitcoin and cryptocurrencies in general. So one of the key factors that it needs for growth is that more wallets adopt cryptocurrencies. That has certainly been happening. There's a lot more venues which use Bitcoin, including places like the CME, where we have futures contracts now, and then people like PayPal accepting payments in Bitcoin as well. This is all very useful for the currency. And then you've got big debates going on about whether is Bitcoin a rival to gold. And Bloomberg is running a story today about the hottest debate on Wall Street is whether you buy Bitcoin instead of gold. So there are a lot more people taking it seriously, and even institutional money is shifting into cryptocurrencies as well. So yes, it's extremely volatile, and it could easily come back. As we saw last week, we saw a 10% correction in the space of a day. So these things certainly are not going to go away in the near term, but Bitcoin is on a stronger footing than it was a few years ago.
Yeah, this time it's different, is what some analysts are saying, of course. And you did have some extraordinary targets. I think it was Citibank, one of the analysts there, putting out a target for possibly $306,000 for Bitcoin. Anyway, Mark, focusing back on the Asian markets, a bit of a sell-off after, of course, gains of what, 10, 11, 12, 13% for the month of November. Should we read much into that sell-off towards the end of the month and in terms of what it may tell us towards the end of this year? Or was it just profit-taking from investors?
Yeah, I think it's obviously very hard to repeat. A 10% gain across Asia is very unlikely to be seen again in December. But then again, people will be looking at what were the fundamentals that got it to that position in the first place, and a lot of those are still in place. If you weigh up whether investors should be in stocks or in some other asset classes, they will say the main alternative bonds don't look that attractive. So certainly equities stack up on that point of view. Money supply and monetary policy is unlikely to change anytime soon. Monetary policy is expanding around the world. People are comfortable with that. The Fed is probably going to add more QE this month. You've got this new potential for Janet Yellen and Jerome Powell to be the new tag team in Washington, which markets like very much. So the conditions for supporting stocks are still pretty good. Unlikely to see the same kind of returns in December that we've seen in the previous month, but the chances are it will be a decent month again for equities unless there's a complete shock from somewhere outside. Plus, people are getting more confident. There could even be some vaccine distribution before year end and certainly early into 2021. So yes, and plus the data is not looking too bad either. So all in all, conditions are still reasonable for equities.
MLive strategist Mark Cranfield in Singapore with the analysis on the markets. And you can follow more on this story and all the day's trading on our Markets Live blog. That is on the Bloomberg at MLive Go. Still ahead, more clues on how China's economic revival is shaping up with the private Caixin reading of the PMI. We're going to have analysis from SocGen's Michelle Lam. But next, we speak to an early investor in some of China's top tech companies on how the pandemic has affected VC strategy. Qiming Venture Partners' Gary Reschel is next. And we are counting down to the open of trade in Shanghai, Shenzhen and Hong Kong. This is Bloomberg Markets China Open.
Every era presents its own unique set of challenges and opportunities. Trade CME Group futures with Interactive Brokers at low cost and seize the moment. Start investing today at interactivebrokers.com.hk.
Welcome back. Meituan Dianping reported a 29% jump in revenue last quarter as China's economic recovery boosted restaurants and demand for takeouts. The world's biggest food delivery service posted sales of about $5.5 billion in the period, with profit coming in at a fraction under $1 billion. Meituan controls about 2/3 of China's food delivery market and says it's in talks with regulators about proposed antitrust rules, which sparked a broad sell-off in Chinese tech stocks. Our next guest focuses on early-stage Chinese technology and healthcare firms and has invested in many of today's most influential brands, such as and including Meituan Dianping, Xiaomi, UB Tech, and many others. Quite obviously and quite clearly one of the most influential VCs, one of the most successful VCs operating in China. Joining us from Seattle is Gary Raschel, founder and managing partner at the Chinese venture capital firm Qiming Venture Partners. The firm has around $6 billion under management. Gary, I wanted to get your views on the consumer sector here, because you've talked to us previously about the sector being an area that, of course, attracted a lot of VC investment. It has started to mature. I just wonder what your views on are in terms of where Meituan Dianping and other companies in this space can grind out further gains, given that it's a maturing sector, as you've described previously, but also the competition as well, a highly competitive sector.
Yeah, thanks. Good morning, Tom. I think what's happened is that the large players like Meituan Dianping, Xiaomi, et cetera, they have all locked in a position. And so as the market recovered this year, they were in a position to take advantage of it disproportionately. Startups that have yet to reach critical mass or are struggling for market share, I think they have a much more difficult road ahead of them. China, more than the US, appears to be a winner-take-all market in a number of the big consumer plays.
Where does that leave you then in terms of opportunities that you're eyeing towards the end of this year, looking into 2021? What are you willing and hoping to pull the trigger on in terms of investments?
So consumer used to be about 45% of all of Qiming's investments. Now tech is about 40%, healthcare is about 50%. And so what we've done is you've seen the market move from market-oriented opportunities, so Meituan Dianping and consumer is an example, to things that are much more core technology-based, quantum computing, the cryptocurrency, crypto area, AI, data analysis, and then in healthcare, the same thing. Things like TigerMed, which was on services, to much more cell therapy, gene therapy areas. So there's a transition to much more core tech in both healthcare and the technology sector.
Okay, Garen, I have to ask, of course, about the continuing tensions between the US and China, obviously, and that those frictions continue, actions coming almost on a weekly basis. There's particular concern, of course, about national security in the US and about data and privacy. How are those concerns and some of the policy changes that we've seen affected the way that you look at these potential investments in China?
So for Qiming in China, what Qiming does is really oriented around success in the China market. So in China for China. We don't have a lot of companies that are dependent upon success outside of China at this point. I think what you are going to see is you're going to see a different approach from a Biden administration, where more conversations around the rules of the road. What should the guidelines be for data privacy? What should the guidelines be for experimentation with AI? What should the guidelines be for experimentation with gene therapy and gene manipulation? So more of a focus through coalitions and alliances, but also more of a focus on what the guidelines should be, as opposed to picking out individual companies for criticism or some form of sanctions.
Okay, well, of course, we'll see what happens when the Biden administration comes in and whether or not that dialogue does indeed start between the US and China. One company, of course, that has faced pressure in the US is ByteDance and its entity TikTok. And of course, you invested in Musical.ly, which became eventually TikTok. Do you have any sense of how this saga plays out for the business?
Well, I think, as I was saying, I think what happens here is it will not be about Musical.ly or ByteDance. China and the US will be one of many countries that will sit down and talk about where should the data for their citizens reside. And then the companies will have to figure out how to meet those particular rules and regulations. So it'll be more of a regulatory framework that has to be put in place. and then an understanding that the data of American citizens would have to be protected, be in America, can't be used by foreign entities in any way. China already insists on that in many different ways. So I think, again, we'll go back to what are the rules of the road are going to be. I actually think the TikTok criticism was unfair. I think part of it was lobbying by a number of the U.S. companies against TikTok because, frankly, they were doing a fantastic job. And it's the first time we've ever seen a Chinese consumer play be a global threat. And I think you saw some of that in the reaction from the U.S. firms.
I just wonder, we're seeing a scenario now where companies like ByteDance and Alibaba and others are facing pressure domestically, whether it's on the regulatory front here and concerns about, for example, keep an eye on content, whether it's some of those content plays or the fintech industry, of course, Alibaba and Ant Group, part of that. So there's that domestic pressure, but there's also that international pressure as well that we just talked about. How do you navigate those two combined pressures then? And are there areas that you simply have to avoid?
Well, I think that you're going to have to be quite transparent dealing with foreign regulators. So I think the EU, the United States, other of what we call now the T12 or T20 group of technology-oriented countries, they will have very specific requirements as to how you are going to behave in that domestic market. In China, what I actually found interesting about the Ant Financial criticism was clearly the regulatory work was going on before Jack Ma's now famous speech. But what you really start to look at when you're comparing these situations is no one really understood how bad WeWork's core business was until they published the S1. No one in China really understood how phenomenally profitable and rich Ant was until they published their financial data. So part of this is a normal process that until some of this becomes public, we don't really see the facts.
Okay. Gary, I just want to get your views on these threats as well in the US to delist some of these Chinese companies. Is that a concern that you take seriously, and does that change your strategy at all?
I think that the rhetoric around that has been a problem. It has not changed our strategy in that we prepare the companies, invest in the companies to list in some venue. Hong Kong has been a very attractive venue for Qiming companies. We've had a dozen companies list since December. I believe 9 of the 12 have gone out in Hong Kong. So for healthcare companies and some of the core technology companies, Hong Kong is very attractive, and the new Starboard is very attractive. I think it's a terrible misuse of the U.S. system to force delisting. It's fair to say you should have the same data disclosure requirements, the same financial disclosure requirements. But I don't like the singling out of an individual group of companies for the capital market access. But our behavior has not had to change. Because in Asia now, particularly Hong Kong and China, there are alternatives, whereas 5 years ago, there was really no alternative.
Gary Rushell, we appreciate your time. Have a great rest of the week. That is the founder and managing partner at Chinese VC firm Qiming Venture Partners, joining us out of Seattle. Coming up, the OPEC Plus meeting on oil supply winds up without agreement, with talks now delayed for 2 days. We're going to get the details next. This is Bloomberg.